Coming up in, what, 12 hours' time?
Yeah, absolutely. So 12 hours until that deadline. Let us think about where we might see some movement here on these European equity markets. Then oil majors could be in focus. Of course, we do have higher oil prices. We don't know where things will go in the next 24 hours. But $111 a barrel is where Brent trades. Chip stocks could be in focus as well. We've heard from Samsung some really positive stories coming out of the AI story. Memory prices holding up at Samsung, delivering incredible operating profit there. Lots of demand for Claude over at Anthropic. So all of that narrative seems to be intact despite higher energy prices. Interesting in that context that Nasdaq futures are down by 0.5%. So it's not really cutting through the broader geopolitical story that. UMG in focus over in the Netherlands as well. This is Universal Music Group receiving a bid from Pershing Square, and this one could be a big jump at the open then, Guy, as the offer, which is cash and stock, is much higher than where we closed on, when was it? Thursday.
Thursday, yeah. Long weekend, very long weekend, which you've now got to kind of bring to a conclusion. European cash is about to open. We're expecting a mildly positive start. Let's take a look at the numbers and see what happens. Then let's kind of come back to it in half an hour's time and figure out what the real picture looks like. Because US futures are quite negative. FTSE 100 probably pulled in lots of different directions this morning, but certainly be interesting to see how those oil majors trade, as Anna was saying. Stock 600's up by around 0.2%. All the while, though, remember that you've got negative US futures and we've got this deadline coming. A lot of people really looking at today as a very sort of binary day. Which way do we go? It's either destruction or we get a let-off. How does the market trade in that kind of scenario? The CAC's up by 0.4%. Very decent performance there. The IBEX up by 0.1%. We're about to get Spanish and I think Italian PMI data as well. So watch out for that. The DAX is yet to open. We'll leave that and park that for just a moment. The AEX could be interesting today. Not only have you got the chip story, ASML, post-Samsung, how does that look in Europe this morning? Plus also, as you say, Anna, that music story front and centre. Taylor Swift, I'm sure, paying attention to the story.
I'm sure she's watching. Let's have a look at where we are on the sector breakdown, because the technology story does stand out, but not necessarily in a direction we would anticipate. Interesting how the appreciation of what we heard from Samsung changed through the Asia session. So the stock was up pretty strongly on the back of quite incredible operating profit numbers, and that was a positive. But then we saw that change as we went through the Asia session, and maybe it is that change that we're picking up on here in Europe, because ASML down by 3.4%, which is interesting. The broader tech sector being dragged down a little by that. It's not everybody though, because I mean ASML makes the chip making machinery. Some of the chip makers not doing too bad. So we see ST Micro, for example, going up by 3%. So maybe this is more to do with where the costs and benefits of growth within the sector lie. Media is the best performing sector, up by 0.9%. I doubt we have. I know we don't have an opening price on Universal Music Group yet, but that hasn't stopped others within the space going higher. So some of the advertising businesses are going higher this morning. That seems to be the best performing right now. I'll just flag, we mentioned 12 hours. It's longer than that, isn't it, until the deadline, because it's 8 o'clock Eastern time, which is 1 a.m. Wednesday morning that we have to wait for that dedeadline to expire.
Looking forward to that. Not looking forward to that. We'll wait and see exactly what happens. The ASML story is fascinating. 3.63% to the downside. That's a big... just had a look at AMAT to see what was going on there. I can't see any logical reason why, other than Samsung, that stock will be hit as hard as it necessarily is.
Yeah, big move on for a big stock, which has then a big impact on the AEX. Let's talk to Banu Buwaja, Chief Strategist at UBS, who can help us understand the fog that I keep seeing referenced in lots of research reports right now, of course, in relation to the geopolitics, but also some of the other stories that we're throwing around. We will no doubt come to the technology story in our conversation, Banu, but your big picture view of the world right now, risk appetite seems to be, well, is it holding up better than you would have expected, given the stakes, given the rhetoric we've seen coming out of the White House over the past 48 hours or so?
Do you know, going into this conflict in Iran, the market was playing early cycle, right? Because growth was coming in better than expected and inflation was coming in lower than expected. So you saw a rotation towards cyclicals, you saw a rotation towards low-quality companies, you saw a rotation towards small caps, you saw a rotation towards the rest of the world. Now, those rotations have not yet been taken back, right? So the market is still positioned in that. So there's been compromised modestly, but it's not really been taken back.
Yeah.
So I think the market is very clearly expecting a very low length of conflict. So they're expecting this conflict to get resolved very quickly. You can't blame them because, I mean, this has been the template since COVID. This has been the template since Russia-Ukraine, and this was also the template of Liberation Day last year. But that's the template that the market is using. That this is going to be this is going to be done with in 2 to 3 weeks' time. If you look at 6 months Brent, it's trading 35% below spot. So the market's expecting a pretty speedy resolution. So it's not completely given up on that early cycle trade, and I think that's where the risks lie. We have this deadline, later today. We don't really know. I mean, this could turn on a dime, but this could also drag out for much longer. So I think the asymmetries is what we have to look for. I think there are clear asymmetries in the fixed income market. Within the equity market, I think, and especially the credit market, I think investors are taking the glass half full interpretation, which is worrying, to say the least.
It's worrying. Okay, we'll come to some of those asymmetries, as you point out, and maybe we'll start with equity markets then. So if this does look as if it's going to go on for longer, Banu, then you'd expect, what, cyclicals, small caps, all the things that were starting to do well at the beginning of the year to do worse, to carry on doing worse.
Indeed, and what that means, Anna, is that it's not just the headline index coming down, but the losses to investors could be more than that, because the rotations that they were invested in, those are the rotations that have to be given back. This is not a world in which, if the growth inflation mix, and I keep going back to this phrase, growth inflation mix, and some people sort of extend that into stagflation, but even if the growth inflation mix just deteriorates, that's not a good world for equities. That's not a good world for small cap stocks. That's not a good world for low quality stocks. That's exactly the kind of broadening trade that everyone was engaging in. You were moving away from the US to emerging markets. You were moving away from the US to Europe. Those are the trades that gets compromised. It's not just about the headline level. The headline will get compromised, but it's those rotations that I think we need to worry about.
That's right, 17 hours until the deadline, roughly. My math is wrong. What do I do as a risk manager with these kinds of events? Really binary, could go either way. What do you do?
Yeah, I mean, I think at the risk of sounding slightly technical, I think you have to take a look at which positions are most convex. So, for instance, if you are beginning to price in 3 hikes for the ECB already, if you're beginning to price in no cuts for the Fed at all, I think that's beginning to get asymmetric. It's very unlikely that the ECB hikes 6 times, and it's more likely that the ECB does nothing. So I think in the fixed income markets, in the front end, there is value being created, particularly in the UK, particularly in the US. We do think that these are places where the markets are pricing this like it was 2022, where you price up all central banks together. It's a very different situation. The labor market's in a very different place, particularly in the US and in the UK. European labor market's still doing slightly better. So I think fixed income is where there's some value emerging, particularly in the front end. In the equity markets, I think this is a time to play defense. Right? This is perhaps not a time to sort of run for the hills and go all into cash, but this is not a time to be in deep cyclicals, because even if you get some resolution, temporary resolution in the conflict, it's not clear where oil prices are going to settle. It's very unlikely that you're going in a world where energy security is going to be the key theme. Many economies are going to be looking to build their reserves, and so the demand for oil is going to outweigh the supply of oil for some time. This is very different from where we were just about 2 or 3 months back, which at that time there was a surplus in the oil market, and it looked as though the Strait of Hormuz would never be shut, right? This is the 38th day as we're speaking of the Strait of Hormuz being shut, and we're losing, at a minimum, we think of 9 million barrels a day. Just for comparison, during Russia, there was a fear that we would lose 4 million barrels a day, a fear that didn't come to fruition. right? So I think this is a time we have to, in the equity markets, play defense.
If we're playing defense, does the amplitude of the moves get bigger from here? Today could be a taco move. Today could be I don't know. But if I'm trying to avoid getting stopped, which feels like it's happening either end.
The possibility of non-linearities, like I'm paying particular attention, we were discussing this during the break, we're paying particular attention to the products, right? Because the products smell what's going to happen to crude. And if you look at jet fuel, if you look at naphtha, if you look at diesel, all of these are telling you that there's a significant shortage, physical shortage, of oil coming through. So I think that if you don't get this resolved soon, you could begin to see things breaking, not just in terms of industries. Oil is used in a lot of industries. This is not just about transport. This is about glass. This is about paint. This is about other synthetics. You could begin to see nonlinearities in production. You could begin to see nonlinearities in price. And that's why I think this is a time when we want to be looking at previous episodes where inflation was high, growth was low. And those are episodes during which the equity market did play defense. We're not quite doing that as yet.
And Banu, are you thinking then more about the price we'll have to pay for these things or the availability of them? And does that shape the investment thinking?
So, Anna, I think it's going to be both. Like for nat gas, it is the availability, right? And thankfully, this is so far not morphing into what looks like a food inflation shock, because that would be a completely different issue. Because if through fertilizers, through nitrogen fertilizers, if this went into food, you would have to worry much more, right? Because then you'd have to worry about purchasing power for the consumer across the world. But so far, wheat prices are up, smalls, rice prices are actually down. So I think this is, in terms of nat gas, this is going to be an availability question. But I think across all products, this will be mainly a price hit. So for Europe so far, this has been mainly a price hit. For parts of Asia, this is going to be both quantity and price.
So how big, what do the tails look like at the moment? How far apart are they? How different do the scenarios look like? How do I build a portfolio that can cope? Or do I just have to take a view that I'm either over here or I'm over here?
You first have to think about where oil price could get to under what circumstance, right? So if the Strait of Hormuz does not reopen, and if we have the situation that we have today, by the end of April, then the possibility of oil prices going somewhere between 130 and 150 becomes very high. If it extends beyond that, I think the possibility of the global economy going through significant stress, which is recession, becomes very high, right? So at this minute, your hedges, I think, are going to be in fixed income, which is, to receive in the front end in some places where you're overpricing things, or to be even along the long end, because gold is not behaving as a hedge right now. Gold isn't doing that because gold itself went through such significant volatility that it's hard for it to be a diversifier at a time like this. So I think fixed income would be a hedge. And again, the more utilities, of course, energy itself, but utilities, the consumer staples, those are the areas that I think we will have to play defense in right now. It is very binary, which is why we're looking for the asymmetries. We're looking for the more convex trades. And I think most of these sit. So what is the left tail trade here? I think credit has not even begun to move. Well, it has moved, but it has moved very modestly.
And Banu, I was going to ask you about this subject, because if we're looking at a world where we could, if this goes on for another month, go to 130, 150 on oil prices, recession risk is much higher, obviously. That's only a month away if we carry on as we are, even without maybe some major escalation from here. Does it make sense that credit is as relaxed as it is, especially also with the private credit drama, which could maybe infect a close related asset class?
So once again, I think this is where the asymmetries are. If things go poorly, credit will do much worse than it will do well if things go well. If things go well, then fixed income, especially the front end, will do much better than it would do badly if things go south. So I think in that, these are the asymmetries. I think the front end of the fixed income trade is your right tail trade. Credit, I think, is your left tail trade. Equities, I think, are closer because there's still the kind of valuations. So far, the sell side hasn't even begun to put pen to paper in terms of downgrading the earnings. Of course, the sell side usually
is upgrades.
There have been upgrades, and these downgrades will be consequential when they come through. Why have there been upgrades? Because quite a few in the sell side think, oh, oil price going up. Usually that's a positive thing for the global economy, but you have to separate demand pull from cost push inflation. And usually it's demand pull, margins are up, operating leverage is up. This is cost-push inflation, right? This is a serious issue, and I think we will begin to see the downgrades across industrials, across consumer. The U.S. consumer, I think, is on thin ice as well. Although that economy is least impacted, I think the U.S. consumer is on thin ice too.
Fine, great to see you. Thanks for stopping by to see us. Really appreciate it. Bambo Asia, Chief Strategist over at UBS. Course looks like this. Let's give you some numbers. Take a look at what's happening with ASML this morning. It is down and down hard now. Look at that, 4.44% to the downside, which is interesting. Elsewhere, you're not seeing a great deal of movement. All stocks certainly are on the move, but nothing else really moving significantly. Tech is certainly taking it on the chin this morning in a fairly big way. Let's answer some of the other questions around what is happening elsewhere in this market. Charlie Wells is here with the details.
Guy, let's dig into some of those oil majors because we're seeing some divergence here, right? We are seeing Shell, BP, Total, Equinor all in the green, but you see Equinor up the most. They do not have exposure in the Middle East. So again, concerns and questions about the direction of travel for the sector, given concerns about duration, given that looming deadline Trump has talked about in this Iran conflict. So again, green here, but we're early in the day. Let's flip and talk about tech because, of course, such a big story. We had that blowout earnings report from Samsung that really was kind of expected to lift a number of companies. And we're seeing, particularly in Europe, given a lot of these European companies supply Samsung, that could explain some of the green here for ST Micro. They're up over 3%, but you see red on top of that. You see ASML, really the kind of chip industry darling here in Europe, down. That could be concern that we saw from some legislation coming out of the United States, potentially limiting ASML's access to China. Let's again take a look at a totally different sector, but really getting a lot of attention this morning. That is Universal Music Group. So Bill Ackman's hedge fund, Pershing Square, offering to buy the world's largest music company. Shares are halted at Universal Music Group. That could potentially be a really hot stock this morning. And again, looking at Pershing Square, down. But if you look at Vivendi, this is an interesting one to watch because they have stakes in Universal Music Group. You want to look across the European market and think about who's got exposure to UMG because Pershing Square was offering a 78% premium on the last close. So interesting one to watch. Another interesting one, down well over 8% in the red. That is 91. That is the asset manager. They were downgraded to neutral by Bank of America. So a lot of negativity surrounding 91 this morning.
Charlie, thank you very much. Charlie Wells joining us with the latest on some of the stocks that are moving around this morning. Coming up on the program, oil climbs for a third day as President Trump threatens to obliterate key Iranian infrastructure if his terms are not met before tonight's deadline. We discuss that. We'll get the details on that, on those headlines. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back, everybody. This is the opening trade. First day of the trading week here in Europe, and the picture is pretty flat, actually. Flat to the upside on the stocks Europe 600. Looking for some direction, perhaps very wary of the headline risk associated with President Trump's threats around Iran. US futures in there, they're a day ahead, of course, and they point lower, down by 0.4% on E-minis. Let's just quickly update you on what's been happening with Universal Music Group. That particular share price is up by 14.5% right now. And we've had this, of course, in relation to Bill Ackman's Pershing Square pitching a merger with Universal Music Group, a combination with UMG that would move the listing into a US-based acquisition vehicle in a deal valuing the company at a 78% premium to its last closing price. The stock up that much, though, 14% right now, Guy.
We'll come back to that in just a second. Let's talk about what's happening with the chip space this morning. ASML's down really hard. We've got to figure out why. What's going on with Samsung? We've got to kind of answer that question as well. Neil Campling joins us now to try and assess some of what is happening here. We'll get on to UMG in just a minute. Let's start off with Samsung. These numbers look really good. The stock's down. I'm curious as to, like, did they need to do better? Like these are amazing numbers.
To be honest, they couldn't have done any better.
Sure.
The numbers were outstanding. Obviously, it's preliminary, so we don't have the full details of why, but it's quite clear to most commentary this morning that about 90% of that eightfold increase in operating profit is due to memory and memory pricing. Now, we've seen the memory stocks obviously surge over recent months, and we've seen expectations of spot pricing in memory and the AI trade, etc., being there's this huge demand, and that is not going to change no matter what happens in the Middle East, to be honest. So, Samsung is very much a case. I think that the stock price reaction is travel and arrive. So, I don't think that's necessarily a real surprise. Could they have done any better? No, because they're fully booked out for memory.
Yeah.
Some people are saying probably for 2, maybe 3 years.
Yes, so there's clearly a positive story for Samsung there and their profitability, but that didn't necessarily turn into a share price strength for Samsung, and then certainly into the European session there are other dynamics at play. It's not a read across directly from Samsung, but European tech under pressure, in particular ASML. Help us join some of those dots where we should.
Yeah, sure. So ASML clearly is the bellwether tech company in Europe, and it is literally behind the chips that create the AI possibilities that are out there. So if we look at Samsung in terms of 15% of their cost of goods sold is ASML. So ASML would be a beneficiary of what's going on with Samsung and their profitability buying new equipment. The thing that's happening right now is a potential order of EUV equipment licenses for these machines from ASML going into China, potentially being stopped. Now, there are some of the commentary this morning suggesting that 15 to 20% of ASML's EBIT could be at risk if that was to take place. And I suppose, taking a step back, this is likely just more of the battle between China and the US in terms of AI dominance, the chipsets that are critical to the AI movement, and at the heart of all of that is the EUV machines from ASML, and that's why ASML is down this morning.
What's Bill Ackman trying to do with the UMG?
I think he's trying to get Bolloré to the table. So if you look at the transaction that's being proposed by creating a new vehicle that's listed in the US, and we'll hear more, I think it's 3 o'clock Central European time this afternoon, when we'll find out the conference call. I think what he's trying to do, he's a frustrated activist. He's trying to get them to the table and suggest that the valuation of UMG could be far higher if there was a clearer structure in place. So I think that's what's behind this move. And the big discount between the proposed transaction value and the UMG stock price action, which is only up teens today, tells you that many investors are very skeptical of the real meaning behind this potential merger transaction.
Neil, good to see you. Thanks for the analysis. Really appreciate it. While we've been talking, the PMI data have come out of Spain. This is the preliminary data. The headline reads look really good. So the services PMI 53.3, the comp numbers come through at 52.4. This is well up on where they were and well above expectations. However, the commentary that comes with it is a little bit more cautious. So you've got S&P talking about the idea that actually Spain's economy has experienced a weaker growth profile overall in the first quarter of 2026. So the commentary seems to be, yes, these numbers look good, but actually looking forward to the GDP, the read across into GDP is not quite as good as maybe this data would seem to suggest.
Okay, and now we'll add that to what we already know about the manufacturing side in Spain. Let's get back to the broad story around oil, because clearly this is going to have an effect on all of these growth stories we're talking about. Oil is rising for a third day as President Trump escalated threats to obliterate key Iranian infrastructure, as we know. If his terms are not met before tonight's deadline, Iran has warned that it would respond by ramping up its own attacks on energy infrastructure in the Persian Gulf. Let's bring in Bloomberg's Stephen Stachynski, who leads our Asia energy coverage. Stephen, give us your thoughts here. President Trump has talked about what he is going to do if Iran does not meet his deadlines. Where do analysts expect oil to go from here?
You know, I think there are two very stark outcomes that could happen here. Either one, they do meet the outcome, and there's some sort of deal, and we see oil prices deflate pretty significantly. Two, we see that Trump kicks the can down the road. He's done that actually several times in the last week or 2 weeks, and it's possible he could again push back this 8 p.m. Eastern time deadline to later. Again, analysts see if that were to happen, you could see a deflation in prices, right? We're around $110 or $112 right now for Brent oil. Then you would fall down to closer to $100, maybe in the $90 range. Now, if you see Trump actually follow through and strike Iranian infrastructure, that's when we start to get into these really bull arguments that you could see oil prices rise into $120 and above. And it all depends on the damage, and it also depends on what Iran does in response to that. Does Iran hit oil fields? Do they hit refineries? Do they hit neighbors that have gas plants? All of those things start to be brought into question, and it's difficult to say exactly how high oil prices could go. I guess it really depends on what would be damaged, but these are all theoretical situations. The market is right now just, I think, in a very much so wait-and-see situation. It's unclear what Trump will do, but there are many different scenarios, so it's hard to kind of place a bet.
Stephen, 2 Qatari LNG tankers tried to get through, and they got turned back. What do we know? Where are those ships? Are they going to try it again?
Right. So for the first time yesterday, we saw loaded LNG shipments from Qatar attempt to go through the Strait of Hormuz. They turned back late yesterday. According to our report out this morning, they didn't get approval from the Iranians to go through their route, which is how most of the Iranian traffic had been going through. So because of that, that just illustrates how much control Iran has over the strait.
Stephen, great stuff. Thanks for catching us up on what we need to know. We'll continue to monitor the situation. I've got my math straight now. 16 hours, 33 minutes until we get to that deadline. Jane Kinnemont from the United Nations Association UK is going to be joining us next to talk about that deadline that is coming up. This is Bloomberg.
80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Durrett.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujita report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade, 30 minutes into today's session. A few jobs to do here this morning for European equity markets. One of them is just hold tight, wait until we hear from President Trump later on. He has this deadline, 8 o'clock Eastern time. That translates to 1 in the morning, Wednesday, London time. So where will we be by then? And what will follow, crucially, in the 4 or so hours that come after that? That's going to be what the market is very much watching for. So with all of that in mind, we don't really go very far. We catch up. We caught up a little bit with some of the optimism on the Wall Street trade of yesterday. But that really paled in the face of US futures that were a little bit more negative. So DAX stocks are down. We see technology is one of the worst performing sectors. The AEX is weak with that in mind. But we do have some M&A. That's lifting the media sector. The CAC 40 getting the best of the gains for sure this morning, up by 0.4%. Guy, what do you see beneath the hood?
Convincing, if I'm being honest. Volume's a little bit soft. If you look at kind of what's up and what's down, 344 up, 233 down, slight advantage maybe to the upside, yet most of the indexes are a little bit lower, with the exception CAC 40, certainly a story that stands out. So I think the market, to Anna's point, feeling very much like it's sitting on its hands right now, waiting for that deadline that is coming towards us a little later on. In terms of the leaders and the laggards, let's talk about some of the gainers that we're seeing this morning. UMG, unsurprisingly, given what Bill Ackman is up to, is certainly one of the big gainers this morning, trading at 1882. There's an M&A story there. There's a merger story. There's a frustrated activist in the form of Bill Ackman maybe there. Anyway, that's all playing out. Shell is up by 1%. There's not a lot of a movement there. There's a defensive play maybe coming through into Nestle. It's up by 0.8%. Defense stocks, though, are definitely down, as are chip stocks. ASML is the big story here. This relates less to what we're seeing in terms of the Samsung story and more towards with what is happening in China and the exposure there. That stock is down by 4.27%. That's a heavyweight here in Europe. That's certainly a drag. Siemens Energy is also a laggard as well. Leonardo, defense stocks are generally down, but we're waiting to see how Italian politics plays out in the defense space. New CEO potentially coming through for Leonardo. We'll wait for that announcement, but that stock is down quite heavily this morning, down by 4.6%. Anna.
Let's get up to date on some of the other stories we're covering this morning, Guy. And Jamie Dimon has warned that losses from private credit are likely to be larger than markets anticipate. In his annual letter to shareholders, the JP Morgan CEO cautioned that losses on leveraged lending will be higher than expected, in part because of, quote, modestly weakened credit standards. However, Dimon said private credit probably does not pose a systemic risk. Two Sigma Investments' biggest hedge funds generated standout returns during a frantic month for markets. Sources say the firm's Spectrum fund rose 2.5% last month, while its Absolute Return fund gained 3%. Meanwhile, Tiger Global Management's main fund tumbled 7.3%, while Maverick Capital's dropped 5% and Viking Global Investors lost 4%. President Trump is insisting any deal with Iran must include freedom of navigation through the Strait of Hormuz. President Trump has escalated threats to obliterate key Iranian infrastructure if his terms are not met before a deadline of 8 o'clock U.S. time, that is Eastern Standard Time, tonight. The president says the U.S. could attack Iran's power plants, which would be a violation of the Geneva Conventions. No doubt a conversation that would be ongoing if we were to see further attacks on that kind of infrastructure, be it civilian, be it dual use. Let us bring in Bloomberg's Jumana Basetchi, who can give us an update from Dubai of what is happening on the ground in the region. And Jumana, in terms of the conversation and the story being told by the White House right now, on the one hand, they're making progress towards a deal. They haven't got a deal yet with the Iranians, but there is some progress being talked about. On the other hand, we see really escalatory language being used by the president.
That's right. Well, a very tense 24 hours coming up over here in the region, and you don't need to go so far as to look back at the various comments that President Trump has made over the course of the weekend, including that very explosive Truth Social post that he put up on Easter Sunday, essentially saying to Iran that unless they open up the straits and do so unconditionally, then the U.S. would have no option but to strike back and to go after their power plants. And he then subsequently gave that deadline, 8 p.m. Eastern time, which translates to around 3-4 in the morning over here in the region. Now, what we do know as well is that there have been several mediation efforts going through, spearheaded by Pakistan. The messages have been relayed to Iran. But what we understand from our reporting in the last 24 hours or so is that Iran have also come back with their list of counter terms. And these are essentially non-starter terms for the U.S. Still a lot of daylight between the two sides. Iran is insisting that they want assurances that a war will never happen again. They're insisting on a full lifting of sanctions and a redefined protocol around the passage of ships through the Strait of Hormuz, with New York Times reporting that they would look to levy a fee of up to $2 million per ship that is passing through, the proceeds of which would go towards war reparations. So all of these, or at least the bulk of them, are non-starters as far as the U.S. is concerned. So still a lot of daylight between the two. And I will say that there is very little hope of a diplomatic breakthrough, which takes us to the deadline tonight. And the U.S. president has an option. Multiple options. He can follow through on those threats and really go after civilian infrastructure in Iran with more widespread intensity. Or he could once again push the deadline back, which is something that he has done before, or simply do nothing, in which case, of course, then it challenges a lot of the U.S. credibility for some of these further threats and deadlines and ultimatums in the future. But what I will say is that Iran continued to be defiant. There appears to be little hope of a diplomatic breakthrough. And at the same time, just in the last couple of hours, IDF have also started warning Iranians not to use the railway system today until 9 p.m., perhaps a signal of some further strikes to come.
Joanna, thanks for the update. Greatly appreciated. Jumana Basetchi joining us out of Dubai. Let's bring in Jane Kinnaman, CEO of the United Nations Association UK. Jane, good morning. Jumana talking about the fact that maybe a breakthrough is feeling increasingly distant. Is that your assessment as well?
I think that's absolutely right. There have been a variety of mediation efforts led by Pakistan, by Egypt, and previously there were efforts by Oman and Qatar, but both of those states seem to have got quite discouraged. We don't see any imminent signs of a breakthrough. If anything, perhaps mediators could try to slow down or limit the escalation. Because right now we do seem to be in a pathway where escalation is increasing, but there is a question about whether there's about to be a sudden dramatic escalation of the kind that Trump is threatening, or whether we're going to be into more of a war of attrition. Meanwhile, there is diplomacy going on to try to mitigate some of the broader fallout for the global economy in terms of freeing up shipping through the Strait of Hormuz. Now, Iran has got rather a taste for having control over the Strait of Hormuz. It's always been something that it has held out as a possible deterrent against being attacked, that it could disrupt shipping in this way. But it's now looking at it not only as a deterrent, but as a future business model. The Iranians are starting to think that controlling this waterway could become a long-term source of revenue for them, enabling them to reconstruct their economy despite the fact that they remain under sanctions. So while there have been efforts to mediate between the US and Iran on the issues between them, there are also international diplomatic efforts, including at the UN, to try to figure out a way to stop having the strait and the global economy held hostage to this war.
It's speculation, but what is therefore, given all of that, your best assessment of where we are in a month? Because people are saying basically by the end of this month, if it hasn't been resolved, we are going to start to see shortages.
Sadly, I think it won't be resolved soon. I think that there may be opportunities to have a temporary ceasefire. There may be opportunities to ease some of the pain on the global economy. But I do think that the most likely scenario is that this war will continue. Now, we have been hearing assessments in the US and in Israel that it's just a few more weeks. So repeatedly, we've heard estimates that maybe 1, 2, or 3 more weeks are a likely timeline for this war. Of course, the war is expensive for everyone concerned as well, so there may be a desire to wrap it up quickly. But it also seems that the objectives of severely weakening the Iranian state are, still some way off, and so the exit strategy isn't yet clear. That said, there is still an option where Trump could choose something that would enable him to declare victory and walk away. And I think some of the American rhetoric about the Strait of Hormuz being more of a European and regional problem than an American problem, that is designed to keep open the possibility that the US could at some point soon just say, we've done enough damage and now our part in this is done. But they would be leaving an ongoing problem for the rest of the world to clear up around the disruptions to shipping.
Yes, and the most recent message, Shane, good morning. The most recent message seems to be that President Trump very much does care about reopening the Strait of Hormuz. So we'll see what kind of messaging we get on that. Do we have more of an understanding of who the US is talking to, be it via Pakistan or other routes? Do we have a sense, Jane, of who they are? And does that help us understand how long this lasts?
Well, the Iranian decision makers have all changed in recent weeks because so many of them have been assassinated. So reports suggest that there is still a line of communication between Steve Witkoff, the president's envoy, and the Iranian foreign minister Abbas Araghchi. They were negotiating when this war began. But Pakistan seems to have a broader reach than that, which is really important because Iran, it is a theocratic and military regime in which the foreign ministry isn't by any means the most powerful actor. Pakistan has got quite wide-ranging reach within Iran, including to the Iranian Revolutionary Guard Corps, and that is really important because essentially they are the power behind the throne. We know that there is a new supreme leader, Mujtaba Khamenei, the son of the previous supreme leader, but he is in hiding. There are many questions about his health, and while he remains officially the head of state, it's really the Islamic Revolutionary Guard Corps that are the main power, and they have never engaged directly with the US. So the role of regional mediators who can speak directly to them is extremely important.
Yeah, that's important. That's important detail. In terms of people's expectations about the two sides here, Jane, and how long they will see it as advantageous to them to allow this conflict to carry on, the thinking seems to be the US will not want this to carry on because of the political realities of the midterms approaching. On the Iranian side, maybe they are understanding more and more the power that they have with the Strait of Hormuz, and maybe don't feel under so much time pressure. What do you think about the various time horizons?
Yeah, I mean, there is a complete imbalance between these two sides because at the end of the day, for the Iranian political system, this is an existential war. For the US, it is not an existential war. They do have ongoing issues that they need to resolve with Iran, but they do, it's not a direct, constant threat to them in the same way. So the Iranians will fight for as long as they possibly can. But it is also essential to kind of distinguish between the grandstanding and what is really happening. It may be that the Iranian political leadership is weaker than it appears. There is a huge amount of bravado coming from both sides, and Iran has launched a pretty effective communications campaign. They're all over social media. They're using memes that are very well targeted to appeal to Western audiences. They're referencing Epstein. They're playing on the cracks in the Western alliance, but a lot of this is propaganda and political theatre, and they must also be worried about what is going to happen to their ability to, keep paying the army and keep functioning economically. So this is exactly what mediators need to explore. Is there a near-term way out? Part of the problem, of course, is that Iran, it was already attacked by the US and Israel last year in the so-called 12-day war. And so there is a view in Iran that if they have a ceasefire in the near future, that will only be temporary. And the US and Israel could potentially come back, for example, after the midterms. So that does increase their incentives to cause pain now to try to discourage potential future attacks on them, assuming that the system does survive.
Wow, after the midterms, that adds a whole different time dimension. Jane, thank you very much for that. Thanks very much for joining us for the conversation. Jane Kinnemont, CEO of the United Nations Association UK. 8:44 here in London. Coming up on the programme, we'll get back to the private credit conversation, which has been rumbling along in the background for weeks and months, of course. Jamie Dimon warning that losses from private credit are likely to be larger than markets anticipate, as Goldman says it's ready to pounce as retail rivals retreat. There's a lot of nuance in these private credit conversations. We'll get to that shortly. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh, yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
48 minutes past the hour, Ian, I'll let you speak. This is what markets look like here in Europe. I think holding action, waiting for the Trump deadline a little bit later on. The CAC 40 is the standout story, up by around 0.5%. We've had strong Spanish PMI data this morning, at least at a headline level. The same cannot be said for Italy. Its data is out. 48.8 is the services number. The comp number comes through at 49.2.
Let us talk about the private credit story because it continues to rumble on in the background. The annual letter to shareholders written by the JP Morgan CEO, Jamie Dimon, touching on this subject. He's warned that losses from private credit are likely to be bigger than markets anticipate. Joining us now to analyse this and all of the other news flow from the private credit space, managing editor for private companies here at Bloomberg, Neil Callanan. Nice to have you with us, Neil. So Jamie Dimon sounding an alarm bell, it would seem, around private credit. But I'm also reminded that I think it was last month, JP Morgan launched an interval fund to take advantage of opportunities in private credit. So the conversation is a bit more nuanced than the letter would suggest. But what do we make of his letter?
Yeah, it's Jamie Dimon is returning to one of his favourite themes for another kicking, which is private credit. He obviously said last year that there was cockroaches in the credit markets. That turned out to be true. A lot of things came out afterwards. And now he's back again, warning that there will be elevated losses in the leveraged loan market when the credit cycle turns. And the reasons he picks for that are around the main reasons we know, which is around weaker covenants, which is very much true, where borrowers were able to secure pretty much anything they wanted. Around rising interest rates and spreads, which of course is a concern given the war in the Middle East at the moment, and also around private credit ratings, which is a widespread risk now, or a risk threat now. But at the same time, buried in the letter, he does say that they plan to increase their lending to private markets.
Yes. So kind of a slightly mixed message coming through. Not a mixed message coming through for Blue Owl. Tough day yesterday. Yeah, record low. I was just looking at the short interest before I came on. The shorts have started pairing. They are profit taking at the moment. Depending on the index you look at, they're down maybe as much as 10 percentage points. That's on the short side. So some are taking the profits and perhaps thinking we're near the bottom there. But one of the problems, obviously, is the software. SaaSpocalypse was the main driver of this. Now, war in the Middle East is going to become a bigger driver because once interest rates and spreads start to go up, some of those borrowers are really going to struggle to refinance, particularly at higher rates. And so this could go on for a while longer, which perhaps we weren't expecting.
So their business models could still be under pressure, but also more expensive to service the debt that they've got. Let me ask you about another angle on the private credit story that's become really relevant. Big Wall Street names, Goldman Sachs, Morgan Stanley, well, certainly Goldman Sachs, talking about capitalizing on the exodus of retail investors. So where retail has blinked and said, oh, this isn't for us. There's plenty of other money that's willing to fill that gap, it seems.
Yeah, and Bose Weinstein was the first to go into that and kind of offer in one of the Blue Owl funds to buy them at a massive discount. So it's no surprise you're seeing others. Experienced credit investors will always try to take advantage of retail money when it panics. Once they think it's gone too far, they clearly believe that there will be opportunities coming out of this. The converse of the rising interest rates being bad for borrowers is that if you do new lending and can get a higher spread, then you can actually get more profitable business. And so if you can identify the right companies, you can make a lot of money in the current environment. And that's what some of these funds are planning to do, is take advantage of that dislocation.
Neil, do we have any idea how much money that would like to get out has still yet to get out, i.e. it's still effectively being gated at this point in terms of its ability to exit these funds?
I don't have a number, but basically if you look at most of those funds, it's double what's been redeemed so far, so it's going to take several quarters for that to happen, particularly given obviously these redemption requests were a month ago, and everything has been somewhat negative for markets since then. You would imagine those redemption requests will be ongoing, so the next quarter is going to be interesting to see how bad they are, but at the moment there's no sign that there's going to be an ending to that. And then you look at somebody like Blackstone, where their staff members got involved and started investing in funds to help people. Whether that will have to be replicated by some of the other funds as well.
And Neil, if we're sort of playing whack-a-mole here, and retail investors can't get out through this hole, I'm not sure how well this metaphor is going to work, but if they can't get out through this particular hole, do they try others? You know, like the listed credit space. There's been people talking about how the gating may prevent this from really spreading in private credit, but it means other asset classes might be in focus.
Yeah, definitely. I think retail investors in general are starting to realize the dangers of private markets, which is what we've been talking about, which is that your money does get locked up for a long time and you may run into trouble redeeming it. But also, if you are running for the exits in private credit, that means the money is gone on the private equity side, because the losses that you're expecting have already been taken on the equity side. So the next leg perhaps will be whether people start trying to get out of private equity funds because they're so worried that actually the losses will be so big that it will affect the private credit.
Okay, thank you very much. Bloomberg managing editor for private companies, Neil Callanan, with the latest on that story. Quick run through the week ahead. We have a focus on Hungary that runs through the week because JD Vance is arriving there today ahead of the elections that take place at the weekend. US earnings in focus with ExxonMobil, Delta Airlines also with numbers, Fed minutes midweek. And then towards the end of the week, we get further data out of the US with US CPI. That perhaps the data points of the week, at least.
Yeah, a lot of inflation data out this week that we're all going to pay attention to, given what's changed on that front. Let's talk to Adam Linton from the Bloomberg MLive team to get a sort of feel of how today is set up and what the rest of the week looks like. Let's start with today. What do you do with today? Got this deadline coming at 1 a.m. tomorrow morning.
Yeah, I mean, it does, as you mentioned in your introduction earlier, it does feel like we're very much in somewhat of a holding pattern. And, markets are relatively cautiously optimistic. We're not, down that much in the US, and Europe was a slightly firmer open. And I think that's largely a byproduct of the fact that markets are just very much grown accustomed to the fact that Trump will push back these deadlines or even front-run them hours before. So, let's be on watch to see if he does an early morning Truth Social post. And it's also, part of this reflexive dip buying that we've seen throughout the conflict as well. Traders don't want to be caught short at the moment that, the positive breakthrough headline captures. Yeah. So that's why we're probably, not down as much as perhaps we could be. But, as a note of caution, ultimately, there is still this tail risk of this material escalation today between the US and Iran, and markets can't fully discount that. And also, if he does extend the deadline, yes, that does allow more space for talks, but they are very far apart in their demands, and the longer these talks go on, the less there is, being done to reopen the Strait of Hormuz, and that just compounds the negative economic effects that we've been discussing over the past weeks.
Yes, which takes us to some of the data out this week, and the CPI print out of the US, probably the data point to watch this week, I suppose, for an early take on how much this is sticking to the US economy. Perhaps of the three major, parts of the globe, that we talk about the most on this program, the one that is going to be last to the inflation party. It's a heck of a party, but the last one for it to show up in. But we're still going to get that inflation print later this week.
Yeah, and look, I think the bond market will ultimately take note of it, but, we're expecting to see, month-on-month headline increase. That would be the fastest increase since, I believe, June 2022. That's not really going to tell us too much more that we don't already know. We've seen these headlines, of prices at the pump, et cetera, et cetera. It's what's going on with the core. That's the real focus of central bankers. And, those effects will take quite a while to play out, and so we may not necessarily learn anything too
not expected to move much, is it, this week?
Yeah, exactly. It still feels like we're very much in a headline market. And then when you think of that US CPI release on Friday, it is on a Friday, which, is something we've talked about for weeks now, is that markets tend to pare down risk. They're kind of bunkering down for the weekend and any potential headline risk. But ultimately, we don't know what the lie of the land between US and Iran is. It could be a very different picture to what it is now.
Adam, thank you very much. Adam Linton from Bloomberg Markets Live blog. US futures down 0.4% on E-minis right now as we wait.
Yeah, they kind of came down and then they just gone sideways, really, as we just wait and see what happens. We will be back tomorrow. We'll know more then. Hopefully, we'll figure it all out. The Pulse is next. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Oil gains while stocks lose momentum as President Trump ramps up threats to destroy infrastructure across Iran if his demands aren't met before a deadline tonight. Testing the mood music, Bill Ackman's Pershing puts forward a multi-billion-dollar merger with Universal Music that would move its primary listing from Amsterdam to New York. Plus, returning home, NASA's Artemis astronauts head back to Earth after a record-breaking trip around the moon. Well, a very good morning. Checking in on these markets, we have US futures pointing south as we head towards the Wall Street Open, dominated by President Trump's new deadline on Iran, 1 a.m. London time Wednesday, and European stocks catching up to that mood somewhat earlier in the session, but now up 0.3%. Volumes, mind you, are light this morning. It's post-Easter, but you also have traders sitting on their hands as we count down to that deadline. Oil climbing higher, though. We're at 111 on Brent, up 1.7%. Well, let's take a look at the European markets map. As I say, it's a tepid picture across the continent this morning. We had been seeing the Amsterdam index lower, weighed down by ASML. This is the first chance for the stock to react to the proposed US trade restrictions that would crack down on exports of chip-making tools to China. But the AEX is now up 0.25%. Gains for Universal on that M&A action, lifting the stock, although, of course, Universal is a much smaller player than ASML, so doing a bit of the work to offset it. Well, for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. Well, less than 24 hours remain before President Trump's latest deadline on Iran expires. Tehran has so far rejected a US ceasefire proposal sent via Pakistan while demanding a permanent end to the war. The US president is insisting that any deal will include freedom of navigation through the Strait of Hormuz, threatening to obliterate key Iranian infrastructure if his terms are not met.
We have a plan, because of the power of our military, where every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business, burning, exploding, and never to be used again. I mean, complete demolition by 12 o'clock. And it'll happen over a period of 4 hours if we wanted to.
For more, I'm joined by Bloomberg's Washington Deputy Bureau Chief Laura Davison. Laura, is this a harder deadline than previous deadlines that the president has set? And what are Trump's options if a ceasefire isn't reached by 8 p.m. Eastern?
Yeah, so he has suggested that this deadline is a little bit firmer. And in that press conference there, he said that he's serious about this deadline. I'll note that he has set several previous deadlines that have essentially been meaningless. He's blown right past them. And there's no special magic to 8 p.m. Eastern Tuesday evening. This is, again, a deadline that Trump himself has set, and he's able to move it really without any consequence if he were going to. So that's the thing that everyone is watching for over the next 18 hours or so on exactly what that looks like. But his options are, what he laid out there in that soundbite is that, he is suggesting that the U.S. military would sort of go on some massive bombing campaign targeting infrastructure sites, power plants, bridges, and the like. That, I would note, would constitute likely a war crime if he were to go down that road, but Trump has said he's not concerned about that, and that's not really constraining him. It's also possible he does something far less than that, whether that be a handful of targeted bombings, or maybe suggests that talks with Iran are going well and he's going to hold off for now. But really, this is a whole waterfront of options for Trump. But the ball is really in his court. It's unlikely there's going to be any meaningful peace deal that is arranged in the next less than a day or so. But this is again a deadline Trump has set, and Trump can move.
So President Trump saying he's not really worried about being prosecuted for war crimes. Laura, is that because in reality he wouldn't be prosecuted for war crimes?
Yes, it would be very difficult for Trump to be prosecuted for war crimes, and there's a couple reasons for that. One, that he's very much protected within the United States. There was a Supreme Court decision earlier this year that essentially gives him near blanket immunity for many of the actions he takes as president. This was a Supreme Court decision, a controversial one, but one that stands nonetheless, and would mean that at least in the U.S. he would be shielded. The other venue where someone might, bring up war crimes would be in the International Criminal Court, the ICC. The U.S. is not a member of that. So again, just institutionally, structurally, it's very hard for Trump to be targeted by these sorts of allegations if he were to proceed. There's also, some gray area here of, Trump is talking about civilian sites, but sometimes, you have to build a case on how much, these sites are, purely civilian versus if there's a military tie-in. It's very complicated. It's a process that takes a long time, and just the way that the U.S. jurisdiction is set up, the odds are really against there being some sort of meaningful punishment for Trump if he were to move forward with this.
Laura, thank you for the context. That's Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Well, turning to the Middle East side of this, Iranian state-run media say that the country isn't being deterred in its offensive against the U.S. and Israel due to President Trump's ultimatums. A military spokesperson says that the U.S. president's threats stem from being trapped in a deadlock. Let's now bring in Bloomberg Horizons anchor Jomana Basetchi. Jomana, I wonder, are there any signs that Iran is more likely to agree to a ceasefire with this new deadline when it already rejected the last ceasefire proposal?
No real signs, really, Lizzie, on the ground, despite the fact that President Trump saying that there is a willingness from the other side to talk. There doesn't seem to be that much serious engagement from the other side. And in fact, just in the last 15 minutes, the Iranian president, Pezeshkian, put up a post on X saying that over 14 million Iranians have declared their readiness to sacrifice their lives, and I am one of them. He's essentially saying that they are ready to fight. So this is the language that continues to come through from Iran. Now, there have been many mediation efforts. We know that those have been spearheaded by Pakistan over the course of the last couple of days. And in return, Iran have actually put forward a list of terms that they would like to see in order to bring about an end to the war, but still very, very far from the terms that the U.S. have insisted on, as Laura was just running through, including assurances that a war would never happen again, that this isn't just a temporary ceasefire, this would lead to something more permanent, and once again reiterating that they would like to define a new protocol about the passage of vessels going through the Strait of Hormuz. And New York Times reporting that they would like to levy a charge of up to $2 million per ship that is passing through. Clearly a non-starter for many nations, almost all nations around the world. And so this is where we are at. It is a very tense 24 hours coming up in the region. And I will also say that there are already signs that perhaps the military operations are about to start intensifying. The IDF sending a warning to Iranian nationals not to use the railway system until 9 p.m. tonight, perhaps in anticipation of strikes that are to come.
Well, Jumana, you mentioned the Strait of Hormuz. We know that the UK will be hosting a military planning meeting of more than 40 countries to secure safe passage in the strait after the war ends. The president insisting, as you say, that the reopening of the strait is a condition to end the war. Is that likely? Where are we likely to end up here?
Yeah, well, what has happened over the course of the weekend is, once again, President Trump is relinking the opening of the strait with the cessation of hostilities and the end of the war. There was a period last week where he sort of dissociated the two and implied that it should be other nations that should deal with the ultimate resolution of the reopening of the strait. That is no longer on the table anymore. So there's clearly a linkage. And that post that he put up on Easter Sunday seemed to suggest that unless they do open the strait unconditionally, then the U.S. would be forced to act. Now, at the same time, he's expressed his displeasure at many of his European allies, at NATO, for not stepping up with the efforts to help with the reopening. And on the back of that, we've seen a couple of efforts put forward by the UK. Last week, the Foreign Secretary, Yvette Cooper, had a call. It was a virtual meeting with around 35 countries. Today, expected to pick up on that as well. The UK are expected to host another virtual meeting with about 40 countries, not just from Europe, but from around the world, including some Gulf countries like the UAE as well, to discuss ways to reopen the strait. But here, crucially here, not any of these countries have actually committed to getting involved militarily. Most of them are saying that they will assist with the monitoring of the strait situation once the war is over, i.e. no military involvement. And so right now, the angles that they're looking at are diplomatic or potentially economic. And the other big question is what each one of these nations can bring to the table in terms of potential surveillance technology or minesweeping capabilities. And this is there's still a lot of detail that needs to be worked through. But at least there is a push from some of these European allies, from NATO, to do something about the opening of the strait, because as we've been saying and reiterating, for many Gulf countries, an outcome in which Iran still effectively controls the Strait of Hormuz is one that is unacceptable.
Jumana, appreciate the analysis. That's Bloomberg Horizons anchor Jumana Basecci. We're staying with geopolitics. We have a redhead crossing the terminal, which is that the Prime Minister of Hungary, Viktor Orban, promised the President of Russia, Vladimir Putin, in a call to do all he could to help Russia. This is, of course, on the other front, which is the war in Ukraine. And it comes on a day when we have the US Vice President, J.D. Vance, visiting Budapest to lend support to Prime Minister Viktor Orban as that campaign for Hungary's pivotal election enters its final week. We are expecting a press conference at 1:20 p.m. CET between Vance and Orban, a joint press conference. So we'll keep an eye on that. But let's turn now to the latest equity market reaction to the events in the Middle East. Joining me now, I'm pleased to say, is Wolf von Hotberg, equity strategist at J. Safra Saracen. Really good to have you back on the programme. I wonder, with an outcome so binary as our anchor in the Middle East, Jumana Basecci, was just outlining there, to this deadline, this new deadline from President Trump, what do you do as an investor in the lead-up? Good morning.
Good morning, Lizzie. Yeah, thanks for having me back. I mean, I think it's probably well advised not to do much at the current juncture, given that we, kind of have basically the market potentially going either way, just on the back of the developments which we have on the ground in the Middle East. We could quickly see a rebound if we were to find some kind of middle ground, some news, let's say that, and I think not really Trump moving, let's say, on the stick part of his negotiation strategies, but rather on the carrot part, providing some offering to the Iranians such that they come to the table. That would certainly lead the market to come back to some extent. On the other hand, obviously, you know, if this situation persists just as it is, even without an escalation, we will likely see oil prices go higher over the coming weeks. And what it means for equities is that equities would most likely suffer, as they've done over the past month or so, pretty closely tied to the oil price. And in that context, I think what should also be noted is that we haven't really seen much of a risk-off. You know, it's been very measured in terms of the market moves on the equity side, very closely tied to the oil price. Not much in terms of, you know, volatility spiking or market selling off beyond basically what the oil price is telling us.
I mean, even just today, we've had gains in the Asian session. We're now seeing gains in the European session, and futures are only to the downside slightly on Wall Street. When it comes to when the geopolitics will actually be reflected in earnings, the S&P is still being held up by healthy profit projections in the US. When do you expect that to actually shift when we have oil still higher?
Yeah, I think that's a good point. I mean, if you look at the US, at the fundamentals, you know, it's been exceptionally strong. And this is not only earnings where we've really seen, and I think, you know, this number it really stands out, 4% 12-month forward earnings going up over the past month. This is something which we haven't really seen since the end of the pandemic. So very strong momentum here. But then on the other side, also on the macro front, you know, we have had ISM numbers coming in quite strongly on the manufacturing side. Obviously, non-farm payrolls last week. Everything, you know, pointing at a cycle in the US, which is quite healthy. And I think that's part of the reason why the market has been as resilient, basically, as it's been. In addition, obviously, to the, you know, let's say, taco fears coming from Trump, potentially saying basically the market doesn't want to be caught on the wrong side of the geopolitical risk spectrum. But obviously, going forward, as said, if it persists as it is right now, say basically the Strait of Hormuz being pretty much closed, around 10% of global oil supply being removed from the market, this should increasingly lead to this demand destruction globally. We would think that, you know, kind of given the sensitivities which we know from the past, oil prices would have to rise to around 130 to 140 over the medium term. And at this point, we would probably start seeing a growth impact on like US GDP growth, European GDP growth, obviously in Asia, but then also on earnings, say basically the strong momentum which we've seen recently should roll over and come off.
And where will we see that margin pressure start to show up first?
I would think first would basically be in the cyclical end of the market, the more oil-sensitive sectors, like look chemicals, look industrials. Those guys would probably see the pressure, you know, hit them first. And then it needs to be seen. What we like, actually, I must say, you know, is the tech space where we say the ultimate, the direct impact from higher commodity prices is more muted. We wouldn't think that the pressure will come through as strongly on the tech sector. Yeah, but that's basically it. I would think, you know, kind of that the more cyclical and more industrials and more chemicals, materials, those guys would likely suffer the most. And that's also something to look out for in the Q1 earnings season. Obviously, 1 month of the reported numbers being numbers, you know, which have been generated through during the conflict, with March, the beginning of March, basically seeing the start of the conflict. And I think it's very interesting, or will be very interesting, to listen what companies have to say and what I have to report on that front.
Okay, so you still have a lot of faith in the resilience of the AI tech story in the States. What about contagion risks from private credit? Are they still being underestimated?
I don't think that they're being underestimated, to be honest. I mean, they're very much on the front pages in that regard. In general, you know, it's a very opaque sector. Obviously, we don't know, you know, what the actual default rates, including like, you know, the payment in kind restructurings and so forth, are right now. But what I think can be said is that in terms of the size of the sector, you know, that whatever happens should be manageable in terms of the further or wider systemic risks for, let's say, the financial sector and so forth. So meaning it may generate losses here and there, may generate, or we may see increasing defaults and potentially, you know, kind of liquidity being pulled from the sector in general. But I don't think it has the potential just size-wise to disrupt the wider financial sector. Just to put it into context, it's more or less like a tenth of what the real estate exposure to the banks was in like 2008, what we have right now in terms of the banking sector capital in the US. So far smaller in terms of scale and dimension.
So, Wolf, when this all blows over in terms of the geopolitics, whenever that may be, do you envisage US investors coming back to Europe and seeing Europe as a good diversifier?
For the time being, I think Europe is much more in the spotlight. You know, it's had a pretty solid start to the year until, let's say, the beginning of March or maybe mid-February, and has started to roll over. And I think the reason for that is basically that Europe, to some extent, I'm talking euro area here, is exposed to higher commodity prices because it's driving energy costs, and that's obviously where Europe is quite sensitive. Also on the LNG cost, where we've seen Qatar, you know, basically producing 20% of global LNG or something like that, being removed entirely from the market. So there is a pain point for Europe, such that I would think it's more difficult for Europe to come back right away, because also, even if we were to see a de-escalation today, you know, it may take some time to bring the capacity back into the market. And in addition to that, you know, the GDP impact in Europe should also be larger. So we would think if oil prices stay at 100 or go to 130 and stay at those levels for a prolonged period, European growth could, like, you know, go down to 50 basis points or so. Euro area growth for 2026 doesn't really, you know, provide a very strong case for Europe in our view. Different, though, must be said, UK, Switzerland, more defensive markets, less exposed to oil, less exposed to energy costs, and they may stand out in Europe.
Okay, an important distinction. Wolf von Hotberg, equity strategist at J. Safra Sarasin, thank you very much for your analysis this morning. We are looking at stocks swinging between gains and losses here on the Stock 600, nearly an hour and a half into the European cash trade. But coming up, an 8-fold leap in quarterly profit for Korea's Samsung. We'll talk tech next. This is Bloomberg.
Up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
As the AI boom reshapes the global tech landscape, one of the industry's most important players is making a dramatic pivot. Arm, long known for powering the world's smartphones, is now betting its future on the cloud, data centers, and the explosive growth of generative artificial intelligence. Bloomberg's Tom McKenzie spoke to the CEO, Renee Haas.
I think it's very significant. When we looked at the opportunity, particularly in the data center, with the growth of AI, but more specifically agentic AI, and agentic AI quadruples the demands on CPUs, we looked at two things. Number one, this is a market that's heavily underserved at the moment. And number two, customers are asking us, would you deliver and build a chip for us? We now have our first product. It's ARM's product. It's the ARM AGI CPU, designed by ARM, built by TSMC, sold to customers like Meta or SAP or Cloudflare, OpenAI, a litany of customers that we've announced. And the demand has been extremely strong.
What is the potential size of this new revenue stream, of this new market for you?
When we look at the royalties in our traditional business model associated with the cloud and AI business, it's about a $3 billion TAM. When we look at the potential of this product line, maybe stretching out 4 or 5 years, it's north of $100 billion. So it is profoundly different in terms of the scale. It puts us in a whole different zip code.
When do you think you'll be able to declare victory? What for you is success? You've, again, shifted ARM to have a laser-like focus on data centers to build out that market. When can you call that a win, do you think?
Well, on one level, I think it's a win now in that we've got real customers, Meta, SAP, Cloudflare, Cisco, as I mentioned. So on level 0, it's a win. Our first product is out. The first version is functional. It works. Customers have placed orders, and we're going to be shipping towards the end of this year. Going forward, I think there's lots of opportunity to do much, much, much more. Because, again, back to the AI demand, AI is the technology that touches the entire planet, whether that's in the data center, whether it's in a robot, whether it's in a small wearable device. And ARM has a very, very unique opportunity to address all of those areas, whether it's a piece of IP, whether it's a compute subsystem, or a chip. So the aperture for the opportunity for ARM has just got much, much, much wider. I mentioned north of $100 billion for this AGI CPU product. But if we think about the broader market, it could be north of $1 trillion that we could address.
ARM CEO René Haas there, and you can watch more from that interview on the next episode of Bloomberg Tech Europe. Now let's get more from Bloomberg senior strategist Neil Campling. We can stay on that tech theme, Neil. I want to talk about Samsung, though, because shares have really been whipsawing. They had an 8-fold leap in quarterly profit, and yet they ended up closing lower yesterday, and tech as a sector is one of the only 3 in negative territory this morning. I was going to ask you how much those results from Samsung would quell the worries about the Middle East war on tech. What do you make of them?
I think we can separate the two areas. I think certainly AI, in terms of the demand drivers, are very clearly there, as you've mentioned, in terms of Samsung's 8-fold profit increase, which is quite exceptional. Now, 90% of that profit is believed to come from the memory chips, which obviously power the AI modules. So we also have to remember that there are a range of memory indices that are up more than 600% in 6 months. So there's an element of Samsung's travel and arrive in terms of stock performance in the one-day sign. But clearly, demand drivers are definitely there. Profitability is very high. Margins are exceptional within the entire industry. So I think that you look at the numbers in isolation, and they are absolutely stunning.
And speaking of impressive numbers, we've had Anthropic's revenue run rate topping $30 billion. That doesn't seem to have been held back by its dispute with the government.
Absolutely true. And I think that is because we are seeing over 1,000 companies now spending $1 million a year on Anthropic solutions. And that's just Anthropic as one AI platform. Now, that number itself has more than doubled since February. So in just 6 weeks, you've had a doubling in terms of corporate companies spending significant dollars on Anthropic. Then you add in other AI platforms as well. And clearly, as to that example we had with the interview with ARM CEO, $1 trillion opportunity from their ecosystem. So adding all the other AI systems, there's significant runway still ahead for the industry.
Okay, Neil, thank you for that. We are, of course, seeing Anthropic now working with OpenAI and Google to clamp down on Chinese competition as well. But that was Bloomberg senior strategist Neil Campling. Coming up, with President Trump's deadline looming, oil prices are rising for the 3rd straight session as markets brace for strikes. We'll bring you more analysis next. Stay with us. This is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London, and these are your top stories. Oil gains while stocks lose momentum as President Trump ramps up threats to destroy infrastructure across Iran if his demands aren't met before a deadline tonight. Testing the mood music, Bill Ackman's Pershing puts forward a multi-billion-dollar merger with Universal Music that would move its primary listing from Amsterdam to New York. Plus, returning home, NASA's Artemis astronauts head back to Earth after a record-breaking trip around the moon. Well, a very good morning if you're just joining us. It's 9:30 a.m. here in London, and we have oil higher for a third day. Though pairing earlier gains, Brent now at 110, as President Trump has escalated threats to obliterate key Iranian infrastructure if his terms aren't met before tonight's new deadline. Iran has warned that it would respond by ramping up its own attacks on energy infrastructure in the Persian Gulf. So let's get analysis now with Bloomberg's EMEA News Director, Will Kennedy. Will, what I want to know is if President Trump does move into decimation mode, as he's been threatening over the weekend, where does the oil go? What are analysts saying?
Yeah, it would have the potential to go higher. It would be a clear escalation in the conflict, and we could expect, based on what Iran has done previously, that it will retaliate against infrastructure in Gulf neighbors like the UAE and Saudi Arabia and Kuwait. And it would signal that there's going to be no end to the conflict in the immediate future, and importantly for oil traders, that the Strait of Hormuz is likely to remain largely closed to oil tankers.
And have we seen any difference in who's been allowed through the Strait over the weekend?
There was some uptick in traffic over the weekend. I think it was the busiest couple of days that we'd seen since the early days of the conflict. But I think what's clear is that Iran continues to assert a good deal of control over which ships can go through. Importantly, we saw two LNG tankers laden with Qatari gas that decided that they would try and transit the strait and then thought better of it at the last moment. So we're a very long way for seeing any free flow of traffic through the strait.
Interesting, just in the past minute, we've seen a headline of Hungary agreeing to buy, or is going to reach a deal to buy oil from the US in a visit in Budapest by the Vice President J.D. Vance. That's taking place today. We're expecting a press conference between Vance and Orban later on. And so this is according to a person familiar with the matter. But just turning back to the geopolitics around the Middle East, Will, what was the message out of OPEC over the weekend? Because, of course, you had that symbolic hike, but surely the focus is on how long it's going to take for energy infrastructure to be rebuilt.
It was very symbolic. There is no sense in which any OPEC member is putting less oil on the market than it can. Everyone is trying to ship as many barrels as it can, and significant OPEC members, most importantly Iraq and Kuwait, are able to put very little oil into the market right now. So it was very much symbolic, and one assumes once this crisis is over, given how much inventories will have fallen globally, given how much restocking needs to be done, OPEC members, most importantly Saudi Arabia and the UAE, will be shipping as much crude as possible. There is a real physical shortage of oil right now, and people are trying to lay their hands on whatever barrels they can, including hungry, rather unlikely import of US oil.
Okay, Will Kennedy, tying those threads together for us, thank you very much. Well, as President Trump threatens to obliterate Iranian infrastructure unless a deal is struck by tonight, Tehran has vowed to respond in kind. Let's get more analysis now with Ada Zamirrad, head of Africa and Middle East research at the German Institute for International and Security. Thank you so much for making time for us. I wonder, as you look at both sides, whether traders are right to interpret President Trump's repeated delays to his deadlines as a sign that de-escalation is somewhat inevitable. Good morning.
Good morning. Yes, I'm afraid that we are headed towards a massive, dramatic escalation of an already dramatically escalated conflict. Unfortunately, President Trump has declared that he would essentially bomb Iran back to the Stone Ages, and Iran, on the other side, has declared that they will open the gates to hell. And this is where we are headed now at this point, because no ceasefire is in the making. We are nowhere near a peace settlement, and every side is willing to escalate even further.
And is your sense that Iran takes the US less seriously each time he delays a deadline?
That's certainly the case. I think Iran is very much aware that the United States has essentially boxed itself into a corner. They set out in this war strongly suggesting that there would be regime change. They came up with a couple of military objectives, and they kind of missed the opportunity that they had to withdraw at a time when they seemed to be victorious to a certain extent. For instance, when they killed Supreme Leader Khamenei. But now they're boxed in. They don't find a safe, face-saving way to get out of this conflict easily. If they just go out now, it seems that there would be a huge problem with the Strait of Hormuz. They can't just leave it like that. At the same time, they don't really have any good military options. They don't know what to do exactly to make sure that they get the upper hand again. And Iran is very much aware of it. They're aware that they have a firm grip on a critical choke point of the global economy, that is the Strait of Hormuz, and they're not going to easily give up on it at this point.
Well, if there is a ground operation, what would you see as being its main aims? There were suggestions of taking Kark Island, but that seems like it would just make US troops a fixed target. Would it be more about safe passage through the Strait of Hormuz? What do you expect those troops would be mainly for?
Well, there are different scenarios here. They could try to seize the island, but I mean, seizing is only one part of it. They would have to control it. They would have to defend it, which would not be easy. It's a very narrow strait. Iran can easily target the island. And even if they were to control it and defend it for a long period of time, to put some pressure on Tehran to reopen the strait, this is probably not going to work. Again, Iran could still fire drones from the mainland, far, far away from the shores, and it only takes a couple of drones to make sure that the passage through the Strait of Hormuz will not get ensured, that people will still hesitate to go through. So it's going to be difficult to put enough pressure on Iran through this kind of operation. Plus, even if they were successful in managing to fully control it and put pressure on Iran, I don't think Iran would necessarily back down. If they can't export anything through the strait, they would make sure that nobody else could go through the strait either. So this is not going to be a very prospective, successful operation. But again, the US has boxed itself into a corner. It needs some kind of spectacular, if you will, operation, something that would give Trump a face-saving way of saying, okay, this is how we're going to end it. We achieved our goals. We killed Khamenei. We destroyed the military infrastructure to a large degree. And now we had this kind of operational success, even if it doesn't turn out to be excess, to at least give them a way out.
And yet, even if Iran thinks it has the upper hand right now, is there a risk that it misses the chance and overplays that hand, misses the chance to lock in concessions?
There's certainly a risk of that. Iran has showed time and again that they tend to overestimate their own position. They are currently in a very strong position regarding the leverage that they have amassed through this war, something that people did not expect, or a lot of them did not expect prior to this war. But we've seen it in the aftermath of October 7th, for instance, where Iran was at the pinnacle of its power projection capabilities in the region, but they pushed too much on all fronts. They pushed on the regional front, they pushed a lot on the nuclear front, and they lost a lot of their leverage within a span of less than a year. So there's this risk for sure. Now the new Iranian leadership has to prove that they know when to seize an opportunity, that they know when to give in and make compromises, but this is something that they still have to show.
Yeah, because realistically, can you see the Trump administration agreeing to the sort of financial concessions that Tehran's asking for?
No, I mean, Tehran has been asking for reparations, and they're very much aware that they're not getting this type of compensation from the U.S., but the question is how to frame it. You could see sanctions relief as a form of compensation. You could see access to frozen assets as a form of compensation. Even now, Iran is already charging transit fees for passage through the Strait of Hormuz. This is essentially a form of compensation fund, if you will, that Iran is already making use of. So there are different kind of ways to think about how to compensate Iran. But even this will be very difficult, I think, domestically for Trump to put through. But this is something that he has to come to terms with if we're going to actually achieve a broader settlement here. It will be a settlement where Iran is likely going to get some kind of economic relief and where Iran is more likely also to have a bigger role in the Strait of Hormuz than it had prior to the war.
So, Azadeh, what do you see as the hard limit on President Trump here? Is it rising gasoline prices ahead of the midterms? Is it the potential deaths of US servicemen? The aura of invincibility really being pierced by the downing of the US aircraft over the weekend?
I think it's probably a combination of all of those, plus, as I said, a very difficult kind of position to be in, because there's no easy way out, no face-saving way to get out. I mean, maybe after he killed Khamenei, he could have easily said, okay, we decapitated the system and we've done what we could and we massively diminished their military capability. That would have been an opportune time to get out. Now that he's stuck kind of in this war, he knows he has no good options, or maybe he doesn't know, but we know that it's going to be difficult to find a good military option to get out of it. It looks like the U.S. is going to push for further escalation because they want to get out. I would assume that Trump is not eager to prolong this kind of conflict, but in order to get out, it's not going to be helpful to further escalate. Further escalating to a peace settlement is probably not going to work. So the more they escalate, the more they're going to be dragged in, and this is proving to become quicksand for the United States.
Azadeh, we appreciate your thoughts as always. That's Azadeh Zami-Rirad, Head of Africa and Middle East Research at the German Institute for International and Security Affairs. Well, now to some of our top corporate stories this morning. JP Morgan CEO Jamie Dimon says the US needs to get stronger to maintain its military and economic might. In a letter to shareholders, he says that many companies will only thrive if their countries thrive. Dimon detailed his bank's plans to deploy more than $1 trillion to bolster US economic security and resilience over the next decade. Meanwhile, Goldman Sachs says a reliance on stickier, more patient institutional investors rather than wealthy individuals has helped its $15.7 billion private credit fund narrowly escape the broader exodus plaguing peers. Morgan Stanley, meanwhile, says it plans to debut an interval fund investing in a wide spectrum of credit strategies. And staying with private credit, shares of Blue Owl Capital closed at a record low yesterday, capping weeks of declines fueled by mounting concerns over the health of that $1.8 trillion private credit market. Last week, the firm said that it would limit redemptions from 2 of its private credit funds following a surge in withdrawal requests. Well, for more, we're joined now by Neil Callanan, Bloomberg's private companies managing editor. So, Neil, you've got Goldman saying that it's ready to pounce on retail investors fleeing private credit. How has it managed to sidestep the redemptions issue?
Well, its own kind of terms is that its capital is more patient and stickier, and therefore it doesn't run for the exits in the same way retail investors have been. But if ever there was a case where by the skin of their teeth pertained, it's this 4.999%, and at 5% they would have had to hold redemption. So just about in this case. But yes, the dislocation in the credit market markets is definitely an opportunity for people, experienced investors, to take advantage of. And the likes of Oaktree and Goldman Sachs and also Morgan Stanley with their new fund are positioning themselves to do this. And the likes of Bose Weinstein have been positioning to take advantage of the retail investors desperate to get their money back.
So it's not counterintuitive that you have the likes of Morgan Stanley leaning into private credit when so many seem to be leaning out?
Yeah, I mean, there is a case of whether everything has been oversold. So, you know, if you consider that, what people are doing is they're assuming that all the equity in the private equity part has been wiped out, and then that's when a hit will start to fall into the private credit bucket. So there's been no evidence really that that's going to be a widespread theme. The fear is that software and the dislocation from AI will eventually lead to that, and that could be very well be the case. But for now, people see the opportunity because they think they can select those companies that have been oversold and move in and kind of lend to them and be paid back at the end, which is the key part of credit.
Well, the poster child for all this misery seems to have been Blue Owl, and you had it closing at a record low yesterday when they said that it would limit redemptions at 2 of its private credit funds. Just how bad is the situation at Blue Owl?
So, you know, certainly short sellers have been trying to take advantage of what's happening here, and depending on the short selling index you look at, it was up to nearly 30% of shares outstanding at one point. That's now come down to 15%. So definitely there's been some taking money off the table. So from their point of view, they are beginning to see the end, although it remains very elevated. But again, it's the continuation of that trend where people are saying, well, if retail investors are fleeing and you can't raise money, you're going to have lower fee income in the future, and they're taking the position now that they want to sell and get out. I mean, the irony of all this is, do we get to the point eventually where the share price is so low that a management buyout might be on the cards? I have no evidence to suggest that might be the case. But when you see that kind of dislocation, your managers saying, we still believe in all of our assets, we don't understand necessarily why this is happening, that's a case where suddenly some outside private capital might be willing to support a take private.
Okay, really interesting. A possible outcome down the line. Neil, thank you for the update. That's Neil Callanan, Bloomberg's private company's managing editor. Well, shares in Universal Music Group have been really volatile this morning, at one stage surging as much as 24% over in Amsterdam. This after Bill Ackman's Pershing Square proposed a merger which would see the world's largest music label move its primary stock listing from Europe to the United States. Let's get more now with Benoit Berthelot, who is Bloomberg's European media and entertainment reporter. Benoit, good morning to you. I wonder, what's the attraction for Bill Ackman to Universal? Do you think he might have a thing for Taylor Swift's music? Is he a Swiftie?
I don't know about that, but certainly he's always considered Universal Music Group as a good business. He's been an investor. It's a biggest record label in the world, and it's been boosted by the rise of streaming and a new business model for music. But that said, he's also an activist investor that's been sort of frustrated by the management of the company. He's been pushing for a while for relisting of the company in New York, in the US. Universal Music, of course, with artists like Taylor Swift, is really, in terms of decision-making, centered around Los Angeles. It is where the CEO, Lucian Grange, is based, but it is listed in Amsterdam. So he sees that there is a contradiction there. Maybe there could be a boost in the valuation of the company if it was listed in the US. But of course, this is clashing with the views of the main investor in the company, that's French billionaire Vincent Bolloré.
And we can come back to him, but Universal shares now up 13%. The stock really swinging around. What would Pershing likely do to the company apart from moving the listing to New York?
So they said there were problems basically that are outside of the business of Universal Music Group. They basically point to communications problem, bad relations with investors, an underuse of the company's funds. They could do more acquisitions, more operations. Also, he said that the stake in Spotify is undervalued. Universal Music Group has a stake in Spotify. He would name a new management, etc. So basically, he says like he has a bit of vision for the company and for a valuation that would better reflect its position in the world of entertainment.
Yeah, the context, of course, being that while the shares are up this morning, they have been slumping. I wonder, given that Ackman has blamed that French investor you mentioned, Vincent Bolloré, for that slump, what if Bolloré doesn't support the move? Is the proposal therefore dead in the water?
Yes. So he holds the key to the company in the fact that he has 18%. Like, he's the biggest investor with Bolloré SE, like his top main holding company, and also there is Vivendi, which was a media conglomerate that Universal was spun off at the time. That company has 10%, so altogether it's 28% that Bolloré has sort of a say on. He basically is controlling these companies. So yeah, of course, his opinion is going to be very important in this. He would have to support this move. We have no indication that he has said anything so far about this. We had a no comment from Vivendi this morning, and there is a call later today with a presentation of this plan, and basically everyone is going to see what's proposed there. But so far it's really wait and see, and he's always a very unpredictable investor and businessman.
Benoit, thank you for the update. That's Benoit Berthelot, Bloomberg's European media and entertainment reporter. Well, coming up, NASA's 4 Artemis astronauts are headed home from the moon. We'll bring you all the latest on that mission next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Geo report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
This is The Pulse. I'm Lizzie Burden in London. Well, NASA's 4 Artemis astronauts are headed back to Earth after a record-breaking journey behind the moon. The Orion capsule came within 4,067 miles of the lunar surface, the closest humans have been in over 50 years. For more, we're joined now by Kate Duffy, Bloomberg's aerospace reporter. And Kate, of course, the mission is still underway, but just how significant are the milestones that it's achieved already?
Well, a few records have been broken during this mission. Obviously, as you say,
say they've travelled the closest to the moon than any humans have done in over 50 years, but also they've travelled further into space than any human has done before. So now they're on their way home, hopefully splash down off the coast of San Diego on Friday. So there's still a few more days to go, but they've accomplished a lot. They've taken pictures of various planets like Venus, Saturn and Mars. They've also had this communications blackout, which was expected, but it lasted for about 40 minutes, and that's when they fly around the moon. There's just no way of contacting the astronauts once they're on the far side of the moon. They've also seen the far side of the moon, which is a side that we never really get to see unless you do this kind of mission. So they've accomplished a lot so far.
That's amazing. And so obviously this is part of a longer term plan for NASA. What's the mission so far proved about that longer term plan?
Yeah, well, think of this mission as sort of an elaborate dress rehearsal for the real thing that is Artemis 4, and that's planned for 2028. So this mission was really to put the technology of Boeing and Lockheed to the test. So that's their rocket technology, but also the astronaut training and just NASA's capabilities to return humans to the moon after so long. So once NASA reaches the moon, they'll obviously conduct a lot more missions there. But they will use this as sort of a launch pad to get to Mars and beyond. So they're not just stopping at the moon. There are plans to go further and do crewed missions to Mars. So this mission is just part of a long program of different launches and missions that NASA intends to do.
I like how you put it, an elaborate dress rehearsal. So what are the next key steps that NASA needs to attempt before the crewed landing?
Well, the crewed landing is Artemis 4, so that's 2028. But they need to get Artemis 3 out of the way before they do that. So that's next year, scheduled in for 2027. And that essentially involves sort of the crew being sent into orbit again, and for them to reconnect with a lunar lander in Earth orbit. So there's a lot more technology to be tested. It is far more nuanced than the Artemis 2 that is happening now. So it's a step up, essentially. And obviously there's a lot of skepticism and criticism as to whether this is actually going to take place in 2028. But NASA is extremely confident that it's going to be able to get this done.
Okay, so an ambitious timeline, but maybe realistic, 2028. Bloomberg's aerospace reporter, Kate Duffy, thank you very much. Well, let's check in on a few term charts, shall we, to set you up for the day ahead. Some of the best charts on the terminal this morning, and just coming right back to the geopolitical situation in the Middle East. What we have here is a snapshot of betting markets. These numbers are from Polymarket. And as you can see, it's nearly a coin toss on a ceasefire between the US and Israel and Iran by July. Now, flip the board over, and in financial markets, you've got traders actually more focused on real-world movement of oil barrels than diplomacy. You can see here just a few tracked ships are passing through the Strait of Hormuz, although a lot reportedly are disabling their automatic identification systems, AIS. But really, compare the left to the right, and it really is just a trickle at this point. So we're waiting for the feed through to the economic data. And on Friday, we'll get US CPI. It's expected to spike to its highest since 2022. And what's interesting on this chart is you can see that the spread between headline and core inflation on a monthly basis is expected to be at its highest since Russia's invasion of Ukraine. So we await that data on Friday. Just in terms of the risk events that we have on the docket for the week, apart from the CPI print, we also have the Fed minutes coming on Wednesday, expected to take a more hawkish flavour. And then on Thursday, we'll get a snapshot of how the German economy is holding up with the latest industrial production numbers. But as I leave you, nearly 2 hours into the European cash session, we have European stocks 600 up 0.6%, and S&P E-minis are now just flat to the upside. We have an interview with the New York Fed President John Williams, exclusive at the Fed Reserve Bank of New York. That with Mike McKee at 1:30 p.m. London time.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It is 5 a.m. in New York, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump ramps up his threats towards Iran as attacks continue in the Middle East. U.S. stocks wavering and the dollar declining as Trump's deadline for 8 p.m. tonight Eastern Standard Time looms. And shares of Universal Music jump after Bill Ackman's Pershing Square proposes a takeover. Let's look at what's going on in the markets here. As I said, S&P future stocks kind of wavering in the pre-market here. We're looking at slight gains. We saw just around 4 a.m. Stocks come back from losses to gains as the U.S. stepped into the pre-market trading. NASDAQ futures are unchanged here. Russell 2000 looks about the same. Let's take a look at some of the other assets that we're watching for you this morning. In terms of treasuries, the 2-year yield at 3.84, the 10-year yield at 4.33, and the 30-year yield at 4.89. Oil is, of course, the one that everyone's watching most closely, and we've seen WTI continue to rise on the May contract. Here you see NYMEX crude up to $112.67 a barrel. You've got Brent crude trading the June contract already 109.36. That's why it's lower. And then Bitcoin right now off 1% at $68,940. For some of the individual stocks that we're watching, let's get out to Chloe Melee in London. Chloe?
Good morning, Matt. It's a big move today for the world's largest record label, Universal Music Group, after getting a deal proposal from Bill Ackman's Pershing Square. So this is something that the market reacted very positively to this morning, as we can see. But there's one major hurdle, and that is getting the approval of Universal's biggest shareholder, the French media billionaire Vincent Bolloré. And it's unclear whether Bolloré will accept those terms. So we'll look out for any developments there. Moving on to a very different sector, and that is insurance. And it is up this morning across United Health, CVS and Humana after the U.S. improved Medicare rates from the initial rates proposed back in January, essentially meaning that the Medicare program will pay private insurance more in 2027. And so we are seeing that reflected in those shares this morning. And finally, Broadcom is also in the grid after announcing a long-term agreement with Google to develop and supply TPUs, which are an essential component of the chip-making process process. And they also announced that they would be working with Anthropic to help develop and grow those operations as well. And so we have two sets of good news for Broadcom, and we're seeing that reflected in those shares today, up almost 4% in pre-market trading.
All right, Chloe, thanks very much. Chloe Melee there with a look at your individual stock movers. We'll continue to keep you updated on what's going on in markets this hour. And we're going to catch up with Sitara Sundar of JP Morgan Private Bank. But right now, I want to get back to our top story, and that is President Trump doubling down on his deadline to open the Strait of Hormuz.
We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil. This is a critical period. We're giving them till tomorrow, 8 o'clock Eastern time. And after that, they're going to have no bridges. They're going to have no power plants. Stone Ages, yeah.
Let's go to our team coverage now with Bloomberg's Germana Bersetchi in Dubai and Washington Deputy Bureau Chief Laura Davison joining us. Germana, let's start with you first. What is everyone doing in the region to prepare for what could be an increased attack on Iran at 8 o'clock tonight?
Well, I will tell you that it is a very fraught time. I think there's a real sense that perhaps this time this deadline could actually be a hard deadline. And we know that President Trump has shifted the deadlines and ultimatums many times before. But there is certainly a sense that things could get ramped up militarily in the next 24 hours. So there is a strong sense of, an intensification of operations to come. That being said, it is also worthwhile mentioning that the mediation efforts have really stepped up in the last 24 hours. You look at some of the notices being put out by the foreign ministries of Turkey, of Egypt, and of course Pakistan, who've been spearheading these mediating efforts, saying that they're hopeful that there will be some form of a ceasefire that will be agreed to in the coming hours. So they're still aggressively working the diplomatic channels. But I will say, when it comes to the terms that the U.S. have set out versus Iran, there's still a lot of daylight between the two. Of course, President Trump is insisting on a full unconditional reopening of the Strait and a full cessation of hostilities. Iran are saying that they want assurances that the U.S. will never attack again, and are reasserting their right to control the Strait of Hormuz, an outcome which, of course, is not acceptable. So still a lot of daylight. Let's see whether diplomacy actually has a chance in the next 24 hours. But to come back to what you were saying, I think we need to brace ourselves for all scenarios here.
Laura, what's the possibility of President Trump moving his deadline back again? As Germana points out, he's done that numerous times here, and Axios is reporting that he may do it again. Of course, they have really been pushing the potential peace deal narrative at Axios. But are you getting any sense that it could happen again tonight in Washington?
That is always a possibility. This 8 p.m. deadline is something that Trump set out. There's nothing else forcing any action here. This is a deadline that Trump put out there to put a little time pressure on some of these talks, and it's something that he can absolutely move if he is getting positive signs from these Iranian talks, or he decides he wants to back down from some of these maximalist threats he's made of sort of going scorched earth on Iran's civilian infrastructure sites. That being said, Trump has indicated, at least publicly, that he's more serious about this deadline than he has been about previous ones, and suggested that this is one that he will stick to. But there are a lot of possibilities, a lot out there. I'll note that the rhetoric from Trump has been a little bit different. We've seen him shift and sort of flip-flop back from really promoting peace talks to floating escalation in military operations. We seem to be in a phase right now where he's really talking about escalation, both after that 8 p.m. deadline. He says that within a period of 4 hours, he will, the U.S. military could, turn Iran back to the Stone Ages. He's also talked about, potentially seizing Iran's oil. That was another main message from his press conference at the White House yesterday. So we've seen Trump change his messaging a lot. There's still a lot of time between now and 8 p.m. Where the winds could shift yet again.
Germana, what's the take in the Middle East about the war crimes concerns? Here in the U.S., President Trump has brushed off concerns that the U.S. could break rules set here after the Civil War at The Hague, in Geneva. But I know, obviously, in the Middle East, you probably witness Iran committing war crimes, and especially its proxies committing gruesome war crimes time and time again. So is that even a talking point?
I think, to your question, in terms of where this could go and the extent of the military escalation, the real concern here is that infrastructure starts getting targeted at a widespread scale. And because, let me just go back to what you were asking, civilian infrastructure has already got hit on both sides. We've talked about joint U.S.-Israeli operations that have actually targeted a bridge over the weekend. Power plants have been actually targeted, limited damage. And in return for that, in Gulf states, we've listed over 35 different energy sites that have been targeted, a desalination plant in Kuwait as well. So it is worth reminding everybody that civilian infrastructure is still getting hit, but not at the scale that President Trump has implied, i.e., he said he has threatened to fully obliterate Iran's power plants, their bridges, and level even more damage to the civilian infrastructure. So how far it goes, of course, is going to be a matter for the lawyers, for legal inspection. Ultimately, there is a case to say that if you're targeting civilian infrastructure that is still used by the military, then it is acceptable in times of war. But I suspect we'll just have to see how far the U.S. go with these strikes if President Trump actually follows through on those threats. But just a reminder that a lot of civilian infrastructure has already been targeted and already been damaged in the region.
All right. Thanks very much to both of you, Bloomberg's Jumana Bersecci and Laura Davison. Let's get back to market stories here for a moment. One of the stocks we're keeping an eye on this morning is Universal Music. Shares are climbing 11% right now after Pershing Square proposed a merger of its company and Universal Music. We use the term merger a lot. We really shouldn't, because it would be a takeover. Pershing's Bill Ackman wants to move the Universal listing into a U.S.-based acquisition vehicle that will value the label at an estimated 78% premium to its last closing price. Joining us now is Bloomberg News' Tom Metcalf. So, Tom, what do we know about this? Why does Bill Ackman think it represents a good takeover target, and how do Universal shareholders feel about it?
Yeah, I think the first thing to note is a very complicated deal, and that share price move is very interesting in that, yes, it's up 11%, earlier as much as 24%, at least under the proposal by Bill Ackman, Pershing Square, they are suggesting that this deal represents a 78% premium. So I think that disconnect shows just the market's been pretty wary and perhaps seeing this, less as a deal likely to happen, but perhaps the opening gambit from that activist investor.
They have Vincent Bolloré, of course, a big shareholder in Universal Music, major shareholder there. Do we know how he feels about it?
The thing, we don't, he hasn't commented yet. Obviously, everyone's kind of on tenterhooks waiting for that statement. I think there's a pretty good indication, though, within Pershing Square's statement in that this is not recommended, or they don't mention it being recommended by Bolloré. So that suggests, whether there's been any engagement between those sides, not clear. But you'd think if there'd sort of been buy-in from Bolloré, they would have flagged that, because that will make this deal so much more likely to happen.
How much is the changing music business responsible for the troubled times that Universal has gone through? I mean, it's a completely different ballgame than when Bill Ackman and I were kids.
Yeah, absolutely. One of those industries absolutely kind of rocked over the past few years. I think, again, it's an interesting tale within the Ackman letter, because he's less pointing at kind of those sort of structural changes within the industry and much more at kind of specific problems that he sees happening within Universal Music, and in his telling at least very easy to fix, whether it's moving the listing from Amsterdam to New York, just simply improving the investor relations communications.
What do we know about the structure, Tom? Because, when I grew up here, we didn't say merger. It's always one side buying the other. Somehow that word has crept back into our reporting. But is there really such a thing?
No, I mean, look, effectively it's one of those deals where they're backing into a different vehicle. It's a cash and stock deal, so they're going to throw around about $9 billion, and then the rest would come from the value of the new shares in that vehicle that's created. I think why it's, and I would definitely agree, this is, an Ackman-driven sort of takeover push, but I don't think it's likely to lead to a takeover, if that makes sense. It's kind of, the numbers just are so far apart in terms of how the shares reacted and the other shareholders, how they're likely to respond. I think this is very much kind of Ackman pushing to try and get other shareholders into a conversation, and then, maybe let's see where that conversation takes people.
All right, really appreciate your reporting and your time, Tom. Thanks so much. Tom Metcalf there joining us out of London. Now let's get to the other top stories trending on the Bloomberg terminal this morning. Hungary's Prime Minister Viktor Orban told Vladimir Putin he's ready to go to great lengths to help the Russian president. According to Bloomberg reporting, Orban called Putin in October and referenced the Aesop fable involving a mouse freeing a lion to illustrate his willingness to help. The two also discussed their appreciation for U.S. President Donald Trump. The call provides further evidence to suggest that helping Russia is a policy that comes from the very top of the Hungarian government. You can read the transcript of that call on the Bloomberg terminal. Two Sigma Investment biggest hedge funds report standout returns in March. The Spectrum Fund rose 2.5%, while the Absolute Return Fund gained 3%. Those results trounced the performance of many multi-strat peers, which ranged from meager gains to outright losses. And OpenAI, Anthropic, and Google are working together to prevent Chinese competitors from copying their AI models. According to Bloomberg sources, the rival firms are sharing information through the Frontier Model Forum to detect so-called adversarial distillation attempts that violate their terms of service. Coming up, Goldman Sachs is getting ready to swoop in to gain from retail money or retail exits out of private credit. We'll have more on that story next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Goldman Sachs is looking to capitalize on the retreat of retail investors from private credit. That's as the firm says its reliance on institutional investors helped its $16 billion fund escape the broad exodus that has plagued the sector. For more, let's bring in Bloomberg's Silas Brown, who has been tirelessly covering this saga over the last few years. Silas, it's interesting, Goldman got less than just slightly 5% redemption requests, whereas we've seen from some funds, I think in the case of one of the Blue Owl funds, more than 40% redemption requests. Is it going to be able to capitalize on that retreat of what we imagine are mostly retail investors?
Yeah, so I think there's several tectonic plates shifting at the moment, and this story I think is particularly interesting. Firstly, I think as the kind of months wear on, I think what you'll notice is a kind of difference in caliber between certain retail-oriented funds and the retail investors that they're targeting. And I think Goldman, maybe others, kind of maybe have lent less on RIAs, maybe more on private wealth channels, and I think you'll start to see a kind of dispersion when it comes to retail outflows from specific funds. So I think that's point number one that's very important. On your point about Goldman sort of buying into this market, yeah, I think Goldman isn't alone. I think anyone who has institutional capital to put to work is expecting margins to increase, greater lender protections, in an environment where I think it's fair to say that there is less fierce competition for banks to underwrite new prospective buyouts. So I think for anyone who has the capital, perhaps this environment is quite conducive for deployment.
I wonder about, I saw in the story a reference to Barings, which for someone of my age, that always brings up thoughts of Nick Leeson and Ewan McGregor to some extent. But this is unrelated to the failed Barings Bank from the mid-90s. They had redemption requests in the story yesterday that we put out of 11%, but they have, I guess, showed some determination to hold firm at the 5% rate and also want to take advantage of retail investors looking to flee.
Yeah, so I think you could make a case for both being, seemingly contradictory opinions being held at the same time. I think it is definitely the case that the market standard seems to be a 5% cap. But also concurrently, I mean, certainly with these big beast private credit, of which Barings is one of them, they also have a significant portions of institutional capital to put to work, and they are cognizant of the fact that the market, due to the outflows, should be more attractive for the lenders. And so I think they're trying to kind of chew gum and walk at the same time. One of those kind of things.
It's a little odd to name your Barings was previously Mass Mutual, right? And why would they choose? That's like naming a boat the Titanic. It just doesn't seem to make a lot of sense to me, but maybe people have forgotten?
So I think there is some connection to Barings, but I don't want to say something that I will later regret and find out to be factually inaccurate. But I think there is some kind of teleology from Barings of a bygone age to Barings now. Obviously, the investment firm is very different now to what it once was.
No, you're right. I think Mass Mutual acquired Babson, which had some ties to Barings, but it's just like...
I think there's some very brief
Why
connection.
reuse such a disastrous name? But I guess, no news is bad news. All right, Silas, great catching up with you. Thanks so much. I'm sure we'll talk much more about this story in the very near future. Bloomberg's Silas Brown covers private credit for us out of London. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
in case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that, on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jenner report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up on the Wall Street Journal, how China helped Iran cushion the blow of sanctions and funded Iran's war machine. According to the Journal, Chinese buyers worked with Iran to develop a sanctions evasion network using methods such as fake invoices and front companies to disguise trade. Next up, the New York Times reporting on the Artemis II astronauts as they head home after venturing further into space than any human has ever been. The astronauts are on target to return back to Earth this Friday. And the Financial Times is reporting that JP Morgan has gotten approval to build one of the tallest office towers in Europe in London's Canary Wharf. The construction of JP Morgan's UK headquarters was held up over height restrictions because of its proximity to London's City Airport. Let's take a look at what's going on in markets. After a bit of a turnaround in futures this morning, we were down for most of the trading post-midnight. Then at 4 o'clock when U.S. investors came in, we rose up. Now you can see futures gaining on the S&P about 0.2%. Oil, this is the WTI trade. It is currently down about 26 cents a barrel, but still trading for more than $112. That's notably higher than Brent, but the reason for that is that this is the May contract, and Brent, the front month contract for Brent has already moved on to June. And the U.S. 10-year yield, right now unchanged but holding steady at 432.28. It has been stuck in this range and continues to hold there. Coming up, Sitara Sundar, head of alternative asset management strategy for JP Morgan Private Bank, joins us. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump ramps up his threats towards Iran as attacks continue in the Middle East. They have until 8 o'clock p.m. tonight. U.S. stocks waver as the dollar declines and oil sits still. Trump's deadline, of course, looming and affecting those assets as well. And shares of Universal Music jumping after Bill Ackman's Pershing Square bids to take the company over. We'll tell you more about those stories in just a minute. Let's take a look at the assets that we're following for you this morning. S&P futures, which were down until about 4 a.m. this morning, jumping now up 0.2%. They closed in the cash trade higher yesterday. The NASDAQ, in fact, it was the 4th straight day of gains, so today we could be on track for 5. The NASDAQ and Russell futures are up as well. Everyone wants to see what's going on in the oil patch, but first we'll show you yields unchanged at 384, 432, and 489. Now let's take a look at what's going on with oil. Brent crude right now falling about 1.5% to 108.11. This is the June contract, which is why Brent is currently priced lower than NYMEX. That's abnormal, so that's why I explained NYMEX is the May contract. It's now off 0.5% after climbing most of the morning, but still at $111.85 a barrel, pretty pricey. And then Bitcoin at 69,000 and change. For some of the stocks we're watching, let's get out to London. Chloe Melee is standing by with your single stock stories. Chloe?
Good morning, Matt. Let's start with Universal Music Group, which you were just mentioning. This is the world's largest record label, and it's up very significantly this morning, more than 10% after receiving a deal proposal from Bill Ackman's Pershing Square. So this is a potential merger that shareholders seem to be very keen on, but there is one major hurdle, and that is getting the approval of the biggest Universal shareholder, which is the French billionaire Vincent Bolloré. So we'll be watching out for any developments there. Moving on to insurers, which are also up after the U.S. improved Medicare rates from the initial rates that were proposed back in January, essentially meaning that the Medicare program will be paying private insurers more after some successful lobbying efforts from that industry. And so we're seeing all of those names in the green this morning. And finally, Broadcom is also moving higher after signing a long-term agreement with Google to develop and supply tensor processing units, or TPUs, which are an essential component of the chip-making process. And it also said that they will be working with Anthropic to help develop and grow the operations for the AI startup. And so those two sets of good news are reflected in those shares today, up almost 4% for Broadcom.
All right, Chloe, thanks very much. Chloe Melee there in London with some of your movers. Let's talk more broadly about stocks now with Sitara Sundar and other assets. She's the head of alternative investment strategy for JP Morgan Private Bank. Joins me here on the desk. Great of you to get up and come in so early this morning, Sitara.
Always great to be here.
What do you think about, this market? We're only down less than 4% year to date, and it's a year in which we've had AI disruptions, a new war in the Middle East, and the price of oil more than doubling. So it seems pretty surprising that risk assets haven't suffered more.
Yeah, I think that all three of those factors were factors that we were paying attention to coming into this year. We're like, in the age of AI, fragmentation, and a rising floor on inflation when we think about the next cycle. The thing that I would mention is even though the U.S. headline level on public equity markets maybe hasn't moved as much as people would anticipate, I think part of that is related to U.S. not being an energy exporter versus importer at this point in time, but we've seen a lot of dispersion underneath the hood, and we've seen a lot of price activity there, and then also we've seen a lot of dispersion when you think about global equity markets, U.S. versus Europe versus EM type of exposure. So I would say moving forward, I don't know that I'm surprised by the headline activity, but it is important to know that the underlying stock dispersion has been pretty meaningful.
So last year, Europe and many Asian markets vastly outperformed U.S. stocks. I mean, just looking at the benchmark indexes. And now that the tide has gone out, so to speak, with the price of oil rising, many of those outperformers look vulnerable. Those economies look vulnerable now. What do you think about U.S. assets versus European versus Asian assets?
Look, from a strategic perspective, which is an answer you're probably not going to like, but like global diversification is always really important.
I do like that
Especially,
answer.
you do like that answer, great. Because the era of fragmentation that we're going towards right now means that we used to be in a period of time where economic growth, regardless of where you were, was more or less synchronized. The beta was there. Now we're moving towards more of a desynchronized global economic growth environment, which means that markets, depending on which region you're in, are going to act very differently. The areas I would say that we're still constructive on when you think about non-US exposure, defense and strategic industries is still a big area within Europe for sure.
Bigger than ever, maybe.
Bigger than ever, 100%, and industrial exposure there too. And then even on the Asia side, Asia is talked about as this monolith, but it's not. And there's select opportunities. And one of the biggest areas that we're even focused on now is Japan, and the amount of activism and corporate governance reform there does, for us, from a longer term perspective, still look attractive. But then when we look at the United States, there's a mix of a couple of things happening. We've seen a lot of volatility in some of the hyperscalers and some of the software names. There's pockets of opportunity within software. We're not yet leaning in a big way there. But some of these really massive companies with still durable earnings growth potential have derated quite meaningfully, and some of those opportunities, especially within the hyperscaler names, are starting to look more attractive. And the other thing that I would mention outside of public equity markets is there are other opportunities. You mentioned other asset classes within the alternative investment landscape that are starting to become more important now, given the market environment we're in now that we weren't in before.
So what are those? I mean, by the way, on the sort of mega cap tech stocks, I totally understand what you're saying. I've seen some of them selling off like 25% of their value, like losing a quarter is pretty amazing.
Which feels more sentiment
year to date.
Yeah.
Exactly. Outside of equities, what do you want to lead into? What do you have to have in your portfolio?
Look, I think that alternatives is talked about also as a monolith and a hodgepodge. So what is it that we mean? There's two ways that I would bifurcate it. One, there are areas within the equity part of private equity that actually we think are going to be complementary to the exposure that you're getting within public equity markets. Because if you're going to add equity beta to your portfolio, you want to make sure that it's not duplicative. And what we're seeing right now, given where we are in the AI cycle, a lot of the AI infrastructure players, whether it's utilities or whether it's the hyperscalers and the semiconductors, that primarily exists within the public markets. But the entire concept of integration of artificial intelligence into our day-to-day lives, whether it's the major LLM players or agentic AI, vertical AI tools and AI-enabled software, that all exists within the private markets between VC and growth and kind of tech-enabled core buyout. And then on the defensive side, all of a sudden, this question of inflation volatility and is inflation going to be higher and is the Fed going to be able to actually reach the 2% mandate, all of that volatility leads to a disruption in the usually negative correlation that we've seen between stocks and bonds. That started to flip positive over the past few years, and it starts to flip more positive when inflation volatility is higher. So when we think about shoring up defenses, real assets and less correlated hedge funds is the way that we end up playing that.
What about credit?
Yes.
How do you view that, as spreads have been so tight, right? And even amidst this sort of private credit, I don't want to say blow up, but drama, we still have incredibly tight spreads, even for junk.
So I think there's two things. Spreads are definitely tight. They widen a bit so far this year, given the volatility that we've seen. We still believe that direct lending has a place to play within core private market portfolios, and even broader portfolios, because you're still getting a premium to public market equivalents, even though that premium has been cut in half. Think 150 basis points now versus 320 a few years ago. But the other part of it that is increasingly important is this idea that we do not believe that, one, private credit is in the middle of a systemic crisis or will create one in the future. It's become pretty large, but it's still only 9% of corporate borrowing. We haven't seen defaults increase in a pretty meaningful way. And then two, the biggest shift for us is that private credit is also more than just direct lending. You have asset-backed finance, you actually have opportunistic and distressed managers where the spreads are actually a little bit wider and where the opportunity set is there, they're actually able to lean in. So when we think about private credit moving forward, it's two things. One, you need to think about a holistic, durable approach, which means senior secured direct lending, diversified sector exposure, as well as asset-backed and opportunistic. And then three, obviously, we're watching out for any signs of a tick up in default rates or a macro default cycle, but we're just not seeing one.
All right, Sitara, great having you in. Thanks so much
you.
for joining us. Sitara Sundar of JP Morgan Private Bank. Let's get to the other top stories trending on the terminal this morning. Hungary's Prime Minister Viktor Orban told Vladimir Putin he's ready to go to great lengths to help the Russian president. According to the transcript, Orban called Putin in October and referenced the Aesop fable involving a mouse freeing a lion to illustrate his willingness to help. They also discussed their appreciation for Donald Trump. The call provides further evidence to suggest that helping Russia is a policy that comes from the very top of many governments, including that of Hungary. Goldman Sachs looked to capitalize on the retreat of retail money from private credit funds. Goldman says it's seeing a meaningful shift in the lending environment where the balance is tilted back toward the lender rather than the borrower. Goldman's $15.7 billion private credit fund met redemption requests in the first quarter, but they were only 4.999% of outstanding shares. Two Sigma's biggest hedge funds reported standout returns in March, even as the firm grapples with amazingly dramatic infighting. Its Spectrum fund rose 2.5%, while the Absolute Return fund gained 3%. Those results that look meager actually trounced the performance of many other multi-strat peers, which ranged from even less gains, smaller gains, to outright losses. Coming up, Iran keeps up attacks across the Persian Gulf as President Trump's ceasefire deadline for 8 p.m. Eastern time tonight looms. That's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We have to have a deal that's acceptable to me. And part of that deal is going to be, we want free traffic of oil. This is a critical period. We're giving them till tomorrow, 8 o'clock Eastern time. And after that, they're going to have no bridges. They're going to have no power plants. Stone Ages, yeah.
President Trump ramping up pressure towards Iran to open the Strait of Hormuz and reach a deal to cease the war. Let's bring in Bloomberg's government reporter Mika Solner in Washington. So, Mika, we know that the president has moved his deadline many, many times here, and I think everyone would agree that it's good he hasn't yet destroyed the entire country, a la Dresden in World War II. But he's now threatening to do that tonight by 8 p.m. Is there a chance he moves it again?
I think there's always a possibility with this president. We really don't know what the final say is going to be. I think that Trump is really the only person with that answer. But this is clearly the most escalated threat that the president has made against Iran. And part of that thinking, of course, is this rise in gas prices that's driven by the closure of the strait. So I think that that's really factoring into the administration's decision here and the threats, but I think that there's a lot of lawmakers on both sides that are really, really concerned about the possibility of not only the president's rhetoric against Iran, but also the U.S. potentially engaging in war crimes and attacking civilian sites.
What do we know about, the Axios report that he could extend his deadline again? Axios continues to report seemingly every couple of days that we're near a peace deal here. How likely is that?
I think I think the timeline has been very flexible here. I mean, initially started with the 4 to 6 weeks. We're now in week 6. Last week, we heard the president say that it's going to be another 2 to 3 weeks, but things are going to wrap up shortly. Now, the question is, how exactly is it going to wrap up? Is it going to be this all-out war where the U.S. ultimately tries to destroy Iran, as a country and send it back to the Stone Ages, according to the president? Or is it going to be through diplomatic negotiations, which are also continuing to happen? Trump spoke of that yesterday. He said that Vance has been involved in that. And of course, he has members of his administration still trying to do that route. So we're really going to see here, but all eyes are on this 8 p.m. deadline tonight.
This has caused seemingly some disruption among his MAGA base. For example, Marjorie Taylor Greene, who obviously has had other issues with the president since she's decided not to run again, has spoken out against it. there's a runoff election to replace her in Georgia. How's that looking, and is it affected at all by this?
Yeah, what's really interesting about that race is it's really going to be kind of this huge test for how the Iran war is playing out among the public. I mean, this is a very strong Republican seat, I think 20 plus points. So we're going to see a Trump-backed candidate who has defended the president's actions, the Republican nominee in that district, versus a long-shot Democrat that has really been critical about that, but also has been focused on a campaign on grassroots issues and the economy, which again has played really strongly in Democrats' favor this cycle so far. So this is a huge test, again, a very Republican district. So we're not expecting a huge surprise, but if Democrats do have the chance to pull this out, that would be a huge telltale sign in November.
All right, Mika, thanks very much for your reporting. Mika Solner there of Bloomberg Government out of Washington, D.C. Let's turn now back to the markets and deals specifically. Shares of Universal Music climbing after Bill Ackman's Pershing Square proposed an acquisition. The investment firm is looking to move the Universal listing into a U.S.-based vehicle, which it said would value the world's largest music label at close to $65 billion. Joining us to talk about this is Bloomberg News' Benoit Berthelot. Benoit, what do we know about the controlling shareholders of Universal? Vincent Bolloré is one of the biggest shareholders, if not the biggest. I think he has almost 20%, and his family has another 10% through another holding. How do they feel about this?
So we haven't heard from them so far this morning. They've been sort of an important shareholder, but also a very discreet one over the years, and that's something probably that Bill Ackman wants to change with that sort of offer he's making this morning, right? He's been an activist shareholder of this company, and so far Vincent Bolloré, so he's a media tycoon, well-known here in France. He has 18% of the company through Bolloré, his holding company, but there is also 10% from Vivendi, which is a former media conglomerate that he controlled as well, and that Universal was spun off a few years ago and listed in Amsterdam. So obviously they're going to be key to what happens to that proposal. There is a meeting later today for investors. Probably everyone is going to listen to that and see what's proposed. But so far, yeah, we haven't heard from him, and he's obviously a key man for this deal.
Who are the most famous Universal Music Group artists? I mean, the game has changed so much in music that I don't really get records anymore and look at the label, but I guess they have some of the biggest names in the business still.
They do. Of course, they have Taylor Swift. That's their major artist, but it's a very long list of names, and of course, it was seen as a very endangered companies when we thought the music business was completely dead. And with the rise of streaming, of course, there's a new business model that emerged, the importance of live shows as well. But obviously, shareholders and Bill Ackman in the first place believe the company is really below where it should be in terms of valuation. It's been a sort of a disappointing path these past years. And the fact that it's listed in Amsterdam is also maybe difficult for him. He wants to relocate the listing to the US, and of course, the center of the music business is very much, and of the management of the company is very much Los Angeles and the US. So that's something he's been wanting to change. There's been a proposal to dual list the company in Amsterdam and New York, but it's been refused by the board so far, just a month ago. So that's probably something that's frustrating to him as a US-based investor.
All right, Benoit, thanks so much for joining us, and I hope somebody asked Taylor how she feels about this, because I'm not sure she would like Bill Ackman better than Scooter Braun. Turning now to tech, Broadcom rising in pre-market trading after announcing a long-term agreement with Google to supply tensor processing units. The chip maker has also confirmed plans to work with Anthropic to help power its operations. Joining us now is Bloomberg's Neil Campling. Neil, what do we know about this story in the all-important AI sector?
Yeah, absolutely. I think the key fact here is this is a 5-year long-term agreement between Broadcom and Google. Now, this is a technology that's kind of rivaling NVIDIA's entire AI stack, And I think in combination with Samsung earnings that we had earlier today as well, that it's quite clear that the AI demand trade is still alive and well, and there's appetite for these solutions. And we've also heard, of course, from Anthropic that they have seen over 1,000 companies spending over $1 million on their AI solutions on an annual run rate. And that's doubling where they were just 6 weeks ago in February. So the AI trade demand trade is very much alive and well.
All right, Neil, unfortunately we had to leave it there, but fantastic reporting. I love seeing your byline, and I know it's a good story. Bloomberg's Neil Campling there reporting out of London. Coming up, we're going to get your setup for the trading day today. It could be the 5th day of gains as equity indexes, futures rise. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Daaman in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead for today. First up, ADP employment data is out at 8:15 a.m. Eastern time, so watch that after the big jobs ad that we had on Good Friday. Then durable goods orders comes out at 8:30, and at that time, New York Fed President John Williams will join Bloomberg Surveillance with Michael McKee exclusively. Take a look at what's going on in terms of the markets here. Brent crude right now down 0.75%, $109 a barrel. NYMEX crude up a little at more than $112 a barrel. That's the May contract. And gold right now up 0.5% at 46.72. This has been the Bloomberg Brief. Surveillance is up next.
what some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like, you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Equities are really looking for hope, for a resolution.
Panic buying more than panic selling.
The underlying shift to the U.S. and a reversal of last year's trade makes a lot of sense here. We expect volatility to continue.
In a 6-month window, I can see a lot of volatility.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. This is Bloomberg Surveillance. Equity traders trying to stay optimistic ahead of President Trump's deadline for a deal with Iran. The latest economic data providing mixed signals showing ongoing consumer demand but rapidly rising prices. Corporate executives perhaps holding the key to more insight with earnings season just around the corner. Delta kicking things off tomorrow. For now, it is deadline day. John and AMH are still off. Danny Berger didn't run away, which is a good and beautiful thing for us here. She is back, which I'm very happy about. Such an interesting moment where everyone is hamstrung by headlines that present a lot of potential options that are pretty negative, yet stocks trying to look through it.
It's another day of trying to figure out how you deal with such extreme tail risk. And to your point, what have stocks done? They've rallied for the past 4 consecutive days. It's the headlines that are alarming. Wall Street Journal reporting that the two sides, Iran and the U.S., still remain so far apart. And Iran believes that the attacks will continue regardless. Maybe it's a market hoping for more can kicking. There was an Axios report that seemed to hint that maybe Trump won't follow through on his threats, but still, it is a binary outcome. And how do you prepare for that? If you're stocks, you don't, apparently.
You ignore it, because ultimately every single geopolitical risk event has been a buying event, and that is what people are preconditioned for. And right now, the economic data is giving, in some levels, a green light. Yesterday, we got ISM services data that came in kind of on a mixed level. On one hand, you did see some fading in some of the momentum that you had previously seen. At the other hand, you saw forward orders pick up to the highest level going back 3 years. Question about whether we're seeing enough momentum to offset whatever might come down the pike.
Data, as always, is a choose-your-own-adventure, but you could have looked at the ISMs and said, this feels kind of stagflationary. To your point, on the employment picture of it being challenged, prices paid moves up to the highest since October 2022, and you see some of the weakening come through. Are we going to get more data like that? Maybe we need to start thinking more stagflationary. At least the bond market is starting to price some of that in. We have had a big run up in yields, and add to that Beth Hammack of the Cleveland Fed reintroducing two-sided risk, saying maybe we'll cut, maybe we'll hike.
I love how market decides to listen to the people who they want to listen to on any given day. Beth Hammack has been a perennial hawk, and a lot of people are saying, okay, rate hikes aren't necessarily on the table, and yet this is what you see potentially under the hood. Right now in markets, what you do see is a sense of perhaps calm amid a deadline with some pretty bombastic language around it, up 0.2% on the S&P futures. After 4 straight days of gains, the longest streak of wins going back to January, this potentially could take it to the longest this year. You're seeing a little bit of dollar softness. This is normal considering the risk on field, given how much the dollar has rallied. 115.63 on the euro, and 10-year yields 4.32%, just down a little bit, even with comments from Beth Hammack talking about how you could potentially get some sort of rate hike. Oil prices dipping just a bit, perhaps on that optimism that we have seen. Coming up, we've got Marvin Lowe of State Street with stocks of their longest winning streak since January. Stephen Cook of the Council on Foreign Relations with President Trump's Iran deadline approaching, and Kelsey Barrow of JP Morgan on why the next inflation data will keep investors on edge. We begin this hour with our top story. President Trump demanding Iran agree to a deal to reopen the Strait of Hormuz by 8 p.m. tonight Eastern, or have its key infrastructure destroyed. Bloomberg's Jumana Bersachi joins us now from Dubai. Jumana, you're on the ground there. We're talking about how markets are fairly complacent right now and trying to look past this. What's the mood there where you are?
Look, it's tense, Lisa, and rightly so, because this is the starkest warning yet that President Trump has issued towards Iran with threats of obliteration of civil infrastructure. He's vowed to go after power plants, after bridges. So, these are serious threats with very potential dire consequences, not just for Iran, but for the region as a whole, because Iran have pledged to retaliate. And of course, if they do retaliate, they would retaliate on Gulf infrastructure and on Israel as well. So the potential repercussions are actually huge if the U.S. does follow through on this military escalation. But I will say that it appears as though in the last 24 hours or so, there has been a huge diplomatic push from the region. The mediators and, of course, Pakistan have been spearheading those efforts alongside Egypt and Turkey as well, putting out perhaps more constructive comments, suggesting that the channels have been in overdrive over the last 24 hours. Steve Witkoff himself was on a call with the Egyptian foreign minister. Some positive signals as well coming through from the Iranian ambassador to Pakistan, suggesting constructive discussions. So there perhaps is still a glimmer of hope that maybe we get a diplomatic breakthrough or even a temporary truce agreed by this deadline. But I should also say that publicly, the two sides are still very, very far apart. And as you said, President Trump is insisting on a full reopening of the strait unconditionally. Iran, they've come back with their counterpoints, and they're saying, repeating some of the same points as before, assurances that the war will never happen again. But then also a new element is that they are insisting on the right of sovereignty over the straits. And clearly that is a non-starter for any negotiations to take off. So still very far apart on the two sides, but ultimately, the president has 3 choices here. He can follow through on those threats in the absence of a deal. We could get a diplomatic breakthrough. Or the third option is simply to push back the deadline or move the ultimatum, which is something he's done before, but of course, at the risk of an erosion of the U.S.'s credibility. So we're heading into, I would say, a very crucial 24 hours for the region.
Jumana Bersachi in Dubai, thank you so much, as always, for your wonderful reporting. Here's a view on Wall Street this morning. Marvin Lowe of State Street writing, equities remain relatively well supported. And while credit remains a concern, it has not shown capitulation around the private credit meltdown. Marvin joins us now. Marvin, we were just hearing from Jumana about how tense it is in the region. Before that, we were talking about the seeming calm, if anything, optimism in markets. How do you square that dissonance of the potential stakes that are heading into that 8 p.m. deadline that seem to be brushed off by markets?
Yeah, I mean, there certainly is a fundamental aspect of holding on to, if you will, a somewhat positive bias on the risk side of things. It's not as if all of your risk assets have ignored everything, but certainly the amount of downside has probably been less than anyone would have expected. So there is a degree of looking past this. The timing of it is questionable. But from an earnings perspective, as we kind of go into earnings season, I was just looking at where estimates were before we started the conflict versus where we are now, and they're actually up. So from a fundamental perspective, you still have ultimately that support. It's a few of the asset classes, the dollar, the fixed income markets, which are really kind of showing the potential that not only this is longer term, but that things might be different once everything settles down.
Marvin, if I'm not mistaken, the reason that earnings estimates have been rising just in recent weeks is because of energy stocks, because of the oil majors and what's happening with the conflict. So what does it take to maybe look past some of that and for equity markets to start to price in longer term pain and more sustained energy prices, that the likes of which we're starting to see get priced in, to your point, to rate markets and oil?
Yeah, I mean, unfortunately, I think that at least when it comes to a lot of the more global equity markets, if you will, the more international S&P focused type of companies, it's going to take a broad slowdown, and that isn't necessarily making its way into the commentary at this point. Certainly, recessionary risk, stagflation is something that shows up occasionally within the numbers, but it's not prevalent in a broad slowing of global growth. And I think that that's what it would take to really knock it off.
If we do get some slowing, but not broad enough to not knock everything off, Marvin, do you expect the S&P to coalesce around the typical market leadership that we've seen in other similar periods? That is big tech.
Yeah, and outside of energy, when we talk about big tech, they were the second best performing sector industry group. Since the beginning of the conflict, but also on this upward bias. So yes, there is that coalescing around it, and based on the data that we see within our flows of institutional investors, there is a reordering going back into maybe some of the more beat up tech sectors, particularly as of late.
And Marvin, this comes on the equity side, but also on the debt side. And we saw yesterday this Microsoft-tied data center deal, a bond offering, investment grade, get sold, and actually attracting an incredible volume of bids to try to get in on this. Capital markets seem wide open to a lot of projects that people seemed concerned about just a couple of months ago. How do you, again, square that with apparent risk aversion in other pockets of the market?
Yeah, I mean, so, this credit story is evolving. Nobody on television knows the credit world as well as you, Lisa. So it's really a function of whether or not the liquidity exists out there. And certainly for these large names, that liquidity is out there. There have been days that, I really didn't think we were going to see in the credit market, where it closed for a few days. It really looked shaky. And then once it opened, we had, nearly $100 billion in deals being sold. That shows that there's a lot of liquidity. On the other side of that certainly is the private credit discussion, which is still somewhat fragile. But at this point, there are large institutional investors that are in that space getting compensated for the risk. And we're still, if you will, debating whether or not this is a liquidity issue, particularly around maybe some of these less liquid products that is the flagship in the private credit world. Versus a credit issue, and it's opaque, and it kind of keeps us guessing because of that.
The common thought on Wall Street, or certainly among private credit executives when they talk in public, or frankly even in private, is it probably will be okay on a fundamental level as long as there isn't some sort of economic downturn, as long as there isn't really a test of the credit cycle, which hasn't been had, frankly, going back almost 20 years, right? How concerned are you that this kind of stagflationary hit to the economy could expedite that kind of credit cycle that really hasn't come to fruition since 2008?
I mean, I'm concerned about it. I wouldn't say that I'm one of those that is comparing it back to the GFC, if you will. I think dynamics are very, very, they're significantly different. And really kind of that broad liquidity that seems to be prevalent both in the equity and the fixed income markets is one that will, for better or for worse, keep valuations potentially not adjusting as quickly as maybe they should.
Marvin Lowe of State Street, thank you so much for being with us. As always, wonderful to see you. Have a wonderful rest of the week. I mean, this is sort of the question, Danny, right? Are we just overplaying this? And does everybody just want something to talk about other than deadlines? Or is there something seriously problematic percolating under the surface of private credit?
It could be both. But I think to your point, it's a really good one, because private credit should reflect what other risk markets are doing too. If private credit has a problem, then probably leveraged loans has a problem. It's a point that actually Mark Lipschultz of Blue Owl has made to me before, that because credit is higher up on the capital stack, if you're really worried about private credit, then you should probably be worried about equities as well. And we're not seeing that evenness.
Yeah, at all. In fact, you saw spreads on corporate bonds, both in the high yield and investment grade space, drop to the lowest since early March. Right now, we're going to get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa.
President Donald Trump insisting Iran open the Strait of Hormuz as part of a deal to end the war. The president saying if there is no deal by 8 p.m. tonight, the U.S. military could destroy key Iranian infrastructure, including power plants and bridges. President Trump considering seizing control of Iran's oil sector. Sources telling us here at Bloomberg that Trump believes controlling Iran's energy flows could bolster his bargaining power with Chinese President Xi Jinping. And Israel is telling Iranians to refrain from using their country's railway network until 9 p.m. local time. In a statement on X, the IDF said people's presence near trains and railway lines, quote, puts your lives in danger. Israel usually issues such warnings before a planned attack. 9 p.m. local time in Iran is 1:30 p.m. Eastern. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, an ultimatum for Iran.
We're giving them till tomorrow, 8 o'clock Eastern time. And after that, they're going to have no bridges. They're going to have no power plants. The entire country could be taken out in one night. And that night might be tomorrow night.
Stephen Cook of the Council on Foreign Relations joins next. This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox. That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Another day, another deadline, and markets trying to look past it and look to the good news that they're getting from companies that are expecting earnings to increase. You're seeing equity markets inflecting higher. Yet again, this would be a fifth straight trading day of gains, which would make it the longest streak going back to earlier this year, up to 0.1% on S&P futures. You are seeing, again, that risk-on feel bleed into dollar softness, 115.62 with the euro gaining, and the 10-year yield inflecting lower almost a basis point to 4.32%. On risk-on days, this is what Brent crude's doing. It is down. That is a good sign for a lot of people who would like to see that risk premium taken out of the market, down 0.1% to 108.85. Under surveillance this morning, an ultimatum for Iran.
We're giving them till tomorrow, 8 o'clock Eastern time. And after that, they're going to have no bridges. They're going to have no power plants. Every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business. The entire country could be taken out in one night. And that night might be tomorrow night.
Here's the latest. Less than 14 hours until President Trump's 8 p.m. deadline for Iran. Trump vowing attacks on bridges and power plants if a deal is not reached. Joining us now, Bloomberg's Tyler Kendall from Washington. Tyler, hi.
Hi, Lisa. Good morning. Well, President Trump yesterday outlined that an acceptable deal, in his words, needs to include freedom of navigation through the Strait of Hormuz. And that actually gave us a little bit more clarity as to what this White House needs to see in any potential short-term deal. After last week, it appeared that the administration had suggested that that may not be required in a potential ceasefire. President Trump really put the weight on Iran in his remarks yesterday, saying that what the country does today will determine whether the U.S. is winding up or escalating operations tonight. And our own analysts at Bloomberg Economics say they think an escalation at this point is more likely than ongoing negotiations, because their base case remains that we are going to see a sharp uptick in the fighting before what they call a low-intensity war becomes sustained. Now, the president could, of course, again delay his threat, considering yesterday he did say that he feels that Iran is negotiating in good faith, and that he actually felt that Iranian leaders weren't able to communicate effectively with the U.S. over security concerns, saying that's part of why he issued these deferrals before. Still, he maintained that it is, quote, highly unlikely we will see another delay, as Iran, at least publicly, has maintained its hard-line stance yesterday through Iranian state media rejecting a proposed ceasefire, issuing its own 10 points of demands, many of which are considered non-starters by the U.S., and continuing to threaten Gulf state energy sites. Now, Lisa, in the latest sign that preparations are underway for a potential escalation, Bloomberg News is now reporting that Israel has warned Iranians to stay away from their country's railway network. This is the first such threat that has been issued since the war began against Iran's rail infrastructure.
Bloomberg's Tyler Kendall, thank you so much for that. Stephen Cook on the Council of Foreign Relations writing, mediation is at a dead end. Iran has no reason to give up control of the strait. The Iranians believe they are winning. Stephen joins us now for more. Stephen, always wonderful to have you on the show. I'm just wondering how likely you think escalation is by 8 p.m. tonight.
Well, I think it's quite likely. The gulf between the United States and Iran is very, very large. The president has said that the Iranians have to open the strait, give up their nuclear weapons, give up what remains of their missile program, and end their support for proxies. At this point, the IRGC leadership doesn't believe that it needs to do any of those things, particularly when it comes to the Strait of Hormuz, something that gives them far more leverage now than before even the war began in late February.
What can escalation actually look like, given the fact that there's a lot of pressure from the GCC nations on the United States not to attack some of the critical infrastructure that could potentially engender retaliation, the likes of which they've already seen?
Yeah, the GCC states have said that they want the president to finish the job, but they are very, very concerned about the Iranian ability to strike back at their own energy infrastructure, their desalination plants. These are essentially city-states, with the exception of Saudi Arabia, that depend on this kind of infrastructure, desalination plants for fresh water, for large and growing populations. For the Iranians to attack them would be devastating. So I think that the president is poised to escalate, and he seems, at least publicly, to be ignoring these concerns by threatening Iran's civilian infrastructure as well. It could get very ugly for the Gulf states, however.
Stephen, in the meantime, you point out that there's a new regime for passage through the Strait of Hormuz. What does that look like?
Well, the Iranian leadership has successfully closed the strait, or at least partially closed the strait, and now governments are appealing to the Iranians to allow their flag tankers and other ships to go through. Most recently, the Japanese have reached out to the Iranians to see if they can make some sort of deal. The Filipinos have done the same. The Indians have done that as well. This gives the Iranians leverage over the strait that they never had before. There has been, the Turks have floated the idea of an international consortium to manage the strait, which would include Iran. This implies some sort of tolling mechanism like you have with the Suez Canal. This gives the Iranians power that they never had before.
Stephen, does it seem like the U.S. would be part of those conversations? Because at the moment, as you lay out, Japan, Turkey, the nations reaching out seem to be excluding that of the U.S. You even had Emmanuel Macron talking over the weekend about teaming up with middle nations to counter some of the U.S. power. Is it possible that we get a new regime through the Strait of Hormuz that excludes any say from the U.S.?
Well, to the extent that the Iranians have the most say, as they do right now, it would exclude the United States. Ostensibly, under some multilateral mechanism, no country would be excluded from passage through the strait, although revenues from it would accrue to the benefit of the Iranians. I'll point out that yesterday during his press conference, the president said that he would be interested in tolling the Strait of Hormuz as long as the tolls went to the United States.
I'm struck by the scenario that you're painting, and frankly, all the geopolitical strategists and commodity strategists we have on the show who paint a pretty dire backdrop without really a clean answer or exit to the conflict that we're seeing right now. And then I look at markets that are trying to look through it. I think about people come on and they say, it'll be over, it'll be in the rear view mirror come September or October. Can you square the spread there and understand exactly why this mismatch in sentiment?
I think the idea that we'll be beyond this relatively soon is purely speculative. There is a reason why 5 or 6 previous presidents have been shown the war plans for Iran, have decided not to do that, have either sought negotiations or containment and deterrence. The fact that the Iranians have closed the Strait of Hormuz shouldn't have been a surprise to anybody. This is the first thing that they do. This is a regime that has its back against the wall, that the president has threatened to bring down. So I think that the Iranians, to the extent that they can, will have fight left in them, will continue to fight. And which is one of the reasons why the GCC states have said to the president not to end the war prematurely, because they don't want to live in a situation in which the Iranians control the Strait of Hormuz and can threaten them physically with their drones and missiles. I don't think it's going to end very soon unless the president declares a victory and goes home.
Stephen, what's a good outcome for the United States, for the GCC nations?
Well, I think a good outcome for the United States and the GCC states is cracking open the Strait of Hormuz so that freedom of navigation is reestablished, and that the Iranians are unable to project their power beyond their borders. That has become an increasingly tall order for the United States. I think that the president went into this thinking this would be a matter of weeks, and it is turning out to be a much bigger, more involved, more complicated military operation than he ever imagined.
Stephen Cook of the Council on Foreign Relations, thank you so much. Always wonderful to get your insights. Anyway, this is the issue. When we talk to people who are looking at what's transpiring on the ground, they're not really expressing the same confidence that we're hearing from a lot of equity strategists.
Certainly not. And you can hear in what Stephen is saying, that the leverage that the Iranians have is the Strait of Hormuz. And now that's where Trump has put the goalpost, that needs to be reopened. How do you cross that bridge? How do you narrow that gap? It seems increasingly difficult. And again, we have a big deadline tonight, 8 p.m. Eastern. And how do you price that in? And it seems like we're not.
Well, right now, you are seeing some oil tankers get through, which maybe people are finding this as a positive development. Coming up, we'll get more on the oil market. Nadia Martin-Wiggin of Sveland Capital. With oil markets watching this very closely, plus you hire on it with your morning movers, health insurers getting a boost from President Trump's Medicare decision. You're watching Bloomberg Surveillance.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Markets are on tenterhooks, awaiting that 8 p.m. deadline tonight that President Trump set to come to a deal with Iran or potentially escalate the conflict. What we're seeing in markets right now, we did just get a headline that does seem to be moving things around from the Mehr news agency, the semi-official news agency of Iran, coming out saying explosions have been heard on Karg Island. The market's responding to this. We're seeing a retracement of some of the earlier optimism in S&P futures. Danny, Brent crude up by 0.7% as people assess whether this means some sort of escalation has begun.
It is the fog of war and what makes this so difficult to trade in. We already heard earlier this morning that Israel had warned Iranians to stay away from the rail infrastructure by 9 p.m. local time until then, which is 1:30 ET. So I think there is concerns. Is there escalation happening here and now? But it also represents why the Iranians seem to be hesitant to reach any type of deal. The Wall Street Journal reporting suggesting this morning that they see attacks regardless, that they see themselves in war. So why would they agree to a ceasefire when to them it appears that the U.S. will attack them regardless?
The market response, interesting in the knee-jerk pop, both in oil prices as well as in two-year bond yields. You can see yields, 2s, 10s, and 30s, had been lower, now inflecting higher on the heels of this, with a real question about what this means in terms of forward-looking policy and the inflationary read-through. Key inflation data on deck later this week. 3 hours away from the cash open, here are your morning movers. Let's head over to Yahira Anand. Yahira.
Hi, Lisa. Hard pivot to health insurance stocks. They are rising in the pre-market on some good news out of Washington, with the government coming through with a better Medicare update than expected, raising payment rates to 2.5%, meaning $13 billion will flow back into the industry. And most importantly, it is a step up from the initial rates proposed back in January, which were about flat. So you are seeing some real relief coming through, with stocks like Humana up 10.5%. We are also seeing shares of Broadcom and Google rising in the pre-market after Broadcom locked in a major deal with Google, agreeing to develop and supply Google's custom-built AI chips, or TPUs, along with the networking behind those systems. And the AI startup Anthropic is set to tap into that capacity as all three expand their partnership. And we end on shares of Universal Music over in Amsterdam, rising 11.5% on a takeover pitch by Bill Ackman that could revalue the company at an 80% premium. But we are trading well below those levels, reflecting some investor skepticism about whether the deal can get done and whether Ackman can win over UMG's biggest shareholder, the French media mogul, Vincent Bolloré. Lisa.
Thank you so much, Yahira. On our radar this morning, Iran launching fresh attacks on Gulf nations just hours ahead of President Trump's deadline to reach a deal. The president vowing to destroy Iranian power plants and bridges if there's no agreement by 8 p.m. Eastern. Elsewhere, Cleveland Fed President Beth Hammack saying a rate hike could be appropriate if inflation remains above the central bank's 2% target. Coming up at 8:30 a.m. Eastern, do not miss this. Our own Michael McKee sits down with New York Fed President John Williams, one of the trio who really sits at the helm at the top of the Federal Reserve. And a Goldman Sachs private credit fund seeing first quarter redemptions hit nearly 5%, but just under that key 5% level, narrowly dodging the limit that forced rivals to freeze withdrawals. Goldman crediting its stability to its reliance on institutional capital rather than retail investors. Danny, you have been reporting on this. You've been doing a great job. A question of, is this a tale of the haves, the have-nots within private credit? And how do they distinguish themselves as being on the better half of the end?
First of all, let me say, of course, Goldman put in their filings. It was like 4.99999. They're like, we're getting every decimal point in there to show we didn't hit the 5%. But I've spoken with Vivek Bantwal, who runs this fund at Goldman, and he said to me that they've been very clear to clients from the get-go, these aren't semi-liquid, they're illiquid. Full stop. He said that that's how they had been marketing it. They also didn't really go to the RIA crowd, which a lot of people have gone. So maybe this is them insisting we have a stickier client base because of how we advertise this thing. But this gets down to the argument. What is the issue here? Is this an issue of communication? Is it an issue of how you told clients what these are in education? Or is it a problem with the underlying asset class itself?
And that's the reason why each story of caps or gates put on funds is slightly different. You've got the Blue Owls of the world, you've got the Cliff Waters of the world, you've got the Barings fund that came out yesterday, you've got Goldman Sachs, you've got Apollo and Ares, all having the same issue of investors who had been running headlong into the private credit space for years without any kind of consequence other than great returns, suddenly rethinking what kind of returns they could be looking at. And I think that everyone's trying to get a piece of how to message this at a time where messaging matters because of those redemptions.
The irony is that a lot of people who are running these funds have said this is going to be such a good vintage, that this is such a good time to be investing because, one, there's less competition because you see some of these funds, the Blue Owls of the world, start to get these jitters, and two, banks aren't as present in debt as well because of some of the issues they've had in offloading it. So those who can participate, say, Goldman among them, say it's a great time to be deploying.
Yeah, consolidation of the winners seems to be what a lot of people are looking for on the back end of this, as long as we know what this actually is. Let's turn back to our top story. Oil holding firmly above triple digits ahead of President Trump's 8 p.m. deadline to reach a deal with Iran. Trump insisting Iran open up the Strait of Hormuz as part of any ceasefire agreement.
We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil and everything else.
Nadia Martin-Vigan of Svelland Capital writing, markets are showing that they do not expect President Trump to escalate, but a real peace deal is not ready or likely at this point. Nadia joins us now. Nadia, thank you so much for being with us. What is the outcome that the market is currently pricing in?
Right now, the market is expecting a soft off-ramp, meaning that critical infrastructure in Iran is not going to be hit, and critical infrastructure in the GCC countries is not going to be hit after tonight's deadline. So that's the expectation, and we can see that markets are, they're staying relatively calm when we just had a serious strike on Russian oil infrastructure occurring in the last 24 to 36 hours.
And we got more reports this morning that we're looking for more information on from Iran state-affiliated media, Mer, saying that explosions were heard on Karg Island. So clearly the conflict does continue. There is a sense that maybe some oil tankers are actually getting through the strait, whether it's coming through agreements with certain nations directly made with Iran. And this is treated as a good thing in oil markets. How do you evaluate the trickle that's getting through the Strait of Hormuz right now?
So the first thing is which ships are getting through, and they have been primarily flagged by India, Iraq. The latest tanker that's carrying Iraqi crude, that has historically carried Russian crude, which means it counts as part of the shadow dark fleet and is not what is commercially available across Europe and the U.S. And this is really a trickle of a few ships getting through. We've had 3 LPG vessels get through that were India flagged. But when we compare that to the 23 million barrels per day of oil and products that was flowing through Hormuz the last week of February, this is really nothing. I think it's very important to understand these bilateral deals are on a one-on-one basis. And as Trump has stated last night, it's not a normalization. It does not mean that there is control of the Strait of Hormuz by the U.S.
Nadia, could there be a situation where bilateral negotiations are enough not to completely undo the rise that we've seen in oil prices, but are enough to make it acceptable for the world? And what would that level be?
Well, if we started to see quite a lot flowing through on a bilateral basis, it would still completely change the way we calculate the risks of buying oil out of the Middle East and through the Strait of Hormuz, because it would be very much based on a bilateral relationship instead of an international system that has existed in the past. And this is where, for the GCC countries, it's not a good deal because they are subject to a regime that is not really a fair market player from what we've seen so far. What we've gotten more oil out of is the workaround. So that's flowing out of the port of Fujairah, that's flowing out of the port of Yanbu, but it's not the 7 million barrels per day headline figure flowing out of the port of Yanbu to the rest of the world. It's 3 to 4 million barrels per day because it's complicated to actually travel through the Red Sea. We have the Houthis coming back on board. That infrastructure is at risk. We could have that pipeline struck very directly by the Houthis, and it would completely change that risk calculus. So that's where having Iran remain in charge of the Strait of Hormuz would not be enough to normalize the shipping industry at all, in our view.
And Asia, Europe feeling the large extent of the pain. Nadia, just moments ago, a European commissioner spokesperson was giving a press conference in Brussels. They expressed that there should be maximum restraint in Iran by the United States and Israel. But among the things that spokesperson said was that there are measures on energy prices that need to be coordinated and that the EU is working on a toolbox to lower energy prices. Nadia, what could a toolbox look like for something of this nature?
Well, it's probably more on an internal basis, right? And what we've seen is we've had in Europe already some taxes cut on diesel, for example, to help on a retail level. There has to be coordinated buying in terms of having the workaround. But at the same time, it hasn't been coordinated up to now. So the U.S., for example, they stopped sanctioning Russian crude and ships, but Europe has not. As a result, it means that Russian crude is not part of that normalized market. So a coordinated response with the Iranians or with the GCC, that hasn't really been in the negotiations thus far. The negotiations have been between Iran and the U.S. The GCC have not been invited, and Israel has not really been invited. So this is where Europe will try to work together as a buying power because they are subject as a marginal buyer of LNG and a lot of this crude to taking a market price. We also have the advantage in Europe of being a shorter sailing distance from the US, from Africa, from the North Sea. So therefore, we can wait to buy a few days, a few weeks, rather than Asia that has to book cargoes 30 to 40 days in advance to know where that crude is coming from. And that's where the coordination has to happen.
Nadia Martin-Wigan of Svelland Capital, thank you so much for being with us as we track the ongoing events. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Morgan Stanley is planning to debut a new credit fund despite concerns surrounding the sector. The fund will invest predominantly in private credit and include a wide spectrum of credit strategies. The bank plans to allow redemptions of up to 5% every quarter. Meanwhile, we are seeing Broadcom shares rising 3.3% in the pre-market. The company announcing a long-term agreement with Google to develop and supply its custom-built AI chips, or TPUs. The company's also confirming plans to work with Anthropic. And a NASA crew of 4 astronauts making history, traveling farther from Earth than any other humans. The milestone of over 252,000 miles, surpassing that set by the 1970 Apollo 13 mission. The astronauts also traveled closer to the moon than anyone in more than 50 years. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. I had Dark Side of the Moon in my head all last night when I was reading about how they saw the dark side of the moon, and I was thinking, wow, Pink Floyd must be really proud.
They must be really proud, and it's the story we need right now. I'm so happy that this is going on.
Completely
something
agree.
uplifting.
Completely agree. Up next, not that unfortunately, rising inflationary risks.
You could probably get headline CPI approaching 5% just by April. But the key really for us, and I think the markets, is that it is temporary and that it starts to ease as the year progresses.
Kelsey Barrow of JP Morgan Asset Management joins next. This is Bloomberg Surveillance. Good morning.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Full sense of calm, shaken just a touch around the edges as the session grows older after reports of an explosion on Karg Island from Iranian state media. What you can see is that futures had been higher ahead of that. Now they're lower by 0.3% on S&P. Gold inflecting higher after a pretty rough run of it over the past couple of weeks during forced selling from a lot of central banks. Now a number of investors heading back to the precious metal as a haven in a time of turmoil, up 0.2%. 10-year yields now higher after being lower earlier in the session, up a basis point to 4.34%. And Brent higher 0.7% to 110.56. Under surveillance this morning, rising inflationary risks.
You could probably get headline CPI approaching 5% just by April. But the key really for us, and I think the markets, is that it is temporary and that it starts to ease as the year progresses. We'll see how things play out, right, with oil and gasoline prices. But, no doubt, this is a big hit to consumers and households and businesses.
Here's the latest key inflation data ahead with core PCE Thursday and CPI Friday. Economists expecting the sharpest one-month spike in consumer prices since 2022. Kelsey Barrow of JP Morgan Asset Management writing, the data poses risks that could keep investors on edge. The divergence between PCE and CPI is also likely to spur more questions. Kelsey joins us now. Kelsey, always wonderful to see you. There's a sense we're already getting that. The inflation component of ISM services rose the most going back to 2022. We have seen similar moves like this when it comes to ISM manufacturing. Why has that not shaken markets more significantly?
Well, we have experienced a supply shock that was different, but in some ways similar just a year ago with the tariff wars, where you saw a similar mix of risks to higher inflation, but also to weaker employment. So you highlighted in the ISM Services report yesterday the spike in prices paid. There was also a fall in employment to the lowest levels, I think, since December of 2023. So we're seeing the risks manifest themselves on both sides. But again, I would say the market is being very calm about this whole situation. And I think the best way to look at that is to look at the oil VIX. The oil VIX is at its highest level since 2008 or 2020. And then you look at the rest of the market, credit spreads or forward inflation expectations, and they've completely diverged. So you have one market, the oil market, that is ringing significant alarm bells, saying this is a serious situation, one that we have not experienced before, that is different than last year, that is different than 2022. But then you have the rest of the market that is really taking all of this with stride at this point.
Does this gap have to be reconciled, or can two things be true at the same time? Can this market chew gum and walk at the same time? Essentially, have a sense of geopolitical concern, while at the same time seeing really good earnings, seeing the AI story raise productivity, and an otherwise robust economy heading into this that can take a hit while still growing.
I do think that this needs to be reconciled in some way. And of course, the easiest way, the way that the market is currently positioned for it to happen, is that the oil VIX comes down, that this is a situation that doesn't last forever. And ultimately, corporate fundamentals are generally unchanged as a result of this. There is maybe a hit to margins, but margins are very high within corporate America, and they can take that. And the input cost increase is something that is manageable, and we move on. Now, of course, the risk is that the oil VIX is telling us something that the other markets haven't appreciated, which is financial conditions really haven't tightened that significantly on the back of this conflict. Credit spreads are still very narrow relative to history. And I think the only part of the market that has significantly repriced is the rates market, where you've seen Fed pricings flip from pricing in cuts to pricing in hikes. And that's actually the area where I think that there's the most room for opportunity, because if the oil VIX is right, and this is a bigger risk than the markets are appreciating, then we actually think that the next move for the Fed is a cut rather than a hike. And that really isn't priced into the rates market today.
Wait, sorry, so the next likely move is a cut because of the growth concerns then. But how bad would it need to get, because they'll have this dual fear of rising inflation, with Beth Hammack pointed to today, saying maybe we'll need to hike that if inflation does continue to tick up. So just how bad does it get for the Fed to decide that we're going to cut into this regardless of fears of an inflationary shock?
Yeah, I would focus less on how bad the growth data is going to be, and more about what the inflationary backdrop is. Does this remain a supply-side driven inflation shock, or does it morph into something that is more sustainable? So where would we be wrong in terms of expecting the next move to be a cut? One, if we start to see wage growth start to reaccelerate. So that was the difference in 2022, is you had an oil shock, you had an inflation shock, but it was as much demand-led as it was supply-led. And the other thing that's very different between 2022 and today is the way that the inflation market is reacting. So you have inflation swaps. The one-year inflation swap rate has repriced about 100 basis points higher. The one-year inflation rate, so the one-year inflation rate in 1 year's time, is essentially flat. And the five-year inflation rate is moving lower. That is a very different situation than what you had in 2022, when it was a demand-side inflation story. You had forward inflation expectations moving higher with the front part of the inflation curve. That's not what we're seeing today. So if you want to look for the risk that, you know, Beth Hammack is highlighting, that the next move is a hike, look to see any shifts in terms of the inflation swap market and how it's behaving.
The other thing that's very different from 2022, and this is what you were getting at as well, Lisa, is the amount of debt being put in this corporate bond market from the hyperscalers. Robert Schiffman over at Bloomberg Intelligence basically said, oh, this fear that there are too many bonds, well, how oversubscribed Amazon is shows that actually there is not enough in this market. Do you expect that dynamic to continue even if we do start to see some more inflation get priced in and we get concerns that, you know, the oil market, rather, that the oil VIX is correct?
Yeah, I mean, we do expect the demand for the hyperscalers, you know, in a stable macroeconomic environment to remain very robust. And our investment grade credit team has really got this, I think, spot on in terms of seeing the value in these names. They're very high quality, but they're being priced with a discount because there is this increase in supply that originally, I think, the bond market was a little worried about how this would be handled, and it's been taken down great. And in fact, for the investment grade credit market, a stable Fed policy regime, and now, of course, you know, the fact that the Fed is staying on hold right now is a function of something that's pretty uncertain. But in general, when the Fed is on hold and the policy rate is stable, particularly at the levels that we're at right now, which are still fairly high relative to history, that's actually a very good environment for investment grade credit. And while the flows have been a bit more mixed more recently, there is continued steady demand, particularly from sources like insurance, that are seeing these starting yields within the corporate credit market, looking at the fundamentals, and continuing to buy consistently throughout this month.
Kelsey Barrow of JP Morgan Asset Management. It's always wonderful to speak with you. And I love the way that she framed the idea of what's going on with the oil VIX versus the complacency that you're seeing in markets. And that's not a gap that can continue.
It's not a gap. Open interest for Brent oil futures, both calls and puts, are at a record. There is so much demand to hedge, but if you look at whether it be the VIX for the stock market, the MOVE index for the bond market, all of those have been trending lower. It's a huge disconnect, to Kelsey's point.
And up next, the companies that are going to be reporting earnings to potentially give some sign of which way it could break. Kelsey Barrow, thank you again for being with us. Coming up next, Kate Moore of Citi Wealth, General Robert Walsh of Academy Securities, Jorge Leon of Rystad Energy, and Calvin C. of BNP Paribas. You're watching Bloomberg Surveillance. Good morning.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Virginia report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up
and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The U.S. consumer does not have a lot of room to absorb an oil supply shock.
We're going to see a lot more bouncing.
We're not overly bearish on the economy.
We're still in a positive growth environment.
Inflation might not be as bad as feared, all things considered.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the second hour of Bloomberg Surveillance. Stocks on pause with traders keeping an eye on tonight's deadline for a deal with Iran. A dissonance developing between calm risk markets and increasingly jittery commodity strategists who come on and give us a sense every single day of how this is a very difficult situation that will likely get worse. Meanwhile, capital markets still wide open, giving people on the equity side, on the bond side, a sense that actually everything can chug along just fine once we get past this. Danny Berger here alongside us, which is such a wonderful thing. Danny, what's your sense about what we just heard from Kelsey Barrow about this dissonance between the oil volatility market and the rest of capital markets that seem to be saying la 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 la?
I think what was important that she said is that the dissonance needs to be solved. I know it's a great question that you've been posing. Can these two different outlooks exist? And in one argument, you could say yes, because earnings are strong, capital markets are open, everything looks great. But to Kelsey's point, to have the oil VIX at a record signals something bad down the road. And it doesn't make sense for assets to not acknowledge that. And if you listen to the experts, be it geopolitical or oil analysts, they're the ones who are saying this is not going to get resolved. It's the tourists among us, which, you know, probably includes myself, but it's the tourists among us that are like, no, this needs to get resolved. President Trump has an incentive to. He's going to keep can kicking. Even just in those opinions, there's a disconnect.
We have an 8 p.m. deadline that President Trump has set to get some sort of deal across, or else there will be escalation, according to a number of different speeches that he's been giving. Just in the past half hour, we've gotten a couple of different headlines, including from Iran's Mer state-affiliated news agency that explosions were heard on Karg Island. Then Israel coming out saying it targeted dozens of infrastructure sites in Iran. Those two headlines coming together, pushing stocks lower, pushing oil futures higher ahead of the open. a key question: how do you de-escalate when things seem to be escalating in real time?
And again, this Wall Street Journal reporting suggests that that's what Iran sees itself. They already see the U.S. and Israel attacking infrastructure. So the question apparently had been posed: what difference does an 8 p.m. deadline make when the president of the United States has already been attacking Iran? They're on a wartime footing. Perhaps they see themselves as succeeding because they're able to control the Strait of Hormuz. So why would they cave in to Trump's demands? And that's a big tail risk for 8 p.m. tonight.
We're coming off the longest streak of gains for the S&P 500 going back to January. Right now, we're taking some heat out of that after those dueling headlines talking about a potential escalation. Had been earlier higher on the futures, right now down by about 0.5% on the S&P futures. Gold getting a little bit of a bid, but really this is a question mark around the precious metal at a time of sell what you can, not necessarily what you want to, and yields inflecting higher on the heels of Brent crude up about 0.6%, 110.39. Coming up this hour, Kate Moore of Citi Wealth as equities are looking for that direction. General Robert Walsh of Academy Securities with the clock ticking on President Trump's Iran ultimatum, and Jorge Leon of Rystad Energy as Tehran squeezes the Strait of Hormuz. We begin this hour with crude pushing higher following reports of explosions on Iran's Karg Island just hours before President Iran's deadline for a peace deal. Bloomberg's Jumana Bersecci joins us now for more. Hi, Jumana. What's the latest?
Well, Lisa, as you said, the clock is ticking. That deadline is 13 hours away. So the region is on high alert about whether the president actually follows through on those threats. And the latest, he seemed to suggest that over the course of 4 hours after that deadline, the U.S. would proceed to obliterate Iran's power plants, their bridges, and broader civilian infrastructure. So this is the starkest warning that has come through to date since the beginning of this war, and it's been going on for more than 5 weeks now. So a lot of alarm about what could happen. At the same time, I will say that publicly, the two sides are still very, very far apart in terms of the ask. And President Trump over the weekend was quite clear. He wants to see an unconditional reopening of the strait, a full cessation of hostilities. Iran have come back with their own set of counter demands, including a permanent end to the war, assurances that it will not happen again. And they've insisted that they do not want to subscribe to a temporary ceasefire. If there is a cessation of hostilities, it has to be permanent. They're also really leading into this new leverage that they've acquired over the Strait of Hormuz and insisting on a new protocol to be adopted around the strait, obviously something that is not acceptable to Gulf states or nations around the world. So this is where the stances are officially. Now, behind the scenes, there has been a massive diplomatic push over the last 24 hours. We know that's been spearheaded by Pakistan, by Egypt. The various Ministry of Foreign Affairs have put out statements suggesting that calls have been taking place. Steve Witkoff had a call with the Egyptian foreign minister as well. So perhaps a slim chance of some form of diplomatic breakthrough to come in coming hours. But at the end of the day, the decision is solely that of the U.S. president, and he has to decide whether he has to follow through on the threats this time, whether he pushes back the deadline. Certainly he's done that before. And the other option, of course, would be a diplomatic breakthrough, but slim chances of that happening now. As you mentioned, though, before we were even speaking, on the ground, things are intensifying. Israel just disclosing that they have targeted dozens of infrastructure sites in Iran this morning. They've warned Iranian residents not to use the railway or trains. In response, Iran has continued with their attacks on the Gulf, once again targeting key energy sites. So still on the ground, the situation of the war is ongoing.
Jumana Bersecci of Bloomberg, thank you, as always, for that reporting. Here's a view from Wall Street this morning. Kate Moore of Citi Wealth writing, markets absorbed multiple shocks at once in Q1. Higher uncertainty naturally leads to higher volatility, and we expect that to persist. Kate joins us now. She is a beacon of insight at a time of a lot of cloudy signals. And Kate, what are you telling clients, given that we're all sort of hamstrung by a series of headlines that change from hour to hour?
Yeah, look, this is a really tough time for all of us in markets, and anyone who proclaims to have some certainty on what to invest in right now, I think we should dial that down a little bit. So I would say we're doing two things right now, not just in terms of portfolios, but also in communicating with our clients. The first is continuing to build for resilience. You know, we manage multi-asset portfolios on behalf of our clients, and we really try to think about, you know, what is going to be kind of the best positioning over the next couple quarters. We're not so prideful to say that we know what's going to happen over the next couple of years, and how do we kind of shore up risk in that environment. And the second is to say, when there have been some dislocations in the market, when things have sold off, when there have been some price gaps, is this an opportunity for us to re-enter some of the longer-term themes that we have high conviction in? So we're taking that kind of barbell strategy, taking a very measured approach to the asset allocation and really thinking about building resilience, and then taking the opportunity to leg into some of the medium-term themes that we think are going to be very interesting for clients.
You're framing it in a really interesting light, especially given Goldman Sachs coming out and recommending that people buy big tech. You see the same kind of thing from Mike Wilson of Morgan Stanley, but others as well coming out saying, all right, they've gotten beaten up enough. The multiples are looking much more attractive. And this theme is something that is going to be consistent. We're seeing that with respect to capital markets activity, and we're seeing that with respect to some of the investments and the run rate put forward by some of the companies that have not yet gone public. Is that what you're telling clients too? Buy big tech and just expect the best.
Well, it's not just big tech, though, I have to say. There's an opportunity in multiple parts of the AI ecosystem, some of which had run up very aggressively, we know, over the last 2.5 years, and people had backed away because they were afraid of the multiples. Well, with a bunch of multiple contraction this year, derating that we've seen, while significant earnings upgrades are still taking place on the behalf of all these analysts, we think there's actually an opportunity to look not just at the big tech or the hyperscalers, but multiple different parts of the supply chain. You know, at the end of last year, kind of at the beginning of the fourth quarter, we started really beating the drum on the resources trade, and particularly looking at things that benefit from the AI and, CapEx build out. But that wasn't it alone. And we also were constructive on resources because of what we thought was going to be a coordinated macro expansion in the first half of 2026. Now, obviously, some of these commodities have moved for reasons that we didn't forecast. And we are continuing to tweak our views here, but we see opportunities in lots of different parts of the resource space, as well as industrial infrastructure and, some of the components that go into the building out of data centers and also the broader tech ecosystem, not just AI.
You also still like gold.
Yeah, I like gold. I do.
Just what is the view from there in an asset class that increasingly feels like just a momentum play at this point?
Yeah, look, some of the price action, in the first part of this crisis and this conflict was disappointing, like full stop. But what I'll say is we added gold to the portfolio over the course of 2025, specifically to be portfolio ballast. Like, look, I don't want to, have a lot of duration in the portfolio. We're not seeing long bonds perform the role that they have historically in terms of, uncorrelated to our risk assets. So that was a major reason. We also were looking at kind of how tight spreads have been across the credit space and saying we prefer to take our risk in equities over credit. And gold just feels like a nice balance and a ballast to all the risks that we're taking. Was it awesome that the price appreciation in the metal was incredible last year and it was also a source of alpha for our multi-asset portfolios? Sure, but that's not the reason it was in portfolios. And I will say, we talk a lot about positioning and technicals and stuff for equities, but positioning in gold was really quite long coming into this crisis, particularly for individual investors and more of the retail side of the investment community. And so perhaps I shouldn't be as surprised that gold didn't perform as well in this risk-off moment. Of course, real rates going higher has traditionally had a different relationship with gold, but we're still holding it. In fact, I would buy it today if you didn't have exposure for the medium term, because I think it's going to be an important part of a multi-asset framework.
On the positioning point, just given what you're saying, it does seem like gold felt kind of like the poster child for, everything is moving based on positioning.
Right.
At least the first few weeks of the war, it did seem like what we saw was a lot of hedge funds getting close to the ground. To what degree is positioning still a large driver of what we're seeing in equity markets? Maybe less around fundamentals, maybe more technicals.
Yeah, look, positioning, technicals, and sentiment are a big pillar of our investment process. And, when I first started developing that framework over the course of my investment career, I thought to myself, how impactful will it be? Well, thank goodness that we look at all these indicators and we try to bring in data from all these different sources to assess how different segments of the population, investment population, are positioned. Because you can be right on the macro, you can be right on the fundamentals, and if it's already priced into markets or already owns it, there's no upside. So in this case, I would say positioning, sentiment, and technicals in risk markets was more tepid and kind of what I would call very neutral going into, February 27th. I think that set things up so that the drawdowns in equities were not as great as you would expect from a shock of this type of war, or something that might be an economic crisis, not just an oil price shock.
Which leads to scenario analysis. Let's say oil prices go to $120, $130 a barrel and stay there. How much more downside is there for risk assets given that tepid approach heading into the conflict?
Well, I think you're going to see a significant amount of differentiation in the equity market at $120 oil. And that's simply because some of the tech stuff we were just talking about is not going to be as sensitive to the oil price. And I think that, and I'm not saying there will be no pullback in CapEx, that is the last place that companies, any business, any government is going to pull back their spending because it's existential to kind of growth over the medium term. But you're going to see, I think, a significant deterioration in some parts of the consumer and then some kind of the energy-heavy input parts of the market. So differentiation at $120, but not, I would say, a massive like 15 or 20% drop in the stock market because it's not overly owned at this point. People are still relatively neutral in terms of their positioning.
Kate Moore, it is always wonderful to have you on the show. Thank you so much for being with us. Kate Moore of Citi Wealth joining us here in New York. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Iranian semi-official state media reporting that explosions were heard in the last hour on Karg Island. The reports did not specify the source of the explosions. Oil prices spiked after the reports before paring some of those gains. Karg Island is the departure point for about 90% of Iranian oil exports. President Donald Trump insisting the Strait of Hormuz opening must be part of any deal to end the war in Iran. The president saying if there is no deal by 8 o'clock tonight, the U.S. military could destroy key Iranian infrastructure, including power plants and bridges. And Iran remaining defiant ahead of that 8 p.m. deadline. Iran's Minister of Youth and Sports reportedly calling on the country's youth to form human chains around the country's power plants, which he called our national assets. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, deadline for destruction.
We're giving them till tomorrow, 8 o'clock Eastern time, and after that, they're going to have no bridges, they're going to have no power plants. The entire country could be taken out in one night, and that night might be tomorrow night.
General Robert Walsh of Academy Securities joins next. This is Bloomberg Surveillance.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's another day when we're all looking at our screens, wondering what headline's going to drop next to give us a sense of how close we are to a good or a bad outcome at 8 p.m. Eastern time tonight, that deadline that President Trump has set. Equity futures initially came into the day Trying to skew optimistic, that has turned on a series of headlines that have come out indicating explosions being heard in Karg Island. S&P futures lower by 0.4%, a bigger drawdown in the Russell 2000, down 0.7% on the back of a move in bond yields. Yields higher after earlier being lower, moving in tandem now with oil prices, given the fact that people are wondering whether the Beth Hammack view of the Fed is the right one, which is that a rate hike could be on the table should we get ongoing and prolonged oil price spikes. And what you are seeing in the crude space, both for Brent and WTI, the June contracts both inflecting higher, 0.6% for Brent, WTI up 1% at $99.43. Under surveillance this morning, deadline for destruction.
We're giving them till tomorrow, 8 o'clock Eastern time, and after that, they're gonna have no bridges, they're gonna have no power plants. Every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business. The entire country could be taken out in one night, and that night might be tomorrow night.
Here's the latest. Less than 13 hours until President Trump's deadline to obliterate civilian infrastructure if the Strait of Hormuz is not reopened by 8 p.m. Eastern. Bloomberg's Tyler Kendall joins us now. Hi, Tyler. What's going on?
Yeah, hey, Lisa. Well, we heard yesterday from President Trump saying that what Iran does today will determine whether or not the U.S. is winding down or escalating its operations later tonight amid these reports that you were discussing on the program that Israel has already confirmed it's hit dozens of infrastructure sites in Iran, and that Iranian state media is reporting that there have been explosions on Karg Island. Now, yesterday we did get a little bit more clarity from this White House that they need to see freedom of navigation when it comes to the Strait of Hormuz as part of any potential agreement. And our own analysts at Bloomberg Economics say that as of now, their assessment is that we are going to see more escalation rather than negotiation, as their base case remains that there is going to be an uptick in fighting before this turns into what they are calling a low-intensity war. Now, of course, President Trump could still delay his threats himself, as we've previously seen him done before, considering yesterday he did say that he feels that Iran is negotiating in good faith and that he actually feels that Iranian leadership has been hampered from effective communication with the U.S. over security concerns, alluding to the fact that that's partly why he gave Iran some more time, delaying this deadline before. But still, at least publicly, Iran has really taken this hardline stance, rejecting a ceasefire proposal yesterday, putting out its own top 10 demands, many of which were considered non-starters by the U.S., and continuing to hit energy infrastructure in the Gulf. Now, Lisa, Bloomberg News did have some new reporting overnight. People familiar with the matter telling us that President Trump has also considered seizing Iranian oil, not just as a leverage point over Iran, but actually a leverage point over China amid the ongoing trade negotiations. Still, sources caution that there are no plans at the moment to do so, as President Trump indicated yesterday that he would be taking a political risk by keeping troops in the region longer than necessary.
Tyler Kendall, thank you so much, as always, for that. General Robert Walsh of Academy Securities writing, infrastructure is only a legal target if it directly supports military operations. Dual-use systems like energy, ports, oil are where things get legally and politically risky. General Walsh joins us now. General, thank you so much for being with us, and we'll get to the legality of certain types of strikes in a moment. I just want to start with, how likely do you see escalation as the outcome of tonight?
I think the path we're on, Lisa, good morning, thanks for having me today, is we're on that escalation. We're probably seeing some of those strikes start to happen today. You've had some of your reports that the IDF has started that. I think this is just kind of a test of wills here now to see where today goes. And I think President Trump was very clear yesterday that if Iran does not come to the negotiating table to negotiate fairly and honestly, then they're going to continue to escalate this. And the escalation will continue until Iran really decides that they want to negotiate in good faith and start to give in to some of the things that the Trump administration is looking for.
And one of the things, the Trump administration is now looking for, General, is to have the Strait of Hormuz open. You do believe that Iran will open or ease the strait, but you say only when it extracts enough value. What does that scenario look like?
I think that value they're looking for is one of the things they're saying is they want control of the straits when this is over. And I don't think that's anything anybody in the Gulf region or the U.S. side wants at all. They also would like the U.S. and Israel to stop all military actions. One of their earlier things was they would like the U.S. to leave the Middle East. So I think, and another big one that is on the table by Iran is they'd like to continue enrichment. So controlling the straits into the future and continuing to be able to enrichment is one of those things that's just off the table for the U.S. as to how far we've been. And I think this escalation will continue. There's a point in time here that the U.S. makes the decision that we continue to escalate, and eventually you just go for ending this thing, and you just go after taking down their military capabilities just as far as you can take it. Some of these infrastructure targets we talk about that would be dual-use type targets, the U.S. has to be careful on that, but you start to really just take down their military capabilities to go back into production and be able to build these capabilities up again. I think that becomes a real challenge for them when you start to take down some of these infrastructure capabilities. And I think Tyler also mentioned China. I think China's a key thing going into this is when this is all over, I think President Trump needs to look President Xi in the eye and go, which side are you really on when it comes to the global community? You're supporting, President Putin in the Ukraine war, and here you are supporting the Iranians with missiles and technology. Are you going to continue that, or are you going to be more on the side of the world community?
I suppose, though, if President Trump does want to end it, and he does so with more military force, General, do you expect that they need to also be able to regain or get control of the Strait of Hormuz and allow for free passage? And how difficult would that be of an operation?
Yeah, I think that's very clear that the path that the U.S. is on is they start to continue to take down the Iranian military capabilities in conjunction with the Israeli Defense Force. They continue to take that down. They've put this bubble really over the entire country. Now they really have to focus on another phase and just really focus on the Straits of Hormuz to be able to make that more safe for commercial navigation. It obviously would get to the point where the U.S. Navy could come into the Gulf. They could escort commercial tankers through there, and that's another phase that we could be going into, and I certainly think it's doable with the capabilities that the U.S. military has, and that would be another phase as we move forward. The U.S. is not going to allow Iran to continue to have this leverage over the Straits of Iran. This will take longer than the original plan had thought because the enemy has a vote. The enemy has voted to use the Straits of Hormuz as leverage, and now that they're using it, the U.S. is going to have to move to a phase where they make that much more safe, where they can bring in the commercial shipping. And again, I'll say that they can do that.
We just have about a minute left. Just getting some headlines reporting from Axios saying that the U.S. conducted strikes on military targets on Karg Island. Based on your understanding of the region, how important is Karg Island? What kind of targets could be in their sights?
I think the big thing is this is really kind of the key thing for the Iranian government, but also for the IRGC, which gets 50% of its funding from the oil that goes through Karg Island. So this is a lifeline to the regime. And if the U.S. starts to hit these military targets, it's a signal today that we're serious about going after infrastructure that is important to the regime. And the more and more we see with this regime, the more that we're seeing that they're isolating the current political leadership, President Pezeshkian, and they're taking more and more control and becoming more and more hardline. So an attack on Karg Island would send a clear signal to the IRGC that President Trump is serious, the Israelis are serious about not allowing them to continue to control oil, get money, and continue to grow their military capabilities.
General Robert Walsh, thank you so much for being with us and all of those insights. If you are just joining us, we are getting news reported by Axios that the U.S. did conduct strikes on military targets on Karg Island. This follows reporting from Iranian state-linked media saying similarly that they did see attacks. You are seeing oil prices inflect just a touch higher on the heels of these reported explosions. Coming up next, Jorge Leon of Rystad with energy clearly in view.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations, the players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Seeing a move in markets on the backs of a series of headlines earlier this morning. Coming into the session, we saw a bit of optimism coming out with possibly another day, a fifth straight day of gains. Right now, that has turned negative following reports of explosions on Karg Island, and Axios reporting that the U.S. has conducted strikes of military targets on Karg Island. You can see the Russell 2000 getting beaten up the most, down 0.7%, similar declines across the board on the heels of a real move between oil and rates. The idea that when you do get these oil spikes, rates tend to sell off, yields go higher, and that is what you're seeing. Earlier in the morning, we saw actually a bid into bonds throughout the curve. Now it's the opposite, it's reversed. You're seeing two-year yields up about a basis point at 3.86%, 10-year yields 4.34%, ahead of a bunch of supply coming later this week. 3-year today. Tomorrow we've got 10-year and then 30-year coming out the day after that. And then what you do see, the big story has been in the oil space. And what you have seen once again, with concern of escalation, oil prices higher. This is the June contract for both Brent and WTI, both higher by about 1%, 110.74 on Brent, 99.58 on WTI. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Positive news out of Washington, lifting the insurance sector, with the government coming out with a better than expected update on Medicare, raising payments by about 2.5%, translating to about $13 billion flowing back into the industry. And importantly, it's a clear step up from the initial rates proposed back in January, which were about flat. So we are seeing shares of Humana up 9.6%, while United Health and CVS are also rising. We are also seeing shares of Broadcom up 3.2%. Google trimming some of its gains on this partnership. Broadcom locking in a partnership with Alphabet to help develop and supply Google's custom-built AI chips, also known as TPUs, along with the networking behind those systems. We know that Anthropic will also tap into that capacity, with all three deepening their partnership. And we end on shares of ARM ADRs. They are falling 3% on a downgrade by analysts over at Morgan Stanley to equal weight. And this call is all about execution risk as ARM tries to move beyond licensing its chips to actually selling them. Analysts warning that this introduces a new layer of complexity and that it could put ARM in competition with its own customers. Lisa.
Thank you so much, Yahira. On our radar this morning, crude prices climbing following reports of explosions on Karg Island, home to Iran's largest oil terminal. Meanwhile, President Trump vowing to destroy Iranian power plants and bridges if a ceasefire agreement is not met by tonight at 8 p.m. Eastern. And Iran maintaining a total blockade on tankers carrying liquefied natural gas through the Strait of Hormuz. More than a dozen vessels are currently idling after being denied clearance, a standoff that has already pushed global exports to a 6-month low. And lastly, Cleveland Fed President Beth Hammack making some headlines, saying a rate hike could be appropriate if inflation remains above the central bank's 2% target. Coming up at 8:30 a.m. Eastern, our own Michael McKee sits down with New York Fed President John Williams. Danny, this is the question. Is the issue just how long the Fed is going to wait before they cut rates, or could they seriously be considering a rate hike should the oil shock deepen?
This thing, just introducing the two-way risk certainly changes things for markets, even if she did say a cut is also possible. But this is a rates market that at one point during this conflict started to price in the possibility of hikes. That gets taken off the table. Do we need to add to that? You do see Treasury yields. They've moved the most since 2022 in that conflict with Russia. And you were talking about this. The reason 2022 was different is because hikes were on the table, and they haven't been this year. What happens if that changes?
Yeah, I was just noting that Cameron Dawson, when she was on earlier this week, yesterday, in fact, she wrote in her notes a phrase that I loved: find someone to believe in you like the bond market believes in the Fed's ability to get inflation back to 2%. It's the reason why I keep watching five-year forward break-even rates, because there is this sense that regardless of what happens, the Fed has this under control, and yet it has been more than 5 years we have had inflation above that 2% target. Clearly that makes some people very nervous, especially because no one wants to say, this time is different.
Well, you've been pointing out how the oil market and the bond market have been trading in lockstep this morning. Maybe something there needs to change, because the backwardation is so extreme in oil futures. You get a really steep drop-off in what we're expecting for further out oil prices. Perhaps you won't see five-year inflation expectations move until you see oil prices move too, because for now it really has been in the front part of that oil market that's seen the majority of the pain.
Let's get more insight on that, because that's been one of the conundrums. Is the forward-looking curve really reflecting some of the risks that commodity analysts have been expressing, certainly on this program, but many others as well? So, that is our top story. Crude pushing higher on reports of explosions on Iran's Karg Island. President Trump insisting any deal with Tehran must include the reopening of the Strait of Hormuz.
We have to have a deal that's acceptable to me. And part of that deal is going to be, we want free traffic of oil and everything else. I would say it's a very big priority. We have a concept where we'll charge tolls.
Jorge Leon of Rystad Energy writing, this is no longer just a supply story. It's a broader macro story impacting growth, inflation, and policy. Jorge joins us now. Jorge, thank you so much for being with us. What do you make right now of the forward-looking curve in crude that points to a de-escalation that the market is taking a signal from?
Hi, Lisa. Thank you for the invitation. Indeed, I think that right now the market is trying to understand what is likely to happen. Are we going to see escalation or de-escalation in the coming hours? On the one hand, we have a deadline that is clocks are ticking. On the other hand, we have this news that there was an attack on Karg Island. So still very much unknown. But at the same time, I think that we should brace ourselves for a possibility that this becomes a longer conflict, that the traffic through the Strait of Hormuz remains closed for an extended period of time. So I think that that's what the market is trying to figure out at this moment.
And a lot of people are turning to scenario analysis simply because we don't have a lot of facts. One question has been, at what point is this a growth shock, and at what point is this an inflationary shock? What are the thresholds you have on oil prices where it's one or the other?
Sure. So at the moment, let's think about scenarios. If oil price averages $110 per barrel this year, global growth will be trimmed down by around 1 percentage point. So from around right now with 3% before the crisis to 2%. Now, at the same time, $110 per barrel means that global inflation will pick up rapidly. And then you have the secondary effects of, if the central banks around the world are going to start increasing interest rates, then that complicates even more the macroeconomic outlook. And let's not forget that the ECB here in Europe and the Fed in the US have the next meeting on April 30th. And there is a lot of possibilities at this moment, if the war continues, that we are going to see actually increases in interest rates, as I said, on April the 30th.
Jorge, some have pointed to PIMCO being among them, the opposite side of that, which Lisa was also getting at, that it would result in a hit to growth. Why would the next move be a hike and not a cut if you do see lower growth as a result of higher energy prices?
That's a great question. This is normally part of the book of central banks, right? Fighting against inflation. That is a key for any macroeconomic director, for any director of a central bank. Inflation is the key enemy of macroeconomic growth in the medium and long term. So, and that is part of the mandate of central banks. So I would assume that same manual is going to continue in this time around. That is what central banks have been doing when there is a supply shock which increases oil prices. Killing the inflation is fundamental for a more optimistic macroeconomic outlook. Not in the very short term, I agree with you, but if we're thinking about how we exit this conflict, then increasing interest rates, killing inflation is probably one of the most sensible things to do.
I just keep thinking about what we heard from the IEA, who called this year's disruption the worst ever for the global economy, equivalent to the two major crises of the 1970s and the oil crisis in 2022 when it comes to natural gas. Jorge, are you looking at a similar environment, a disruption, the worst ever for energy markets?
Yes and no. There are some elements that point towards this is much more serious than, let's say, the two oil crises of the 1970s. And there are all other elements that say, no, they're probably a little bit less serious. Let's focus on the ones that show that this is slightly less serious. First of all, the world depends less on oil right now, right, than we did in 1970. Now we have nuclear, we have renewables. So the oil intensity of the global economy is lower, significantly lower now than in 1970. But then you have the other argument that back then in 1970, there was not a lot of gas demand, right? And right now you have a double crisis, which is oil and gas. So those are the two elements that we could probably think about, when comparing to the previous energy crisis. But I agree with you, whether it's a bit more serious or less serious than the previous crisis. It's sort of slightly irrelevant. Right now, what we need to focus is on how long this is going to last for, to make sure that we have the correct verdict at the end of the crisis. The duration is the key variable here. Is this going to end up being a prolonged crisis, or this is going to be a short-lived crisis?
Jorge Leon of Rystad Energy, thank you so much for all of your insights. We've been reporting throughout the morning about explosions heard on Karg Island, first reported by Iranian-linked media Axios, coming out and saying that the United States had attacked certain sites on Karg Island, specifying that they were military targets. Fox now reporting some new details saying that the targets included bunkers, radar station, and ammo storage, but that they intentionally did not target the landing docks on Karg Island. Danny, some details coming out right now.
Again, fog of war, trying to understand exactly what this means. I was thinking to our conversation with General Robert Walsh just moments ago, and the likelihood that the U.S. would want to get control militarily of the Strait of Hormuz, that maybe that's where they eventually need to go. That would include Karg Island. At the moment, it is just explosions. It's not, as far as we understand, people on Karg Island itself, but it's just another factor to think in as the deadline ticks down to 8 p.m. today.
Yeah, and the drip, drip, drip of headlines has pushed oil futures a little bit higher and higher and higher as commodity traders assess whether this pushes us closer to escalation or de-escalation. Again, we're looking at crude trading at $114.50. That is the May contract. Brent crude trading for the June contract is $110.67. When you look out to June, comparing apples to apples, WTI up about 0.9%, Brent up about 0.8%. Right now, let's get you an update on stories elsewhere. Here is your Blue Brief with Yahira Anand. Yahira.
Hi, Lisa. Israel saying it launched a new wave of attacks on Iran, targeting dozens of infrastructure sites in the country. Iranian state media reporting that a joint U.S.-Israel airstrike hit a railway bridge in the center of Iran that killed 2 people. Israel had previously warned Iranian civilians to avoid the country's rail network until 9 p.m. local time. Here, Morgan Stanley is planning to debut a new credit fund despite concerns surrounding the sector. The fund will invest predominantly in private credit and include a wide spectrum of credit strategies. The bank plans to allow redemptions of up to 5% every quarter. And debt to fund AI still seeing huge interest. The Blackstone-owned data center operator in the U.S. raised $4.6 billion in investment-grade notes to refinance a project hosting thousands of servers, including for Microsoft. The deal attracted about $12.5 billion in demand, according to sources. The banks involved declined to comment. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. And that kind of gives a perfect example of how wide open capital markets are and how much demand there is to finance the data center build out, the infrastructure build out tied to artificial intelligence, tied to an industrial renaissance, and speaks to the reason why some people are looking past this to medium and longer term themes.
By the way, it's also the antidote to the fears over private credit, that credit markets are still wide open. Another Blackstone related story, they hit their cap for their opportunistic credit fund at $10 billion. Huge amounts of demand for investors to get into a private credit fund from Blackstone.
A lot of conflicting signals right now, none of them really pointing to some sort of massive credit downturn, at least not for now. Up next, bracing for economic shock.
There's no real sign of inflation expectations becoming unanchored. But remember, the energy shock, we don't really still know how big it's going to be and or how long it's going to last. The war is the biggest risk. And, I think the markets are still, underestimating that risk.
Up next, Calvin C. of BNP Paribas, as we assess the tea leaves coming from the economic data that has happened, as well as what's up next. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg Surveillance. We're looking at a market where you're seeing optimism just fade a touch around the edges. Equity futures lower, down 0.5% on the S&P index as we look toward that 8 p.m. deadline Eastern time between the U.S. and Iran. Meanwhile, A bit of strength in the euro, 115.61 versus the dollar. 10-year yields inflecting up. Again, that lockstep relationship between yields and oil. Oil prices higher, 0.9% now on Brent to 110.71. Under surveillance this morning, bracing for economic shock.
This is both a shock to growth and a shock to inflation. So the Fed is back where they were, a year ago. I think in the current environment, they're just going to sit on their hands for quite some time. There's no real sign of inflation expectations becoming unanchored. But remember, the energy shock, we don't really still know how big it's going to be and how long it's going to last. The war is the biggest risk. And, I think the markets are still, underestimating that risk.
Here's the latest. Cleveland Fed President Beth Hammack telling the AP she sees a possible rate hike scenario if inflation persists as the war in Iran clouds the economic outlook. Calvin C. of BNP Paribas writing, "We believe the FOMC may now regret having eased policy in 2025. Our base case is that the Fed moves to a symmetric bias in April and keeps rates on a long hold." Calvin joins us now. Calvin, great to see you. Thank you for being here.
Thanks for having me.
Regrets the rate cuts. Please explain, given the fact that a lot of them are saying that the economy had been weak and that labor market is showing signs of cracks.
I think what the Fed is now reevaluating is why the labor market was weak late last year. The Fed cut rates because job gains trickled to a really low level, but increasingly you could hear many Fed speakers now increasingly blaming those low levels of job gains on just simply low labor supply. We have very few immigrants coming into the country now, and I think what many at the Fed are now accepting is that low level of job gains are fine, so long as the unemployment rate remains relatively range-bound, which it has been. We're at full employment.
So you think Beth Hammack is not an outlier in talking about potentially putting a rate hike back on the table, not as a likely path of travel, but as a potential outcome should inflation remain at the levels that it currently is at?
The reason why we think the Fed is moving to a symmetric bias later this month is because we think most at the Fed now are open-minded to a wider range of possibilities. I think the Fed is going to be really hesitant to hiking rates, but there are two conditions that we think could get them there. One is if the unemployment rate keeps dropping, down perhaps to that 4% level, that would clearly tell the Fed that, maybe the current setting of monetary policy actually isn't that tight. And the other is inflation expectations. This shock to oil prices that we've seen, bumping inflation, it's not the first one. This is the fourth shock that we've seen to inflation now for the last 5 years. And the risk is that inflation expectations begin to unwind. And if that happens, that's going to be a really tricky spot for the Fed. And that may be a path, we think, that could potentially get them toward hiking.
Just on the employment side, do you believe that what we saw on Friday wasn't a one-off, that it does point to continued strength in the labor markets, just because there's been a lot made of this pattern of basically has gone bad month, good month, very bad month, very good month, that feels like it's kind of evened out to something steady? Where do we stand at the moment?
It's not new that we have a lot of volatility in the labor market numbers, which is why we tend to look at things on a moving average basis. And in that regard, we're seeing job gains that are, again, slow, but good enough. The job gains have been up and down, but the unemployment rate has been surprisingly steady. And we think that's the number one thing that the Fed is keeping its eye on, that unemployment rate. And because the break-even rate of payrolls is so low, in other words, the number of job gains you need every month to keep the unemployment rate flat, we think that the Fed is very comfortable just sitting on its hands. The labor market isn't screaming hot, but it's not blisteringly cold. It's just kind of in the right place, which is what we think gives the Fed time to just see it through, keep rates on hold for a while, and determine their next move.
So that's one of your prerequisites to allow for the conversation about a hike having. On the other side of things, with inflation expectations, what is the mechanism for it to bleed through and not just be a one-off energy shock? What needs to happen in order for that to translate into inflation expectations elevating and remaining there?
Sure. As mentioned before, this is not the first time that we're seeing higher inflation. We had the post-pandemic reopening. We had Russia's invasion of Ukraine. We had tariffs, and now we've got rising energy prices because of the conflict in the Middle East. The Fed is very worried about consumers expecting higher inflation in the future because it becomes a self-fulfilling prophecy. And if consumers, after seeing another shock to inflation, throw in the towel and say, you know what, that's it. This economy is going to see permanently higher inflation, and people start pulling forward their purchases, then again, that can lead to inflation running higher and higher and higher, and the Fed would need to get ahead of that pretty quickly to arrest those expectations should they begin to unanchor.
The biggest pushback to this is that even though we got a hot headline payrolls print on Friday, the actual wages did not increase as much as people expected, and it actually increased at the slowest pace in a number of years, highlighting that we're not going to see necessarily that wage price spiral. Similarly, with the ISM service data that came out yesterday, the employment component fell to the lowest level that we've seen in at least 3 years. All of this pointing to the idea that there isn't really heat in the labor market that could sustain some kind of wage price spiral. Why isn't that enough for you to sort of take that aspect of the equation off the table?
We agree with that right now. Right now, there are really no wage pressures in the U.S. economy. The labor market is at full employment, but the labor market is not particularly tight right now, which is why I said earlier, for the Fed to consider rate hikes, we need the unemployment rate to be dropping to this 4% level or below. And at that level, I think the Fed would get a lot more concerned that with the labor market tightening a lot, that wages could begin to percolate a bit, but not right now.
I feel a bit like a broken record. At what point do oil prices get to a level where it's more of a growth shock than an inflation shock? And conversely, where can oil prices level out where it will be more of an inflation shock than a growth shock?
It's a delicate dance for the Fed to have to deal with. We think that right now the primary impact on the economy is on inflation. On the growth side, we think that oil prices probably need to be a lot higher than here for us to entertain something like a recession. And the reason I say that is twofold. One, energy is just a much smaller part of the economy now. In other words, the economy is less energy intensive. We use less energy to generate each unit of GDP output today than we'd have in the past. Number two, let's think about inflation-adjusted terms here in terms of oil prices. Oil prices are high, but if we look at things from an inflation-adjusted perspective, in order for us to get to the 2008 level prices of oil, we would probably need to be at somewhere around $200 a barrel. So when we put that into perspective, again, it's not great for the consumer. Our rule of thumb is that every dollar increase in oil prices or gas prices at the pump takes about $100 billion away from consumers' pockets if sustained over an annual basis. But historically, the levels that we're seeing now are high, but they're not crazily high on an inflation-adjusted basis.
Calvin C., this was great. Come back again soon. Thank you so much for being here. Calvin C. of BNP Paribas, as we parse through the growth versus inflation shock aspect of this. I'm just looking right now at diesel prices at the pump here in the U.S. The key indicator for how you ship goods that can get into consumer prices more quickly, highest levels going back to 2022, Danny.
And then for gas prices yesterday, they surpassed 2004's peak for the second time. The other time before that was Russia's invasion of Ukraine.
At the same time, people continuing to spend, and that's why you're seeing some outlooks from a lot of companies. Next up, we've got Delta coming out tomorrow. Coming up next hour, Katrina Dudley of Franklin Templeton, Daryl Cronk of Wells Fargo, New York Fed President John Williams. Do not miss that with our own Michael McKee and David Seif of Nomura. This is Bloomberg Surveillance. Good morning.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Vienna report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Equities are really looking for hope, for a resolution.
Panic buying more than panic selling.
The underlying shift to the U.S. and a reversal of last year's trade makes a lot of sense here. We expect volatility to continue.
In a 6-month window, I can see a lot of volatility.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Optimism fading as traders keep an eye on tonight's deadline for a deal with Iran. Reports of explosions on Karg Island keeping risk appetite at bay, but not extinguished. A dissonance developing between calm risk markets, open capital markets, and increasingly, Danny, jittery commodity strategists.
I was just looking at the performance of the major asset classes since this war broke out. Some of it is extremely logical. Oil up more than 50%, depending on what contract you're looking at. 10-year yields up 38 basis points, which is the biggest since Russia's invasion of Ukraine. Stocks are down less than 4%. And in fact, they've erased half of their decline to the most extreme of the extent. So you are seeing this disconnect. To your point, it is dissonance between what oil markets are pricing and what other risk assets are pricing.
And when last week we saw a little bit of a reprieve from some of the most extreme threats, we saw actually a bounce back, not just in risk assets with the best week of gains for the S&P and the NASDAQ going back to late last year, but a similar move in credit. So this is confirmed again by credit markets. And you actually saw March with the biggest amount of global bond issuance going back ever, really. And so you put this together, you wonder, is this a market that's overly complacent, or is this a market that is predicated on other influences that are driving the bus?
I was going to say, what is the setup here? Is it just that earnings are really good, corporations are resilient, AI spending continues, or that there is a belief that this conflict will end and it will end soon? That stands in contrast to an 8 p.m. deadline that's seen some very hawkish rhetoric from this president of escalation, and maybe current escalation ongoing right now with, to your point, those reports that the U.S. did attack military targets on Karg Island.
So the data that we've got coming up, we've got Delta earnings coming out tomorrow, which will be a key indicator as we really kick off an earnings season that begins in earnest next week. Of course, we also get Fed meeting minutes to give a sense of how many people are on Beth Hammack's camp of potentially putting asymmetric risk on the table of potentially a rate hike as well as a rate cut as being the next move. Jobless claims and core PCE as well as income and spending on Thursday and CPI data coming on Friday. How important is inflation data at a time, Daniel, we're considering the idea of stagflation, we're considering the idea of prolonged oil prices being higher, while at the same time a consumer is strong enough to absorb it?
It's something Kelsey Barra of JP Morgan said to us, that perhaps some of the complacency, if you will, in markets exists because it hasn't showed up in the data yet. We started to get that in yesterday's ISMs, sort of stagflationary feel to it. What happens as we continue to get more data? What happens if we get CPI that does show the biggest increase in inflation since 2022? Maybe then markets wake up, but again, there has been a real resistance to price anything like that in.
Right now, you're seeing a bit of a risk-off feel as we do get news of some explosions heard on Karg Island, reporting that the U.S. struck military assets on the region, not some of the shipping docks or other more civilian and commercial sites. We're seeing S&P futures lower by about 0.5%, 0.7% decline on the NASDAQ and Russell 2000. The bond space tracking oil, yields higher in tandem with oil prices higher pretty much across the board. Not significant moves still, a reversal from what we saw earlier this morning. 30-year yields 4.91%, creeping higher by 2 basis points. That question of do we hit that 5% mark? And in the crude space, both Brent and WTI, the June contracts trading up more than 1%, both of them 111 on Brent. We could see $100 even for WTI's June contract. Coming up this hour, Katrina Dudley of Franklin Templeton. As political uncertainty whipsaws markets, Daryl Cronk of Wells Fargo upgrading their outlook on the tech sector. And New York Fed President John Williams with inflation concerns weighing on the path ahead for interest rates. We begin this hour with stocks following reports that the U.S. has conducted strikes on military targets on Karg Island, just 12 hours away from President Donald Trump's deadline for Iran. Katrina Dudley of Franklin Templeton writing this: these events in the conflict could drive uncertainty through energy markets, which feeds directly into inflation expectations, rates, and overall market sentiment. Katrina joins us now. Katrina, great to see you. Thank you for being here.
Great. Thanks for having me.
So how do you frame this in terms of whether any of this is tradable or whether you just sort of sit and watch and sort of stick with how you're allocated?
So if you take a look, people are talking sticking with how you're allocated as being complacent. So you're actually kind of really needing to fight that narrative that I am not paying attention to what's happening. But if we look at the market and what is driving the market, it is AI sentiment, and that is really key. And we think that what's happening, the geopolitical concerns are real, but they're not undermining the core thesis that we went into this year with, which is continued tech AI spending, a consumer resiliency that is still there, a little bit more, less certain, but I think it's still there on the resiliency of that consumer. The geopolitical tensions have really undermined things, but oil, if you look at the entire energy sector, it's just such a small part of our market today.
At the same time, people looking past some of the consumer-facing industries and pointing to big tech. You talked about how the AI trade was something that really did have legs, and we were talking to Kate Moore about how that would be the last thing. The CapEx spending would be the last thing cut, considering this is an existential race. Goldman Sachs coming out, Peter Oppenheimer saying this is the time to buy the dip in big tech. Do you feel similarly?
I think that big tech is now a safe haven. I think that big tech is not as cyclical as we've seen it in the past. You're talking about it as being the last thing to cut. And that's the type of language that we use for things that are considered staples and stable items. So I think that AI and big tech, when you talk about that AI arms race, I completely agree with what Kate said, that the fact is, we are going to continue to invest in AI. We are starting to see returns from those use cases as well. And I think that is the offset that the market is really ignoring at this stage, which is the idea that we've done all this spending, we've taken all those expenses, but now we're starting to see on use cases in our back office, for example, we're starting to see those cost takeouts. And so it's not now just always like, cash going into the AI spending bucket. We're starting to see the returns.
Even so, the Mag 7 big caps tech stocks, they certainly haven't been a monolith. They've been trading differently. It's remarkable that Apple has been one of the best performers when it feels like that was left for dead, that they had missed out on the AI story. And then you look at something like a Walmart that is set to grow more slowly than all of the Mag 7, but it is priced at a massive premium to the group. How much of this market also just wants to see cash flow? That it's not enough, again, in years past that they were spending on AI and advancing, but balance sheets need to be robust.
I don't think in this stage of the investment that you need to have like a kind of pristine balance sheet. You're investing, and you're investing for growth, and that means that you are taking risks. You're taking risks in the sense that that capital may not be worth anything, but you need to do it, because if you don't, you're going to be left so far behind. When we talk about all of these AI providers, we were talking before the break, it is a little bit like a horse race where one gets ahead, one falls a bit back behind. But I do think that ultimately they're all investing. They've all got good products. We are continuing to invest and to make sure that our teams are staying ahead and have access to the best tools and the best information. And I think that that's what a lot of people are focused on. And what is being seen as complacency is actually no, it's just the fact that I have now had multiples come down in the tech sector. The Mag 7, though, is continuing to grow. 2027 earnings growth will be still above the rate of the earnings growth of the S&P. And I think that the valuations is coming down as a result of the stocks coming down is really starting to say to investors, maybe I just step in here, because that valuation negative narrative that we've been talking about throughout the most early part of this year is really kind of started to lose some of its shine.
Does this mean we've also put to bed the broadening out trade? Because it feels like we're back in this environment where we're not so sure about the consumer, other things are going on, what's happening with rates, but tech will reign supreme regardless of the environment. Does market leadership from here start to narrow again?
I think when we talk about the breadth of the market, we're talking about the Mag 7 and we're talking about the 493 other stocks. And even the Mag 7 is not just technology spending, it's not just purely tech stocks. And I think you do have consumer in there. You have Amazon, for example, which still is a big consumer play. You have names like Meta, advertising, still a consumer play. So I don't think necessarily it's just tech or not. The broadening trade has worked this year, and I do think it's going to continue to work. I think that part of what is working has been energy. That has been the surprise, but it's been driven by something that was also a surprise, which is the geopolitical tensions. But I do think that generally speaking, the rest of the market is still where you're going to continue to find opportunities. But we do think that there are select areas on the tech space where those valuations have come in, and we are not concerned about tech spending being cut.
Katrina Dudley, thank you so much for being with us. Wonderful to see you. Katrina Dudley of Franklin Templeton, thank you. I did want to bring this to you. We did get another post on Truth Social by President Trump saying this: a whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. However, now that we have complete and total regime change, where different, smarter, and less radicalized minds prevail, maybe something revolutionarily wonderful can happen. Who knows? We will find out tonight. One of the most important moments in the long and complex history of the world. 47 years of extortion, corruption, and death will finally end. God bless the great people of Iran. Bloomberg's Tyler Kendall joins us now for more. Tyler, how do you put this into perspective with some of the other posts that we've heard from the president of late?
Well, Lisa, at this point, it appears President Trump is not going to back down or delay his threat to hit Iranian civilian infrastructure by 8 p.m. Eastern tonight, posting here on Truth Social, saying that I don't want that to happen, but it probably will. But he also, of course, added, who knows? Of course, the president has before delayed and deferred his previous threats. And just yesterday, he did say that he felt that Iran was negotiating in good faith, even citing that he thought that Iranian officials were hampered in their communication with the U.S. over security concerns, and that's why he previously delayed this deadline before. Still, we have to pair that with reports this morning that Israel has already hit Iranian infrastructure, dozens of sites, according to reporting, as well as Axios reporting that there have been military targets hit on Karg Island. Pair that with Fox News reporting that this includes bunkers, radar station, and ammunition storage, but that loading docks were indeed spared, that we haven't seen the U.S. move into that point quite yet. So it's going to be something to watch and develop because, Lisa, as you well know, President Trump said that today depends on what Iran does, whether or not the U.S. is going to wind down, or escalate its operations later tonight.
Tyler, do you have any sense of what the deliberative body is behind any decision that the United States makes? Who's involved? Exactly how much disagreement or agreement there is in these deliberations that are ongoing?
Well, at least publicly, Lisa, we've seen a united front from the administration, right? We are expecting some updates later today from Secretary Pete Hegseth, also the Joint Chiefs of Staff, Dan Kane. We know Secretary Marco Rubio has also been closely involved in all of these discussions. There has been reporting that President Trump has pushed for a perhaps more aggressive stance when it comes to this, considering that we know some of his previous comments going back decades when it comes to his feelings on taking Karg Island as just one example. At this point, though, the administration has put out their negotiating team yesterday. President Trump confirming that includes Vice President J.D. Vance, along with, of course, his special envoy, Steve Witkoff, and also Jared Kushner, many of whom these officials were in the room with him yesterday in the briefing room. Of course, also the CIA director as well. So there seems to be a lot of different angles here. But even, Lisa, yesterday, I'll point out during those remarks to reporters, President Trump himself said that sometimes there has been disagreement with the strategy when it comes to Iran among top military officials. But as of now, they are showing, of course, that united front.
Tyler Kendall, thank you so much for that work and for coming on so quickly. Really, honestly, Danny, looking at this, how does anyone take this type of post? A question of, yes, this is amping up the rhetoric, but saying a whole civilization will die tonight, never to be brought again. I don't want that to happen, but it probably will.
But then at the same time saying that we have complete and total regime shift, where you have smarter, different, and less radicalized minds, and pointing to optimism that maybe there will be a deal. It's something that General Robert Walsh of Academy Securities pointed to, of a carrot and stick approach from the president, that maybe there's a method behind the mixed messaging, that you claim there's a good chance of a deal, and that's deliberate to allow for a last-minute deal, that you have to have that present in there while leaving the extreme of the threats. Again, though, the issue for Mark is this kind of takes off the table, or seemingly at least takes off the table, any kind of walk back.
Yeah, in the markets, what do people do with this? Unclear. You are seeing a little bit of a leg lower in equity futures on the heels of this. Up next, the morning calls, plus Daryl Cronk of Wells Fargo, as President Trump's threats weigh on markets. That's coming up next. This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It is deadline day. There's a question of what happens after 8 p.m. Eastern. A drumbeat of headlines have been taking this market lower throughout the morning. Explosions that were reported on Karg Island, then reportedly the U.S. hitting a number of military-tied assets on Karg Island. And now President Trump coming out with a post saying a whole civilization will die tonight. I don't want that to happen, but it probably will. As these sort of drumbeat of headlines comes out, a sense of unease falls over the markets, and you do see that reflected in a risk-off feel. You're seeing stocks lower by 0.6% in the S&P futures. You're seeing a greater decline across the board with Russell and NASDAQ down about 0.8% in the bond space. Yields slightly higher on the back of an increase in oil prices, particularly at the long end of the yield curve, which is interesting, given the expectation that the Fed could potentially move to a more hawkish position in the oil futures space. The June contract for both Brent and WTI both inflecting up more than 1%, seeing now WTI, that June contract, at near $100 a barrel. We are going to get back to that post that we got from President Trump and what the ramifications of that 8 p.m. deadline are later today. Time now, though, for the morning calls. First up, Piper Sandler lowering its price target in Apollo to $146, noting a difficult start to 2026 with macro headwinds. Those shares lower by more than 1%. Next up, Seaport Research double downgrading Lennar to sell from buy, seeing rising concern of further slowing in housing activity on the heels of higher mortgage rates, slowing down further an already rather sluggish industry. And finally, Morgan Stanley downgrading ARM Holdings to equal weight, noting plans to sell its own chips could pose risks. Those shares lower by more than 4%. Turning back to our top story, stocks falling and oil rising following an ominous threat from President Donald Trump on Truth Social. The president writing, a whole civilization will die tonight. I don't want that to happen, but it probably will. Daryl Kronk of Wells Fargo joins us now. Daryl, typically markets try to strip out emotion. They try to look at what the facts are on the ground. How do you handle headlines that increasingly have the potential to be potentially history-making, but also could be nothing and could be a viable dip? I mean, how do you sort of assess this type of risk?
Yeah, I think it's a great question, Lisa. It is the question of the day, so good morning. I think what you want to look for in this kind of environment is what we call high convexity trades. And what do I mean by that? I mean trades that, probably have some minimal downside to them, but could have big upside if the circumstances and the conditions flip. That's part of the reason we just did a pairs trade of downgrading energy and upgrading technology, because we see the asymmetry there of the risk reward being very, very favorable in today's world.
At the same time, Daryl, how do you understand what's a haven at a time when potentially we could be looking at something that's either a massive inflationary shock or potentially a massive hit to growth, as not just a question of prices kill some of the activity that people are opting to go on, but actual shortages percolate into some of the fastest growing areas in the world?
Yeah, Lisa, it's a great point. I mean, I think what you end up with is you have the real supply-demand shortage that's probably going to persist for quite some time. That's well documented and well said around oil. But if I look at something like what I was just referencing, I've got energy equities up 33%, tech down 7%, a differential of 40. Well documented that tech now trades at the S&P forward 12-month price earnings multiple, so I'm paying no premium for double the earnings growth, right? The consensus 12 months forward on the S&P is 18% earnings growth. Tech is supposed to grow 35%. And history tells you, if you go back and look at these past oil shocks, you want to sell energy equities in advance of an oil price peak. I can't tell you exactly where the oil price peak is, but at $114 on WTI today, we'll take that risk reward that you can deploy capital and sell into that environment. History tells you when oil becomes the story is when you generally want to move away from energy equities.
It feels contrarian at this moment, Daryl, with everyone upgrading their earnings outlooks for energy and everyone saying this is the place you can hide out. So it's interesting to hear that. And does it also mean then so much has been made of the halo trade, the hard assets, low obsolescence? Have we gone a little too far down that path then? Is that overblown, the attractiveness of away from digital assets and into the hard assets?
I think so. Again, go back to the high convexity. So when we look at areas where the downside is probably somewhat muted, but the upside could be real if that positioning, to your point, changes, Danny, it's places like I just mentioned, energy versus tech. Gold, I think, is another high convexity trade here, right? Probably minimal downside from 46.80, but to us, we have a 12-month gold target price at 5,900. That's 25% from today's level. I would put financials in that category too. Financial equities are down 9%. If you look at some of the alts managers, down 30 to 50%. A lot of the bad news is priced in there. If things do change, even on the intermediate basis, and move higher, you've got some big upside there probably. And you could put digital assets in there as well. Digital assets have come down meaningfully, call it 50% in value. I don't think the downside is materially more there, Danny. And so, if the world does change and conditions change and positioning is skewed one way, people have to reorient that positioning, either covering short positions or getting back long areas, so that convexity can really work in your favor in portfolios when you use it wisely.
Daryl Cronk of Wells Fargo, thank you so much for being with us as we try to parse through what is noise, what is signal. We're getting a series of headlines. Not only President Trump's Truth Social post talking about the potential carnage that could occur tonight after 8 p.m., but J.D. Vance speaking in Budapest as he delivers a speech there saying that the U.S. is confident it will get an Iranian response, reiterating that the deadline is 8 p.m., saying that the Karg Island explosions and reported military-focused strikes does not represent a change in strategy. All of this coming as the pressure continues to rise.
I do wonder also, they're certainly not outright saying this, but if in here it might be a slight shifting of the goalposts. That J.D. Vance is saying we are confident we'll get a response. He's not saying what the response will be, that it will be an agreement to a ceasefire, but is that enough for the U.S. to say negotiations are ongoing, therefore we're not going through with the wipeout of a civilization that the president talked about in his Truth Social post? Is that what's going on at the moment? It's so hard to know with these headlines coming very fast. And again, the very extreme rhetoric coming from this president.
If you are just joining us, setting up for this morning, the expectation was that there would be ongoing discussions until 8 p.m. Eastern this evening. A tone of optimism initially that has faded as reports of strikes on Karg Island continue to come out. The latest coming from the Wall Street Journal saying that the U.S. striked more than 50 military targets on Karg Island, talking about two officials that they spoke to about that. Then J.D. Vance saying that there is going to be no change in strategy, that what you saw in Karg Island was not a change in strategy. And then this post from President Trump, a whole civilization will die tonight. I don't want that to happen, but it probably will. Full of mixed messages. Nonetheless, amping up the rhetoric at the very least, with a market struggling to know what to do with this.
And the vice president also saying on Iran that very shortly this war will conclude. It's similar rhetoric we've heard from the president too, at least on the equity side of things. It's one that has continued to look at the bright side. Again, will a deadline of 8 p.m. tonight change that?
Yeah, right now you are seeing a bit of a fading of some of the risk appetite. Equity futures have rolled over and are near session lows as we get these competing headlines dripping out through the day. The real underperformance has come from the Russell 2000, with yields going higher on the heels of higher oil prices. Do not miss what is coming up next. New York Fed President John Williams joining our own Michael McKee as inflation concerns weigh on the path ahead for interest rates. How does a Federal Reserve deal with potentially a two-sided risk? This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Coming back into another day of headline roulette as we wait that 8 p.m. deadline that President Trump has set to reach a deal with Iran. Ahead of that, we are getting headlines that do indicate a ratcheting up of tensions with explosions in Karg Island, as well as, of course, threats of complete destruction by the end of the day should there not be some sort of resolution. The U.S. now confirming the strikes on military assets in Karg Island. Right now, markets fading from some of the earlier optimism as the session grows older. Still not exactly dramatic declines and actually pairing some of the earlier losses down about a third of a percent for the S&P. 10-year yields now lower on the margins. 10-year yields now 4.33%, and Brent crude higher by about 0.5%, 110.32. We are getting some economic data. This is sort of the drumbeat of information that we're going to be getting ahead of core PCE on Thursday and CPI on Friday. Coming in weaker than expected with durable goods, although if you strip out transportation, you actually have a beat to that. Again, just sort of feeding into this drumbeat of information that central bankers are going to be considering when deciding whether this is an asymmetric risk to the downside or whether it's increasingly symmetric, calling for potentially either a rate cut or a rate hike as the next move. Let's turn to the Fed central bankers awaiting the first read of inflation since the start of the war. Bloomberg's Michael McKee standing by with a special guest. Mike?
Good morning, and we'd like to welcome all of our viewers and listeners on Bloomberg Television and Radio worldwide. I'm here at the New York Fed with the president of this regional bank, John Williams. Thank you very much for joining us this morning.
Well, welcome to the New York Fed.
We have so much news and headlines about Iran today, and it does affect people's economic lives a lot. I know you can't make a forecast, but what's the best estimate that your people have been able to come up with now for what this is going to do to inflation and how quickly?
Well, I think it will directly go into headline inflation because energy prices are an important component of that. So I expect headline inflation to actually be elevated, in the middle of this year. Of course, if energy prices come back down or stabilize, then that won't add more to inflation. So right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices.
What could we get to in the meantime? What's the sort of thinking about where inflation on a numerical basis could end up?
Well, again, it's hard to predict that.
Estimate, not a forecast.
Clearly, we can get into above 3% inflation. I think markets' expectations right now are for CPI to be something like 3.25% over the next year. But it really depends on what happens, both in terms of how high do energy prices get, but also how long they stay high or whether they come back down. personally, I'm also very focused on what's happening with underlying inflation, core inflation, inflation expectations, and other indicators as well, besides what's happening to energy prices, understanding the broader picture.
Well, what's happening with core inflation?
Yeah, so there, I think the story hasn't changed very much. Clearly, higher energy prices does add a little bit to core inflation. You think about airfares, which is part of core inflation, but it is influenced by fuel prices. So I expect that to add maybe a tenth or two to core inflation over the year, the energy price component. But we've seen tariff rates come down. We've seen some other, I think, more positive signs on underlying inflation. So overall, I'm kind of where I've been for a while with core inflation around 2.5% this year.
Well, how long, how high, how fast would inflation have to move to merit a rate response?
Well, I think really it does go back to kind of the full kind of set of factors influencing inflation. And I'm going to bring up tariffs because it is a big part of the story so far about why core inflation has been elevated. So I am watching, imported good prices, looking at core inflation expectations, and then obviously on top of that, what's happening to food and energy. So to my mind, monetary policy today is really well positioned, given where all of those dynamics have been playing out, and well positioned to kind of wait and see on some of the effects of what's happening today. I'm not saying we're just in some kind of we can't act. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes. Right now, I think that monetary policy though is pretty well positioned, given what we've been seeing so far.
Monetary policy is well positioned, but what about the economy? What's the state of the economy?
Yeah, well, if you asked me this a month or two ago, we would be talking about remarkable resilience of the economy, growing at 2% last year, looking to grow even faster this year. Clearly, with the conflict in the Middle East, that changes that a bit. Consumers, families are going to be paying higher fuel costs, gas price, with the gas price increases. So I've been bringing down my forecast for growth this year, probably somewhere between 2 and 2.5% for growth this year. An unemployment rate probably staying around where it is now, 4.3%. And economy that's continuing to grow, but roughly at trend. Again, driven by consumer spending and investments, especially in AI.
Well, you mentioned unemployment. You cut rates in the last year, we were told, basically to prop up the labor market. What is the state of the labor market? Is that accomplished?
Well, it's hard to read all of the tea leaves because it's a pretty complicated situation with the labor market. We are seeing some various kind of different signals. My view is if you look at the unemployment rate, it's today at 4.3%. It's about where it was in July. So we've seen some stability there in terms of the unemployment rate and in job openings and some of the other indicators. So I feel like we've seen the labor market much more stable now. Definitely not a labor market that's weakening based on the economic indicators. That said, if you look at the surveys, including the survey that we do and the Conference Board survey, that's not how people are, kind of feeling about the labor market. Definitely, we've seen a continued process of people being more pessimistic about the labor market. Not about a recession or something, but just a view that this is a pretty low fire labor market, and maybe the views are not as strong as you would think just looking at the aggregate payroll and unemployment data.
You're well positioned to do whatever you need to do to help the economy, but can monetary policy really do a lot in these situations? What's the lag? Jay Powell was talking about it could be a year from now before it hits the economy, whatever you did.
Yeah, absolutely. So monetary policy, based on all the kind of historical evidence, takes about a year to have its full effect on the economy and even longer on inflation. So we always have to be forward-looking. We have to be thinking about where's the economy going to be rather than where it is today or where it's been in the past. So that means trying to think through where is inflation going to be later this year or next year, where's the economy going to be? Now, I go back to kind of the analysis we've done. I do expect underlying inflation eventually later this year to start coming back down because the effects of the tariffs on inflation will start to wane. I do expect, a continuation of the kind of good, positive movement in underlying inflation. But we'll have to watch, does that continue? And again, what happens in terms of the conflict and its effects on inflation.
We're worried about the Iran war. We're worried about tariffs. People are worried about AI. and you mentioned the consumer sentiment numbers, but the economy has been fairly resilient. Why?
Well, I think America has the best productivity, highest productivity in the world. It's got among the highest productivity growth. We are a remarkably resilient, innovative, dynamic economy, and I think new technology is making a big difference. Not just AI, but more broadly, we've seen productivity growth that's actually been above par for the past 6 years. So I think there are some fundamentals that are driving solid gains in productivity, in real incomes, and demand for demand to hire people. But there's these various cross currents you mentioned. So again, last year the surprise was the economy was so resilient despite the uncertainty, despite other factors like the tariffs. This year it's another test of that resilience, but investment in AI and data centers I think will continue to be strong this year. And for as long as the economy continues to grow, I think consumer spending will continue to be a very positive factor.
Well, along those lines, what's your read on average hourly earnings or wages or whatever measure you want to use? Average hourly earnings came down to 3.5%. What's a sweet spot? What's a level at which it won't be a concern?
Yeah, I think we're at that level. If you look at all the different indicators, and now we have some very good real-time indicators. We have the standard official statistics. I think pretty much all of them are telling us that compensation is continuing to grow. Real compensation is growing, and it's growing in a way that's consistent with productivity growth we're seeing. So to my mind, the labor market, and whether you look at the unemployment rate and you look at wage growth, these are not factors pushing up inflation at all. So I feel like we're at a good place for that, and I think that's consistent with what we're seeing in the labor market in general.
You've been traveling around the state of New York lately. What are you hearing from CEOs? For a long time, the story has been, we're just sitting there because we don't know what's going to happen.
I think that story has changed a bit. When you think about how do you respond to uncertainty, the first thing you probably do is you pause any longer-term plans around hiring and investment and try to figure out what to do. I think a lot of CEOs have said, well, we're past that, so now we just have to navigate a world with higher uncertainty, make the decisions that make sense, make the investments that make sense, and you hear about that a lot with AI and investments in AI. So I think we're kind of in the second stage, if you will, of responding to uncertainty. It's really about, well, okay, we need to make decisions. Let's move forward. And I think that's consistent with what we're seeing. We're seeing positive job growth. We're seeing an economy that continues to grow and invest.
Well, are people talking at all about cutting back?
Well, it's interesting on that. I mean, going to the AI-specific question, I think most of the conversation the CEOs, most of them are talking about, is really about making smart decisions, hiring people with AI skills, not hiring in areas that may be jobs we don't need because we could use AI. So there's a lot of, I think, thought going into that, but not in terms of, we need to cut back our labor force. Of course, you see this with the data, too. We're not seeing high levels at all of initial claims for unemployment or layoffs. So I think it's a low hire, low fire, and low unemployment economy. It's an unusual mix, but I think that's what we're still seeing even today.
The next FOMC meeting at the end of the month is Jay Powell's last as chair. Maybe. What's your understanding as the vice chair of the Open Market Committee about what happens if Kevin Warsh is not confirmed by then?
Well, Chair Powell already spoke to that recently in terms of the Board of Governors. I'll speak to the FOMC, the Federal Open Market Committee. I mean, every January we have a vote about selecting a chair and a vice chair, and that vote is in place for throughout the year. So there's no issue of continuity. There's no issue of anything. That's all in place. Typically, we have this vote in January for the chair of the FOMC, or if a new chair is confirmed by the Senate, then that person becomes the chair of the FOMC. But I would just highlight the most important thing here is that we're just focused on doing our work. There's no issue about continuity or things like that at the FOMC. We're just doing what we always do, which is digging into all the data, trying to do our very best to achieve our maximum employment and price stability goals.
So basically, if Warsh is not confirmed, you don't have to do anything. You just continue on.
Exactly. The FOMC just continue on.
Now, Kevin has come out and said that there's a lot of things he would like to change, and we'll go down the whole laundry list. But how effective do you think with this FOMC, with this board, can he be in affecting change in the short run? Are we looking at some sort of massive change in the way things are done, or is this going to be a process that takes place over years?
Well, at first, Kevin Warsh understands the Federal Reserve very well. He was a governor. I knew him then. I think he has a keen understanding of what our mission is and the importance of what we do. I can't speak for him, and I haven't, spoken to him lately. But I do expect that when he does get confirmed by the Senate, that he will share his views and perspectives as he thinks about, what he wants to accomplish as chair. And I've worked now with 4 different chairs and many governors and many presidents. And the most, I think the most common element of all this is when people come into the Federal Reserve, they understand the importance of the work we do, the importance of the mission to the American people, and that's exactly what I expect when Kevin Warsh rejoins, if you will, the Federal Reserve.
Now, one of the open questions is what happens to Chairman Powell when he's no longer chairman but still a governor. Would you like to see him stay on?
Well, that's a decision for Chair Powell, and I don't have any comment on that. I leave that to him.
Well, we'd like to thank you very much for talking with us this morning. John Williams, the president of the New York Fed and vice chair of the Open Market Committee. We'll send it back to you.
Michael McKee, thank you so much. A great interview as we look to a question of what the Fed does with a real kind of stagflationary shock, talking about a potential risk to growth, as Fed President Williams talked about bringing down the growth forecast to 2.5% so far this year, but also talking about an inflationary shock that potentially could be something they can just look through.
Yeah, exactly, saying that the story of underlying inflation hasn't changed. So there you have someone from the Fed more worried about what's happening to growth. Kelsey Barrow was talking about this idea that the next likely move is a cut, but still there is this idea that maybe there are more Beth Hammocks in the world who are looking at two-sided risks.
We'll parse through that coming up with David Seif of Nomura with that focus on inflation heading into data later this week. And Bloomberg's Tyler Kendall will join on President Trump's latest threat to Iran in a Truth Social post from New York. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices, both in terms of how high do energy prices get, but also how long they stay high or and whether they come back down. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes.
That was New York Fed President John Williams dealing with the same headline roulette that the rest of the market is. Right now, the market inflected lower ahead of that 8 p.m. deadline later today after a series of threats. President Trump threatening to wipe out a civilization should there be no agreement, although he is still optimistic. We heard from Vice President J.D. Vance speaking in Budapest that the war on Iran will conclude very shortly. We're seeing lower S&P futures lower by about 0.5%. Gold fluctuating here. Oil steadily higher throughout the morning. Brent crude at $110.98. The Federal Reserve looking to see how higher oil prices are weighing on inflation with CPI data due on Friday. David Seif of Nomura writing, we expect the Fed to largely look through the Iran war. We think the Fed will cut rates twice this year in September and December under Warsh's more dovish leadership. David joins us now with a really interesting framing, suggesting it's not necessarily a Fed that is cutting because inflation is disseminating, but rather because they are politically pushed to do so.
Well, yeah, good morning. Yeah, we really think the Fed's reaction function is going to change once Warsh comes in. And so under the Powell leadership, which we think has been fairly dovish in its own right, it doesn't look as though the situation is setting itself up for additional cuts. But of course, Powell is not going to be Fed chair for the rest of the year. I think the real question that comes into this is a Fed chair transition unlike one we've seen in almost 50 years, really since Volcker came in and fundamentally changed what the reaction function was. So Warsh is going to come in and presumably, we expect, want to be significantly more dovish than Powell has been. And the question is, does he have the votes to get through what he wants? You know, the FOMC is a voting committee. And since the time of Volcker, really more than 45 years ago, it's been a de facto dictatorship from the Fed chair. What the Fed chair wants, the Fed chair has gotten. I suspect, and we suspect at Nomura, that Warsh is going to want even more than 2 cuts. We also suspect that the core of the committee does not want to cut probably even that much. So where is that going to end up? If the core of the committee just, puts its foot down and says, that's it, we're not going to give you 7 votes, then maybe we won't even get those 2 cuts. And if Warsh is able to really convince them and push them into doing that, we could even get more. But again, the key thing is that our view is based on the Fed cutting because we think its reaction function is going to change, not because we think inflation is coming back to target or growth is going to weaken.
What does that mean for inflation then? If we're cutting for those reasons and in inflation that's been above the Fed's 2% target for the past consistent 60 months in a row?
Yeah, I mean, we look like we're going to have a 6th consecutive year of above 2%, above target inflation. I think that what it really, the key thing here is how much does the committee much more dire for inflation expectations going forward?
There's news coming out this morning that Delta Airlines is increasing its price tag for checked bags by $10 to $50, depending on the bag. This follows what United has done, what JetBlue has done in terms of trying to offset the increase in oil prices. How much do you think people are underestimating just how inflationary this oil price increase actually will be?
I think there's a pretty good estimation of it. So I think airline fares and the associated fees are actually one of the very few key ways in which oil price increases translates into core inflation, which is what the Fed targets. And we in the consensus do not see March core inflation being all that much higher than it was in February. Headline inflation is a totally different story. And of course, consumers do not really care about whether it's classified as headline or core. So we see a full % month-over-month increase in headline inflation for March, and that is driven almost entirely by what we think was a close to 23% month-over-month increase in gasoline prices. We still haven't seen any real impact on food prices, nor do we expect to see it in the March CPI. So obviously gas prices could keep going higher, but then there's the other leg. If food prices start to move higher as well, which seems plausible, although we haven't seen it yet, then headline inflation could continue to get much and much higher. But when it comes to core inflation, we don't actually think these increases in oil prices will have all that big of an effect on things. And it's really the crux of why we think the Fed will and probably should look through the higher oil prices.
David Seif, thank you so much for being here
with
us today. David Seif of Nomura here with us in New York. What a morning it has been. The focus completely on that 8 p.m. deadline, a real lack of certainty about exactly how to read some of the headlines that we've gotten throughout the morning. Danny, questions about strikes potentially on Karg Island, and then, of course, the Truth Social post from the president.
The president warning that a whole civilization will die tonight, but also goes on to say that there has been a total regime shift and that he is speaking with maybe a different and more rational regime. So it is this carrot and stick, this mixed message, having very extreme language of the kind of destruction that he will promise if 8 p.m.'s deadline is not met, but then some optimism too, which we also heard from the vice president saying that very shortly this war will conclude.
In the meantime, stocks dipping slightly in early trading as they try to get their head around exactly what to pay attention to. Coming up tomorrow, we've got Julian Emanuel of Evercore ISI, Alex Altman of Barclays, Emily Rowland of John Hancock Investment Management, and Tom Porcelli of Wells Fargo. This was Bloomberg Surveillance. Good morning.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
All right, good Tuesday morning, 30 minutes until the start of trading. Futures are down. I'm Matt Miller. Coming up, deal or destruction. President Trump ramps up threats to wipe out Iran as the clock ticks on his latest deadline. Meanwhile, tech is looking increasingly attractive for investors, with Goldman Sachs and Ed Yardeni pointing to the sector's resilience. Plus, Bill Ackman makes a hefty bid for the world's largest music company, home to Taylor Swift, as well as Drake. Let's take a look at some of these stocks that are moving in the pre-market this morning. Just half hour until the start of trading, and Broadcom is up 3.5% right now. Google gaining only 0.25%. This after Broadcom announced a long-term agreement with Google to supply AI chips. The company also confirming plans to work with Anthropic to help power its operations. And shares of major health insurers are rising after the U.S. government said it would pay private insurers offering Medicare plans nearly 2.5% more in 2027. You can see United Health Group up 8%, Humana up 10%, and CVS gaining almost 8% as well, even after President Trump in a briefing or maybe it was like a prayer ceremony in the White House last Thursday said the U.S. government can't afford to pay for child care and Medicare and Medicaid because we're a big country and we're fighting a war right now. Let's get back to that story. President Trump has been escalating threats to Iran just in the last hour, warning that an entire civilization could die tonight if there's no deal by 8 p.m. Eastern. He says, I don't want that to happen, but it probably will.
We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil and everything else. I would say it's a very big priority. We have a concept where we'll charge tolls.
And the U.S. weighs its next move, with the vice president also speaking abroad, saying that the conflict will end shortly. And Bloomberg Economics setting out 4 options of what might happen tonight, ranging from a diplomatic breakthrough to a major U.S. military operation. Joining us now is Becca Wasser, defense lead for Bloomberg Economics, who led this analysis. She's also conducted war games for the U.S. Department of Defense. Becca, first, your thoughts on this Truth Social post from the president using extreme language, talking about a complete wipeout of a civilization, but also going on to say that there has been a regime shift with more rational people to negotiate with in Iran.
The administration is both trying to say that it's been mission accomplished in Iran while still retaining the ability to threaten Iran to try and come to the negotiating table. It seems more and more likely that the White House is looking for an off-ramp here, but it needs one that allows them to maintain that they have had absolute victory here. And I think that's what we're seeing, this continued threat, this continued pressure as they are in this crunch time for potential ceasefire negotiations, but that might eventually lead to an opportunity for President Trump to walk away and say that he achieved all of his objectives in Iran, whether that is the case or not.
Is that why, this semantic inflation, he says in his tweet, he's achieved complete and total regime change. And he's been repeating that often. It reminds me of the line in Hamlet when the queen says, "Methinks the lady doth protest too much." Does anybody else in Washington, Becca, think that we've achieved regime change in Iran, where the IRGC and the theocratic structure still exist?
I mean, just look in Tehran. You replaced an Ayatollah Khomeini with an Ayatollah Khomeini. It's the same part of the leadership. It's the same structure. It is the same system. And that's because airstrikes and air power were never going to be sufficient to force regime change. That hasn't been the case historically, and that most certainly isn't the case right now.
But why does he insist that it is? Is it just a better justification for the U.S. and Israeli attacks?
I think for President Trump, there's been a number of objectives about the war that have been shifting over time. You'll remember that in the first days, initially, some of the objectives were around this idea of regime change. Since then, they've become a lot more operational in nature. Objectives like trying to eradicate Iran's navy and missile and drone threat. And there, too, those threats haven't been eradicated. So there is a little bit of revisionist history happening in real time right now, where President Trump is trying to claim victory and trying to claim that those objectives have been achieved, even if that isn't the reality on the ground.
All right, Becca, thanks very much. Becca Wasser there from Bloomberg Economics. Let's turn now, and it's a hard turn, to tech. Broadcom rising in the pre-market after announcing a long-term agreement with Google to supply tensor processing units. Let's get more with Bloomberg Tech's Ed Ludlow. I guess this is something that isn't really moving the dial much with Google, at least those shares, Ed, in the pre-market up only about 0.2%.
Yeah, I mean, the interpretation of the market is that this deal is a vote of confidence in the TPU architecture and, you know, further evidence that Broadcom over a longer period of time can close the gap on NVIDIA. So there's an existing arrangement between Anthropic, a leading frontier AI lab, for 1 gigawatt of TPU-based capacity. This more than triples it to 3.5 gigawatts. They have this goal to secure 10 gigawatts of capacity by the late decade, end of the decade, and currently have 1 gigawatt apiece from Microsoft AWS, which is Amazon's cloud unit, and NVIDIA, and there's like a complicated web of investment. But you know, what's true of all the frontier labs, Anthropic, OpenAI, others, is that they are compute constrained. If they had more compute, they could offer more products. And you know, with Anthropic, it comes hand in hand with evidence that their financials are really taking off and that they are growing with demand like a rocket.
Yeah, talking about an annualized revenue, a run rate of over $30 billion, which run rate is always kind of annoying because it's kind of marketing-y because you're annualizing that. But that would be above OpenAI. Ed, just how much is Anthropic catching up right now to the other LLMs?
Yeah, I mean, Anthropic's earlier story was very much focused on enterprise. They didn't go after the sort of consumer North Star that OpenAI did with ChatGPT. And so a revenue run rate of $30 billion is notable in particular because it was at about $9 billion at the end of last year. And they have had some traction with the enterprise. They've also, of course, had issues of litigation with the Pentagon, where the Pentagon has said, we will use your technology how we like. But that new revenue run rate data is also being interpreted by the market and by our readers as evidence that this fallout with various arms of government, but the Pentagon principally, isn't impacting their ability to do business, at least with the public sector.
Okay, Ed, thank you very much. That's Bloomberg Tech's Ed Ludlow on the latest on the tech giants. And Matt, we have seen a market, Goldman Sachs, for example, pointing out that the Mag 7 have been lagging behind. They're now cheaply priced. It's time to jump in there and time to buy them. They had been companies that had been hit, but maybe the start of the war, again, they do become something of a safety sector.
In fact, I was talking just this morning with Sitara Sundar.
Oh, yes?
At around 5 a.m. about this very issue. I looked up, for example, Microsoft shares. They were down and have been down 22% so far year to date. So it's pretty shocking to see such a company with such a steady revenue stream losing a quarter of its value in the first 3 months of the year.
Yeah, I have to say one of the kind of like ironic things is also that in the Mag 7, Apple has done incredibly well. One of the ones that hasn't spent on a lot of the big tech.
Because
the narrative has really shifted. Away from big tech, We are looking at shares of health insurers that are soaring. Medicare will pay private insurers 2.5% more in 2025 versus an improvement versus initial rates proposed in January. John Tozzi covers the sector for Bloomberg News. John, 2.5%, just how big of a difference will that make for the health insurers?
Yeah, so the thing to remember here is we're talking about roughly $500 billion of spending that flows through these private companies. So, you know, a percentage point or two here makes a lot of difference. When the government initially proposed the rates in January, they essentially said they were going to be 0% increase, so, you know, tiny, I think it was 0.12%. For 2027. Then you have 3 months of lobbying basically by the insurers to get that number up. They landed at about 2.5%. It was way above, or, you know, meaningfully above street expectations, were probably around 1%. So it is a positive for these companies. But even with the share pop we saw post-market yesterday, you know, the big ones are still sort of below the price level they were before the initial proposal in January.
John, I'm sure you saw the statement from the president last week. I think it was Thursday when he was meeting with his pastor who was comparing him to Jesus. And he said, you know, we can't afford to pay for childcare. We can't afford to pay for Medicare and Medicaid because we're a big country and we're fighting a war. That seems to fly counter to this new story that we're going to, in fact, not only pay for it, but pay even more for these drugs.
Yeah, and just to be clear, this is for healthcare for private Medicare plans, not just drugs, so all sorts of services. You know, what the industry says is that, you know, the costs are rising. Their, you know, cost of caring for people are increasing, so they need the government payments to keep up with those costs. That the insurers are sort of, you know, otherwise that it's not sustainable. What we heard yesterday from Medicare officials was that they are trying to balance sort of near-term stability in the program, so to keep insurers in the market, keep them offering plans, with the long-term sustainability in terms of the financial aspect. So, you know, this is better for industry than the original proposal, but like going back, you know, to the period of the first Trump administration, you'd often see, you know, 5% or more increases. So it's not sort of as beneficial to the insurers as they once had.
All right, John, great having you on the program. John Tuzzi there covers insurance for us. Let's get a quick check on what's going on in these markets. In terms of futures, S&P futures now down. They had been down for most of the morning, turned higher around 4 and stayed there for a while. Now we've turned lower after President Trump's latest Truth Social post. You can see NASDAQ futures off 0.6% now, and crude now showing significant gains with NYMEX crude up to $115.22 a barrel. Still the May contract.
Yes, yeah.
Right, and the June contract is the front month for Brent, which is why it's trading at less than that at $110.
It's still notable to point out, because that is a big uptick in price, and the backwardation between that contract and 6 months out is the most extreme on record. Some big pricing in this oil market that maybe isn't totally necessarily reflected in other risk assets. Some of the other movers on our radars this morning, I mentioned Apple, those shares down 1%. A report that the foldable iPhone is hitting engineering setbacks and could see shipment delays.
Hard to fold. Novo Nordisk is pricing its new high-dose Wegovy shot at $399 a month for cash pay payments. That's about 40% less than what Eli Lilly charges for most of the doses of Zepbound.
And Delta boosting fees for first and second checked bags by $10. It will report earnings due out tomorrow, but following in the footsteps of JetBlue, United, and others, trying to get more fees where they can.
Coming up, billionaire Bill Ackman pitches a $65 million deal to take over Universal Music Group, the label of Taylor Swift. More on that next. This is Bloomberg Open Interest.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Let's get now to high interest. Look what's making headlines around the world. Deutsche Bank says its U.S. distressed debt desk more than doubled first quarter profit to over $100 million. The gains were mostly driven by bets against software debt. Telecom and chemicals trades also contributed, along with a deal involving AMC during a volatile quarter marked by geopolitical tensions and rising inflation concerns. Speaking of, war-driven volatility slammed top hedge funds last month, with tiger cubs like Tiger Global and Maverick down as much as 7%, hit by oil shocks and fading rate cut bets. But quant firm 2 Sigma defied the sell-off, gaining up to 3% in one of its funds and outperforming peers despite ongoing leadership turmoil. And billionaire activist Bill Ackman is pitching a $65 billion deal for Universal Music Group, the world's largest music company. Pershing Square Management is offering $10 billion in cash plus shares and pushing for a long-delayed U.S. listing. Ackman says the plan could unlock about $16 billion for buybacks and growth, but without support from UMG's top shareholder, the deal could very well fade to black. Is that a Metallica reference? Is that?
Yeah, I'm going to assume they own Metallica, or, they're the label for Metallica, right?
I see.
Yeah,
okay.
yeah, they are.
Very cool.
They are.
Very cool. To whomever wrote that.
Well done.
Nice job.
Well done. Joining us now to discuss more is Bloomberg senior strategist Neil Campling. Neil, why even go after this target if it has a controlling shareholder?
I think that this is a deal that's kind of born out of frustration, if you like, with the performance of UMG shares. It's a transaction that's been described by some as very smart by Ackman, but also highly misleading. And misleading in terms of, as you referenced, there are some core shareholders here who are unlikely to vote for such a transaction. So what it does is it helps underline that there are probably some better value creation opportunities here for a label that owns extremely valuable content, but also at the same time it is kind of suggesting perhaps that the offer as such is not quite at the premium that it turns out is being offered because of the complexity of the structure of the transaction, and it has some very should we say generous assumptions in the valuations. For example, the valuation is a 25 times price earnings multiple is assumed in the valuation of where the stock will be goes forward. Now, there's no European media company that trades on anything like that kind of multiple. And also, Universal, because of the catalog and the investments in new content, and having such artists as Taylor Swift as one example, their cash conversion is much lower than many media companies. It's about 2/3 of the cash generation. So there are a lot of sort of issues underneath the hood, if you like, in terms of what this value that such a deal could actually really be.
By the way,
if it even comes to fruition.
I remember when President Trump tweeted simply and in all caps, "I hate Taylor Swift." And Bill Ackman, obviously a big supporter of President Trump, so it'll be interesting to see what she thinks of this acquisition. Maybe better than Scooter Braun. The French shareholder Vincent Bolloré owns what, 18.5% of this company, and then his family owned. Then he owns another 10%, so almost 30% that he basically controls. Do we know what he thinks?
We've had no comment thus far from those shareholders. Certainly, if you look at the last EGM when proposals have been made, the proposals made at the last EGM were voted down, and most people that I've spoken to who are close to the situation suggest that they would vote against such a transaction. So it does feel like this is highlighting a frustration from Ackman and activists who want better value. And clearly, there's a big discount to the offer, 40% to the offer pricing principle, which suggests that most shareholders think that this offer is basically a DOA, dead on arrival, and has very little chance of success of getting through any kind of EGM that would take place as a result of the offer.
All right, Neil, thank you very much for that. That is Neil Campling out of London on the latest from Ackman. Coming up on the show, we're going to speak with Anne Maletti of Allspring as President Trump puts on Truth Social, escalating his threat of an 8 p.m. deadline, warning of total civilization destruction. We catch up with Anne ahead of the deadline. This is Bloomberg Open Interest.
Of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jan report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
To the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Oil markets gaining and futures giving up earlier gains, first on reports that there were U.S. strikes on Carg Island, and then this from the president putting on Truth Social saying a whole civilization will die tonight, never to be brought back, but going on to say that there has been a total regime change with smarter, less radical minds, maybe something revolutionary and wonderful can happen. Let's get the view from Wall Street. Anne Maletti, Allspring Global Head of Equity Investments, joins us now. Anne, 8 p.m. ET tonight. It is a huge event risk, and President Trump only ratcheting up some of the rhetoric that he's using. What do you do with this?
You know, Danny, this is a tough one for all investors. As we know, President Trump likes to negotiate in the public, right? So we have to deal with the Truth Socials, the tweets that go out all of the time. And I think most fundamental investors pay much more attention to what's happening at the company level. And so we're focused on that, obviously focused on earnings season, and really trying to assess if this is just an inflation scare or if it really is going to eat into the future prospects of growth for many of our companies.
What do you think we're going to see? In terms of earnings, right? We're still expecting double-digit earnings growth from the S&P 500, even after watching oil go from below $60, and I'm talking about NYMEX here, to over $115 a barrel. So it's essentially doubled. Is that not a big input cost for these companies?
You know, Matt, you're targeting something I was just looking at this morning. When you look at earnings estimates, especially as you progress out into the second half of the year, the growth rates for earnings are still remarkably strong. And so, again, I don't know that investors will care too much about what companies report, but they will care about what management teams are saying about the rest of the year. And there will be some sectors, and certainly many companies, that are impacted by input costs. And it's not just gas and oil, but certainly other materials that are impacted by this conflict as well.
And you're going to stick with us through the opening bell. That's Anne Maletti of Allspring with the start of your cash equity trading. Just moments away, less than 5 minutes, as we head lower after 4 consecutive days of gains. That starts to undo itself as these markets try to understand how it should be prepping for an event risk at 8 p.m. tonight. Brent crude just turning a touch lower, down by 0.1%, still at $109 a barrel. Coming up, it's your opening bell. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are moments away from the start of trading on the New York Stock Exchange, on the NASDAQ market site, and across the U.S. You can see futures are now down 1/3%, but we've seen, I think, 4 days, Danny, 4 days in a row of gains in the cash trade. So if we turn around, this could be 5, and we have been at some points throughout the day up. It was only after President Trump posted something on Truth Social about the destruction of an entire civilization of nearly 100 million people in Iran. Greenland Energy Company ringing the bell at the NASDAQ market site, and they've only been trading for a couple of months, managed to lose 40% in that time of the value of the company. But of course, there's a war in the Middle East now. We should just take that company. Oceana Gold is celebrating its listing at the New York Stock Exchange, where it's long been listed. And I took a look at the comp chart. Over the last 5 years, this company has gained 550%. Not hard to believe, obviously, with the underlying asset, but massive, massive gains. Even this year, they're up 12%. So the chart looks like this, but still a 12% gain in 2026 with the S&P down 4 is not bad.
True, and I guess, again, just reflecting the crazy ride that gold has been on. I'm looking at tech stocks here at the open mat, specifically Broadcom and Intel. Broadcom, they announced a long-term agreement with Google to supply AI chips. They also confirmed plans to work with Anthropic to help power its operations. So 2 good things on the ledger for them, up 3.2%. And then there's Intel saying that it will join Elon Musk's Terafab project with SpaceX, xAI, and Tesla to help refactor silicon fab technology. Hopefully you can tell me what that is, Matt, because I don't totally know. But anyway, Intel up 2%.
I don't honestly know the details of that. However,
yes.
The expert to whom I go on all things, the experts, the 2 main ones here at Bloomberg to whom I go on all things chips and AI and rockets as well, Ed Ludlow and Mandeep Singh are going to join us in just a little bit. So they will help us. Great. They will help walk us through that. Now, shares of major health insurers are rising after the U.S. government said it would pay private insurers offering Medicare plans nearly 2.5% more in 2027. We just talked to John Tozzi about that, and he points out that during T1, it was a 5%, more like a 5% increase. However, I suppose when you consider that just last week the president said we can't afford to pay for Medicare and Medicaid, 2.5% looks a lot better than nothing. So United Health Group up 10%, Humana up 10%, CVS up 5.25%, some big gains there. Ann Maletti, Allspring Global Head of Equity Investments, back with us. And you know, I just reminded myself of the president's budget. Now, often the White House floats a budget at first that doesn't pass completely, but maybe get some traction, and he wants to spend almost 50% more on the military, $1.5 trillion. That's why we can't pay for childcare and Medicare. But does that make you instantly want to invest in the defense industrial base because they stand to benefit the most?
You know, what's interesting, Matt, is we've had some pretty strong overweights in defensives, in the defense stocks leading up to this war, and that was a really good call. They've been a little bit underperforming during the conflict. And so, again, the magic question is, can he get the budget approved, and can we get that much funding into the defense stocks? I do think, given all the uncertainty in the world, defense stocks are a good place to play overall, and investors will continue to hold a good amount of weight there.
And I'd love to get your take on consumer stocks. There's a really good story by Katrina Peterson this morning about Doritos, the PepsiCo company. Essentially, they had long been told by the Walmarts of the world that your products are too expensive. It's a consumer that's in a pinch. They resist, and finally they slash prices by 15%. Only now for them to think, oops, is this a mistake? Because now we're going to have even more of a margin squeeze as oil prices and energy prices go up, logistics is more expensive, and a consumer that is still feeling the pinch. What happens to the PepsiCos of the world if we continue and get a sustained energy price spike and a consumer that has to deal with that inflation?
Yeah, Danny, this is the million-dollar question. And I think as we're headed into earnings season, again, some of the questions that we'll be focused on asking the management teams is how they're going to deal with the impacts of a longer duration conflict than we first believed, right? What if this extends another quarter, another 2 quarters? How much damage will it have done to the 2026 estimates in their mind? And then how much dislocation also within the supply chain, and what are they doing about it? So certainly the consumer staples, the consumer discretionary stocks, all of those are impacted. Now, some of them have been winning because of what they've gotten from the high-end consumer who's been able to kind of muscle their way and spend throughout this. But certainly the low-end consumer has been suffering. And, one of the things that we were excited about at the beginning of the year was that middle to lower end consumer getting bigger tax benefits or a bigger tax return. And that's kind of been washed away now with the increase of fuel prices. And so, again, and you're seeing more inflation with both food and fuel. So, that consumer is in a pretty tough position right now.
What do you think about the tech companies? And we've been talking about some of these companies that have lost so much value. Goldman Sachs has written about it, and I just looked at Microsoft down 22%. Not to talk about specific names, but just this whole group with amazingly resilient annual recurring revenue has just been sold off. Does it make sense to you?
In some ways it does, Matt, because we know that the innovation cycle with AI is real and that companies are going to continue to invest. This CapEx spending cycle doesn't look like there's any signs of slowing. There is, again, from the One Big Beautiful Bill, incentives for companies to continue to spend. So we would expect that to happen. And, when you get a 4 multiple point decrease in technology stocks, which appear likely to have still good earnings and free cash flow growth, it starts to get more attractive to investors. And, technology has been acting like the new defensive sector, and it looks like investors are kind of turning back in that direction. I would just have a little bit of caution that they may be too impacted by some of the supply chain impacts that we're seeing because of this conflict. Helium is needed for semiconductors. About 30% of that comes from the Middle East. And so, again, depending on the duration of this conflict and the damage that's created, you could start to see some of those material costs or dislocations even impact technology.
Hey, Ann, really wonderful to have you on. We appreciate your time. Ann Maletti of Allspring. And let's get a check on the stock market right now. Is it an escalation day? Is it a back down day? After the recent post from the president talking about a complete destruction of civilization, we continue to lose steam in this equity market. Not a huge reaction. We should just point out that, especially after a 4-day run-up. We are only down 0.4%. The majority of stocks are down, not a great breath, but helping us out is Broadcom, an agreement with Alphabet, United Health Group, after some Medicare changes, a 2.5% boost to what the payouts they'll get for private plans. Alphabet, Intel also partnering with SpaceX, Alphabet, Chevron. So the energy company's doing well. To the downside, a bad day for Apple after reports that their foldable iPhone is hitting some snags. Eli Lilly also down, facing some competition from cheaper drug pricing from Novo Nordisk. Nvidia, Microsoft, J&J also down this morning. Looking at the individual groups, again on a day of fears of geopolitics. It's the classic trade we've been seeing, and that is energy stocks moving higher alongside the price of oil. Those are up more than 1%. On the downside, you have consumer discretionary, healthcare, and consumer staples. So a lot of consumer-related names falling this morning, Matt, with the overall index, again, down just 0.4%.
All right, coming up, we're going to get an explanation into the Intel Terafab project with SpaceX, xAI, and Tesla for chip production. Ed Ludlow joins us, as well as the head of our technology coverage at Bloomberg Intelligence, Mandeep Singh. This is Bloomberg Open Interest.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The rhetoric of escalation is very clear from this president, talking about a complete destruction of a whole civilization if Iran doesn't come to the negotiating table by 8 p.m. tonight. But it's a carrot and stick, also talking about a complete regime shift that maybe makes them more reasonable. Either way, we are selling off this morning, down 0.5%, down 0.6% for the NASDAQ. Not huge numbers, but we are looking at Brent crude. It's been fluctuating now, up 0.7% at $110 a barrel and 50 cents. Your top calls this morning, the analyst action we're following. UBS, they upgrade Morgan Stanley, highlighting its strong profitability and upside from deal making and IPOs. The analysts say that its wealth business is well positioned to benefit from AI, but financials under pressure this morning, down 0.6. Citizens, they upgrade Rocket Lab. They call it a good entry point with strong upside. The firm says that SpaceX IPO could shift how investors view the company and points to U.S. space spending as a tailwind Shares plummeting, down 2.2%. Seaport Research, they are double downgrading KB Home to a sell as it warns that housing activity is set to slow even more. They're shifting its view on builders, citing weaker growth of jobs. It's also cutting D.R. Horton, Lennar, and Pulte Group, although shares falling in today's trade map.
All right, so there's some movement there. Let's turn, though, to another sector, and that is technology. Intel says it will join Elon Musk's TerraFab project with SpaceX, xAI, and Tesla to help refactor silicon fab technology. For more on what that means, if I even read it correctly, we welcome Bloomberg Tech co-host Ed Ludlow, as well as Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research. Mandeep, I'll ask you first. Yeah. What does it mean to refactor? What did I say? Refactor.
I don't even know.
Silicon technology. I mean, what does that mean? They're just going to build factories?
Well, clearly everyone realizes that the biggest constraint right now is the TSMC capacity when it comes to making these chips. And Intel, I think, by partnering with xAI and SpaceX, is really trying to make that play that they want to be that fab where, Musk manufactures his chips. I mean, with that being said, we saw that Broadcom deal, and to my mind, it takes 6 to 7 generations of a chip to get to a point where you can produce it in mass scale and really use it for a productive use case. Even if, SpaceX and xAI are doing this, it's going to take multiple iterations. And that's where I think what NVIDIA has done or what Google has done with TPUs, they have such a head start when it comes to doing these leading node chips.
And so, Ed, let me bring you into the conversation. What difference does it make for Intel now?
Yeah, to refactor means basically, in layman's terms, to modernize and improve the chip manufacturing process. And so that is Intel's pitch, that they would come in with the knowledge and expertise of having scaled output across various nodes. The difficulty is that right now, there is a lot of unknown about the TerraFab project. It's not reflected in Tesla's full-year capital expenditures forecast, for example. And their goal of 1 terawatt of compute capacity is basically many factors greater than all of the current global capacity from TSMC and Samsung for lead-edge nodes, lead-edge manufacturing of AI chips. And so there is a great question mark of how they'll do it, but like analysts have estimated, you're talking over an aggregate period of like trillions of dollars of spending to get to that scale in the end. So if this was something that we were chasing, and it's interesting that Intel notes in its post, Intel, that Elon Musk visited with them over the weekend in Santa Clara. Very interesting indeed.
And, Intel has obviously sold a stake, or President Trump and the United States have bought a stake there. So they're, in bed together. I'm never sure about Elon Musk, but at least at one point he was very deeply in bed with President Trump. Is this whole click going to help Intel recover from its incredible fall to get back to what it once was?
Well, no, because if you think about the pathway of an AI chip through a fab, it goes through many processes and touches many hands, many machines. And those machines come from Lam, KLA, Applied Materials, and ASML ultimately when it comes to lithography. Intel may well help the TerraFab project, which is a JV between Tesla, SpaceX, and xAI, with the planning, right? The structure of this project. But the spending is going to be on others. It's going to be on the chip equipment makers, not necessarily on Intel. And Intel's story to date, very simply, is that it has not been able to scale or find customers other than itself for its lead-edge processes. There isn't any evidence that its next-generation nodes have high-volume throughput yet. And so that's not immediately clear that they'll be able to translate what they will say as expertise and experience to Elon Musk's project anyway.
Mandeep, if I can bring you back in on a different story, this Broadcom-Google partnership, what exactly is it and why do we care?
Well, and just to put it in context, so in this case, the fact that we are talking about Intel, a Broadcom is making almost $37 billion from 1 gigawatt of Anthropic's orders, whereas Google is capturing maybe, $13 to $14 billion of that, simply because Broadcom is the chip design and networking company that is helping Google GPUs scale their designs and use that for Anthropic, which we know has scaled from $9 billion to $30 billion run rate over a span of 4 months. So this kind of growth is, not seen before. Nothing that I can recall when it comes to software companies growing like that. And I think if there was more capacity available for Anthropic right now, they would grow even faster. So they are really going to Broadcom to scale the TPU designs. And in the process, Google ends up generating some high margin IP revenue without really getting into chip design or networking, which is what Broadcom ends up doing. But Google does capture a share of that economics because it's their IP that Broadcom is using for TPUs.
Ed, while we're on the subject of leading edge chip design and AI and somehow competition between the U.S. and China, I noticed U.S. lawmakers have put forward some legislation that would restrict these highly technical machines. I think they're called deep ultraviolet lithography machines being sold to China, which was a hit to ASML stock in the European session. What do we know about that?
Yeah, because the logic being that right now, China has its own domestic chip makers, Fabless, they design chips, and then it has SMIC, which is a chip manufacturer. And what America, particularly lawmakers on Capitol Hill, have been tracking is SMIC's ability to go it alone. It cannot do that without the current critical technology, which is EUV. And so that is the next choke point, right? If you ban the export of lead-edge chips from the United States to China, it creates a vacuum. To prevent that vacuum being filled by a domestic champion, you also have to assess the supply chain for chip manufacturing and stop a domestic chip manufacturer, SMIC being akin to TSMC or Samsung, from having access to the gear or equipment it would need to accelerate its own ability to make leading-edge chips, essentially.
Ed, thank you very much. That's Ed Ludlow, Bloomberg Tech, and Mandeep Singh of Bloomberg Intelligence. Thank you as well. Coming up, Blackstone raises $10 billion for an opportunistic credit fund, its biggest ever. They bet that market turmoil will present an opportunity for them. We're going to have the details. That's coming up next. This is Bloomberg Open Interest.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Shares of Blue Owl looking to recover this morning after it closed at a record low yesterday. Some other pieces of news out there. Goldman doesn't hit the 5% redemption limits, but gets very close to it. Blackstone raising an opportunistic credit fund. For the latest, we're joined by Bloomberg senior reporter Silas Brown. Silas, amidst all of the noise, you have these, let's call them bright spots of Goldman, not necessarily getting the full extent of the redemption request and saying now is a great time to invest. Blackstone raising a $10 billion opportunistic fund. What separates right now the haves and the have-nots?
Yeah, so I think you'll see a lot more of this going through the next few months, these kind of front-footed responses from the likes of Goldman and the likes of Apollo and Blackstone, where they'll be pointing out that this is going to be a good time to invest. Like private credit likes volatility, but not too much volatility, and I think that's how they're going to be pitching themselves to investors, kind of like this is a somewhat volatile time, but not too volatile for it to be an existentially volatile time. So that's one part. I think the Goldman story, the Goldman BDC story is really interesting. And I think this is also something that we'll see more frequently, certainly I'm asking about, is what's the type of retail investor that a private credit fund has oriented themselves towards? Is it a retail investor that is kind of super flighty, namely doesn't really have much interest or knowledge of private credit as an industry, or is it a sort of retail investor that has more of a kind of diverse portfolio already and also maybe kind of understands sort of private markets, more kind of readily? And I think that's how you'll see some different types of redemptions coming forward in the BDCs to come.
Well, it makes sense that if we've seen a few vintages that were not good because they were more lax underwriting standards, and we were in a near zero interest rate environment, then this vintage will be better as retail flees, because we're looking at things through a much stronger microscope, and rates are higher. Does that track? Because that's what Danny and I hear on this show all the time.
Yeah, I think it tracks to a certain extent. Like I certainly see the logic in it, and I think there is sense to it. I would also just point out though that the private equity deal machine that private credit kind of really thrives on is still pretty clogged up, and we haven't yet seen this kind of wave of deals yet. And I mean, private credit can only kind of prosper if it has areas to deploy in. And I think from what I can gather from a lot of fund managers, the problem is really, or one of the problems really is deployment at the moment. Where to lend your money.
All right, Silas, great having you on the show. Silas Brown there covers private credit for us out of London. Coming up the next hour, Matt Maley joins us. He'll talk about private credit as the canary in the coal mine from Miller Tabak. As traders brace for President Trump's Iran deadline, Jeff Aronson of Centerbridge as well, also on private credit.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. President Trump has made his harshest threats yet against Iran as his 8 p.m. deadline nears for reopening the Strait of Hormuz. He warned on social media today the whole civilization will die tonight, never to be brought back again if Iran doesn't capitulate. CBS's Olivia Rinaldi is at the White House.
He says he doesn't want it to happen, but it probably will. And then he goes on to say, now that there's regime change, they're hoping that less radicalized minds will prevail and maybe something wonderful will happen. But who knows?
The president's already threatened to blow up Iran's power plants and bridges. Correspondent Elizabeth Palmer reports from Tel Aviv.
People are just plain terrified. They're staying home. There's been a lot of hoarding of groceries in case there's so much damage that food can't get from the countryside into the cities, and people who have been able to leave the cities have just gone.
U.S. oil prices have jumped after reports of U.S. and Israeli strikes on Iran's Karg Island terminal. Vice President Vance is in Hungary in a bid to boost Prime Minister Viktor Orban's re-election bid. CBS's Michael Wallace.
Vance touted Orban's work with Trump to try to end the war in Ukraine.
And they've done it through diplomacy.
Orban, heard through an interpreter, praised Trump.
If President Trump were the president in 2022, there would not be a war now.
Orban accused European Union leaders of interfering in Hungary's election to hurt his chances.
NASA's just released a photo of EarthSat, shot by the Artemis II crew as they looped the moon. CBS's Mark Strassman.
EarthSat is the Earth slipping below the lunar horizon. And at that point, that is the point from last night when the crew would have lost line of sight with Earth, which would have meant that there would be no radio communications.
More than 57 years ago, the Apollo 8 astronauts captured an iconic shot of Earth rise. Britain's yanked the welcome mat for an American rapper. CBS's Vicky Barker.
I'm Vicky Barker in London, where immigration officials have just announced Kanye West has been refused permission to enter the UK, where he was due to headline the 3-day wireless festival this July. This after multiple objections like this one from the head of Britain's biggest Jewish organization.
A man who has repeatedly made appalling anti-Semitic statements, including Holocaust denial, has got no business performing at a festival in London.
The festival's just been canceled. A rap star is hospitalized near Miami. Offset is in stable condition after he was shot outside the Seminole Hard Rock Hotel and Casino last night. Police say 2 people have been detained. This is CBS News. Dangerous snake bites are on the rise in the West.
6 people have been bitten by rattlesnakes in Southern California in recent weeks. 2 of the victims have died. 14-year-old Bailey Vanden Bosch was bitten after falling off her mountain bike.
And my ankle was bleeding, but I thought it just I didn't feel the bite. And then I thought I just broke my ankle. My face started tingling, and then my hearing went out. My body just didn't feel good.
Wildlife experts in Southern California say unusually warm weather has brought an early start to rattler season, meaning they're venturing from their typical winter and spring hiding places. Jim Crisula, CBS News.
This could take you back. American Girl is bringing back 8 of its original historical characters.
I think we'll be great friends. I've never had a real friend outside the family. Well, you do now, Nellie O'Malley.
Samantha, Addie, Josephina, Kirsten, Kaya, Kit, Molly, and Felicity have returned in their signature outfits to toast the collection's 40th anniversary. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu is out today, but not to worry. We've got Emily Grafeo in for the 10 o'clock hour, so that is very cool. And then Alexis Christophers comes in for the 11 o'clock hour.
I'm still
here.
here.
I got that right? Okay,
I'm still here.
Very
yes.
good. So we got it all covered for you. It takes a lot of people to replace Scarlett Fu, that's for sure. Wendy Benjaminson is going to join us, Bloomberg senior writer on the Trump deadline, the Iran war. President Trump has set an 8 p.m. deadline for the reopening of the Strait of Hormuz, and lots of social media posts from the president this morning. Gene Goldman, CIO of Cetera, on oil prices, inflation expectations, and overall market volatility. Mandeep Singh, he global tech research head at Bloomberg Intelligence, get the latest on what's going on in the world in technology. Sam Fazeli, he's the folk we talked to on global healthcare. He's based in London, but we got him in New York here this week, so we're going to get him in studio, break down what's going on in the world of technology. Another M&A trade here. Gilead acquires cancer biotech Tubulis in a $5 billion deal. So just another healthcare biotech deal, so we'll break that down. So a lot coming up over the next couple hours. We have a sell-off in the markets. We've got oil higher on greater uncertainty. We'll break it all down, and we'll go to Alexis Christophers for a Bloomberg Business Flash.
All right, thanks, Paul. This Bloomberg Business Flash brought to you by Eisner Amper. Most advisors tell you what happened. Eisner Amper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. Stocks now at their stocks now at their lows of the morning as investors wait to see what happens with the Middle East today, with a deadline set by President Trump looming. We have got the S&P 500 down about 1% or 61 points. The Dow Jones Industrial Average sliding about 380 points, a loss of 0.8%. The Nasdaq down about 1 1/3% or 300 points as big tech takes a hit today. Brent crude up now about 0.7% at 110.61 the barrel. West Texas Intermediate up now more than 3.5%, closing in on $117 the barrel. The Bloomberg Dollar Spot Index 1213.87. We've got shares of Universal Music Group jumping 11% after Bill Ackman's Pershing Square said it made an offer to buy the record label, which is home to artists including Taylor Swift, Drake, and Sabrina Carpenter, for about $65 billion. If a deal happens, Universal Music Group would move its stock listing from Amsterdam to the New York Stock Exchange. And shares of Broadcom up 3%. The chip maker said it will develop and supply custom AI chips to Google and additional computing capacity to Anthropic. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers. That's a Bloomberg Business Flash. Paul and Emily.
All right, Alexis, thank you so much. We appreciate that. Emily Grafeo sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studios. Alexis was just reporting we got a broad sell-off in the marketplace. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Alexa Semenova.
Gets confusing.
I got a lot of names here, folks. Nobody's the same. What's going on in the world of stock movers here today, Alexa?
So I am taking a look at one of the companies selling off today. That is ASML. Looks like it's down 2.3% right now. This is after U.S. lawmakers unveiled legislation aimed to tighten restrictions on chip tool exports to China. The goal here is to subject Dutch and Japanese firms to the same curbs that American companies already face, and also broaden the scope of technologies covered. Analysts are estimating that this draft legislation could affect as much as 20% of ASML sales based on their 2025 numbers. And just looking at the Wall Street reactions here, everyone is talking about how detrimental this would be to the company. Citi says that we view this prospect negatively with significant unintended consequences. And then JP Morgan is saying that the new rule would take away about 29% of earnings per share, which is a pretty substantial number there, hence that market reaction.
It's interesting because I'm looking at what the analysts have said. Citi still has a buy rating. JP Morgan still has an overweight on the stock. You have to imagine, if the move holds.
Perhaps because this is draft legislation at this point. We'll see if it actually goes through, and then I would imagine that they adjust those ratings accordingly.
Okay, what's going on with Universal Music Group?
Yeah, so billionaire investor Bill Ackman is proposing a bid for this company. This is the world's largest music company. It houses the likes of Taylor Swift, Drake, and Sabrina Carpenter, some big performers there. And the goal is to increase returns on one of the hedge fund's biggest holdings, Pershing Square Capital Management. That is Bill Ackman's firm. It currently controls more than 4.5% of UMG shares. So it is pushing to combine the record label with a U.S. listed acquisition vehicle, and the targeted value would reflect a premium of 78% to the company's closing price on Thursday. Looking at the stock reaction right now, U.S. listed shares up 10%. So investors seem to be happy about this.
He's going all in on this company in a big way. How about Broadcom?
So Broadcom climbing today after the chipmaker announced a long-term agreement with Google to develop tensor processing units. This offers an alternative to technology from NVIDIA. They have a supply assurance pact that runs to 2031. This is according to a filing on Monday. The company's CEO, Hock Tan, had previously discussed this on an earnings call, this collaboration. And he also said that Broadcom expects that its AI chip is going to top $100 billion in sales next year, and that would make it a bigger competitor, of course, to NVIDIA.
All right, Alex, thank you so much. Appreciate that. Alex Semenova with the Stock Movers here. For more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Today's a big day in the war in Iran because it seems like we have this time ultimatum from President Trump for Iran to open up the Strait of Hormuz and perhaps get moved to some level of a ceasefire and peace. So, again, the world is on edge here today. Wendy Benjaminson, she's a senior editor for Bloomberg News based in Washington, D.C. Wendy, what's the latest reporting here? We've had a lot of social media posts from President Trump with some pretty strong language here. What's the latest?
Well, that is the latest, is that Trump has posted on social media, and I'm quoting now, "A whole civilization will die tonight." He is threatening to bomb. He had been threatening to bomb power plants and desalination plants that the Iranians use to get fresh water, and other civilian infrastructure like roads and bridges, but which has already begun from the Israeli side, although they're targeting roads the military uses primarily. But that's it. I mean, he is really, really, really dialing up the threats in the hopes that this will make Iran so frightened, apparently, that they will agree to points in the deal he's offering that they don't want, which would be free traffic through the Strait of Hormuz, or will never build a nuclear. They would never build a nuclear weapon, and therefore, which isn't going to happen. So pretty much the entire city of Washington is waiting with bated breath, I would say the whole world is, to see what Trump is going to do tonight.
Right, Wendy, and that deadline for tonight, 8 p.m. Eastern time. What are the folks in D.C. doing between now and 8 p.m.? Are we going to get any significant, I guess, movement or update further from the White House, or is it all just wait and see? I mean, what do we do for the next 10 hours?
That's a good question. Well, Pete Hegseth, the defense secretary, was going to have a news conference this morning at 8 a.m. He canceled that. We don't know why. They didn't tell us whether it's because of the attacks on Harg Island or it's because they're busy war planning. We don't know. But he canceled it, and that would have been with the Joint Chiefs of Staff Chairman Dan Kane. They've been doing these once every 10 days or so. We may hear from Marco Rubio this morning. Still not sure whether that's going to happen. Trump doesn't have any public events today. There may be a meeting around 4 o'clock that he opens up to reporters, but right now we are simply relying on those Truth Social posts to know what's going on. And I'd like to point out that that is highly unusual, if not unprecedented, at least in my lifetime.
Wendy,
that we're getting so little.
Yes.
Sorry.
Wendy, what do we know about any peace negotiations that may be ongoing? Who's involved? Are they taking place? Where are we on that?
Well, Pakistan, Egypt, and Turkey have been trying very hard to get the two sides to talk. They are passing messages back and forth. Trump claims that's because Iran has no communications network anymore. We don't know if that's true or not. Passing messages back and forth, and Iran, as far as I know, yesterday, I haven't seen anything since then. Yesterday, Iran said, we reject your peace proposal. So that's where we are. Whether they are continuing these talks, J.D. Vance is in Hungary to support Viktor Orban in his re-election campaign in Hungary. He is said today he's really hoping that that the Iranians come to terms. Maybe he's involved in that. Well, again, we don't know. The American people don't know what their government is doing right now.
What about the UN raising war crime concerns? I'm just wondering if you could talk a little bit more about just how much international pressure is building here and whether that even matters for, again, like the next 10 hours.
I'm not sure it matters. The UN Security Council is going to take a vote on a resolution that the UAE asked for, the United Arab Emirates, demanding that the Strait open, and also, I believe, suggesting that what Trump is planning tonight is a war crime, which is not really the UN's bailiwick, but they can say don't do it. It would be the International Criminal Court that would decide whether to pursue war crime charges. Trump is using an argument that because the sites he plans to attack are also used by the military, that's not a war crime. That really hasn't stood up before. A power plant is a power plant, and if it goes to your home and it goes to a military base, it's still going to someone's home. The trouble is, Trump said yesterday that he doesn't think it's a war crime and he doesn't care. And I don't think he cares. He's made it clear he doesn't seem to care what the UN thinks or the ICC. So
there we are.
Yeah.
Okay, Wendy, thank you. We're all kind of figuring this out as we go. Wendy Benjaminson, she's a senior editor for Bloomberg News. She's based down in Washington, D.C., and the markets are certainly reflecting the jitters out there. WTI crude oil up $4.50. That's 4%, right just below $117 per barrel. That is the high of the day. Brent is up $1 to just under $111. So that's where you're seeing the angst. You're seeing it also in the equity markets with the S&P off about 0.9%, the NASDAQ off 1.3%, and the VIX up 2.5 points to 26.7 highs. It's been in several days. So angst in the marketplace. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Investors are counting down to President Trump's deadline at 8 p.m. Wall Street time for Iran to open the Strait of Hormuz or face strikes to destroy its key infrastructure. Let's begin with oil, where we have Brent crude up 0.6% at $110.42 a barrel. WTI crude now up more than 3.5% at $116.53 the barrel. As for equities, lots of red arrows. S&P 500 down 45 points. Dow Jones Industrial Average down 244 points. NASDAQ Composite down about 243 points. But United Health, Humana, and CVS are among the biggest gainers in the S&P 500 today. That's after the Trump administration said it would increase payments to Medicare insurers by an average of 2.5%, better than the near flat change it proposed back in January. PepsiCo is slashing prices by up to 15% on some salty snacks like Doritos and Cheetos. That's after sales in its Frito-Lay division plunged. And this summer's 3-day wireless festival in the UK has been canceled after its headliner Ye, the rapper formerly known as Kanye West, was barred from entering the UK for making anti-Semitic remarks. Wireless sponsors, including Pepsi, Rockstar Energy, and Diageo, all pulled out of the festival recently since Ye was announced as the headliner. Festival organizers say all tickets will be refunded. And that's your Bloomberg Business Flash. Paul and Emily.
All right, Alexis, thank you so much. We appreciate that. Emily Grafeo sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and streaming live at Bloomberg.com here. Alexa was just reporting we have a broad sell-off in the equity markets. We've got yields lifting a little bit, and oil is higher here as the market continues to deal with the geopolitical uncertainty in Iran. Let's talk to professional about all of this stuff. Gene Goldman, he's the CIO of Cetera, joining us via Zoom from Santa Monica, California. Gene, what are the conversations that you're having with your clients these days? Because, boy, there are a lot of crosswinds out there, a lot of headwinds, and it's a big black swan out there called Iran.
I agree. First of all, thanks for having me back on your show. We're telling them two things. First of all, number one, market volatility, uncertainty is going to remain with us for some time. And you can point to so many reasons. Lack of clarity when the war could end. You know, the news this morning clearly shows that there's a lack of clarity. We also have the decentralized IRCG. We also have lots of overnight news. Second of all, the sharp rise in oil prices, the knock-on effects on inflation, the energy infrastructure damage. Third of all, I think this is pretty important. The Fed is really handicapped. You know, you have inflation concerns. They can't really cut rates on higher oil, shipping costs, tariffs. Look at the ISM prices paid that came out this week. And really, at the end of the day, with the payroll report coming in well above expectations, the Fed has to pivot from the labor market to inflation concerns. So with that said, though, what we've been telling our advisors as the actionable investment advice, it's despite these overhangs, any pullback is a buying opportunity because we don't see. We think we were past the market low. We don't see a bear market. You need a bear market you need a recession to have a bear market. So again, why are we optimistic? Why is it a buying opportunity? First of all, the economy is pretty resilient. You know, you look at stimulus, low inventory sales ratios, payroll. We do expect oil prices to revert back to fundamentals, especially with slowing global growth. And you look at oil futures, they've not moved that much. So we do expect a lot of supply of oil coming in later this year. Second of all, valuations have really improved. The forward PE on the S&P has gone from 23 to 20. Look at tech, for example. Tech sector is below its 10-year average from a valuation standpoint. The Mag 7 PE has gone from 31 to 24. And third of all, there's so much cash on the sideline. We estimate about $26 trillion of cash in the money market and savings accounts on the sidelines looking for better valuations. So we continue to believe we don't see a bear market because you need a recession, but we do see market volatility, but any pullback is a buying opportunity.
And when it comes time for that buying opportunity, what are you actually recommending clients buy? Is it equities? Is it fixed income? And then if it's within equities, is it, you know, the mega cap tech stocks that have really led the market, or is it something different?
Yeah, so what do you do? So first of all, the big focal point, stay focused on the long term, stay disciplined, stay diversified. People forget the last few years, Mag 7 has done so well. Everyone was jumping in growth stocks. Diversification is a key strategy. And I think with the forward PE of around 20 times future earnings, it's an attractive entry point for investors with a multi-year horizon. So what do? We're saying overweight the U.S. We recently made some trades where we dropped down our non-U.S. exposure dramatically. You know, we can point to the dollar strength, which will be an impediment to non-U.S. investments. Also, the U.S. is an oil exporter. We're also incorporating some liquid alternatives like multi-alternative, equity long short, market neutral as a way to have some investments that zig when the rest of the markets are zagging. And within fixed income, we're a little bit leery about duration, adding more duration given where the uncertainty we have with yields and inflation. But we've also suggesting, hey, reduce your high yield exposure. We have historically low credit spreads. So then when you dive into the equities, what are our favorite sectors? We love healthcare, attractive valuations. You get the aging demographics. We love industrials, given the war, given the energy infrastructure investment, supply chain reshoring. And technology has gotten very, very attractive. Valuations, AI remains in the early innings of this build-out phase. You have a lot of productivity gains that have not yet been seen in the markets. And then if you think about sort of the valuations, you look at the market cap of technology and communication services, it's about 45% of the S&P 500. Earnings growth ratio to the market cap weight is about 1 to 1. Go back to the tech bubble, earnings growth was about 19% less than where it was then. So we are finding some really attractive opportunities right now, especially technology, healthcare, and industrials.
Gene, thanks so much. Really appreciate that. Really appreciate your comments there. Very straightforward there. Gene Goldman, CIO, Cetera. He's buying this weakness, looking towards the other side, and we've heard that argument or that strategy from a lot of other folks here. What's still happening, despite all of the uncertainty in the world, is technology companies are doing deals. They are investing in AI. A lot of stuff going on, even today. So we asked Mandeep Singh to step in. Mandeep runs all the tech research for Bloomberg Intelligence, and we appreciate getting a few minutes of his time. Mandeep, let's start with Anthropic, Broadcom, Google. They're expanding a strategic collaboration that will allow Anthropic access to about 3.5 gigawatts worth of computing power starting in 2027. Talk about what's going on with Anthropic and Broadcom and Google.
Yeah, I mean, you remember the time when OpenAI signed all those deals for 10 gigawatt capacity?
Yep.
Well, things have changed. The momentum has shifted towards Anthropic in a big way. And now we see this deal, which really is a reflection of the momentum that Anthropic has generated from coding agents, from enterprise. In fact, Anthropic's revenue has tripled from 9 billion to 30 billion in a span of 4 months.
What?
This is breakneck growth that we have never seen, at least till the time that I've covered this space. And, now they are short of compute capacity. So they're signing all these multi-year deals to secure compute.
Okay, so this might be like a basic question for someone who follows AI so closely, but is this all because people want to use Claude, like Anthropic's Claude versus OpenAI's ChatGPT? I'm still using ChatGPT. I don't know if I'm very behind.
Well, so it all comes down to use case and what Anthropic decided, which in hindsight, and hindsight is just a week's here, seems to be a very smart move, is really double down on coding agents as a use case. And this is really, tools that developers use to complete their code, write full-on code, that can save them hours. And now Anthropic has got 1,000 enterprise customers that are paying over $1 million plus each in a span of weeks. They've landed all these customers just for one tool, one product that they conceived in weeks, and they've been able to ramp that up so fast.
So who are the peers for Anthropic again? Just remind me, because I need my flow chart to remember who's who here. Who are the peers or who are the competitors for Anthropic?
I mean, on the coding side, you can think of names like Atlassian. They used to manage code, and coding agent is a new category. So when you think about, an agentic AI that's solving code end to end, this is the use case that everyone was waiting when they were asking the ROI question. This is the ROI that they were looking for. And think of the CapEx for 2027 now that we have seen this revenue ramp from Anthropic, I bet you 2027 CapEx numbers are going up.
When are these companies coming public? When can we see them? Because how do you know who these people are?
In the back half of the year. And, with
so
this...
it'd be Anthropic, you think, maybe?
Anthropic, for sure.
For sure.
I will be very surprised if they don't use this opportunity.
ChatGPT, is that?
OpenAI. But OpenAI has got some trouble now. There was a point when OpenAI was the clear leader. Right. They had the best growth Well, Anthropic has actually surpassed OpenAI in terms of revenue run rate. Just to put it in context, OpenAI raised money at $852 billion in valuation in their last private funding round. Anthropic was valued at $380 billion. So imagine a company growing faster, having surpassed OpenAI, was valued at half the valuation of OpenAI. So I would be very curious to see what is the next funding round for Anthropic look like. And I think they should narrow the valuation gap that they have with OpenAI.
And then what does it mean for Broadcom? Because we're seeing that stock higher, 3% today, but does Broadcom benefit from this long-term runway of
I mean, clearly anything touching Anthropic ecosystem right now should do well, whether it's Broadcom, whether it's Google. On the chip side, Google as a standalone chip company will have a sizable revenue from this Anthropic deal. And that's where, you know, NVIDIA or anything touching OpenAI will probably see some headwind, at least on the back of this news.
How often does how often does this technology evolve? How quickly does it evolve? Like if I buy a piece of software today, or I'm not even sure what I'm buying. I'm not buying a piece of software. I'm buying some AI product.
Yeah.
How long is that relevant for before some new technology comes along and makes it irrelevant? I got to go buy something else.
These companies are releasing new features every week. In fact, this coding agent product, as I said, was consumed in a matter of weeks. And so the next model release from OpenAI could be, you know, better than Anthropic. But the problem that OpenAI may run into is enterprise, contracts are very sticky. Once you start using a product and it's a new product, new category, you're not going to rip and replace. And that's where what Anthropic is doing with coding agents, it's going to be sticky revenue because companies are assigning $1 million plus contracts now. They're not just going to go back and start using OpenAI if their next product is better. So this is sticky, and that's why I think Anthropic has created a new category, whereas OpenAI was focused on the consumer side. They did really well with ChatGPT subscriptions, but they missed out on this opportunity in terms of focusing on coding agents and enterprises.
All right. Mandeep Singh, I guess I feel a little bit better now that he comes in here, but usually I'm like, I got more questions when he walks out than when he walks in about this AI stuff.
Yeah,
but
we got to start using Claude.
I know. All right, I'm going to do it. Mandeep Singh, Global Tech Research Head, Bloomberg Intelligence, joins us live here in our Bloomberg Interactive Broker Studio. And again, just some of the numbers there. And I think, Mandeep was just mentioning, Anthropic said its revenue run rate has now topped $30 billion. That's up from $9 billion at the end of 2025. I mean, like weeks ago.
Right.
It's basically tripled the run rate. You just never seen that. I've never seen that with the early days of Google, early days of Facebook, AOL. I was there, the third analyst covering AOL back in the day. Never seen numbers like this. S&P down 40.6%. The Dow off 1%. WTI crude oil up about $4, just above $116 per barrel. We'll keep up to date on that. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are falling. Oil is on the rise again on concern the war in the Middle East is heating up ahead of President Trump's deadline for Iran to agree to a ceasefire deal. The S&P 500 is down 45 points at 65.66. Dow Jones Industrial Average now down 184 points. NASDAQ Composite down 256 points, a loss there of more than 1%. The Dow today being led lower by Apple, Nike, and Walmart. We've got Brent crude up 0.5% at 110.43 the barrel. West Texas Intermediate, meantime, up 3.5% at 116.32 a barrel. In stock news, shares of chipmaker ASML down about 5% after lawmakers proposed a law that would add further semiconductor export curbs on China, which could hurt the company's already declining China business. And Old Navy will reportedly launch a new format focused on athleisure called Old Navy Sport later this year. Women's Wear Daily is reporting that this assortment may include leggings, sweats, sport bras, T-shirts. Shares of Old Navy's parent company, Gap, down about 2% right now. We've got shares of Levi Strauss down about 0.8% ahead of its earnings report happening after the closing bell. And that's your Bloomberg Business Flash. I'm Alexis Christoforous, Paul, and Emily.
All right, Alexis, thank you so much. We appreciate that. Emily Graffeo sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, but now we're streaming on Bloomberg.com/video. That's where you find all the live Bloomberg video as well as all the curated stuff as well. It's another day, which means it's another M&A trade in the healthcare space. Gilead Sciences agrees to buy private German biotech Tubulis in a deal worth up to $5 billion to boost its portfolio in cancer drug development. Let's start there with Sam Fazeli. He covers all the healthcare stuff for Bloomberg Intelligence. He's based in London, lives in France, I think, but he's in New York. Go figure here today. So we got him in studio. Sam, what's Gilead doing here? What are they buying here? And what's the strategy?
First, can I just say I'm so happy to be here. You know I love coming.
I know you.
So,
New York loves you. I mean, the restaurant, the wine sommeliers love when they see you walk through the door.
My flight door opened at 16:50 last night.
Yep.
I was in the cab at 17:15. That is 25 minutes door to door to the cab. Where are all these TSA issues? I'm not belittling them, but it didn't affect me, so I'm happy.
Well, because you were exiting the airport.
I'm special.
Oh, you are also special, right?
Special. They
rolled out a red carpet for you.
Special passport. So, what's Gilead doing? This is the second deal they've done in the past few months, couple of months, I would say. They are continuing to build an increasingly oncology-focused. They do have various assets, as you know, in HIV and oncology, and they've been building this out. This is a very interesting acquisition, I have to say. It's a private German company. I've met them 2 or 3 times, listened to their presentation. It's in a space, Paul, that had been kind of thought of, maybe China's taken over all of it, the ADCs, antibody-drug conjugate world, and that there isn't really much to play for here. So they built this company, $401 million, the biggest European Series C ever announced about a few months ago. And now I'm going to come back to that and connect it all up. And in a space that you think China's overtaken the rest of the world and Europe. And here comes Gilead buying it for a hefty price, right? That $401 million, I don't know what the valuation was at that time, but this is a good deal for the investors.
And what kind of treatments are they now going to be able to offer with this acquisition?
Yeah, so Gilead already has a well-known Trodelvy ADC antibody. So what you do is that you put the drug, that's a chemotherapy often, that you want to avoid having the overall exposure in your body to an antibody that homes in on a tumor. That's the principle, much harder than in reality to make work. So here what they're doing is buying a brand new, a pretty broad profile, a platform, and 2 drugs with it. So it's exactly in their wheelhouse.
All right, let's move on to the weight loss stuff because that's always in the news. Novo Nordisk will price its new high-dose Wegovy, which is what we use in the household, at $3.99 a month for cash pay patients, undercutting the cost of most doses of rival Eli Lilly's Zepbound. Is this just another example where this market is, we're now moving on to really competing on price?
Yeah, but they have been, Paul, for a while. And, you know, a lot of the times we don't actually see the price that people are paying because it goes through a different channel, the rebates, the discounts, you know all that story of how everybody's so focused on the list price, and where actually people are getting is a much lower price, at least through the insurance. So it is not a surprise. It's going to keep happening. Novo needs to get its footing back in here. And it's interesting that it's happening just the week after that Lilly has been approved to launch their oral drug, right?
Wow.
And that's the first week or two. This Friday, we might see some of the prescriptions flow through. Everyone's focused on that. How strong a launch will that be? And
is the expectation that even though you have to take this pill daily, people take pills all the time, it's no big deal, that this is going to really open up the market? Is that the expectation?
I mean, so the thing is that it doesn't give you as much weight loss as the jab.
Okay.
The jab is super powerful, right? But so you could think about it in many different ways. I'll just add it to my box. You know, a lot of people have these boxes with their vitamins and minerals and all that. I just add it in there, take it. It doesn't have any food restrictions or anything. Okay. So you get some side effects, but maybe you do it after you've done your major weight loss. So you've got your 3 pounds, 4 pounds, 10 pounds that you wanted to lose, and you're feeling great, and you don't want to be taking the jab anymore. Although a lot of people are fine with the injection. Yeah. It just helps. There are needle phobic people. It helps.
And what's the expectation for? Is the pill necessarily going to be cheaper
Billions.
than the jab?
No, well, it should be.
For the patient, like what they're...
I don't think so. I think that would be a really odd thing for them to massively undercut. Massively. But I think you can play with pricing there, especially as it's got probably better margins than the injectable.
I mean, are these weight loss drugs as popular outside of the U.S. as they are in the U.S.?
Absolutely. In the U.K., you know, we are a backward country sometimes when it comes to medicine, at least. We try, wait for 2 years before things get approved. There's a massive self-pay market.
All right, I have to ask, I'm asking for a friend here.
Okay.
Is there a baldness drug potentially out there?
Yeah, well, when you find one, can you let me know?
I mean, this is...
There is already marketed drugs for it. Folks who are...
But something that's as effective as these Wegovy things.
No, once you've lost it, I think you just have to gracefully accept your fate. If you're in the process of losing it, there are approved drugs. You can use it to fluff out the follicles.
But there's there's nothing in the pipeline that's just going to...
No.
Because, boy, that would be big.
Also, don't forget that as we go up the evolutionary tree, we don't really need hair. So perhaps it's evolution that's taking place here, right?
Have you heard
that? That's a good perspective. I've never heard that.
That's how I make myself feel better.
That's a good way to look at it. You mentioned China when you first came in. The FDA is trying to streamline clinical trials. What does that mean for how the U.S. competes with China in healthcare?
Desperately needed. Desperately needed. It takes months, if not a year or so, to start a first-in-human clinical trial. All for the right reasons, but a lot of it is red tape. So what China has been able to do is to really streamline that process. So it's so much cheaper to go over there. Imagine if you gain 9 months or a year in your development plans, and you can get an answer very much quicker there as patients are enrolled in your trials. So this is not about risking people. This is about just getting rid of some bureaucracy and allowing companies to catch up with the way that trials are done in China. You take away one more competitive advantage from China.
Are all parties here in the U.S. on board with this strategy? I mean, the pharmaceutical companies, the insurers, the
pharma
FDA?
companies would love it. Insurance, I don't think they, at that stage of a development of a drug, they don't care. They wait for the very end of it. But certainly the FDA, this is the FDA talking about it now, right? So we do need this. We need this to take away one more competitive advantage from, or disadvantage in the U.S.
30 seconds left. How should we think about the West versus China in terms of pharmaceuticals and biotechs and all that stuff?
You need to constantly look over your shoulder. The research, the science, the capability is on par and rapidly rising. And there is a massive push by the government there because they can also have the luxury of being able to plan for 5, 10, 15 years.
Yep. All right, another thing to think about. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence, joining us live here in the Bloomberg Interactive Brokers studio, which leads me to believe that somebody's buying dinner tonight, because I have a lot of people from BI London are here in New York, which means, and they don't come over here unless somebody's buying them lunch or dinner.
They know food.
Yes, they do. So I'm guessing there's some kind of paid meal today for a lot of these people. S&P and wine. S&P down 46 points, 0.7%. The Dow's off 200 points. That's about 0.4%. NASDAQ taking it on the chin here, down about 1.2%. That's 255 points. And you guessed it, oil higher. WTI crude oil up over $3 here, just below $116 a barrel. We did hit 117 earlier today. So angst in the marketplace. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Emily Giffredo in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's continue the healthcare story here. U.S. Medicare program will pay private insurers 2.48% more in 2027. It's a meaningful improvement over the initial rates proposed in January, and we see a lot of healthcare stocks trading higher today. Let's break it down here because, quite frankly, nothing confuses me more, even more than AI, which is healthcare and financing of healthcare and who pays what. Dwayne Wright, senior healthcare policy analyst for Bloomberg Intelligence, he knows this stuff. He's down there in Washington, D.C. Dwayne, the stocks are moving on this today. Tell us what's going on in Medicare.
Yeah, thanks. So what we're looking at is basically a low bar heading into the final rate notice. The proposed update in January was close to flat, 0.09%. And there were some concerns amongst the industry and Wall Street that basically some recent comments from the administration that Medicare plans aren't doing enough to control costs was going to lead to a disappointing rate update, which we saw yesterday. Now, 2.48% in a vacuum isn't necessarily all that great. When you look at last year, it was about 5%, but it's an improvement upon the proposed. It's not what we saw during the Biden administration, where there were 3 years of negative updates or payment reductions. So this is a positive because, quite frankly, the bar was very low heading into yesterday's rate announcement.
All right, Emily, Dwayne, I have to tell you, is a graduate of the University of North Carolina, so you may want to talk a little slowly, okay?
Okay.
Well, just letting you know.
Right.
Wow.
We have an ACC.
Going early on that one.
A lot of ACCs here.
Yep.
None of us who made it to the Final Four this year, so
no, we didn't.
We can all
Very
wallow in solidarity in that point. But I did want to ask about, so this $13 billion, the payment charge expected to add over $13 billion in additional payments. You said that this is positive. This is positive for the insurers and also the policyholders, or just the insurers?
It's mostly for the insurers when you take a look at the challenges they're facing. And this is a reflection. The update is supposed to be a reflection of how much it would cost to provide that care for an individual if he or she wasn't in the Medicare Advantage program, basically in the fee-for-service program. So it's designed to be a recognition of increasing healthcare costs in the system. So that's a positive. And the challenges we've seen over the past couple of years, the payment rate hasn't kept up with medical inflation, cost utilization. And we've seen plans basically exit markets that were unprofitable because they had quite a few unhealthy individuals. They've scaled back their benefits. So this will be, in theory, positive for insurers because they can manage the costs, but also for the beneficiaries. We saw this year the most disenrollments, forced disenrollments that we've seen in quite some time. When I say forced, I mean the health plan left the market. And so the individual had to look for another plan. So this could create some stability in the marketplace for Medicare Advantage. Now, insurers as a whole have other issues like ACA and Medicaid to deal with. But if we're looking at the Medicare population, this is a positive, especially given the low expectations heading into Monday.
So, Dwayne, how's the healthcare industry view this Trump administration? Is it friend or foe, or is it too early to really tell here?
I think maybe foe at the beginning, and then they can find out how to be friends, because there have been some comments from the administration, and there's a huge focus from Dr. Oz and others about rooting out waste, fraud, and abuse. And there have been some fingers pointed at Medicare Advantage for some of their coding practices and billing practices that lead to, some would argue, inflated payments. In other words, Medicare Advantage is supposed to be a program where you're paid based on expected costs, not actual costs. And so these plans have set up a system where they can make the individual seem less healthy than they really are, get more money for those beneficiaries, but not necessarily pay out any claims for those diagnoses or illnesses. And so all that money, many believe, is just going to the bottom line of the insurer. Meanwhile, their consolidating, they're buying up providers, they're buying up hospitals, and keeping all of the money. So I think there's a push and pull that we saw with pharma last year, where the spotlight was on them for their high drug prices. This year, it's turned a bit to the provider and services area, specifically the insurers and a lot of their billing practices. So I think there's a give and take when it comes to this administration. I think at the beginning, there was a hope that it would be a very friendly administration, but we're seeing the headlines that aren't so positive. But they have a way of working out, especially with this administration, where I think if you can say the right things, it ends up well in the long run.
All right, Dwayne, thank you so much. Appreciate it. As always, Dwayne Wright, Senior Healthcare Policy Analyst for Bloomberg Intelligence. He's down there in D.C. Giving us the latest there. So again, the healthcare stocks, trading, the healthcare insurance stocks, I should say, you know, the United Healthcares of the group, the Humanas, CVS Health, those are all up 5-6% here today on the back of this news. Came in a little bit, I guess, just better than expected in terms of what the U.S. Medicare program will pay insurers. Again, about 2.5% increase in 2027. Markets accelerating the sell-off here. The S&P is now down 60 points. That's towards the low of the day, and that's about 0.9%. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, this is hour 2 of the Bloomberg Intelligence radio program. Emily Garfeo is running, not walking, running out the door. She's had enough of me, but don't worry, Alexis Christopher, she's going to be co-hosting with me for the next hour.
My feet are firmly planted here in the studio for you,
so
Paul.
we got a lot coming up here. Starting off, we're going to play a tape of New York Fed President John Williams. He spoke with Bloomberg's Michael McKee earlier today, so we'll play back some of that to see what the Fed think is at the moment. Michael McKee will join us as well to give us his thoughts on what's happening with this economy. David Garfield, Alex Partners co-CEO, to discuss his outlook for these markets coming up here. And Carly Garner, senior commodity strategist and broker at DeCarly Trading, will get thoughts on global commodities, particularly oil, again, moving higher again today. So we'll keep an eye on top of that. But right now, let's kick it all off with Alexis Christophers.
Or Amy Morris.
Oh,
because
Amy
I'm wearing
Morris.
a different hat.
Exactly.
See, it's
so we're going to
confusing.
Amy
Go
Morris.
ahead, Amy. Good morning, Amy.
I wonder why I didn't know that. Amy Morris down in Washington, D.C. with a Bloomberg Business Flash. What do you got for us, Amy? Sorry about your Lady Gamecocks last night. Tough.
Okay, we're not going to talk about the Gamecocks.
Okay, all right. We're just not going to talk about it.
Still kind of tender there. But we're all friends here.
Yep.
This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks retreated. Oil rose as the war in Iran continued to intensify. President Trump threatening more destruction. We do check those markets for you all day long here at Bloomberg. The S&P 500 down about 1%. NASDAQ down 1.5%. The Dow down 0.75%. 10-year Treasury yield at 4.37%. The 2-year yield at 3.86%. Checking oil now, WTI, U.S. crude actually, is up 3.8% now at $116 a barrel, but closing in on 117. We're going to watch that for you. Brent crude is right at $111 a barrel, up 1.3%. Bitcoin is down 2.8%, around $67,000. New York Fed President President John Williams says his outlook for underlying price pressures in the U.S. is largely unchanged, despite his expectation that higher oil prices stemming from the war in Iran will boost overall inflation. Stay tuned. We're going to bring you more of that interview just ahead on Bloomberg Intelligence. PepsiCo shares more than 1% lower. That company slashing prices by up to 15% on some salty snacks after sales at Frito-Lay plunged and the company missed internal revenue targets for 2 years in a row. The price cuts come as the company faces new challenges, including higher oil prices because of the war in Iran, and that could put more economic pressure on consumers, affecting the company's margins. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Bloomberg Intelligence now with our friends, Paul Sweeney and Alexis Christoforous.
All right, Amy Morris, thank you so much. We appreciate that. It is Alexis Christoforous sitting in for Scarlett Fu for the next hour. We're in good shape there. I'm Paul Sweeney. We're in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. See a red headline crossing the Bloomberg terminal, and this is according to the New York Times. Iran has stopped negotiations with U.S. Again, according to the New York Times. We'll have continued reporting on that throughout the morning. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at today?
All right, Paul, let's take a look at Broadcom because that is very much in green today. So ticker AVGO. And those shares are up 2.5% at the moment. And that is because the chip maker announced a long-term agreement with Google to develop and supply tensor processing units. So these are Google's custom AI chips. And Broadcom also saying that the two companies have confirmed plans to work with Anthropic to power the AI startup's burgeoning operations. So Bloomberg Intelligence's Kunjan Samani weighing in on this deal, saying that Broadcom's expanded agreements with Google and Anthropic gives investors rare multi-year visibility, but a portion of the ramp up for 2027 may already be reflected in the consensus. So shares are up today.
Broadcom is like, it's trying to wrap up all the AI. It's like, I'll do a deal with Anthropic, I'll do a deal with OpenAI. Or okay. You also brought along Amazon with you. Why are they in the news today?
Exactly, Alexis. So a couple of things actually that's happening with Amazon, but at the moment shares are trending lower. So ticker AMZN, those shares are down 1.5%. So a couple of pieces of information. The information reporting that Amazon has apparently rejected wholesale suppliers' requests to pay more for their inventory. So essentially, that forces the brands on selling on Amazon's platform to swallow costs related to tariffs or energy increases or what have you. So very interesting kind of consumer inflation bit of news there. And then in other news, we also have Uber expanding its infrastructure and AI capabilities on Amazon Web Services to support more of its trip serving zones. Now, shares are down today. It may just be because of the more cautious broad environment.
Right,
but
just getting wrapped up in that selling.
Yeah.
All right, how about Apple?
All right, let's take a look at Apple. Their shares are also being challenged today. Ticker AAPL. They are down more than 5%. So that is primarily because we did have Nikkei Asia reporting that apparently the company is seeing setbacks in the engineering test phase of its foldable iPhone. So that could push back production, shipment schedule. The first shipment could be delayed by months. This is according to a report that cites unidentified people. And I don't believe Apple has weighed in on it, but nonetheless, it is weighing on shares today. So.
And it's one of the biggest losers in the S&P 500 right now.
Absolutely, Alexis. People just got to wait for their foldable phones. I don't know. Would you want one?
No.
No, and I also hold on to my phone forever, so I'm really not getting a foldable phone for quite some time.
I had one, the Samsung one.
Oh, do you?
Yeah, I did. It was fine for a while, but then it started glitching. So yeah, the technology might just not be keeping up with the usage,
That's the problem.
Right. Yeah. Alexa, appreciate it there. We got a lot of good stuff and news you can use there for what's going on in the marketplace at Christine Aquino with that. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Well, earlier today, Bloomberg's Michael McKee sat down with New York Fed President John Williams in a wide-ranging conversation. They discussed the U.S. economy and the future of the Fed. One of the big talking points brought up to Mr. Williams was the impact of the Iran war on U.S. inflation. Here's what he had to say.
I think it will directly go into headline inflation because energy prices are an important component of that. So I expect headline inflation to actually be elevated, in the middle of this year. Of course, if energy prices come back down or stabilize, then that won't add more to inflation. So right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices.
What could we get to in the meantime? What's the sort of thinking about where inflation on a numerical basis could end up?
Well, again, it's hard to predict that.
Estimate, not a forecast.
Clearly, we can get into above 3% inflation. I think markets' expectations right now are for CPI to be something like 3.25% over the next year. But it really depends on what happens, both in terms of how high do energy prices get, but also how long they stay high or whether they come back down. Personally, I'm also very focused on what's happening with underlying inflation, core inflation, inflation expectations, and other indicators as well, besides what's happening to energy prices, understanding the broader picture.
Well, what's happening with core inflation?
Yeah, so there, I think the story hasn't changed very much. Clearly, higher energy prices does add a little bit to core inflation. You think about airfares, which is part of core inflation, but it is influenced by fuel prices. So I expect that to add maybe a tenth or two to core inflation over the year, the energy price component. But we've seen tariff rates come down. We've seen some other, I think, more positive signs on underlying inflation. So overall, I'm kind of where I've been for a while with core inflation around 2.5% this year.
Well, how long, how high, how fast would inflation have to move to merit a rate response?
Well, I think really it does go back to kind of the full kind of set of factors influencing inflation. And I'm going to bring up tariffs because it is a big part of the story so far about why core inflation has been elevated. So I am watching, imported good prices, looking at core inflation expectations, and then obviously on top of that, what's happening to food and energy. So to my mind, monetary policy today is really well positioned, given where all of those dynamics have been playing out, and well positioned to kind of wait and see on some of the effects of what's happening today. This isn't. I'm not saying we're just in some kind of we can't act. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes. Right now, I think that monetary policy though is pretty well positioned, given what we've been seeing so far.
Monetary policy is well positioned, but what about the economy? What's the state of the economy?
Yeah, well, if you asked me this a month or two ago, we would be talking about remarkable resilience of the economy, growing at 2% last year, looking to grow even faster this year. Clearly, with the conflict in the Middle East, that changes that a bit. Consumers, families are going to be paying higher fuel costs, gas price with the gas price increases. So I've been bringing down my forecast for growth this year, probably somewhere between 2 and 2.5% for growth this year. An unemployment rate probably staying around where it is now, 4.3%. And economy that's continuing to grow, but roughly at trend. Again, driven by consumer spending and investments, especially in AI.
All right, that was New York Fed President John Williams. Joining us now, Michael McKee, Bloomberg International Economics and Policy correspondent here. It seems like the folks at the Fed, Mike, are probably not a whole lot different than the rest of us here. We're just kind of looking at the news flow, gauging the impact on financial markets short term, I guess, but the Fed can't do that much more than that.
They can't at this point. I mean, they, like everybody else, keeping an eye on the oil tickers. Yep. And they're trying to estimate. One of the first questions I asked him was, what do you estimate? Because he's not going to make a forecast at this point. And his estimation, we get into the threes in inflation, which would not be a good thing. But then the division on the Fed is really between those who think the war won't go on for long enough to make inflation rise to a point where it will be difficult to come back down or start to get people upset about it. And the others who think that it will be a possible longer-lasting issue, and then inflation gets sort of embedded into the economy.
One of the takeaways I had from your interview with Williams, Mike, is that Jay Powell could still have some significant sway over monetary policy, even after he steps down as Fed chair.
Yeah, there's two issues. One is, what if Kevin Warsh is not confirmed by the time that Powell's chairmanship runs out of the Fed. And Powell told us at his news conference he would stay on as the chair pro tem of the Board of Governors, and he would stay on as the chair pro tem of the Open Market Committee. And John Williams is the vice chair of the Open Market Committee, and nobody else had commented on it. So he confirmed today that as far as the FOMC is concerned, Powell was elected chair for this year, and unless this new chair is confirmed, then they don't do anything. They just continue on as they were.
So remind us, God, I forgot all about this part of the story. Remind us the dates that are coming up for Chairman Powell and all that type of stuff.
Chairman Powell's term as chair is up May 15th.
May 15th, okay.
His term as a governor is 2028, January 31st, 2028.
Oh, okay.
And that's the other part of it is, does he stay on after that? And I put the question to a lot of Fed officials, and generally their view is, we really like Jay, but it's up to Jay. So they're not saying
and
he should
we haven't
or
heard
shouldn't.
from the White House recently on this whole news about whether they're going. I guess Senator Tillis is holding up the nomination.
Still.
Okay. And we haven't seen any, I haven't heard any rhetoric on that.
No,
recently.
I haven't either.
No, there was a report that maybe next week they would do a Warsh confirmation hearing. They could do the hearing and not have the vote, postpone the vote until such time as Tillis is ready to vote in favor, which would imply that they drop the case. But that hasn't been confirmed, and I'm not sure it's going to happen next week. But they don't really have to worry. You saw how fast Mark Wayne Mullen got confirmed for DHS. Yeah. I mean, by the time you finished making a sandwich, he was already the new secretary.
Right.
What about Friday, looking ahead to, CPI? I guess we got PCE this week as well, don't we?
Well, they're two different months. The PCE numbers are going to be for February.
Yep. So they're backward.
So
they're really backward
they're
looking.
Backward
but this
looking.
CPI will
but the
reflect
CPI
the
is
wartime.
going to, be that fish slap in the face kind of thing.
Right.
But everybody's expecting it. We're all expecting a big jump in headline inflation because of energy prices, because of fertilizer prices. But the issue is, how far does it seep down into other prices? Like if you buy some good from Amazon that has to be shipped and the shipping price went up because fuel prices went up, that'll show up in goods inflation in the core, and nobody really thinks that we've had enough time for that to happen yet. We're just really seeing on a day-to-day basis now companies say they're going to put on surcharges or raise prices.
Like Delta Airlines today, raising baggage fees.
Oh, okay, all right. Well, just for what it's worth, folks, for that CPI data point on Friday, the CPI, the headline is for 1% month on month. And that had been running around 0.3, 0.2, 0.4, something like that. So that's the difference there. The core CPI month on month is projected to be 0.3%. So you can kind of see that delta there. Is the Fed, again, the Fed will probably be like the rest of us and try to look through that a little bit?
They'll look through that. I mean, they'll parse it and see if it's gotten into any other parts of the energy price thing, getting into any other parts of the CPI. The other thing that we want to kind of look at, again, is housing prices. This is the last month. From the time when the government shut down in the fall, right, for statistical reasons that this show's not long enough for me to explain, that biased the CPI lower because it biased house prices lower. And so that lasts, it's every 6 months, and so the 6-month deadline is at the end of March. So when we get the April figures, we should see a little pop up in the CPI because of that. And so all this kind of feeds together, and it's just many more strands the Fed needs to untangle.
Williams felt pretty good about the labor market, though, didn't he?
He was. We have seen the low hire labor market continue, and you've got a very low unemployment rate historically. We did have he thought maybe it's a bit of an aberration, the size of the jump in payrolls, because we had a big drop in February, some of it's rebound. But in general, he was fairly confident about the economy absent tariffs and the war. And his view is that the war will end soon enough, and tariffs will have played out through the economy. So by the second half of the year, we'll see inflation come down, we'll see employment strengthen, and that companies will start moving forward again. That, again, is also one of the debates, and I assume among analysts on Wall Street as well.
All right. Tariffs and the war, both self-inflicted, but markets are dealing with it. Michael McKee, international economics and policy correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. We'll note a red headline just crossed recently on the Bloomberg terminal that WTI crude oil did get above $117 per barrel. It's now just below $117 per barrel. Keep an eye on that. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. Reports that Iran has ended those ceasefire negotiations with the U.S. now sparking concerns that the war in Iran is growing more intense. We check markets for you all day long here at Bloomberg. The S&P 500 down 0.9%. NASDAQ down 1.3%. The Dow down 0.8%. The 10-year Treasury yield at 4.36%. The 2-year yield at 3.86%. Checking oil now. NYMEX crude oil is up 3.75%, around $106 $116 a barrel. Brent crude at $111 a barrel. That's about 1.1% higher. Bitcoin is down 2.6%, around $68,000. And checking the Bloomberg Dollar Spot Index, it is little changed on the downside. New York Fed President John Williams says his outlook for underlying price pressures in the U.S. was largely unchanged, despite his expectation that higher energy costs will boost overall inflation. He says he slightly downgraded his forecast for economic growth in the U.S. in 2026 to a range of 2% to 2.5% and sees higher headline inflation, but says there's no need to consider any change to the Fed's benchmark interest rate. Delta Airlines will increase charges for checked bags by between $10 and $50 apiece, as surging jet fuel prices prompt carriers to ramp up fees and ticket prices. Delta follows rivals United Airlines and JetBlue, which raised bag fees earlier this month. Delta shares down nearly 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Paul Sweeney and Alexis Christoforous.
All right, Amy Morris, thank you so much. We appreciate that. A lot going on out in the marketplace here. We got Alexis Christoforous sitting in for Scarlett Fu. I'm Paul Sweeney, keeping a sharp eye on those markets today with a lot of uncertainty out there. But let's be honest. You think about being in the C-suite over the last, 10 years or something, 7, 8 years. You got pandemics. You've got global geopolitical issues all across the globe here. You've got differing, changing trade policies on a global scale. A lot for the C-suite to take in here. So let's take a look, 30,000-foot view of some of those changes. David Garfield joins us, co-CEO of Alex Partners. He's out there in Chicago. David, thanks so much for joining us here. When you talk to your corporate clients, they've got a million crosswinds out there. We didn't even talk about AI, but kind of what are they asking you these days?
You're absolutely right. Executives are facing unprecedented uncertainty in their market spaces. And so a big thing they're focused on is how to take decisions and move businesses forward, even in spite of the uncertainty and headwinds. So what are no regret moves that they can make, even as they see commodity costs, prices fluctuate, interest rate pressures persist, and of course, still big supply chain disruptions.
And of course, David, we saw COVID was a huge learning curve, right, for the C-suite in terms of supply chain and logistics. What are executives saying about the current state of things? What is the biggest challenge for them at the moment?
The biggest challenge is the uncertainty itself, because, of course, there are things that companies could do to try to build flexibility or resilience into their business. But if they take large amounts of capital or long amounts of time, those are difficult decisions to make. And so really what executives are looking for are what are some of the tactical things that they can do that still support their long-term growth strategies. Examples would be sharpening up their pricing, because predicting the raw material cost increases is very difficult, whether it's supply chain issues, tariff or trade issues. But if you have more real-time and dynamic pricing, at least you can buffer the impact of those costs on your business.
So, Dave, when I think about mergers and acquisitions activity, you think about confidence in your future, confidence in your business plan. If you're the C-suite or if you're at the board, M&A, we're up 24% this year in dollar terms. That suggests to me that despite all the crosswinds out there, corporations are moving forward here. What are you hearing?
So you're absolutely right. So deal volumes and values are holding up. Executives are making smart choices about transactions that either add to their scale or add to their flexibility, or in some cases, both. So executives are still executing transactions. They're just being very mindful about ensuring that they can capture the synergies and capture them in a reasonable amount of time.
David, talk to us about AI, because you say a lot of companies remain in AI purgatory. What do you mean by that, and how do you get out of it?
Right. So companies recognize that AI does have transformative potential. It can have a huge positive impact on their businesses. The question is where and how do you deploy it to actually generate those returns? So today, companies are really looking to cut through the hype and focus in on the specific business opportunities or challenges where AI can make the biggest difference. So they're done with broad-based AI readiness assessments and strategic reviews, and they're really trying to hone in on specific instances. Just one concrete example, we work with one of the largest retailers in the world to deploy AI in a way that improves their forecasting. That has a huge positive ripple effect through their business in terms of their planning, their inventory management, ultimately their profitability. So that's a focused solution that has a measurable return. That's exactly what executives are looking for.
So, David, aside from AI, what's the biggest question you get from your clients these days as they think about strategy?
So executives are very focused on AI. They're very focused, of course, on geopolitical changes and risks and disruptions, and still focused on their supply chains. Collectively, executives are asking, how do we prioritize, decide upon, and act on the things that really move the needles financially? So we talked about sharpening up pricing as one no-regret move. Pressure testing balance sheets and cash flow is another, because businesses are being stressed in ways that they've never been stressed before. Another is just a good old-fashioned top-to-top communication with key customers, because just as businesses are being disrupted, their corporate customers and end consumers are being disrupted as well. And so just staying close and explaining changes in your assortment, changes in your pricing, other things that are flowing through your business into the customer marketplace keeps those customers connected and ultimately loyal purchasers.
David, thank you so much. Appreciate it. David Garfield, co-CEO of Alex Partners, joining us via Zoom from Chicago. Again, market's selling off here for the S&P off 58 points. That's 0.9% here. One thing that continues to move forward is AI, investments in AI, and that includes investments in data centers. That has just been a huge growth area. We hear about that from all different angles. Lloyd Arnold covers this. He's a BNEF data center reporter. Joining us here. Lloyd, I know you're out with a piece of work here. AI data center build advances at full speed. 5 things to know. What are the 5 things to know about this rapid build out in data centers across the world, actually?
First is we're seeing a huge amount of construction. We're seeing a huge amount of capacity being connected, and that's continuing to accelerate. This is driving purchases of clean energy. It's also driving purchases of natural gas and thermal generation. This is being driven by more and more capacity, more and more capital allocated by the big tech companies, by big data center developers. And we're expecting this to continue. There's confidence in newcomers to this space, and the biggest AI companies have positive margins. So a lot of this demand is likely to be sustained.
You know, Arnold, front page of the Wall Street Journal today has a write-up about cities and states that are now taking direct aim at data centers, including states like Maine, Georgia. They're saying, wait a minute, we need to do more studies on what the impact of these data centers are going to mean for communities and for the environment. How much is that going to be a hurdle for companies wanting to expand in the way they want to expand and at the level they want to expand?
Maine in particular, probably not a huge hurdle. Based on BNEF's data, there are no construction projects in Maine and no planned data centers in Maine. More generally, shifting community attitudes are a headwind. This is largely tied to power pricing, which is part of what's driving some data center developers toward natural gas. BNEF's tracking about 100 gigawatts of data center IT capacity associated with on-site generation that removes reliance on utilities and hopes to shield consumers from higher power prices.
Lloyd, I hear a lot of folks asking, when is it going to be enough? Are we going to know when we have enough data center capacity? Because the question I think some people are starting to ask is, are we overbuilding here? How do we track that?
That's a really real question. It is an unknown. The things we're looking at are, how are the AI companies performing? Are they continuing to get higher uptake? Are they continuing to get more users? And how are the neoclouds performing? So these are companies such as CoreWeave, such as Nebius, who are very, very exposed to AI workloads and developing data centers to serve them. While those companies continue to perform well, that's a strong sign demand is hot.
And I must apologize, Lloyd. I called you Arnold earlier. Did not mean to call you by your last name. But that's what happens, Paul, sometimes when people have last names that can be first names.
Exactly.
I'm sure it's not the first time, Lloyd, but sorry it had to be me. Talk to us about the connection between building of data centers and the energy markets, because they need a whole lot of energy to make those data centers work.
No trouble to Alexis. Alexia, it happens a lot. In terms of energy, data centers are huge energy customers. That's a big part of why people are interested in data center build out at present. This means data center developers, big tech giants like Microsoft, Meta, Amazon, and Google. These companies are hugely active in the clean power purchase agreement market. They made up over half of that market globally last year and over 70% in the US. So that's one really big impact. And then maybe the other story is this growing reliance on natural gas for data centers. For now, that seems to be a US story, but lots and lots of data center campuses are planning to be powered on site by gas engines and gas turbines.
30 seconds left, Lloyd. Is this primarily a US story, data center build out, or is it global?
This is primarily a US story for now. We are seeing increased projects globally, but this US concentration is really because the biggest players, again, these tech giants and the big AI labs creating new demand, companies like OpenAI, Anthropic, XAI, they're all American companies. That's seeing a consolidation of a market already skewed to the US, further into the US. Over 2/3 of the construction pipeline we see is in the Americas for now. Longer term, we're likely to see new demand in a lot of emerging markets.
All right, excellent stuff. Lloyd, thank you so much for joining us. Really appreciate it. Lloyd Arnold, data center reporter for BNEF, based in London there. So you know it's big when you have a dedicated reporter for data centers.
And Bloomberg would do that.
Bloomberg,
that's what we've got.
Bloomberg will do that, absolutely. That's kind of how we roll here. S&P down 55 points off the lows. The Dow off 350. The NASDAQ off 260. That's 1.2%. Why? WTI crude oil up about $3.75, $116 per barrel. This is Bloomberg Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. I'm Amy Morris. Equities extended losses. The New York Times reporting Iran stopped negotiating a truce with the U.S. We do check markets for you all day long at Bloomberg. The S&P 500 now down 0.9%. NASDAQ down 1.25%. The Dow down 0.8%. 10-year Treasury yield at 4.36%. The 2-year yield at 3.86%. WTI is 3.25% higher. That's around $116 a barrel. And Brent crude is up 0.6%, around $110 a barrel, actually a little bit lower than it was in the last half hour. U.S. private payrolls rose an average of 26,000 per week in the 4-week period ending March 21st. That's according to a preliminary estimate from ADP. Calvin Say with BNP Paribas tells Bloomberg Surveillance that's manageable.
We're not flashing red like many at the Fed thought late last year. As the employment numbers came down, many were worrying that, oh my gosh, we were seeing a few 100,000 jobs a month a couple of years ago. Now we're just seeing 10 to 20,000 jobs a month now. But our view is that it's not a big deal.
Say says as long as productivity in the U.S. continues at a sustainable pace, the U.S. will continue to see growth. New York Fed President John Williams says his outlook for underlying price pressures in the U.S. was largely unchanged, despite his expectation that higher energy costs will boost overall inflation. He said he slightly downgraded his forecast for economic growth in the U.S. in 2026 to a range of 2% to 2.5% and sees higher headline inflation, but there was no need to consider any change to the Fed's benchmark interest rate. Billionaire activist Bill Ackman has proposed a bid for Universal Music Group to increase returns on one of his hedge fund's biggest holdings. Universal Music Group is the world's largest music company which houses the likes of Taylor Swift, Drake, and Sabrina Carpenter. To increase returns on one of its hedge funds, UMG shares now 11% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Paul Sweeney and Alexis Christoforous.
Amy Marsh, thank you so much. Appreciate that. As always, we got Alexis Christoforous sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and on Bloomberg.com here. All right, folks, if you're in front of a terminal, GLCO Go, that's a global commodities price monitor there. And
That's exactly what I'm on right now.
Exactly. That's where the smart money is. And what you're going to find is WTI crude oil year to date is up 102%, i.e. it doubled.
Wow.
Brent up 81% year to date. So that's what happens, maybe an unintended consequence, but that's what happens when you shut off 20% of the world's oil, or access to 20% of the world's oil. Let's figure out where we go from here. Carly Gardner, Senior Commodity Strategist for DeCarly Trading, joining us from Las Vegas, Nevada via Zoom, one of my favorite towns. They love me there. Carly, talk to us about how you're viewing kind of current trading in oil here. Assuming we get some type of resolution, what does oil do and over what time frame?
Well, wow, these are pretty difficult questions to answer, but I'll give it my best. So if we're talking 6 months down the road, I believe that we're in the process of putting in some sort of top. It's going to be a wild top. And I think we probably at some point end up moving lower. If you have to recall, we started around 55 with a supply glut and very few bulls out there. And now we've kind of flipped the script in a very short amount of time. But I think ultimately we will land under $50 a barrel. In fact, I'm going to throw out some really low numbers. 40s and 30s are not out of the question. It's going to take some time, but within the next 12 months, I do think we see those prices.
Wow, that would be quite the whipsaw.
Yeah, and
it would.
That's what I mean. Mr. McGlone from Bloomberg Intelligence, he says the same thing. Our commodity strategist. So he's got some company there, Carly.
All right. So, Carly, can you just explain for us what we're seeing here when it comes to how Brent is reacting and how West Texas Intermediate is reacting? Because they're not necessarily moving here in lockstep. I mean, I'm looking at the Bloomberg terminal right now. Brent crude up 0.2%. WTI crude up 3%. Why is this happening?
Well, we're talking about different delivery periods. Brent is basically similar to the June WTI contract when it comes to deliverability, whereas the May contract, that's really what I worry about. So I just let you know that the long-term scenario, I think we go lower. But in the short run, I think we really have a big risk of a big short squeeze. Let me put it this way. I believe the market's basically doing the exact opposite of what we did in 2020. So in 2020, we had that big fallout in oil in the front month with negative. That occurred right as the May contract was going into expiration. I think we're going to have a problem with the May WTI contract. I think there's going to be a lack of liquidity as we get through the roll, which is coming up in the next week or two. Well, specifically 2 weeks, but it's going to start a little early. So I think there's going to be a lot of volatility and possibly some really crazy spikes. I'm not bullish, but I think everybody should be prepared for something really scary, like a spike to 130, 140, maybe even 150 as we work out that May contract. It doesn't have to happen, but markets often, they don't always repeat, but they often rhyme. And if we're replaying 2020 in reverse, which I think we are, that's a real possibility. But the good news is that would probably be the blow off top, and we'd probably come down pretty quickly. In 2020, once we went negative, we actually started trading higher almost immediately. And within a few months, we were in the 60, 70 area. So this, oil market's never boring. There's always something, something going on.
That's for sure.
Exactly. Carly, are you surprised that we haven't seen oil trade higher and hold higher, like 130, 150, just on the supply-demand dynamics, or are you not surprised?
I'm not surprised. The great thing about commodities is high prices cure high prices. I've never seen this not be true. The only market that really is putting its mouth where its money is, or its money where its mouth is the cattle market. It's kind of sustained a rally for a couple of years, and that's very rare. In true commodities, renewable or even energies, anytime prices get high, it thwarts demand. Production increases and we get the boom bust cycle. And crude is the worst offender of them all. If you look at a 20-year chart, we're basically trading in a $100 range from high to low. And I don't expect that to change anytime soon just because commodities will commodity.
All right, you mentioned beef. I want to go there because a few years ago when we had a shortage of egg or high-priced eggs, I just said make more chickens and the price of eggs will come down. And that's certainly what happened. My strategy doesn't work necessarily with beef, does it? Talk to us about the beef market and why we're here and how it's going to go.
Well, the livestock industry has just had kind of an ongoing plethora of issues, red tape, regulations, weather issues, drought, and all types of things working against the rebuilding of herds. And so here we are in a very tight supply situation. What surprised me the most about the beef market is usually, as I just mentioned, when prices get high, demand tapers, and we've seen the exact opposite. I mean, American consumers are in this high protein or carnivore kind of phase, and so they'll pay any price, it seems, to buy their red meat, and that's exactly what's holding the market up. But I do worry, just like, we're talking about crude oil spikes. Crude oil spikes are almost always accompanied with the slowdown in the economy and a stock market correction, and I think the beef industry is going to be really vulnerable to that because the wealth effect has helped beef prices stay high. But if something in that arena changes, I think we see some selling in beef. So we're actually pretty bearish the livestock market.
And Carly, talk to us a little bit about how we are the largest exporter of oil here in the U.S., right? And I had a friend of mine ask me the other day, well, if we are, then why are gas prices up so high? Can you briefly explain, I'm not leaving you a lot of time to do this, but can you briefly explain why we are seeing gas prices respond the way they are, even though we have so much oil right here in our own country?
Well, I mean, you see, we have our own oil. We're not fully independent, but we're getting close. But the reality is it's a global market. So if oil prices increase overseas, we're still subject to those price increases because demand and, not demand, but supply issues kind of are a global situation. But you are right, the gas prices at the pump tend to go up pretty sharply. I can't explain it, but I will say that the margins on gas station gas is very, very thin. And so I think a lot of it is protectionism. They're buying their gas today to sell tomorrow, and they have a really tight margin to work with. So I think that probably plays a little bit of it.
Carly, thank you so much for joining us. Really appreciate it. Carly Garner, she is Senior Commodity Strategist at Carly Trading, joining us from Las Vegas. And again, just looking at crude here, up about 3% here today, $115 per barrel. Live feeder cattle, live cattle's up 7% this year. So I don't know, it just seems
and we were talking during surveillance about how places like Washington, D.C. are seeing like a plethora of steakhouses open up despite beef prices where they are at the moment.
Eat more chicken. You know, that's how the ad goes, I guess. S&P 500, we are down 58 points. That's about 0.9%. The Nasdaq's down 260 points. That's 1.2%. We'll have more coming up. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we've got Alexis Christophers sitting in for Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. I did not have Universal Music Group being put in play on my bingo card, but billionaire activist Bill Ackman, I mean, I IPO'd that thing, bought it, sold it, I don't know why it's public. Billionaire activist Bill Ackman has proposed a bid for Universal Music Group to increase returns on one of his hedge fund's biggest holdings. Not really sure why, but our next guest does. Matthew Bloxham, senior media and tech analyst for Bloomberg Intelligence, is usually based in London, but he's here in New York, which goes to my theory.
Yes.
And we're seeing a lot of London-based BI people here, which means somebody's buying these people dinner. They're not coming over of their own.
I think we should swap. I'll go to London for a while and do the show from there. Okay.
Matthew, tell us what's going on here with United Music Group and kind of what Bill Ackman's thinking.
Yeah, so look, I think a lot of shareholders have been frustrated for quite some time with the share price performance of Universal Music. The numbers it's been posting performance-wise have been pretty decent, but the share price keeps going down. And I think, I mean, I've had a lot of incoming inquiries from clients over the last maybe 3 or 4 months, trying to kind of put this puzzle together. You know, the numbers look good, the share price going down, what's going on? And I think to some degree, this is Bill Ackman, you know, expressing some public frustration about that kind of mismatch and trying to, I guess, propose, you know, a different future for Universal Music, but particularly kind of a more financially engineered future. So kind of sweating the balance sheet more, pushing leverage to 2.5 times from 1 times, doing more buybacks, selling their stake in Spotify, just to kind of really crystallize some of the value that is there.
Now, from what I understand, this is it's sort of a complicated proposal they're putting together here that involves, I guess, a SPAC here in the U.S.
Right.
Valuing the company, I guess, at close to $65 billion. Is that truly a 78% premium?
It would be, but it's very much a kind of paper premium. So if you look at the numbers, basically what they've said is that on the 2026 earnings, they think Universal Music should trade at about 25 times earnings. It currently trades on about 17.
Okay.
And so they've applied that multiple to the earnings.
Creative.
And backed everything else out of that. So kind of really, there's kind of nothing substantial there. It's not that there is an element of cash to the bid, but it's not very much. And most of that cash is basically being funded by leveraging up the UMG balance sheet and by selling the Spotify stake.
Well, then I wonder, how real is this? Or is this just, is he throwing it out there to shake things up, or can this thing really happen?
I think he's throwing it out there to shake things up. And I think what we would expect to see from the company is perhaps, kind of an acknowledgement that, that there's more perhaps they could do to kind of crystallize the value and get it recognized in markets. But we'll see. I mean, obviously, the big fundamental risk to Universal Music, which is keeping that earnings multiple down, is AI, and whether in future we're going to be fans of real human artists or fans of AI artists.
Say it isn't so.
All right, we've got some big shareholders here. I'm going to go back to an old acquaintance of mine, Vincent Bolloré. What's he want to do with the stock? He owns 18% of the stock here, and I know there's always been concern in this company and in other companies he has holdings that he's a seller. He's a better seller here, and that could keep a lid on this thing.
Yeah, that's certainly been a bit of an overhang. I'd be surprised if at this level he's a seller. And obviously it's even more complicated than that because Vivendi owns a stake in it, and he's the kind of most influential shareholder in Vivendi too. So yeah, obviously I think he's probably playing a longer term game, kind of wants to get value crystallization at some point, but he's not the kind of person to be pressurized into something that doesn't fit his agenda, whatever that is.
He also, Ackman says he's very adamant about wanting to move the listing out of Amsterdam and move it here to the New York Stock Exchange. Why is that?
I think the principal reason is because typically companies get a higher multiple on earnings in the US than they do in Europe. And so to some degree, it shouldn't really be this way, but by kind of shifting the listing from one jurisdiction to another, you magically create value by getting a lift in the multiple. As I say, I think that the big pushback on that for me is the AI threat. We've seen multiple contraction for lots of industries on the back of the perceived AI risk. And I think that's very much in play here for the record labels, particularly Universal.
There's another publicly traded music company out there, Warner Music Group. Yeah. And what are the valuation differences between those two?
They're pretty same. They're both traded on about 17 times earnings. I think people see them very similarly. There's a much lower free float in Warner. I think almost a kind of public-private company. They both face similar risks. I think obviously for the last 10 years or so, Universal has been by far and away the #1 record label. It kind of dominates the kind of charts in terms of its artists. In recent times, we have seen Warner kind of take some share, but it's kind of a relatively gradual thing. But I think largely investors kind of see them both as, a play on the same fundamentals.
I just want to go 30 seconds left. What is the AI risk? I hadn't even really thought about that.
For me, it is that in future it's AI artists rather than real artists, and that essentially creates a disintermediation threat for the likes of Universal, who've clearly got huge numbers of A&R staff who pick future artists and dominate those charts, and that maybe you start to see that kind of
Tom Keene is screaming in a closet somewhere right now hearing this.
Oh, God. AI is just everywhere. So I'm not sure if it's a friend or an enemy. Matthew Bloxham, Senior Media and Tech Analyst, Bloomberg Intelligence. He's based in London, but we got him in New York here for a few days. So we got him here in our studio. We'll do some more going forward as well. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research, your top stories, and global business headlines coming up in just a moment. Market selling off. We are off the lows of the day. The S&P's off 50 points. That's about 0.75%. WTI crude oil, we're up a couple of little bucks here, $115 a barrel. That's the bogey. The high for the day was 107. This is Bloomberg.
This is CBS News on the Hour, your home for original reporting.
Cammie McCormick, President Trump has issued a stark warning to Iran, as Olivia Rinaldi reports.
At 8 a.m. this morning, he posted that Truth Social saying an entire civilization will die tonight. It will never to be brought back again. This is, of course, the president making that threat that if there is no deal tonight, if the Strait of Hormuz is not reopened, he is going to start bombing their bridges and their power plants. We also learned that the U.S. and Israel have started bombing Karg Island. That is where 90% of Iran's oil has to go through. It's a very crucial island for them and their energy supply.
Vice President J.D. Vance is in Hungary to support Prime Minister Viktor Orban's re-election bid.
The bureaucrats in Brussels have tried to destroy the economy of Hungary. They have tried to make Hungary less energy independent. They have tried to drive up costs for Hungarian consumers, and they've done it all because they hate this guy.
Orban is running for a fifth term and trailing in the polls. The London Music Festival Kanye West was due to headline has been canceled, and his travel plans altered, as Vicky Barker reports.
After a rising tide of anger and anguish over Kanye West's invitation to headline a music festival here, British immigration authorities have rejected his visa application, and the festival itself has been canceled, just as tickets were going on sale. Faith leaders and politicians were unconvinced by West's apology for past anti-Semitic and pro-Nazi remarks. It would have been the rapper now known as Ye's first UK appearance in more than a decade. Vicky Barker, CBS News, London.
NASA today released a historic photograph of Earth dipping below the lunar horizon more than 57 years after the iconic Earthrise image captured by Apollo 8. Space consultant Bill Harwood on the front row seat for the Artemis II astronauts.
The astronauts enjoyed a solar eclipse, a total eclipse, from their position out in space where the moon moved in front of the sun, and it lit up the moon from the other side. I never expected to see that, but it was truly spectacular.
Google has updated the mental health safeguards on its AI chatbot Gemini. Correspondent Michael Wallace has more.
The changes come as Google faces a wrongful death lawsuit alleging the chatbot aided a user in his suicide. Gemini will now more quickly connect users to crisis care when they show signs of mental health distress. Users can call or text a hotline with one click. Google has also pledged $30 million over 3 years to crisis hotlines worldwide.
On Wall Street, worries over the war with Iran have sent stocks lower again. The Dow off 333 points. This is CBS News. Move over Tilly Norwood. You've got company. CBS's Deborah Rodriguez explains.
Check out the new guy taking over iTunes.
I don't move as good as I used to.
Eddie Dalton has almost 400,000 monthly listeners on Spotify and 11 songs on iTunes' Top 100 Singles chart. His current album is at number 3. The lyric video for this song has more than 1.4 million views on YouTube, and Dalton's Not Even Real Content creator Dallas Ray Little used AI to compose his music. The much-maligned AI actress Tilly Norwood debuted her first music video last month. Deborah Rodriguez, CBS News.
Afghanistan is dealing with severe weather. Torrential rains have collapsed houses, caused landslides and flooding. More than a dozen people have died. Just months ago, heavy snow and floods caused extensive damage. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's deadline day for Iran. Welcome to Balance of Power. I'm Kaylee Lines. Joe Matthew is off on this Tuesday, April 7th, as 8 p.m. Eastern Time rapidly approaches. Yes, we are less than 8 hours away from President Trump's deadline for Iran to either make a deal and open the Strait of Hormuz or face potentially the destruction of critical civilian infrastructure. As the New York Times is reporting that Iran is now stopping ceasefire negotiations with the United States, the president takes to Truth Social, writing a whole civilization will die tonight, never to be brought back again. We're going to get the latest this hour with Bloomberg senior editor Wendy Benjaminson with insight and analysis from our political panel, Rick Davis and Jeannie Shanzano. But first, we have to begin, as always, with how the markets are reacting to all of this. And for that, we check on Amy Morris, who's here in Washington. Hey, Amy.
Hi, Kaylee. Yeah, there's volatility right now on Wall Street over concerns about the war in Iran. We check markets for you all day long here at Bloomberg. Brent oil has reversed its gains. It's now trading right at $109 a barrel. It's down about 0.6%. NYMEX crude, though, still going higher, 1.9% higher, around $115 per barrel. S&P 500 is down 0.5%. NASDAQ down 0.75%. The Dow down 0.5%. The 10-year Treasury yield at 4.34%. The 2-year yield at 3.84%. The Bloomberg Dollar Spot Index is down about 0.1%. And Bitcoin down 2.25%, around $68,000. Now, the war with Iran could keep inflation above the Fed's target for the rest of the year. That's the view of New York Fed President John Williams.
I expect headline inflation to actually be elevated, in the middle of this year. Of course, if energy prices come back down or stabilize, then that won't add more to inflation. So right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices.
At the same time, New York Fed Chief John Williams tells Bloomberg's Michael McKee core inflation that leaves out food and energy prices should come down by the end of the year, and that monetary policy is right where it needs to be. PepsiCo shares nearly 2% lower as the company is slashing prices by up to 15% on some salty snacks after sales at Frito-Lay plunged and the company missed internal revenue targets for 2 years in a row. Those price cuts come as the company faces new challenges, including soaring oil prices because of the war in Iran, which could put more economic pressure on consumers and affect the company's margins. PepsiCo is monitoring the impact of the price cuts. They're expected to be in full force by the end of this month. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Markets, of course, having to wait and watch for what may come after the closing bell today. 4 hours after, to be specific, 8 p.m. Eastern is the deadline that is quickly approaching, with no news yet of any kind of diplomatic breakthrough that could avert the U.S. military targeting civilian infrastructure in Iran. Things like power plants, for example, if no deal is made, as the president and commander-in-chief himself outlined yesterday in a news conference.
We're giving them till tomorrow, 8 o'clock Eastern Time. And after that, they're going to have no bridges. They're going to have no power plants. Every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business. The entire country could be taken out in one night, and that night might be tomorrow night.
Now, despite those threats, or maybe because of them, Iran is now stopping ceasefire negotiations with the United States, at least according to the reporting of the New York Times, which begs the question, will President Trump actually follow through on what he has threatened? And as we've heard repeatedly on this program, and as anonymous sources repeatedly have told various media outlets, no one really knows what President Trump will decide to do except for him. So perhaps we need to lean on his words specifically. I'm going to read you his Truth Social post from this morning in full. It reads as follows, quote, A whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. And then he goes on to say, now that we have complete and total regime change where different, smarter, and less radicalized minds prevail, maybe something revolutionary wonderful can happen. Who knows? We will find out tonight. One of the most important moments in a long and complex history of the world, 47 years of extortion, corruption, and death, will finally end. God bless the great people of Iran. Now, of course, it is the great people of Iran that he refers to who could stand to suffer greatly if he does what he says he will. So for more on this, we turn to Bloomberg News senior editor Wendy Benjaminson, who is here with us in our Washington, D.C. studio. Wendy, this moment feels very heavy on what has been weeks of heaviness as this war has been ongoing. It does bear reminding that we have seen this deadline already move 3 times. It was first 48 hours, then it was 5 days later. It was extended to originally Monday, the 6th. Here we are on the 7th. Is this 8 p.m. deadline going to be the real one?
That's the question of the day, Kelly. We have literally zero idea what is going to happen tonight. In fact, White House spokesmen are saying the only people who know the only person who knows what's going on is Donald Trump. The Defense Secretary, Pete Hegseth, was supposed to have a news conference this morning. He canceled that. The lack of information that is coming from the U.S. government to the American people about what is going to happen next that could greatly affect us is unprecedented in my professional life, at least. I mean, I've just never seen this kind of blackout and no idea what's going to happen. Of course, you don't signal a specific attack, which is a little odd with the 8 p.m. deadline. And already Iran has told people, and some people are doing it, whether coerced or not, I don't know, standing on bridges with posters of the late Ayatollah. Ready to be blown to smithereens if Trump goes through with this. But it's a mystery.
Well, so is it as much a mystery of where diplomacy stands at this point? I mentioned the New York Times reporting that Iran apparently is stopping any negotiating efforts toward a ceasefire. Does the U.S. take the same position? Do we have any idea?
We really don't, and that's another blackout of information that the American people are getting. The Wall Street Journal reported that the direct talks have stopped, but Pakistan was still acting as an interlocutor. But then the New York Times says all talks have stopped. So we're getting this from sources that may know what they know, but they don't know the whole picture. And again, we are left at the mercy of Donald Trump's Truth Social feed.
Well, and it's worth noting, Donald Trump himself in that news conference yesterday did talk about the communication difficulties with the Iranians, because so much of this has been indirect. It's not like you're just, getting each other on the phone and speaking in real time. So I guess that begs the question of how much room there is in the gray area here. If this should be tweeted as black and white, either a deal is made or a deal is not and these strikes happen, or if there are kind of options B, C, and D that we should consider too, Wendy.
I mean, as we know, Trump always goes to the most extreme. Everything is the est, right? Everything is the biggest, the fastest, the most significant. And it could be that this horrific threat, I'm just going to say it, horrific threat to wipe out an entire civilization is along those lines, and that there are some talks going on, and that Witkoff and someone in the Iranian government, are discussing a way out of this, and that he backs off at 7:30 tonight. Sure, that's possible, but there's nothing to indicate from either side that that's happening, and really we can't really trust the public spokesman of either government, right? The Iran says that they've rejected the ceasefire, that they will not open the Strait of Hormuz free flow of traffic again unless this war ends, and they are compensated for the damage, which of course the U.S. isn't going to do. So here we are again. We'll all just have to be here at 8 o'clock tonight, as I'm sure you will.
8 to midnight apparently are the 4 critical hours the president's talking about.
Right.
Whether or not that's military possible to actually do everything he says the U.S. can do in that time, I guess, is a question for defense experts.
And how much Israel is going to participate.
Well, that's a very good point as well. This is not the U.S. versus Iran alone. You mentioned that kind of cast of characters that would be involved in the negotiations here. Steve Witkoff, yes, Iranian representatives, but Vice President J.D. Vance was supposedly going to play a role in this. He just finished speaking, Wendy, in Hungary,
In
where he's there
Hungary.
to prop up the Prime Minister, Viktor Orban, who's facing a very tough re-election effort. Is that telling at all that he's there and not home where he could be in the Situation Room?
Well, it could be. They've always, since the beginning of this war, J.D. Vance has sort of been not seen. We do know that J.D. Vance campaigned, just as Trump did, but for longer in his Senate campaigns against forever wars in the Middle East. He is an Iraq war veteran. He doesn't want to see this happen again. He has not come out against the president, but he's certainly there as the monitor showing off on the sidelines in Hungary when presumably he could be working on this problem. So yeah, he's not there apparently.
Yeah, I guess it becomes a question of what role he might play going forward as we await this deadline. He, of course, is not alone in terms of Republicans who were previously very anti-interventionist in the Middle East specifically, who are now faced with a different reality. We have seen, Wendy, a slew of even Republican voices now critical of what President Trump has threatened here, knowing that Congress repeatedly, Republican-controlled, has rejected any effort to check the president's powers when it comes to this war. If he does what he says he will this evening, could that be the moment in which things change and we see congressional, at least some people in Congress trying to exercise authority to a greater degree?
It could. It's one thing for Tucker Carlson and Marjorie Taylor Greene, who is no longer in office, for either of them to say, it's easy to say, Trump shouldn't be doing this. But we've just heard from Senator Ron Johnson, who is a senior member of the Senate, and he has said, I truly hope that the president is bluffing and that he thinks, not surprisingly, that wiping out civilizations is not a great thing to do. So if there are more senators and more House members who come out like that, then this could be a tipping point. If Trump does everything he says he was going to do, there will be lots from leadership of waffling of, oh, it wasn't that bad. Oh, this didn't really happen. He didn't mean it. But if it does happen, I don't see how they can't. Hakeem Jeffries, the House Minority Leader, is already saying he wants to bring members back for a vote. He would need Mike Johnson's agreement, the speakers, to do that. I don't know if Mike Johnson would actually go against the president. That would be very unusual. But we are starting to see some rumblings among Republicans in the Senate, and it could be. It could be the moment.
And it is worth bearing in mind that they are still out on recess until April
they're on
14th.
vacation.
So there could be a week lag in terms of the reaction function.
That's exactly right.
Which makes this moment all the more interesting. Wendy Benjaminson, Bloomberg News senior editor, thank you so much, walking us through beautifully what we do know and what we don't. And of course, we don't know a lot still as to what exactly may transpire this evening, as there is still a lack of clarity around whether or not the diplomatic effort is making progress. Reporting in the New York Times and the Wall Street Journal would suggest perhaps that is not so. Which brings us to question number 2. Will President Trump indeed target Iranian civilian infrastructure tonight? Something that many would say is a violation of the Geneva Conventions, could be war crimes, though the president told journalists yesterday in his news conference that he's not particularly worried about that. So we'll have more on this later this hour as we'll turn to our political panel. Rick Davis and Jeannie Shanzano coming up. Plus, we also have to talk about something else very important that happened yesterday in the midst of this war. Astronauts circled around the dark side of the moon. We'll have more on that shortly here on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Markets are rattled over concerns of war in Iran. We check those markets for you all day long here at Bloomberg. The S&P 500 down 0.5%, Nasdaq down 0.8%, the Dow down 0.6%. 10-year Treasury yield at 4.35%, the 2-year yield at 3.84%. WTI now 2.6% higher at $115 per barrel. Brent crude's pretty much flat, little changed on the upside, around $109 per barrel. Bitcoin is down about 2.5%, around $68,000. Let's check the VIX. We haven't looked at that in a while. It's 9% higher, around 26.4. New York Fed President John Williams says his outlook for underlying price pressures in the U.S. was largely unchanged, despite his expectation that higher energy costs will boost overall inflation. He said he slightly downgraded his forecast for economic growth in the U.S. in 2026 to a range of 2 to 2.5%. And sees higher inflation, or rather higher headline inflation, so there's no need to consider any change to the Fed's benchmark interest rate. Delta Airlines will increase charges for checked bags by between $10 and $50 apiece as surging jet fuel prices prompt carriers to ramp up fees and ticket prices. Delta follows rivals United Airlines and JetBlue, which raised bag fees earlier this month. Delta shares are more than 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. We return to Balance of Power with Kaylee Lines.
All right, Amy Morris, focused on financial markets. Thank you so much. Of course, financial markets and the rest of the world, frankly, are focused on President Trump and the decision he has to make about 7.5 hours from now, a little over that 8 p.m. Eastern time, whether or not he will follow through on his threat to destroy Iranian infrastructure, civilian infrastructure at that, if no diplomatic breakthrough is reached and a deal to reopen the Strait of Hormuz comes together. Right now, it's not looking likely, which is why we are all so squarely focused on that. But there are other things going on that even President Trump himself is taking time to appreciate. His 4 astronauts aboard the Artemis 2 mission are now heading back to Earth after swinging around the dark side of the moon yesterday, breaking the record for the longest humans have ever traveled in space, the farthest away from Earth, of course, reaching the closest anyone has gotten to the moon in 50 years. It's a hugely important milestone, which is why President Trump spoke to the crew live last night.
Your mission paves the way for America's return to the lunar surface very soon. We're going all out. We're doing everything we can, and it's headed up by Jared. We'll plant our flag once again, and this time we won't just leave footprints. We'll establish a permanent presence on the moon, and we'll push on to Mars.
Because, of course, that is really what this mission has been about, not just setting this record, but getting U.S. astronauts back to the lunar surface. So for more, we turn to Lauren Grush, who's joining us now. She is Bloomberg News space reporter. Lauren, obviously yesterday was a massive moment. The pictures are incredible. Is this basically everything that needed to be accomplished by this mission, or are there still things that need to be marked as they make their return to Earth?
I mean, yesterday was definitely kind of the pinnacle of the mission, right? They still have a few things left on their to-do list. For instance, they have a debrief today about what they saw during the flyby. But yeah, yesterday was kind of what this mission was all about, and it really delivered. I mean, the images that we're getting this morning are just absolutely spectacular. It really looks like they nailed it, and, I think NASA couldn't be happier.
Well, certainly it has been absolutely remarkable and given us all something more positive to focus on in the midst of everything else going on in the world, Lauren. But are there still risks remaining? Obviously, this is a very kind of triumphant story now, but what exactly is the crew going to face on the return to Earth itself?
Yeah, absolutely. One of the riskiest parts is still coming up. So right now they're on their way back to Earth, and that should more or less be a relatively leisurely ride. But then on Friday, they will re-enter Earth's atmosphere and land underneath parachutes in the Pacific Ocean. And obviously, anytime you return to Earth from space, it's risky, but you're coming in pretty fast when you go to the moon. And so you really need to make sure that your heat shield can withstand the intense temperatures that build up around your capsule when you come in through the atmosphere. There's been some debate about this particular heat shield that's on Orion, but NASA is confident that the trajectory that they're using will mitigate the heat that they experience, and they should be able to land safely or splash down safely on Friday.
Well, we're all hoping for that, Lauren, but I guess it does underscore an important point that it's one thing to get close to the moon or even be able to go around the dark side, which we have not seen humans do before, but it is something else entirely to be able to say you can get there and back safely. So is it fair to say that there is just as much in terms of milestones that need to be reached on the reentry as achieving the mission objective itself?
I mean, obviously, what was accomplished on Monday were all of the main historical points, right? You know, they broke the distance record. You know, this crew has also got some great firsts. It's first woman to the moon, first Black astronaut to the moon, first Canadian astronaut to the moon. But yes, I mean, obviously, those things will be overshadowed if we don't have a safe landing. So that is a huge focus of the mission, and you know, all eyes now kind of trained to that Friday, so that we make sure that they get home safely, and we can celebrate all of those firsts, you know, and be positive about it.
Well, and if this all has a positive ending, which there is no indication that it won't, Lauren, talk to us about the stage that it is now setting and how quickly the efforts to get to the moon and a base on the moon and even beyond that could move from here.
Yeah, absolutely. You know, I like to call Artemis 2 an elaborate dress rehearsal for what's to come. So the ultimate goal is to land on the surface of the moon again, like we did during the Apollo era. And, you know, obviously a lot of people ask, you know, why aren't we landing on this mission? Well, it's because we need a lunar lander. And so those are currently in development. These vehicles that are being used will play a pivotal role in the moon landings to come. But in order to get humans down to the surface, we are going to need that vehicle that can descend, land safely on the surface of the moon, and then take off again. That's a really critical role. NASA has tasked both SpaceX and Blue Origin to develop those landers, and there's still quite a long to-do list for them to check off in order for those landers to be ready, and we're keeping an eye on that development and to see if they'll be ready. But NASA hopes to do those landings as early as 2028, which is not that far from now. So it's definitely going to be a jam-packed couple of years here as we wait for them to get those landers ready.
Well, indeed it will, and we look forward to your coverage of all of it. Thank you so much, Lauren Grush, Bloomberg News space reporter. The dark side of the moon has now been circled, and I know if Joe Matthew were here, he would probably have that song playing right now. But he's taking a well-deserved day off. We are not, however, as we do have a lot to talk about beyond the moon. Of course, the deadline rapidly approaching of 8 p.m. Eastern time that President Trump has set out for either a deal to be made with Iran or for Iran's civilian infrastructure to be targeted by the U.S. military. We did have some news that just crossed the wire from Axios. Barak Ravid reporting that in the past 24 hours, progress has been made in the negotiations between the U.S. and Iran, though according to his reporting, meeting the 8 p.m. deadline still looks like a long shot. Apparently, a U.S. official told him that the thinking in the White House has shifted from can we get there to can we get there by 8 o'clock tonight? It's a good question, and it's one that markets certainly are grappling with. So let's check on where they are right now. Down on stocks. Interestingly, oil not seeing as much movement as you might expect with this kind of threat out there in the universe. So we turn to Christine Aquino, Bloomberg managing editor for Markets Live now. Christine, this is a market that has in many ways been conditioned to President Trump backing down from threats. That's why the taco trade continues to kind of return to the narratives. When you look at the market today, are you seeing a market that may be expecting that outcome?
Yeah, you know, beneath the surface, Kaylee, of the declines across indexes that we're seeing today, we have actually seen, for instance, the S&P 500 backing away from its worst levels of the day. Just before I got here, I was actually just writing about the fact that it has halved its decline for the day, and we have seen energy shares leading that charge. And so, you know, it is very much reflective of a market that perhaps is giving less credence to what President Trump's rhetoric over Iran has been, especially because, as you pointed out, it has been burned before when it comes to the president backing down from previous inflammatory statements to something a little bit more sanguine. And perhaps beneath the hood of these market declines, that's essentially what we're seeing today.
Well, so I guess it's going to be a market that is either potentially going to be on the wrong side of the trade if the president actually follows through on the threat this time, or potentially those who have remained more bullish will be redeemed. Christine, I wonder what you make of the timing here, that he's talking about 8 p.m. Eastern, well after the close, well before the opening bell. Obviously, futures will be open, Asia will be up and trading. When we have seen this president so frequently target his communications to around those critical hours, markets opening up and markets getting ready to close, if this market doesn't have answers at 4 p.m., how do you expect people to be positioned for the day ahead, or what are the indications?
Yeah, I mean, definitely the big question, Kaylee. You'd expect that investor would probably want to just be lightening up on whatever position they have, especially because it's such a binary outcome, right? And so, if it's coming after hours, we have, of course, global markets that will likely react to this primarily in Asia. So they're going to be the ones getting the first brunt of the reaction. And whatever that we get in terms of news or headlines or commentary past the 8 p.m. deadline, that's probably the first port of call for markets to get a reaction. What has prevailed throughout this whole back and forth between the U.S. and Iran in terms of the rhetoric is this sort of calendar effect that we've seen in U.S. equities, where, we've seen stocks start the week one direction. This week, it was a positive start of the week, and then that direction kind of backtrack and reverse on itself as the week goes on. And we're seeing that today, of course, with the declines. And so I wonder that kind of does prevail this week, regardless of the outcome that we've seen, just because it is increasingly a market where traders don't want to be exposed to risk heading into a weekend.
Well, and how much does traders' expectations of the reaction function of policymakers factor into that as well, Christine? We had the New York Fed President John Williams sitting down with Bloomberg's Michael McKee today, saying that he doesn't think the inflation story changes very much, even in light of this war. Is that ultimately what may matter the most?
Yeah, absolutely. Yeah, I mean, it is still kind of one of the more tradable aspects of this story and this narrative, right? The eventual impact of higher oil prices on inflation and what that means for rates moving forward. Now, we've heard Federal Reserve officials, including Jerome Powell himself, downplaying the inflationary impact of higher oil prices, saying that it is transitory. But I would remind you and our listeners, Kaylee, that we've heard this tune before in 2022, and we've seen some measures of inflation and survey data getting back to those 2022 levels. And so we might be seeing or hearing a different tune from policymakers when they meet next toward the end of this month.
Yeah, transitory, the word that I think no one really is eager to see the return of, because to your point, Christine, we all know how that went the first time around. Christine Aquino, managing editor for Bloomberg's Markets Live blog. Thank you so much, of course, for updates throughout the trading day and into tomorrow. As this deadline gets set to come and go, tune in to MLive on your Bloomberg terminal for the very latest. Again, the very latest we have at this hour, at least, is reporting from Axios that there has been a glimmer of progress in negotiations with Iran as the deadline looms, though, of course, other outlets like the New York Times have reported that Iran is currently no longer negotiating around a ceasefire with the U.S. It's a very complicated, unclear picture, and it all feeds into politics and the economy. And we'll get into the political impact of that next with our political panel here on Balance of Power.
1240 on Wall Street. I'm Amy Morris. Stocks now paring back some of those losses. Brent crude giving back some of its gains. We check the market all day long here at Bloomberg. The S&P 500 down about 0.5%. NASDAQ down 0.6%. The Dow down about 0.6%. 10-year Treasury yield at 4.35%. The 2-year yield at 3.85%. WTI is still pretty high, up 2.5%, around $115 a barrel. But Brent crude is now little changed on the downside, hovering right around $109 per barrel. Bitcoin is down 2.2%, around $68,000, and the Bloomberg Dollar Spot Index is down 0.1%. And U.S. private payrolls rose an average of 26,000 per week in the 4-week period ending March 21st. That's according to a preliminary estimate from ADP. Calvin Say with BNP Paribas tells Bloomberg Surveillance a 50,000 non-farm payroll rate is perfectly acceptable.
And the reason why I'm telling you this is because we're at full employment. Everyone has a job. And if everyone has a job and you're making decent wages, people are going to feel pretty okay about that.
Say says as long as productivity in the U.S. continues at a sustainable pace, the U.S. will continue to see growth. New York Fed President John Williams says his outlook for underlying price pressures in the U.S. is largely unchanged, despite his expectation that higher energy costs will boost overall inflation. He says he's slightly downgraded his forecast for economic growth in the U.S. in 2026 to a range of 2 to 2.5%, and he sees higher headline inflation, but he says there's no need to consider any change to the Fed's benchmark interest rate. Billionaire activist Bill Ackman has proposed a bid for Universal Music Group to increase returns on one of his hedge fund's biggest holdings. UMG is the world's largest music company, housing the likes of Taylor Swift, Drake, and Sabrina Carpenter. UMG shares up the most in more than 3 years, 11% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. We go back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Checking out these deadline day markets, which right now seem like they aren't totally sure President Trump is going to follow through on what he's threatened, which is to attack critical civilian infrastructure inside Iran if no deal with Iran is reached by 8 p.m. Eastern Time tonight. Reminding you all of the words of President Trump himself that he posted on True Social earlier this morning. A whole civilization will die tonight, he says, never to be brought back again. I don't want that to happen, but it probably will. Probably is doing a lot of heavy lifting in that sentence. How probable is it that this will actually happen? As Axios is reporting that there has been some progress made in negotiations in the last 24 hours, at the very same time that the New York Times reports Iran has walked away, is no longer negotiating around a ceasefire with the United States. It is very unclear what is happening here, not just on the Iranian side, but on the U.S. side as well. Even the White House press secretary, Caroline Leavitt, can't tell us what may happen. She just told Fox News in an interview that only Trump knows where things stand on Iran. But does he actually know? I would remind you of this exchange in the briefing room at the White House yesterday.
And we've heard a range of those kind of messages. So which is it? Are you winding this down or are you escalating
I can't tell you. I don't know. I can't tell you. Depends what they do. This is a critical period. They have a period of, well, till tomorrow at 8 o'clock.
I can't tell you. I don't know. I doubt our political panel knows for sure either, but we appreciate their analysis on this all the same as we turn to them now. Rick Davis and Jeannie Shanzano are with us, of course, Bloomberg Politics contributors. Rick, a partner at Stone Court Capital and Republican strategist. Jeannie, a democracy visiting fellow at the Harvard Kennedy School's Ash Center and Democratic analyst. Welcome to you both. Rick, just how problematic is it for the commander-in-chief to be saying he doesn't know what's going to happen at the very same time he is threatening to directly kill a whole civilization? A whole civilization will die tonight?
Yeah, well, first of all, I think you got to set aside this whole, killing an entire civilization. I mean, I don't know how much anybody has followed Donald Trump through his career, but hyperbole is his friend. And, he uses words in a way that nobody else would ever think of using them. But they usually have a different definition to him than they do to the rest of us. So I'm going to set aside the fact that the president, on behalf of the American people, are going to commit genocide tonight at 8 o'clock and think more in terms of why we have confusion about what's going to happen tonight in general. And that is that it's very hard to talk to a bunch of Iranian officials who think they're going to get assassinated anytime. And they have a really good reason to believe that, because virtually all their friends have been killed by either the Israelis or the Americans over the course of the last 4 weeks. And so starting with that, communication isn't as easy as it would normally be, in a negotiation like this. If you believe the reports, somewhere in between, they seem to be on the verge of a deal to there's no negotiations, is somewhere where we find ourselves between now and 8 o'clock tonight. It would not surprise me that the president doesn't declare victory and say that they've got a deal to reopen the Strait of Hormuz without that deal being completely cooked. But he keeps his finger off the trigger. He walks back some of this hot rhetoric that he's had, and he buys another day, maybe only 24 hours, to keep the heat on the Iranians to come up with a deal. I think if we find out that there's planning to be another negotiating session in person, potentially, as reporting has indicated, Islamabad, then you've got a situation where you might be able to unravel some of the violence that's currently going on. That being said, attacks happened today by both the Israelis and the U.S. contingent. And Iran continues to target soft targets in the region to continue to keep the heat on everybody. So if anybody knows what's going to happen tonight, call Poly Markets and place a bet, because this could be the big one.
Well, and Rick, your point is well taken that you can't always take President Trump literally when it comes to his words. And yes, often hyperbole does play a role. But Jeannie, when taken together, the statement of a whole civilization will die tonight after the president has directly said we will target civilian infrastructure, power plants, potentially even water infrastructure, desalination plants. These are things that do have consequences to the more than 90 million people in Iran. Could we be looking at a president where, even if it's not, absolute mass destruction in terms of targeting civilians, it's still having serious humanitarian consequences if he decides to follow through with this?
Absolutely. If he decides to follow through with it, I mean, let's be clear on his language. We now are sitting here with the president of the United States waking up this morning and threatening genocide, threatening to destroy an entire civilization. Whether he follows through with that or not, he has said that publicly. And that is just a reminder of the levels and depths to which the United States has sunk. Could you imagine any other president or leader from any other country, the worst totalitarian leaders that we can imagine? Those are the kinds of people who say that they are going to destroy an entire civilization and have a countdown to an 8 o'clock time frame. This is where we are in the United States. And what is equally distressing is that so few people, with a few exceptions, have stood up, who are people in power in the United States, still in office, have stood up and condemned this. We have Ron Johnson, who has said, I hope the president doesn't really mean this. We've had a few other people, but we've had some from the left, but very few people in his party, and certainly very few people in the military or even in the media who have stood up and called this for what it is. It is a call to genocide. And again, we don't know. Apparently, even the press secretary doesn't know if he means it or not. But that's almost beside the point right now. He said it. What I think this reflects in actuality is Donald Trump's desperation. He understands there are no good options for him or the United States in this. He understands not just the U.S. economy, the world economy is on the line. And in fact, I think his presidency is on the line. That is what we've seen. And he woke up Easter morning with that vulgar Truth Social. He's followed it up today with threats of genocide. These are all signs of a desperate person who understands very well he doesn't have good options. He goes up this escalation ladder. It's not going to result in an open Strait of Hormuz. It will result in a lot of death and destruction and further economic distress in the United States and around the world. The president knows that, and that's what we're seeing. Could he walk away from this? Absolutely. He has moved the goalpost in the last 2 weeks, Kaylee, by my count, at least 5 times. So he may do that, and I hope he does that. But it doesn't make any of what's happened in the last few hours any better.
Well, and that moving of the goalposts, Rick, is something you were speaking of, too, that you could see this plausibly being an outcome in which the president just extends the deadline. Once again, it would be the fourth time now. But at what point does that become too damaging to the United States' credibility, to his own credibility, for him to continue doing so?
You know, I think it's all in context of, you know, how this war has been defined from day one. I mean, we had very loose objectives, no real strategy going in. It was a war completely of our choice and Israel's. Yet we didn't have really clearly defined objectives in the initial attack. And so the fact that it has now morphed into fighting over opening the Strait of Hormuz, which was never an issue to begin with. The Strait of Hormuz was wide open the day before we launched our attacks and Israel joined us. And so, you know, these are all consequences of a war that started almost 6 weeks ago and are now redefining how we get out of this war. And I do think that it's very critical that whatever the president does, that he achieves the one objective that's now as a result of the war, and that is reopening the Strait of Hormuz and allowing the oil trade to begin again and to try and tamp down some of the concerns that people have about global recessions. This is a war that's not just affecting the American people, but virtually everyone around the globe, either economically or personally. So I mean, it's really quite a rapid pace to think about where we were just a month and a half ago and where we are today, and to think that somehow the Iranians have a different interest than we do in preserving life and limb and assets and property, I think, you know, betrays the idea that at some point all the carnage combined doesn't result in a positive outcome for either people. And that's when I think you've got a shot at getting a negotiation that satisfies some. I mean, all the various positions as of 8 o'clock tonight get washed away and we start anew. And the question is, are we starting anew with a ceasefire, or are we starting anew, you know, with a significantly upscaled war tempo?
Well, and yeah, that question is one we're going to have to wait to see answered for another 7 or so hours. But Jeannie, the point Rick was just making on the economic consequences of this, not just here at home in the United States, but globally, the president has repeatedly argued that actually the economic burden that needs to be borne isn't really the United States, because we have our own energy. We can withstand this kind of energy shock coming from the Middle East, that it's really more Asia and Europe, NATO countries specifically, that have to be worried. And we heard him in that press conference yesterday, once again, with some pretty strong language on NATO. He said bye-bye. Jeannie, and I wonder if the kind of geopolitical outcomes of this conflict we have to be considering is not just the fate of Iran and of the Middle East, but of the transatlantic alliance, too.
I think we do. The president has signaled this long before he entered this war, or we entered this war. I think it has gotten worse since we entered. The economic impacts, though, that the president likes to say are not going to be felt here at home are already being felt. Rick just made a really important point. The Strait of Hormuz was open before this war began. There was no threat that it was going to be closed unless we attacked, and we attacked, and now it is closed. That has raised the prices of not just oil, fertilizer, food. The list goes on, and that is all being felt here at home. You know, our goods are transported on trucks that require diesel. Diesel has gone up dramatically. The price of gas, at least yesterday, Kaylee, the last time I checked, was average $4.12. That's up from like $2.90 something about a month ago. So this is because we are in an international market. It doesn't matter how much we produce. Our oil prices and gas prices and the rest of our prices are still going up. So the president can pretend that he can just walk away from this and it will have little impact on us, but that is not true. Likewise, he can talk about moving away from NATO and actually try to do it, which he shouldn't do because Congress has passed a law saying he can't. But if he tries to do that, that's another destructive element of this foreign policy, because the United States needs allies. We don't have allies because we are nice and we like to be benefit other people. It's because it serves our interests, and it long has. And the president walks away from that, and that hurts all of us. So that's the position we're in. And the president continues to say things which have little semblance of reality from any sort of theory of foreign policy we know of.
All right, Jeannie Shanzano and Rick Davis, strong stuff today. We appreciate it. The both of you Bloomberg Politics contributors that will be back with us in the second hour of Balance of Power, which starts just about 5 minutes from now as we get closer and closer to this 8 p.m. Eastern Time deadline set by President Trump. So stay with us right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
A whole civilization will die tonight. Those are the words of President Trump. And I'm Kaylee Lines. This is Balance of Power on Bloomberg TV and radio, coming to you live just 7 hours from the 8 p.m. Eastern Time deadline that the president has set for tonight for either Iran to make a deal with the United States or see the destruction by the U.S. military of its critical civilian infrastructure. And it's very unclear at this time where exactly negotiations, if there are still negotiations to be had, stand. We'll get the latest this hour with Bloomberg Washington correspondent Tyler Kendall, and analysis from Jen Gavito of the Cohen Group, plus our political panel, Rick Davis and Jeannie Shanzana. We'll also be joined by a perspective from Capitol Hill with Democratic Congressman Suhas Subramaniam joining us shortly. But first, we have to check on the markets as well, which are bracing for whatever may come 8 p.m. Eastern. So with a look of where we stand at 1 p.m., here's Amy Morris here in Washington.
You're absolutely right, Kaylee. Stocks are lower. Wall Street is watching what's going to happen next in Iran as we check markets for you all day long here at Bloomberg. S&P 500 down 0.4%. NASDAQ down 0.6%. The Dow down about 0.5%. 10-year Treasury yield at 4.36%. The 2-year yield at 3.86%. WTI is about 2.5% higher at $115 a barrel. Brent crude still holding steady around $110 a barrel. It is little changed on the downside. Bitcoin is down 2.3% at $68,000. And New York Fed President John Williams says his outlook for underlying price pressures in the U.S. is largely unchanged, despite his expectation that higher oil prices stemming from the war in Iran will boost overall inflation. Intel is joining Elon Musk's Terafab project, a chip manufacturing effort for Tesla, SpaceX, and XAI. The project aims to produce a huge amount of computing power each year, and Intel's partnership would help accelerate it. Shares of Intel now nearly 4% higher. Gilead Sciences agreed to buy private German biotech Tubulis in a deal worth up to $5 billion to boost its portfolio in cancer drug development. Shares of Gilead now about 1% lower. And shares of Levi Strauss, little changed ahead of Levi's earnings reports. Those come after the closing bell. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Watching the markets for us as they watch for any development when it comes to the war with Iran and potentially progress toward a ceasefire deal, or at the very least a deal that would reopen the Strait of Hormuz, enough to satisfy President Trump so that he will not order the United States military to target Iranian infrastructure, as he suggested he would in a press conference yesterday.
We're giving them till tomorrow, 8 o'clock Eastern time, and after that, they're going to have no bridges, they're going to have no power plants. Every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business. The entire country could be taken out in one night, and that night might be tomorrow night.
And his language has gone from yesterday saying that the entire country can be taken out in one night to today saying on Truth Social, a whole civilization will die tonight. Going on to say, I don't want that to happen, but it probably will. Just how probable is that outcome? Bloomberg's Tyler Kendall is joining me now in our Washington, D.C. studio. She, of course, is our Washington correspondent. And Tyler, I'm not going to ask you to have the firm answer to that because, frankly, no one knows. Even the White House press secretary said it's only Donald Trump who knows where things stand on Iran. We're kind of operating in the darkness here.
Right, and there's just been so many headlines that have come out in really the last 3 hours that are informing what is our perception of what could potentially happen here. One thing, though, that appears clear is that this White House isn't backing off of its threat of 8 p.m. Eastern tonight as we see this escalation with the president's rhetoric in this post on Truth Social. I think it may be worth recapping some of the reporting, though, that we've gotten recently. It started with the Wall Street Journal saying that in response to President Trump's post on Truth Social, they were cutting off direct talks when it came to the U.S. Then we got this New York Times reporting indicating that even indirect talks were fully off. But then within the last hour, Axios is now reporting that some progress has been made in the past 24 hours. They haven't confirmed that there's been any severing of ties when it comes to Iran speaking with the U.S. But still, their sourcing is saying that it appears like a, quote, long shot that a deal could come together by the president's deadline. And that leaves us a few options on where this could go. As you well know, one means we could see this escalation, which has prompted legal and humanitarian questions in some senses, which experts say will ultimately depend on the size and scope of what actually comes from it. The second is that we could see a ceasefire. President Trump did outline yesterday what needs to be done, most notably the Strait of Hormuz has to happen. And then the third option is maybe we'll get a deferral of the deadline again. President Trump said yesterday that is highly unlikely, but at the same time, he also indicated in this post, quote, who knows what will happen, and said yesterday that he feels like Iran is negotiating in good faith.
Yeah, to your point, this president is no stranger to moving deadlines when it applies to a lot of things, but including this conflict. We've gone from 48 hours, that was 2 weeks ago, to 5 days, then extending it until Monday, April 6th. Now here we are on Tuesday, April 7th. I guess it remains to be seen whether or not this deadline actually sticks. And we don't actually think we'll hear from President Trump publicly today before 8 o'clock, right?
As of now, nothing on the public schedule. We'll be watching for his Truth Social post. We did hear from his vice president, J.D. Vance, speaking earlier today in Hungary, saying that he does feel confident that the U.S. will get some sort of response from Iran, but at this point isn't able to point to what that resolution will look like. As you well know, President Trump said yesterday that Iran's response today is going to dictate whether or not the U.S. is winding down or escalating this conflict. But we've already started to see some of the groundwork being laid today, reporting, of course, that President Trump has been given lists of targets that could meet what you're going to hear a lot of when it comes to questions about targets, this dual use of if a infrastructure target is also used for military purposes like bridges, moving over weapon systems. So that's one part of it, but it's definitely something that is evolving minute by minute.
Well, and as it evolves, we actually are seeing some even Republican voices kind of pushing back on this notion of targeting civilian infrastructure. Yes, it's one thing to have the Marjorie Taylor Greenes of the world. She's no longer in office. She's a little bit more free to speak freely. But when you have like Republican Senator Ron Johnson of Wisconsin saying that he is hoping and praying that the president is just essentially, this is just bluster, that he doesn't want to see the targeting of civilian infrastructure. How should we consider the political pressure from inside even the president's own party, Tyler?
Right. That is a significant development, considering that Ron Johnson is considered to be a strategic ally of President Trump's on Capitol Hill, and really marks the first departure from a high-ranking Republican so far when it comes to what was this latest escalation that we ultimately saw today. There's a few different things that could happen here, of course. We're starting to hear a little bit more pressure from Republicans about the timeline of what the conflict could look like. Now, Ron Johnson was responding to this specific threat, but as we talk about how the Pentagon wants additional funding, we got the president's budget request, $1.5 trillion, which doesn't include what we are expecting to be a $200 billion supplemental funding request to be sent over to Congress once the Department of Homeland Security is reopened. That's where you're starting to hear and see maybe that slight pushback occur, that maybe Congress wants to be able to formally authorize military action before they would pair that with an additional appropriations process. And I think that's going to be what to watch for next.
Of course, they're not even here for another week. They're still on recess until the 14th. Bloomberg's Tyler Kendall, thank you as always for your reporting. And as Tyler told us, we did hear from the Vice President, J.D. Vance, about this earlier today as he was in Hungary on the trail, basically, with Hungarian Prime Minister Viktor Orban. This is what he said, though, about progress when it comes to Iran.
We feel confident that we can get a response, whether it's positive or negative. We're going to get a response from the Iranians by 8 o'clock tonight. I hope they make the right response, because what we really want is we want a world where oil and gas is flowing freely, where people can afford to heat their homes and cool their homes, where people can afford to transport themselves to work. That's not going to happen if the Iranians are engaged in acts of economic terrorism. So they've got to know we've got tools in our toolkit that we so far haven't decided to use. The President of the United States can decide to use them, and he will decide to use them if the Iranians don't change their course of conduct.
So will that decision be made to use the tools at the American military's disposal? Let's turn now to get some analysis or an opinion on that at the very least. Jen Gavito is joining us from the Cohen Group, where she is senior advisor. She's also former acting principal deputy assistant secretary of state for Near Eastern affairs under President Biden. Jen, welcome back to Bloomberg TV and radio. When you see the words of the president written out on Truth Social this morning, the idea that a whole civilization, this is his words, will die tonight, how seriously do you take that threat?
So I think at the end of the day, threats like that are just simply unhelpful.
I certainly hope that the President of the United States, and I don't think he is, threatening, what that statement suggests. I think, it's much more likely that we would see the targeting of the infrastructure targets like has been widely discussed. But these maximalist demands, frankly, from both sides, simply move the parties further and further away from a negotiated solution. And I think what is true today has been true throughout this conflict, and that is that there is no military solution here. If we think that continuing to coerce the Iranians will lead to capitulation, I think we continue to misassess where that regime is. And so deadlines, maximalist demands, I think are fundamentally very unhelpful at this stage.
Well, as you speak of the regime, Jen, obviously that first line of the president's Truth Social post is the one that has captured a lot of attention today. But he also said in that same posting, now that we have complete and total regime change where different, smarter, and less radicalized minds prevail, maybe something revolutionary wonderful can happen. Who knows, he says. Have we seen complete and total regime change?
We absolutely have not. If anything, the new supreme leader and the new leadership of Iran is even more ideological and more hardlined than what we started this conflict with. And so, again, I go back to, I think that the administration is not understanding where the Iranian regime is and its resilience and ability to withstand pressure. This regime is evil. And I think many of us share that opinion with the administration. They are not concerned about the well-being of their citizens. And so if we think that they are going to capitulate based on threats against the Iranian people, I think that's, again, fundamentally a misunderstanding. This regime is ideological, and for it, in this moment, survival is the number one concern, and survival does not come through again, in their eyes, capitulation to U.S. demands. There has to be a negotiated solution, whether that happens in the next 12 hours, the next 24 hours, or in the next 2 months. That is the only way that we see this. But no, regime change has not taken place.
Well, so let's dig in more to the potential negotiated solution. We have gotten, to phrase it delicately, mixed messages. Jen, I also could say that I am just frankly very confused as to what exactly the status is of negotiations, as we're seeing conflicting reports as to whether or not Iran's even still at the proverbial negotiating table, or at the very least participating in these messages being back and forth. You have the New York Times reporting suggesting that is not the case, that they have walked away. At the very same time, the likes of Axios are saying some progress has been made in the last 24 hours. Typically, with your experience in diplomacy, when things are so hard to understand where exactly we stand, does that actually mean progress is being made, or is that an indication of the absence of that?
So that's a great question, and my suspicion is that actually progress is being made. That may be overly optimistic, but I think that what we are seeing is indication that there is some movement between the two sides. You talk about the proverbial negotiating table. I do not think there is a table that they are sitting at. This is primarily messages being passed back and forth. But I do think what we are seeing is the beginning stage of discussions that will eventually form the foundation to end this conflict. Again, though, at the moment, I think both parties have very maximalist demands. And so those two things can be true at the same time. There can be a willingness to talk or to consider positions and even to compromise eventually. But that compromise may not be enough in the short term.
Well, and we're talking about this, Jen, as if there really are just two sides here. But Israel has been a factor this entire time. It has been Israel and the United States acting in tandem, a joint effort when it comes to the attacks on Iran. Do they really have any role to play in diplomacy here? Does it matter what Israel would like to see if Israel has maximalist demands of its own?
So I think the role that Israel has to play here is one of a spoiler. Certainly, as we've been talking about since before the conflict began, this for Prime Minister Netanyahu is a fight that he has been wanting to wage for 2 decades. And the Israeli government's objective in this will be to eliminate the ability of Iran to strike out against Israel. And if this conflict ends today, presumably by some agreement, and today, tomorrow, whatever the time frame is, but presumably by some agreement to get the Strait of Hormuz open. And I think it must be said that a month ago, when this conflict began, the Strait of Hormuz was also open then. But that seems to be one of the key objectives of the administration now. So if the negotiated solution is that the Strait of Hormuz is open and global commerce can get back to normal, and Iran has some assurance that this fight will not be taken to them again, that leaves big questions about the nuclear program in particular. Specifically because we go back to this regime has not changed. And in fact, coming out of this conflict, it is my expectation that the new leadership of Iran will feel more motivated than they ever have before to pursue nuclear weapons. And so if that highly enriched uranium remains inside of Iran's borders and is not addressed through some negotiated solution, then for Israel, that is going to be a very problematic outcome. And so, we could see a scenario, and I think the Iranians will look at Gaza as an example on this. We could see a scenario in which the United States tries to find that off-ramp and comes to some agreement. But for Israel, that doesn't necessarily mean that they stop trying to provoke further, either executing or trying to provoke further conflict.
Well, your point on the nuclear program, Jen, is really important. Are you effectively saying that the U.S. cannot both simultaneously say it has guaranteed Iran will never have a nuclear weapon and guarantee to Iran it will never attack again, at least so long as that enriched uranium remains in Iran's hands?
Yeah, so I go back to the timelines that we're talking about today. 8 o'clock tonight, perhaps, the president agreeing to extend it again in order to allow for the negotiations. If there is going to be a negotiated solution to this conflict, and again, eventually that's what it has to be. There is no military solution here. If there is to be a negotiated solution to this conflict, those macro questions are going to have to come into play. What are you going to do about the highly enriched uranium? What are you going to do about the knowledge that has been gained by the regime in the long term? And I think to address some of those questions, there are going to have to be compromises on the side of the United States as well. What are they willing to offer Iran in exchange for that, potentially in the way of, for example, sanctions relief? And so, if we do see a deal in the near term, again, whether that is today, tomorrow, sometime next week, those questions are not going to be resolved, making it very, very likely that there is a return to conflict, proverbial mowing of the grass, as many would call it, before too long. Something, again, we can't forget that we did this just last June. And so I do think that finding the space for a real diplomatic solution that addresses the wide range of legitimate concerns of the United States, of Israel, but also of Iran, is absolutely essential to a lasting peace.
But Jen, and we just have 30 seconds left here, you don't think a solution that would require that much work can realistically be reached and finalized by 8 p.m. tonight?
Absolutely not. And that's where, again, these deadlines that the president continues to throw out are, at the end of the day, I think, counterproductive.
Well, and they may not stick, or this one may not. It's been moved 3 times. Could he move it a fourth before 8 p.m.? We'll stay tuned to find out. Jen, thank you so much for joining us here on Balance of Power. Jen Gavito, former diplomat in the Biden administration, now senior advisor at the Cohen Group, here with us on Bloomberg TV and radio. And we'll have more analysis coming up with our political panel. So stay with us right here on Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. Stocks paired losses. Oil's now moving away from session highs as traders are weighing prospects for Iran to negotiate a deal to end the war. We check markets for you all day long here at Bloomberg. S&P 500 down 0.5%, NASDAQ down 0.7%, the Dow down about 0.5%, the 10-year Treasury yield at 4.36%, the 2-year yield at 3.85%. WTI is up about 2.7%, that's around $115 a barrel. Brent crude around $110 a barrel, up about 0.9%. Bitcoin is down 2.3% at $68,000. Sources tell Bloomberg that Apple's first foldable iPhone is on track to arrive during the company's normal iPhone launch period later this year. They say the company is scheduled to introduce the foldable model in September alongside the iPhone 18 Pro and Pro Max. The product's price is expected to cross the $2,000 threshold. Shares of Apple about 3% lower. Old Navy will reportedly launch a new format focused on athleisure called Old Navy Sport later this year. Old Navy owner Gap shares are about 2% lower. Delta Airlines will increase charges for checked bags by between $10 and $50 apiece as surging jet fuel prices prompt carriers to ramp up their fees and ticket prices. Delta following rivals United Airlines and JetBlue, which raised bag fees earlier this month. Delta shares about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Bag fees going up along with the price of oil and a gallon of gas here at home. The AAA average now at $4.14 a gallon on average across the country. Speaks to the economic consequences already of the war with Iran. And we're all facing the question today as to whether or not that war is poised to escalate even further as we approach rapidly an 8 p.m. deadline tonight set by President Trump for Iran to either make a deal and reopen the Strait of Hormuz or to face the destruction of its critical civilian infrastructure. And of course, the president has taken to True Social this morning. You've heard me say it multiple times here on Balance of Power already today. He said, and I quote, "A whole civilization will die tonight, never to be brought back again." The question is to what extent we take his words literally and whether or not he is actually serious about this threat, or we could see this deadline move once more. Whatever you're reading of it, it certainly has sparked reaction on both sides of the aisle. Perhaps not surprisingly, you are getting strong responses from Democrats, dozens of whom have now called for the invocation of the 25th Amendment over this post and this language from the president. But it's not just Democrats as well. A former ally of President Trump, former Congresswoman Marjorie Taylor Greene, has also taken to Twitter today to talk about invoking the 25th Amendment over this threat from the president. And even elected Republicans like Senator Ron Johnson of Wisconsin are now pushing back on the language. He said in a podcast that he's hoping and praying that Trump's statement are bluster. He says, and I quote, "I do not want to see us start blowing up civilian infrastructure. I don't want to see that. We are not at war with the Iranian people. We are trying to liberate them." The question is, could other voices of Republican senators or Republican representatives join Senator Johnson? And to that point, we turn now to our political panel. Republican strategist and Stone Court Capital partner and Bloomberg Politics contributor Rick Davis is with us alongside Jeannie Shanzano, Democratic analyst, also a politics contributor for us here at Bloomberg, and democracy visiting fellow at the Harvard Kennedy School's Ash Center. Jeannie, when we consider the words of Ron Johnson, that is the one that at least made me widen my eyes the most today. The others who have been critical of this language from President Trump are really not coming from surprising corners. But if you have one Republican senator, are you about to have many who are echoing that same kind of sentiment?
I hope so. You know, since they're on vacation, or I shouldn't say vacation, since they're out of Washington, it's harder. They're not being sort of pinned down, as you will, by the press who would be able to ask them their response. So I think they're all grateful they're not in D.C. today. But I do think this rhetoric is so over the top that I hope a dam has broken and that Ron Johnson is leading the way. Because I think beyond the question of whether we take them literally or whether this is bluster, is this who we are as Americans, that the U.S. president is getting up the morning after Easter Monday and saying he is going to destroy an entire civilization? That is a threat of genocide, and that is not who we should be as Americans. By the way, Kaylee, on the 250th anniversary of the United States. So I hope that many other Republicans and Democrats and all Americans join in condemning this kind of rhetoric.
Rick, do you anticipate a breaking of the dam, as Jeannie phrased it here?
You know, it's hard to see a dam breaking, but I think on the edges of the party, there's a lot of discontent on this. Other members like Senator Tillis, who has been a critic of the president and is not running for re-election, you know, has been talking about the lack of direction, objectives, and discipline of this war effort. So, yeah, and you have to point out Tucker Carlson, who has millions of followers, has unleashed a real big pushback against Donald Trump's language, exactly what you were describing. So it's coming from a lot of different quarters. But when you look at the survey data, the people who are supporting Donald Trump in this war effort, regardless of what he says every day, are the base of his supporters. When you look at the GOP, still getting 90% of support of those voters, behind him. So you don't see the cracks in any political point of view, but certainly from the leadership of his party and others, there are people who are looking for a safer place to occupy. Look, the hot rhetoric is a brand of Donald Trump's. He says the most outrageous things, and it is for effect. And we can be concerned about the things he says, because sometimes it is followed up by action, but many times it's not. And so we hope in this case that it's not a literal translation of what the president's saying, and maybe it's a negotiating tactic, but we'll not know. And it is abhorrent kind of language. It shouldn't be used by a president of the United States. So that's a place we can be and be confident that we're more right than wrong. But look, I mean, right now the party's holding with him. But when you look at independent voters, they've bailed, right? They don't like this war. They don't like his conduct. And, by the most significant number I've ever seen, independent voters are saying, don't count on us to be supporters of Donald Trump.
All right, Rick Davis and Jeannie Shanzano, our political panel and Bloomberg Politics contributors, thank you so much. And Rick, ending on the point that a lot of this is going to come down to how voters interpret the words and decision-making of this president, as there could be political consequences to this war with Iran, as there could be economic consequences. We already are seeing them in the translation of high gas prices, even higher bag fees as airlines try to offset some of the higher fuel costs that they are facing. It all could be a factor as we head into the midterm elections in November. Of course, that's still 7 months away. A lot could change between now and then, and there's a lot more time still between now and the 2028 general election, when we'll be electing a new president. But that hasn't stopped 28 contenders or potential contenders from weighing in on this conflict, like California Governor Gavin Newsom, for example, who has been quite prolific on social media, calling the war with Iran an illegal one and highlighting the economic consequences of it. And it's the economic consequences in Newsom's home state of California I would like to spend a moment on. As we talk about high gas prices across the country, the average right now in California, according to AAA, is $5.93 a gallon. Incredible numbers that we're considering. But considering the California economy overall, the picture may actually look pretty good. That's the subject of a new Bloomberg opinion column written by Bloomberg editor-in-chief emeritus Matt Winkler, who is joining me now. Matt, you actually had the chance to speak with Governor Newsom, and thanks for joining us to talk about your conversation. You write in this piece, of all the prevailing media narratives around Gavin Newsom, the one that is most conspicuous by its absence is how under its two-term governor, California became the top-performing economy, not just among its 49 siblings, but also any developed nation. Walk us through the figures you're looking at.
You bet. Starts with gross domestic product. Since he took office in 2019, GDP surged 40% to more than $4 trillion. That accounts for more than 14%, by the way, of U.S. output. And the second largest economy, China, by comparison, expanded 32%, Germany 16%, according to data compiled by Bloomberg. So anywhere you look in the developed world, really anywhere in the world, California, measured just by GDP, is the outstanding performer. But it gets even more overwhelming after that. Within the U.S., you can see, based on the so-called Philadelphia Fed indices, that California overtook the U.S. in terms of growth, but overall performance of the economy, because the Philly Fed data measures not just GDP output, but it measures a whole bunch of things and also takes into account inflation and employment and all the things that we look at. When you look at the relative value of California in the equity market worldwide, technology stands out. It's the best performer in global equity, and as the best performer, California dominates technology with returns that are just stunning, 600% in the period. And when you look at healthcare, again, the industry's contribution to California GDP increased 52% since 2019, and that includes 25 last year, a year when President Trump and the congressional Republicans enacted major cuts to Medicaid and reduced the Affordable Care Act premium tax credits, which is estimated to put 15 million people losing their health coverage. And that's not an accident. California's uninsured rate declined to a record low 6.4% in 23, and that's the largest drop in the U.S. from more than 17% a decade ago. It was helped by legislation that Newsom had something to do with, called Covered California and Medi-Cal. Then you look at venture capital. The prevailing narrative has been that people are leaving California, that the high taxes, the regulation have made, if you like, capitalism go elsewhere. Actually, the opposite is true. California startups raised 62% of all venture capital dollars in 2025. And if you looked at, the VC business itself, California continues to dominate. The next closest states would be New York, Massachusetts, and Texas. And California is way up there, 31, 32%, and they're below 6%. So the bottom line is just California is overwhelming. But it's every market you look at. I could go on, but just every metric see on the Bloomberg.
I wish we had time, Matt, for every metric, and we'll have our listeners and viewers check out the Bloomberg terminal to see for themselves. But in our final moment here, how much could a Governor Newsom in California apply this nationwide if he wants to be a President Newsom? How easy is that translation?
Well, actually, again, the media missed it. Biden was the most progressive president in terms of what government did for people. Whether it's creating jobs in Georgia that never existed before, manufacturing, raising semiconductor salaries in Arizona. That was all done through legislation. The unemployment rate in Scranton, Pennsylvania, record low in 24 of 3%. Biden did that, and Newsom was his biggest supporter.
All right, we'll leave it on that note. Matt Winkler, Bloomberg Editor-in-Chief Emeritus, thank you so much. And you can find Matt's column, Who Knew Newsom Was Such an Economic Maestro, on the terminal and online. We'll be back with more Balance of Power next on Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. Wall Street weighing odds of a deal with Iran. Stocks now paring back their losses. We do check markets for you all day long here at Bloomberg. Yes, we are still in the red, just not quite as red. The S&P 500 down 0.25%. NASDAQ down 0.4%. The Dow down 0.3%. The 10-year Treasury yield at 4.34% and the 2-year yield at 3.84%. WTI now 1.7% higher, around $114 per barrel. And Brent crude holding steady at $110 per barrel. That's about 0.25% higher. Bitcoin is down 1.6%, around $68,000. And the Bloomberg Dollar Spot Index is 0.2% lower. And Anthropic says its revenue run date has now topped $30 billion. That's up from $9 billion at the end of 2025, tripling in just 4 months. The AI startup said demand for its cloud services accelerated this year, with more than 1,000 business customers spending more than $1 million a year. That figure has more than doubled since February. Billionaire activist Bill Ackman has proposed a bid for Universal Music Group to increase returns on one of his hedge fund's biggest holdings. UMG is the world's largest music company, with Taylor Swift, Drake, and Sabrina as part of their company. UMG shares jumping 11%. That's the most in more than 3 years. Intel joining Elon Musk's TerraFab project, a chip manufacturing effort for Tesla, SpaceX, and XAI. TerraFab aims to produce a huge amount of computing power each year. Intel's partnership would help accelerate this. Shares of Intel now more than 3.5% higher. And Bill Gates will reportedly appear before the House Oversight Committee this summer. Punchbowl reporting Gates will sit down for a transcribed interview about Jeffrey Epstein on June 10th. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. And thank you all for being here with us on Bloomberg TV and radio on this Tuesday edition of Balance of Power, which also happens to be a deadline day edition, as it is 8 p.m. Eastern time tonight that President Trump has said is the deadline for Iran to either reach a diplomatic negotiated agreement with the United States to reopen the Strait of Hormuz and get to a ceasefire in this conflict, or to see the U.S. military targeting critical civilian infrastructure like power plants, for example, if no deal is reached. And it's anyone's guess, frankly, at this point, as to whether or not he is going to go forward with that plan, if a deal will be reached, or if we could see once again a punting of the deadline to another day. And the president himself admitted yesterday in a briefing with reporters that he isn't sure what happens next.
And we've heard a range of those kind of messages. So which is it? Are you winding this down, or are you escalating it?
I can't tell you. I don't know. I can't tell you. Depends what they do. This is a critical period. They have a period of, well, till tomorrow at 8 o'clock.
So let's see where things stand as of 1:43 p.m. as we turn to Ian Marlowe, who is a national security editor for us here at Bloomberg and is with me in our Washington, D.C. studio. So, Ian, I've seen some mixed reporting from various outlets. What is the latest that Bloomberg knows at this point as to whether or not there is still diplomacy or diplomatic efforts happening and whether or not they are progressing?
Yeah, I think it's a little bit of maximum threats talks going well, the same kind of messaging that we've heard for a while now, and it's interesting because the threats keep getting more serious. You know, we have a lot of people now just openly musing about whether the U.S. president is openly pledging to commit war crimes after the 8 p.m. deadline with attacks on civilian infrastructure. And the threats, the attacks keep getting more severe. And yet Iran is refusing to bend here. You do have a fairly hardline regime, has seen a lot of its top leaders assassinated and bombed as part of this conflict. And I'm not 100% sure that threats of taking out bridges and other things like power plants is the thing to, finally do this. So it'll be interesting to see exactly what things kind of, if we have an accelerated set of negotiations leading up to the deadline tonight. But so far, there's been lots of mixed reporting, but we haven't heard much about serious talks or getting close to a deal and then, just finagling the details. It really does seem that we're at, two very polar opposite extremes here.
Well, and so that raises the question of how much room there is in the gray area, Ian. If it would be enough simply for there to be a step forward made, enough that President Trump decides, okay, I will push this deadline once again, having already done so 3 times, from 48 hours to 5 days to April 6th to now today. Yeah, exactly. I mean, we could definitely see another 2-week, time frame. His famous phrase for things he likes to kick down the road. It's really unclear at the moment what we're going to see. There's any number of things where he could say, okay, Iran promised to let a few ships through, or they promised to, they're showing progress here. There's any number of things that Trump could say publicly that would allow him to let the deadline slip once again. It's clear that since this conflict started, when the U.S. and Israel opened this war, there's been a lot of American munitions dropped on Iran, a lot of targets destroyed. The Pentagon keeps telling us, thousands and thousands. And yet the regime is still not bending. And over the weekend, we did see the U.S. warplane shot down. So this is not a risk-free enterprise. And I think up until now, the president and his military advisors have pursued what seem to be risk-free options, a very, quick raid into Venezuela, bombing places like Nigeria or Syria, places that can't really shoot back in some ways. And now we're in a really protracted situation that it's very clear Trump wants to end. It's not very often you have, the world's mightiest military sort of repeatedly asking over and over again for a country to agree to sort of end the war. I mean, it's not generally how wars are fought. You make them surrender by militarily defeating them, and we're not seeing that right now. So we're seeing this kind of strange asymmetric fight between Iran and the U.S., and it all comes back to Hormuz and this extremely valuable waterway. And to be honest, Iran is closing it with threats. They're saying they'll hit these ships. They've hit a few ships in the region and a lot of energy facilities. But it's really that risk factor that is closing the strait and driving the U.S. response. And Iran, in many ways, even though they've been pummeled, they've seen their leaders killed, it's hard not to see them having a little bit of the upper hand here in the sense of they're sitting back, closing Hormuz, and saying to the U.S., ball's in your court. All right, Ian Marlowe, national security editor for us here at Bloomberg. Thank you so much. And as Ian speaks of the threats from Iran when it comes to the Strait of Hormuz, of course, as we've been discussing today, President Trump is making threats of his own on Truth Social ahead of this 8 p.m. deadline, writing, "A whole civilization will die tonight, never to be brought back again." He says, "I don't want that to happen, but it probably will." And this language is now calling for dozens of elected Democrats in both the House and the Senate to call for the 25th Amendment to be invoked. And we're joined by a Democratic representative now. Congressman Suhas Subramaniam, representing Virginia's 10th District, is here with us on Bloomberg TV and radio. Congressman, I appreciate your time. Would you join your colleagues in making this call for the 25th Amendment?
Yeah, I mean, the president right now is showing that he's not fit to serve in this at this level. I mean, what you want from a president right now is someone who will show steady leadership during a time of war, that they will be reasoned in their actions, that they will work collaboratively with Congress to make sure that our troops are safe. And instead, what you have is a president who's throwing out outrageous threats, threatening war crimes, and legislating by Truth Social. And it is frightening people. I mean, I have so many people calling my office today just frightened that World War III is about to begin. And so this is not the type of leadership we need right now. The 25th Amendment needs to be instigated by the cabinet. But in the end, I mean, the president right now is just showing us that, he is not the right person to be leading our country right now.
Well, and as you speak of war crimes, we should note that you're ranking member on the Oversight Subcommittee on Military and Foreign Affairs. If the president were to actually follow through with what he's threatened, would you demand a congressional investigation into that?
Absolutely. Absolutely. He absolutely needs to be investigated. The decision makers and the people who executed it, everyone needs to be investigated if they target civilians. Remember, we still haven't gotten any real proof that there was an imminent threat to our country. So this was a war of choice. And it's one thing to hit military targets and try to weaken their ballistic missile program or their nuclear program. It's another thing to deliberately hit civilians and civilian targets and say that and project that to the world. We lose our leadership in the world stage. We lose our moral high ground in the world stage. We're already losing on a lot of those things. And the president, by saying these things, is just showing, again, that he's not fit to be leading us right now.
Well, of course, the president just last week requested of you and your colleagues approval of a $1.5 trillion defense budget. And that's before he even makes, and the Pentagon formally makes a supplemental funding request of some $200 billion, as we expect. Congressman, I wonder if you see this fight potentially over that supplemental funding in particular as being the best avenue if there is to be congressional pushback to the president's efforts, because we all know the way that war powers resolutions votes have gone down thus far, but could supplemental funding be a different story?
First, I would say if we had another war powers resolution, I would expect some Republicans in the House to join us, and for it to at least pass the House. The president may be able to veto it and stop it, but I think it's important to show that the House, including some Republicans, do not approve of this war at this point. Second is the president said that this war would only last 4 to 6 weeks, and that we were already successful. It's already mission accomplished. So why does he need hundreds of billions of dollars more, trillions of dollars more? And in order to pay for this war, he wants to essentially steal the American people's health care, education, child care, all these programs that help Americans and put America first. Instead, what he's doing is he's doing exactly what he said he wouldn't do the last several years, which is start another war and pay for it by taking from the American people. And so he will not get a dime from me, and I'm sure many of my colleagues would join me in that.
Well, I guess we'll have to see when a vote on any kind of supplemental funding or another war powers resolution will reach the floor, as you and your colleagues do still remain in recess for the next week. And I wonder, too, Congressman, what you're expecting upon return from recess when it comes to funding for the Department of Homeland Security, ICE and CBP. Is it your expectation that you will get the chance immediately to vote on the Senate-passed bill, as we're seeing reports that the Speaker of the House, Mike Johnson, wants to see more progress on reconciliation that would fund the other parts, CBP and ICE specifically first? What is your anticipation? What are you hearing from your leadership?
Well, we should have voted on the Senate plan last week, and even the administration now is getting behind it. And so they should call us in today. We should vote on it today, and we will end the shutdown today if Mike Johnson chooses to do so. But House Republicans are the only things standing in the way of ending this DHS shutdown. What I expect to happen is we will come back next week, and we may need to take another week or two to figure out what House Republicans want to do to please the most extreme people in their caucus and get some funding that they apparently need for ICE, even though it has billions of dollars already, $43 billion. It's already funded for 8 years now, right? So it is really unfortunate that House Republicans have put us in this situation, but this should be over by now, and I hope it's over by next week.
But if and when it ends, when it is finally over, Congressman, have Democrats lost their opportunity to exercise any leverage over actually getting reforms to ICE and CBP?
Well, if they put ICE funding through the reconciliation process where they don't need 60 votes in the Senate, they are establishing a new precedent for putting funding bills through this reconciliation process, the budget bills through the reconciliation process in a way that is unprecedented. And so I would love to see them come together with us and be collaborative. I believe that there are Republicans who believe in civil liberties and want reforms to ICE and don't want American citizens shot. But if that's not the case and they do go that route, they're creating a new precedent.
All right, Congressman, we appreciate you joining us. Democratic Congressman Suhas Subramanian, representing Virginia's 10th District, here with us on Bloomberg TV and radio, giving us a view from Capitol Hill on not just funding for the Department of Homeland Security, but of course the threats from President Trump on Iranian infrastructure, civilian infrastructure at that, if no deal is reached by 8 p.m. Eastern time tonight. You just heard from the congressman who's the ranking member on the Oversight Subcommittee on Military and Foreign Affairs that he believes that would constitute a war crime. President Trump told reporters yesterday he's not worried about that. And of course, we still have a question as to whether or not he will follow through at all, or if this 8 p.m. deadline can move again if there's progress in negotiations, which right now remains very unclear. So that's where we stand at nearly 2 p.m. Eastern time. I'll see you back at 5 p.m. Eastern time with the latest on Balance of Power right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. We are across Bloomberg platforms, radio, TV, YouTube, and Bloomberg Originals. Well, we've got another deadline. As you know, we've been reporting this out throughout the day already, counting down when it comes to the U.S. war on Iran. And this is after President Trump renewed threats about attacks earlier. We'll get into that in just a moment. We've also got a market, Tim, it feels like, where investors are unsure about what happens next and kind of when it happens.
Yeah, I mean, I wouldn't say like searching for direction, but there's really not a lot of conviction with today's trade, at least on the equity side of things. We're down 0.3% on the S&P 500. To me, that doesn't indicate, and we're going to talk about this throughout the program, a big escalation. At least that's what the market's thinking.
Yeah, exactly. And almost an even split when you look at the S&P. A little bit more risk off. Almost 300 names in the S&P 500 are lower today. You mentioned crude, Tim. We're talking about, what, 113, almost 114 a barrel, just below it. We've been above 117, so we've definitely come off our highs of the session. And we just continue to follow, you know, the headlines that we get from the White House and really out of the Middle East about where this war goes next.
We're going to have much more on the trade in just a minute, but also an update on where exactly we are on the war, for better or for worse. Jenny Welch is going to join us in just a minute with 8 scenarios that she lays out about what could happen. The base case, a little concerning, I think, for a lot of people.
8 scenarios. All right. Also, Jim Caron, CIO of Morgan Stanley Investment Management Portfolio Solutions Group, is going to be with us right here in studio on the macro, and also being overweight the U.S. over Europe. Still, that is his position, and we're going to talk a lot more about kind of the investment environment. So much to get into with him.
Including private credit a little later in the program. We got a lot of private credit coming up on the program today. We're going to speak with Michael Gross, co-founder of SLR Capital Partners. He was one of the co-founders of Apollo, along with Leon Black and some others. We're going to get an update on private credit from him in just a minute.
And then we're going to talk AI. Remember when that was the only thing we seemed to talk about? TIAA's chief operating, I wanted to say TIAA Craft because it was that for so long, but it hasn't
like 100 years.
It hasn't been for a long time, too. The chief operating information and digital officer over at TIAA is going to be with us. And we're going to talk about AI, how they're using it when it comes to finance. And Tim, something you brought up, this is a guest you brought to the table, and that is about AI and are we using it in the right way? It's something you and I talk about a lot.
Also try to figure out, for my own selfish purposes, like, what should we be doing here?
Could AI just write the script for us in
still trying
30 minutes, perhaps?
I haven't been able to figure out how to do that. You know, somebody who has not yet been replaced by AI will never be replaced by AI. It's impossible. It's Amy Morris. She's standing by in the Bloomberg Business Week studio. She's in for Charlie Pellet. Hey, Amy.
Hey, Tim. Thanks so much. Stocks paired losses. Oil now moving away from session highs. We check markets for you all day long. Here at Bloomberg, the S&P 500 down 0.3%. NASDAQ down about 0.5%. And the Dow down 0.4%. 10-year Treasury yield at 4.34%. The 2-year yield at 3.84%. WTI, it's up, actually, up 1%, around $113 per barrel. And Brent crude is up 0.2%, right around $110 per barrel. Bitcoin is down 1.5% at $68,000. New York Fed President John Williams says his outlook for underlying price pressures in the U.S. is largely unchanged, despite his expectation that higher oil prices stemming from the war in Iran will boost overall inflation, telling Bloomberg TV that core inflation, that leaves out food and energy prices, should come down by the end of the year, and that monetary policy is right where it should be. Intel joining Elon Musk's Terafab project, a chip manufacturing effort for Tesla, SpaceX, and XAI. Terafab aims to produce a huge amount of computing power each year. Intel's partnership would help accelerate it, and shares of Intel now 3% higher. Gilead Sciences agreed to buy private German biotech Tubulis in a deal worth up to $5 billion to boost its portfolio in cancer drug development. Shares of Gilead down less than 1%, and shares of Levi Strauss are more than 1% higher ahead of Levi's earnings reports after the closing bell. And a reminder that tomorrow you can tune in to Bloomberg Business Week Daily to hear from Levi CEO Michelle Gass. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovet.
All right, got it, Amy. Thank you so much. Well, stocks pairing losses, oil moving away from session highs as traders weighed prospects for Iran to negotiate a deal to end the war. With President Donald Trump's deadline approaching, we've talked about this a lot, Tim.
Yeah, things looked a little bleaker this morning. President Trump took to social media at just after 8 a.m. Eastern time. Here's what he wrote, quote, A whole civilization will die tonight, never to be brought back again. I don't want that to happen, but it probably will. However, now that we have complete and total regime change, where different, smarter, and less radicalized minds prevail, maybe something revolutionarily wonderful can happen. Who knows? We will find out tonight, one of the most important moments in the long and complex history of the world.
Which maybe explains in a big way the trade. We're going to get into that in just a moment. But first up, let's get an update on the president's deadline and the latest from the White House. Back with us is Bloomberg Economics Chief Geoeconomics Analyst Jennifer Welch. She is in the Bloomberg Washington, D.C. Bureau. Jenny, we lean on you a lot. We are still counting down to this 8 p.m. deadline, correct?
Yeah, we are still in a countdown, and even though there are conflicting reports right now about whether or not negotiations are still proceeding and whether or not Trump might be contemplating punting that deadline even further, I think all eyes are still expecting that we're likely to hear further from the president before we can officially call this.
You and the team have a great piece out, along with Becca Wasser, Jenny, about really the different options that are out there. Can you just give us your base case about what could actually happen?
Sure. So the 4 categories of options for what might happen this evening could include, first, that the two sides do end up reaching a ceasefire, or maybe just a partial ceasefire, or something that essentially is enough pretext to delay an attack. We see that as increasingly unlikely. It was always going to be a challenge, but especially given this tight timeline and now reports that Iran isn't even talking to the United States anymore, we think it's even less likely. That leads to a second category of options, which would be for President Trump to punt the deadline further. He's already delayed it twice. It's a self-imposed deadline. He has the ability to delay it further. And obviously, it's something that he is known to have done in the past, although we see that as possibly less likely because he's backed himself into a corner so much around not just this particular day, but a specific time. And the more he punts, the lower his credibility becomes. That leads to a third category of options, which are airstrikes. And there's sort of a spectrum of options. Trump could, for example, fully attempt to follow through on his threat of obliteration, massive airstrikes on not just Iranian military targets, but he's also threatened civilian infrastructure. Or he could choose to engage in more limited strikes, so following through on his threat, but with sort of an off-ramp in place. And then the final category of options would be another major U.S. military operation. That could look something like an attack on Kharg Island, Iran's major export hub, or along its coastline. We see that as relatively unlikely, just given the risk to U.S. forces that those operations would pose, but probably something that is still on the table at some point for President Trump.
Jen, just to wrap up, we've had folks come into this studio around the table and say this could go on until the end of June. I'm just curious what you're hearing at this point, especially as we try to assess the impact, U.S. economy, global economy, and on global markets.
Our base case is that we're likely to see a near-term escalation, including starting possibly tonight, and that the conflict will then dip into what we call a lower intensity or a protracted conflict, that it won't be resolved anytime soon, and these disruptions, particularly in the Strait of Hormuz, might be with us for some time.
Okay, that's our reality and that's our life. Of course, though, we'll continue to track all of the headlines, and we know we'll be checking in with you. Jenny Welch, she's Bloomberg Economics Chief Geoeconomics Analyst, joining us from the Bloomberg D.C. Washington News Bureau.
You promised we get to financial markets, Carol. We always do, and that's where we are going right now. As we mentioned, stocks lower, oil higher, concern that the war in the Middle East is intensifying. Ahead of this deadline at 8 p.m. for Iran to agree to a ceasefire, and as Jenny mentioned, reopening that crucial Strait of Hormuz.
Let's get to it. Jim Caron's in the house, Chief Investment Officer of Portfolio Solutions over at Morgan Stanley Investment Management, their Portfolio Solutions Group, and he joins us, as we said, in studio. Welcome.
Good afternoon.
We kidded when you walked in. It's a shame there's nothing going on. Jenny just laid out a lot of different scenarios. How are you guys thinking about it in your group?
Look, I mean, the first thing that we're doing is taking a healthy dose of reality and recognize that we're managing a lot of noise right now. So we're jumping headline to headline. This person's having a conversation with this person, and that person denies it. It's very, very noisy. So what we're trying to do is take a step back and look at trying to look at what some of the fundamentals are. The first place that we start is the initial conditions in the markets going into this war, which is that, the economy was relatively strong, a lot of fiscal stimulus, inflation was on the way down. The fiscal stimulus has put a lot of money in consumers' pockets just due to tax refunds. that means that the consumer can probably absorb some of the shock of higher energy prices for the near term. The question that you asked, Jenny, and the right question is, so how long does this last, right? What's the duration? What's the tipping point where this becomes something worse? We don't know what the answer to that is, but I do believe, though, that we are in a period here of negotiated escalation where there's going to likely be an escalation before we get to what Trump highlighted as a deadline somewhere between April 11th and April 18th. And there'll be a campaign of maximum pressure until, hopefully, a deal comes to the table. Now, what I think Iran believes and what the U.S. believes is that the longer we wait, the better deal that we're going to get. There's going to be a breaking point someplace. I don't think that's today, so I would fully expect there to be an amplification of some of the bombings and everything else that may go on. But the escalation is part of the negotiated endgame settlement process. So I think the markets are seeing this escalation, the exact same way that Jenny laid it out, is part of the endgame settlement process.
A lot to go with here. I want to start with what markets you think are pricing in right now, because if the president is correct in saying that at 8 p.m. tonight is the final deadline, and the U.S. could attack civilian infrastructure and essentially put Iran back to the Stone Age, as he's threatened in recent days, it doesn't seem like that the market is taking that threat seriously. Is that fair? So the market pricing is, if you think of this as like a distribution, like a normal distribution, there's definitely a left tail where things can go really, really badly, and the markets may not be fully accounting for that. However, there's also a right tail where things could go a lot better and oil prices could come down, and then we could resume those initial conditions. What the market does is it finds the midpoint. So what we're really saying is that, yes, things could get materially worse, but there's also another tail out there where things could get a little bit better. So it's a good question that you're asking. Does the market fully anticipate this? On a probability distribution, on a weighted probability distribution, depending on how you think of these events and how much you weigh these events, yes, it is. It just means that the tails are pretty far. What that also tells me is that there could be a lot more volatility, because depending on which way it goes, it could be volatility to the downside, it could be volatility to the upside. So that's what the markets are effectively pricing in right now.
What's the longer term impact of all of this? And I guess I keep thinking about increased defense spending around the world. So then what isn't there money for? Or there's growing deficits, Jim. I also think about every nation seems to be thinking about their national security and whether that means water, energy, technology. And there's a cost of doing this on our home front. Yeah. What's the cost of that, and what's the impact of that?
So that's a great question, and this is exactly what our team is trying to think through, is the second and third order effects. The first order effect is oil prices are high, and that hurts the consumer. Second, third, fourth order effects go much further down the line. So the cost ultimately is, it's not obviously just in the U.S., it's also in Europe as well. It's raw materials, it's agriculture, it's fertilizer, it's food, it's PVC pipes, it's all these shortages. I mean, I just saw today that used car prices are going back up again, and they've reached highest levels since 2023, like during the COVID pandemic, right? Because of chips and all of these various things. So when we're
going to have a conversation later about inflation, and they're saying it's more like 2022 versus some other inflation spikes.
Yeah, anyway. No, that's exactly right. So the way that we're thinking through this as an investment team, because that's what we're qualified to do, is we're starting to find out and trying to identify where those choke points might actually be that could have a positive impact on asset prices, and also where there could be a negative impact on asset prices. What does it do to the consumer? The consumer gets hurt. So if you had an expectation for GDP to grow at, say, 2.5% this year, it's got to be a lower number than that. How much lower? How much damage have we incurred, and what's the cost of that repair, and can it be repaired and over what time frame? What the markets are saying is that it's going to be tough in 2026, but if you look at the forward earnings forecasts going into 2027, they're still high. Analysts are always high. They will come down. Right. But does it come down to the point where earnings growth rates go to the low single digits, or do we stay around low double digits, like 8, 9, 10, 11, 12%?
We don't know yet, though, do we?
We don't fully know yet, but what the market's trying to discount is it probably stays somewhere around like 10, 11% on average. Could be wrong.
Yeah.
But so far, we're going to get first quarter data, for earnings coming up. It's not, the month of March was bad, but, January and February were good.
Right.
So it's going to be a mixed message right now.
Yeah, JP Morgan, 1 week from today, we'll hear from JP Morgan. And then the other banks as well. Hey, okay, so in the context of politics, because everything you're saying right now about affordability and questions about American consumers, I think is front and center when it comes to midterms. How do you think about that in the context of markets?
So the affordability is obviously, it's a major issue, right? Gasoline prices moving higher. The consumer's going to feel that every single day, every time they fill up their car with gas. Look, the midterms are going to be tough. I mean, I'm hearing a lot of different people, very upset about what's going on. Who wouldn't be, right? But I think ultimately we have to see how this all ends, because there's another contingent of people that are saying, well, is it better to have a nuclear-armed Iran, or is this the right, we had a date with this destiny at some point. We didn't know when that date was. The date's now. And so do you want to take this on right now, or is it a can-kicking exercise where you just kick the can down the road and deal with it later? So I think the American people, once they get past the shock of higher gas prices and the dust settles on this, so to speak, ultimately it's going to be, the choice was a nuclear-powered Iran, or nuclear, armed Iran with nuclear missiles, or something else. Which one would you have picked, and how much damage or how much pain did you have to take in the meantime? So it's a complicated question. So we'll see how it shakes out in the midterms, though.
Yeah, it's interesting. We've had a lot of folks say, listen, this was a war long overdue. This has been, tension, stress, dislike between the U.S. and Iran for a long time, as we all know. Does the U.S. come out stronger on the other side as a result of this? It's an interesting time in our history. Here we are, a quarter of a century, not a quarter of a century, 250 years old. But I just wonder how you think the role of the U.S.
I think we're going to have to wait 5 or 6 years to answer that question with accuracy. Right now, it seems pretty chaotic. Right now, it seems like the rules-based order is we're not following the rules in the rules-based order. We can make the argument that rules-based order really wouldn't tell us to do nothing right now, and is that the right solution too? So I honestly don't know the answer to that, and I think it'll be debated for decades going forward. I don't know that we're going to have an answer anytime soon. I certainly don't.
So do you have an answer in 40 seconds of what an investor should do in this environment? I know you like the U.S. over Europe. Just quickly, we'd be remiss not to ask.
Listen, I think that there were some great value opportunities in the value sector. Dividends, quality and defensive sectors are pretty good. Healthcare has been one of our biggest sectors. We think that benefits the most from AI over the long run. Love the healthcare sector, particularly in the managed care areas. That's really good. Technology, AI, and defense related, that's another area that I think is going to see exceptional growth. That's how we're positioning portfolios.
Interesting. Come back soon?
Absolutely.
We would love it. Great to have Jim Caron with us. He's Chief Investment Officer, Portfolio Solutions over at Morgan Stanley Investment Management Portfolio Solutions Group, joining us right here in studio.
Well, we continue our coverage of markets and asset classes. After this, we're going to turn once again to private capital. We got a deep dive with SLR Capital Partners co-founder, Michael Gross.
All right, everybody, you are listening and watching Bloomberg Business Week. We've got markets off our worst and best levels of this session. Stick around. We're back in just a moment.
studying the odds of a possible negotiated deal with Iran. We check the markets for you all day long here at Bloomberg. The S&P 500 is down 0.3%. NASDAQ down about 0.5%, and the Dow down about 0.4%. 10-year Treasury yield at 4.33%. The 2-year yield at 3.83%. NYMEX crude oil is up about 0.5%, around $113 a barrel. Brent crude is down about 0.25%, around $109 per barrel. Sources tell Bloomberg Apple's first foldable phone is on track to arrive during the company's normal iPhone launch. That's later this year. They say the company is scheduled to introduce the foldable model in September alongside the iPhone 18 Pro and Pro Max. The product's price is expected to cross the $2,000 threshold. Shares of Apple almost 3% higher. Old Navy will reportedly launch a new format focused on athleisure called Old Navy Sport. That happens later this year. Old Navy owner Gap shares about 2% lower. And Delta Airlines will increase charges for checked bags by between $10 and $50 apiece as surging jet fuel prices prompt carriers to ramp up fees and ticket prices. Delta follows rivals United Airlines and JetBlue, which raised bag fees earlier this month. Delta shares now more than 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy, thank you so much. Well, every day, highs and lows when it comes to the world of private markets and in particular private credit. Just today, we reported out how Blackstone raised $10 billion for its latest opportunistic credit fund, signaling sustained appetite from institutional investors to capitalize on the upheaval that we've been seeing in the private debt market. It's the firm's largest ever haul for opportunistic credit.
Meantime, a swelling wave of redemptions has driven Moody's ratings. This is an interesting one, to revise its outlook for private credit investment vehicles to negative after holding the line at stable for the last 2 years.
And they're talking about BDCs here. Hey, Our next guest was recently featured on the Bloomberg Intelligence Credit Edge podcast, hosted by James Crombie, Bloomberg News senior editor for credit. Great to have with us here in studios Michael Gross. He's co-founder of SLR Capital Partners. It's an independent asset manager. It's all about dealing with the U.S.-based middle market businesses and delivering really debt capital solutions to it. He's also one of the co-founders of Apollo Management, now Apollo Global Management. Welcome, welcome, welcome. So
thank you for having me. Much appreciated. Good to be here.
Yeah, great to have you here. I want to ask you, long kind of view here. When you guys started Apollo back in 1990, here we are 36 years later. What's changed when it comes to the private markets, other than just size?
Size, complexity, the solutions that private capital providers can provide. Back in 1990, all the commercial banks were providing senior debt financing, which is where the BDCs and private credit have picked up the slack since the GFC. So back in 1990, none of us were doing senior secured financing. We were all doing junior type capital, whether it's equity or mezzanine or sub debt. Today, the private credit world has evolved to the point where it's kind of taken over the senior secured market because banks have been forced to exit because of increased regulation.
Good or bad? Was that a good thing? Great for the growth of an industry, but what's your take?
Kind of depends who you are.
Yeah.
It's interesting if you
explain that.
So if you think about the explosion that's taken place in private credit over the last 5 years, there's been $250 billion raised for these non-traded BDCs. Question: is that a good thing or a bad thing? And as I think about private credit, there's kind of three very important constituents. There's the borrowers who are borrowing from people ourselves. There's the asset managers like ourselves who are raising this money and investing it. And then there's the investors. So is this increased scale good for certain people? It's certainly good for the borrowers because they've had increased leverage with all the capital that's been raised to kind of get very advantaged terms. It's certainly been very powerful for the asset managers, the public asset managers in particular, because it's fee generating. But arguably, is it good for investors? Is this increased scale good? Is it improving returns? I would argue that it's not, that the need to put out all this capital in a relatively short period of time has put pressure on returns. And so yields have come down over the last several years, not because of interest rates coming down, because spreads compress and because of all the increased competition.
Are these just growing pains?
Look, I think our industry is here to stay. So the answer is yes, it's growing pains, but it's also a question of kind of where the right incentives are. Our job as an investment manager is to find the best risk reward for investors and not just grow for growth's sake.
You made an interesting comment moments ago where you talked about the type of lending that has gone to private credit in recent years as a result of banks not being able to do it because of the regulatory environment. I think for a lot of people, hearing that on itself might be a reason for concern. It's a asset class or an area of the market that doesn't have the same transparency, the same regulation as a traditional quote-unquote big bank. Does it need to be regulated in a different way?
I personally don't think so, because if you think about where people are concerned about risk, it's systemic risk, it's too much leverage in the system. Private BDCs, private credit funds, public BDCs are not levered more than 1 to 1.5 to 1. Banks are levered 10 to 1. CLOs are levered 9 to 1. So there's not a bunch of systemic risk in the system where a series of defaults is going to create a downfall. So I personally don't think there needs to be increased regulation.
Michael, is it just as simple, like playing off of what Tim said about growing pains? Is it just a case that it became too big and too much money chasing deals, and so it leads to maybe deals that maybe shouldn't be done and that kind of thing?
It's too much money raised too fast, having to get invested.
Yeah.
And what that's created is significant competition, such that the private equity sponsors, who are the primary issuers of this debt on behalf of their portfolio companies, have increased leverage over the debt capital providers. So they can go to them and say, if I'm going to give you my loan or let you finance my company, you're going to have to accept a lower rate, a higher leverage ratio, and less covenants. And so that, I think, has relaxed underwriting standards and has potential risk going forward of increased defaults and increased losses given defaults.
There's things going on to macro, and I just want to throw in a couple of headlines just because they're crossing the Bloomberg, whether it relates to what we're talking about, but I just want to bring them to us. PIMCO weighing $14 billion debt deal for Oracle data center, so that plays into the AI. And then we have dated Brent oil price hitting a record of $144.42 a barrel. There are macro issues.
Those things not unrelated to what's happening in private credit.
But we think, no, exactly. Like I think about artificial intelligence. We've talked so much about the SaaS world. Like, so roll those in, and how that has also been major factors, or they have been major factors.
So the macro factors can definitely have an impact on performance. If we're in a world where oil's gonna be 150 for a period of time, that's gonna have a tremendous impact on the economy. And even
not just private credit, but
exactly on the economy. But because private credit, these are levered companies, that impact is magnified. And so companies that were created 3 or 4 years ago when rates were zero, and companies were leveraged 6 or 7 times, that haven't grown to date to support those capital structures are even more at risk because of these macro factors. I think it's very important within private credit today to focus on areas that may be more immune from that, primarily like asset-based lending. Lending against hard assets as opposed to against cash flows that are more volatile.
Well, that's a big category. So sort of dive into that a little bit for us and where you are finding opportunities.
We beginning in 2009, coming out of the great financial crisis, identified the fact that banks were being forced to exit not only cash flow lending, but asset-based lending. So we began building out a series of strategies, a series of infrastructure to support asset-based lending strategies like lending against receivables, factoring businesses, lending against inventory, lending to other commercial lenders against their portfolios, where we can do highly structured transactions, lend against hard assets that we can then monitor on a daily basis and protect ourselves.
Figure out values, right? You actually know what you're investing in.
Exactly, because we tend to be the sole lender to these companies. So the control we have is tremendous. The documents allow us to go in on a monthly, weekly basis and adjust the collateral value if we think there's a diminution of value, for example.
We'll go there, because I think one of the things we talk so much about with private credit is transparency or lack of transparency. But as an investor or doing a deal, how much are you able to look into the investment itself? How often, how regular, and does every shop do it differently?
Every shop does it differently. I think because we primarily view this business as an investment business and not an asset gathering business, we're extremely hands-on. So when we make an asset-based loan, we do a field audit. We send people to the field, we verify the existence of the inventory, we value it. We send people to the field, we value that these receivables exist. There's been a lot of talk about First Brands and Tricolor and those frauds. Those are all avoidable. Had people done the work to verify the assets and were they in control of the documentation and been the sole lender of these companies, those things wouldn't have happened. And so what we do is all our transactions are directly originated with a counterparty. We do direct due diligence. Then on an ongoing basis, we're directly monitoring it on a weekly and monthly basis to ensure that our assets are being covered.
Which makes you wonder if that's where regulation should be, that there is some, I don't know, like some
It's a hard thing to regulate.
Yeah.
I mean, it's a hard thing to do. But the good news for us is that, again, back to the theme, commercial banks continue to be forced to kind of downsize that part of the business because the capital charge to carry those types of loans is very high, whereas we as an unregulated entity don't have those capital charges.
When you hear people say they're worried about contagion from this asset class, sparking issues in other asset classes, you're shaking your head. You don't see it happening.
I don't see it because if you think about it, people like JP Morgan, Wells Fargo are big lenders to people like ourselves. They hold billions and billions of dollars.
Yeah.
But they're lending at 50 cents on the dollar against a portfolio of senior secured loans. So the risk they're taking is fairly de minimis. And if you look back historically, no one has ever lost a dollar lending to a private credit fund or a public BDC or private BDC. Why? Because the regulatory environment for BDCs is such that you can't lever them more than 2 to 1.
Mm-hmm.
So there's already that very important check and balance in place to kind of prevent that type of contagion.
So what do you say to investors? Like we talk about, 40% of investors wanting out of certain funds. I'm just curious what you make of that. And then what went wrong? Did somebody, as our James Crombie, I know you've talked with him, he says, look at that first page. It tells you that these things aren't that liquid. Yeah. So who's at fault?
So a couple of comments. And one thing I've learned from 40 years of investing in private equity and private credit is things are never as good as they look, and things are never as bad as they look. So on the way up, when this $250 billion was raised, things weren't necessarily that great. A lot of money put out. But people went and attracted significant retail dollars. It was fully disclosed that the structures were semi-liquid, that you had 5% restrictions, which was frankly is the right thing to do. Mm-hmm. But it's painful on the way down. And what's happened is the primarily people who are looking for redemptions are retail. It's not institutional. We raise money both retail and institutional. We're still seeing tremendous demand institutionally for private credit. Why? Because you hit on it earlier, Blackstone just raised $10 billion to be opportunistic. Well, this is a great environment to possibly invest in because capital is pulling back. That's going to put pressure on yields the wrong way for borrowers and the right way for us as investors. We view that dislocation as a good thing, provided you have liquidity to take advantage of it.
So potentially a good time to launch new BDCs just quickly, right?
Or to be involved in BDCs that are not fully ramped and have the dry powder to take advantage of this cycle and not be embedded with kind of older vintage investments.
So appreciate. I hope we can lure you back here.
Love to.
We would love it.
Appreciate your time.
Yeah, we appreciate your time. Michael Gross, co-founder of SLR Capital Partners. When we come back from one major narrative, private credit, to another, we talk about AI and its ever-growing presence in finance. We're back in a moment.
It's 2:40 on Wall Street. I'm Amy Morris. Stocks fell and oil rose on concerns that the war in the Middle East is intensifying. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.4%. NASDAQ down 0.7%, and the Dow down about 0.5%. The 10-year Treasury yield at 4.33%. The 2-year yield at 3.83%. NYMEX crude oil is 1.3% higher, around $114 a barrel. Brent crude still around $109 a barrel, about 0.3% lower. And Bitcoin is down about 2%, around $68,000. PIMCO now looking at a $14 billion debt deal to build a massive Oracle data center in Michigan, talking with Bank of America for what would be PIMCO's second jumbo financing for a data center within the past year. Oracle shares 2% lower. Anthropic says its revenue run rate has now topped $30 billion, up from $9 billion at the end of 2025. The AI startup said that demand for its Claude services accelerated this year. More than 1,000 business customers spending more than $1 million on an annual basis. That figure more than doubling since February. Billionaire activist Bill Ackman has proposed a bid for Universal Music Group to increase returns on one of his hedge funds' biggest holdings. UMG is the world's largest music company, gaining 11% now, the most in more than 3 years. Intel joining Elon Musk's TerraFab project, a chip manufacturing effort for Tesla, SpaceX, and XAI. It aims to produce a huge amount of computing power every year. Intel's partnership would help accelerate that. Shares of Intel about 3% higher. And Bill Gates will reportedly appear before the House Oversight Committee this summer. Punchbowl reporting Bill Gates will sit down for a transcribed interview about Jeffrey Epstein on June 10th. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's a Bloomberg Business Flash. We return to Bloomberg Business Week Daily with Carol Masser and Tim Stenivek.
All right, Amy, so appreciate it. Hey, every day, tons of things related to artificial intelligence. Just today, we've been reporting out Anthropic, letting tech firms access a more powerful, unreleased AI model to help prepare for possible cyber attacks that might result from the company making the advanced AI system more widely available. It's an initiative. It's called Project Glasswing. It's with Amazon, Apple, Microsoft, Cisco Systems, and a bunch of other organizations. And basically, Tim, they're going to get access to this new model from Anthropic called Mythos to hunt for flaws in their product and share findings with industry peers. So it sounds like a collective, and they're going to be collaborating on some level.
Are you having trouble keeping up with all of the different iterations that we're hearing from this company ahead of a possible IPO?
Yes, and yes.
Okay, well, also on AI, the president of the New York Fed, John Williams, spoke to Bloomberg's Michael McKee earlier this morning at the New York Fed. Check out what he had to say.
I think a lot of CEOs have said, well, we're past that. So now we just have to navigate a world with higher uncertainty, make the decisions that make sense, make the investments that make sense. And you hear about that a lot with AI and investments in AI. So I think we're kind of in the second stage, if you will, of responding to uncertainty. It's really about, well, okay, we need to make decisions. Let's move forward.
John Williams of the New York Fed with Michael McKee a little earlier on AI investments. Great to have with us Sastry Durvasula, TIAA's Chief Operating, Information, and Digital Officer. He joins us here in the studio. Sastry, good to have you on the program. We all know TIAA, more than a century-old retirement fund for teachers and other professionals. Carol and I were talking in the newsroom a little earlier. It's a basic question, but I think a really important one to set the conversation. What does the Chief Operating, Information, and Digital Officer do day to day?
So I lead all the global technology for all of our businesses. Principal businesses are retirement services, which was the genesis of TIAA when it was founded by Andrew Carnegie 100 plus years ago. Wealth management business, which is our retail business, and our asset management business called Nuveen, where we manage close to $1.4 trillion in assets. So global technology, global digital capabilities and client experience, and global operations across all three businesses. So one way I always talk about is part of my team actually cooks the meal in technology and products and experiences. The other part of the team actually consumes the meal because they are serving our clients, whether it's participants or plan sponsors or consultants that we work with. Yeah.
Well, a big part of the task involves deploying AI and that technology across the organization, not just for people within your organization, but for customers you serve.
Yeah.
Which one is sort of like the priority right now? Is it on the consumer-facing side or is it on the internal side to really get productivity figured out?
It's both. I mean, definitely it starts with the client.
Okay.
So our clients are institutional clients, right? So we're a large B2B firm in that sense because we work with all the higher ed and healthcare clients in the United States. On the global front, in our asset management, we have a lot of institutional clients that we work with. So we work with institutional clients. Then it comes down to the millions of Americans we try to help with our lifetime income solutions, which is our participants. So it's more consumer on that side and then institutional on the other side. But then to be able to service them, we need our internal associates to be, equipped with AI. So I do believe that we got to start the work internally first, which is what we've been doing for the last year and a half, 2 years. We put AI in the hands of every colleague in the company. So we have our own proprietary platform called Gate, and a generative and agentic intelligence technology, and we put it as My Gate in the hands of every colleague. It started with 300 people in a pilot mode. Now we have the entire company of associates using that, because to be able to serve the clients, we need to experience that first ourselves, but we have some client-facing capabilities that are live in production as well.
Sastry, it feels like the conversation around AI is moving increasingly from these large language models to vertical data sets that are really, catered to a specific industry or an entity. Talk to us about that. If that's the case, that, it's not going to be just about these big data dumps of everything, but what's going to matter to you and your client base is a very smart data set that pertains to them.
Yeah, because, you're basically trying to rewire the company with AI, just like what we've done with the internet, with our, with mobile, et cetera. So when you try to rewire the company, what you need is the industry depth. TIA obviously has decades of codified knowledge and wisdom and insights and data assets that we have proprietary insights into and proprietary capabilities for. So what we're doing is building this large language model agnostic platform so that it's obviously plugged into all the tools that companies that you just mentioned earlier in the prior segment. And we are basically leveraging those industry capabilities with our data assets in a secure way and providing intelligent insights. So for instance, when we serve our clients and the call comes in, our customer service professionals who are on my team have a screen and they actually have AI agents giving them information in a secure way so that they can actually give all the way from there, Carol, to giving empathetic communications. We have an empathy agent. I know it's counterintuitive to talk about, but you're calling in with a transaction or a complaint and we are trying to serve that, within time. But then we want to be able to give you the right level of empathetic communication as well. So the empathy agent is actually prompting the care professional, even drafting the email based on that transaction that we are serving to give you an empathetic solution. Because we're dealing with retired participants here, so they need empathy. The other example I'll give you that's live in production at scale is what we call our scam AI detector. So longevity is on the rise, which is a great thing for humanity. So which means we have more older adults that are our participants who are retired. They are the most vulnerable population from a financial fraud and cyber attacks point of view. And the cognitive decline is also on the rise in older adults. So that's the problem you're trying to solve. So when you have a retired professor who's getting a lifetime income paycheck from us, and getting scammed by all these artists that are out there, whether it's impersonators like IRS agents, I'm from Microsoft IT desk, or romance scams and all kinds of scams, we have realized that AI is the best capability to deploy at scale at this point.
How though?
Yeah, that's what
so
I was
it's actually looking for signals.
Yeah.
So for instance, these are real life participant examples where a participant gets a call saying, where the IT support, we found a bug in your computer, and then lures them into getting into some website and then asking them to give the information, and the next thing you know, another impersonator comes and says, I'm from the FTC, we need to protect you, we need to move your assets. Now we're getting a call into our call center. These AI capabilities are detecting that there is fraud involved, there's a potential scam here, and then it actually activates the whole chain of agents to the point, this is the best part, at the end of that, there is a human in the loop for everything, right? So we also activate a call to the trusted advisor or trusted contact that this person may have and engage them in the conversation. And in fact, we have real life use cases where our participants are saying, TIA saved my bacon,
Will you come back soon?
Oh, yes.
Okay. We've run out of time.
Sevastri
Unfortunately.
Devasula, TIA's Chief Operating Information and Digital Officer, here in the studio. Coming up next, more on the markets and stocks on the move. This is Bloomberg.